moves that 125 basis point cut, and then 348 against a neutral rate, or an average neutral rate of 330. So the idea is that the Fed does remain restrictive over this whole time. Comments by the president-elect and his nominee for Treasury Secretary appear to have calmed concerns about whether Donald Trump will respect the Fed's independence. 56% now say he will respect that independence, up from just 30% in November. A third still believe he won't. 11% remain unsure. Asked about the impact on inflation of all the president-elect's policies likely to be enacted, 11% see them as extremely inflationary, 56% say somewhat inflationary, and 19% say there will be no impact on inflation. 15% expect a deflationary effect. 48% though say they will be somewhat positive for growth, 4% think there'll be no effect, and 48% see them as very or somewhat negative for growth. Economist Robert Fry writing in, I think, expressing the sentiment of a lot of people. I can't remember being this uncertain about the inflation outlook. President-elect Trump is offering us a mix of inflationary, tariffs, individual tax cuts, and disinflationary, deregulation, spending cuts, policies. Who knows what combination we're going to end up with. Overall, respondents see somewhat more inflation this year and next, and unemployment just a bit higher than the current rate, but down from November forecast. The comments that accompany the forecast suggest a wide band of uncertainty right now around that outlook, at least for now, Joe.
Also in conversation with Mark Cabana, head of U.S. rate strategy of BofA Global Research, comments that Fed is no longer in a restrictive stance and wants to normalize monetary policy. Listen in.
The Fed has long believed that they're in a restrictive stance and they want to normalize monetary policy. They worry about keeping monetary policy too tight for too long. And while they've seen progress on inflation slow to some extent, they have also seen that the labor market continues to moderate. And they want to try and do their best to balance things. They likely worry that if they don't cut, they risk upsetting markets. So they're going to go ahead with this cut and then signal that they're likely moving to a bit of a more gradual pace.
Okay, that's all the overnight global market action that you saw coming in. But how are these cues going to be impacting the Indian markets? We have our research team joining in with us this morning to set you up for the trading sessions and tell you what are the important stocks to watch out for in trade. Hormas as well as Sudarshan, thank you so much and good morning to both of you all. Hormas, let me start up with you. What are the important market cues? What are we watching out for in today's trading session? Muted day coming in for the Indian markets again?
The bulls would certainly hope so, if considering the session that we had yesterday. But it's a very important day indeed for the markets because of the fact that a very important Fed decision comes in overnight. We'll be reacting to that tomorrow, and because of which caution continues to prevail across the global markets as well. Yesterday, the US was no different. But for yesterday's session, for the Nifty as well, we closed below the 50-day moving average, breaking down from that 24,500 to 24,800 range on the lower end, closing below the 50 DMA. 49 stocks ended in the red, and unlike Friday's trading session where there was an extremely sharp recovery from the lows, there was no such recovery that came in because every attempt to recover from the lows was very quickly sold into by from the participants, and it was the index heavyweights, right, that dragged the indices lower. Almost everyone from HDFC Bank, ICICI Bank, from even Reliance Industries played a part in pulling the Nifty lower in that 330 point fall. Almost 40% of that came from these top 5 contributors to the downside. Broader markets until this point were outperforming the benchmarks, or at least cushioning some of the portfolios. Even that fell prey to the selling pressure yesterday. 76 on the mid-cap index, 73 stocks on the small-cap index ended in the red. So no comfort coming in from the broader markets as well. Banks, PSUs, autos, energy, all of these sectoral indices ended lower. So 24,200 to 24,000 now becomes that key support range to watch for the Nifty. For the Nifty Bank, of course, now 53,000 becomes the first important level to scale. And today, of course, it's a big Fed decision. There are 3 listings today. And of course, keep an eye out on insurance and steel stocks as well. But the GIFT Nifty for now is indicating a cautious start for our own markets.
Yes, a cautious start is what we are watching out for the Indian markets. But which are the important stocks that you should be keeping on your radar? Let's start with Ambuja Cement. Now, they've announced an amalgamation of the subsidiaries, that Sangi Industries as well as Penna Cement Industries. Keeping an eye out on that one. The exchange ratio is Ambuja Cement will issue 12 equity shares for every 100 equity shares that is held. So keeping an eye out on that. Then we have Aditya Birla Real Estate that is in focus. They've acquired around a 70-acre land parcel in Maharashtra. This is for 104 crore rupees. So something important to watch out for. Jindal Saw, they have acquired 31% equity stake in Renew Green MHH1. So that's something to watch out for in terms of acquisition. RITES have secured an order of around 122 crore rupees. And this is for consultancy as well as construction services by Meerut Development Authority. Biotech Wabag, that's in focus as well. There's a project with Saudi Water Authority for around 2,700 crores, which was there, which has now been cancelled. So maybe some bit of a negative move that we could watch out for. Aurobindo Pharma, one of its API facilities that was being inspected by the US FDA, that's the Telangana one. And now this is its subsidiary Apitoria Pharma, which was inspected between December 9 to December 17, 2024. They've received 2 observations for this one. So maybe a neutral move is what we could see coming in. Not much of a decline on this front, but surely keeping an eye out on Aurobindo Pharma as well. On that note, those were the stocks to watch out for. But how are the FNOQs shaping up this morning? We have Sudarshan joining you with us. Good morning, Sudarshan.
Good morning, Winnie. So data has turned a bit unfavorable with big selling seen in both cash market and derivative market, and FI selling has led to a sharp fall in index. Both Sensex and Nifty saw a fall of more than 1%. Even Nifty Bank has fallen more than 1%. And slightly like, if I can say so, Midcap index has relatively outperformed, but still it was in the red. And for today also, GIFT Nifty is indicating a start in the red. Currently, it's down more than 50 points. Talking about the flows in the cash market, FIs have sold more than rupees 6,000 crore. It was 6,410 crore, and DIs have bought around 2,700 crore. Even in the futures market, selling by FIs was rupees 1,225 crore, and they have reduced long positions, cut long contracts by 8,651, and added short positions by 7,400. And with this long exposure by FIs now reduced to 36%, and on the client side, long exposure remains healthy at 62%. On the options front, 2 call options that were active, 24,500, where we have seen addition of almost 75 lakh shares, and for 24,400 call, we have seen addition of almost 62 lakh shares. On the put side, 24,350 put has seen addition of more than 8 lakh shares, and with this important levels for Nifty, support is now seen somewhere around 24,200, the low that we had hit day before yesterday, and resistance is now at 24,600. Stocks that will be in focus, 3 stocks that have entered ban, those are Bandhan Bank, Chambal Fertilizer, and PVR Inox.
Okay, Sudarshan, thank you so much for that. But on that note, we're going to slip into a very short break. We'll get you the latest reports on suggestions that are coming in that the government is considering a 25% safeguard duty on steel to curb cheap imports from China. So stay tuned in for that after the break.
And when it picks up, the growth rate also picks up. But the blip is got to be understood in the broader context. Headline inflation was controlled at 3.9% between 1999 and 2004. Between 2004 and 2009, inflation surged to 5.6%. And again, come over, you can compare it with the previous 99 to 2004, which I'm talking about. But when you came to 2009 to 14, it spiraled to 10.2%, representing a catastrophic failure to control rising prices. Come again to 2014 to 24, inflation was brought back to 5.1%. The pattern that is emerging, if you look at it for the last 25 years nearly, is NDA period times, inflation is well under control, whereas non-NDA, particularly UPA, it touches double digit. So let us not forget this pattern when we want to criticize one another about inflation and inflation control. Number of taxpayers disclosing, this is a very interesting information, sir. Number of taxpayers disclosing foreign assets were 60,467 in the year 21-22. Now it is 2 lakh taxpayers in 24-25. The Black Money Act is actually having a deterrent effect on a lot of taxpayers that today they come forward on their own to disclose their foreign assets. Sir, very important data is 82 cases till 30 June have been referred to the ED under the PMLA Act. 82 cases. Sir, specific numbers were asked. Total tax collected under the BMA, Black Money Act, in crores of rupees is 2,655 crores as of June 2024. Total money raised under the Black Money Act. Number of cases in which assessments have been passed are 697. Demand raised 17,520 crores. Number of cases in which penalty has been levied 341 cases. Penalty levied in crores 9,971.47 crores. Prosecution launched 163. Number of cases where assessment is pending 531. Number of cases where penalty initiated and pending 532. So these are the
Welcome back to Power Breakfast on CNBC-TV18. Let's move on. Reports say that India is likely to impose a safeguard duty or a temporary tax of up to 25% on the steel imports. Now, this is to help curb cheap imports from a top producer, China. The proposal gained board support at the meeting chaired by the Commerce Minister Piyush Goyal yesterday. And in fact, last week, Steel Minister H.D. Kumaraswamy had hinted that the process for safeguard duties was underway. Listen in.
Under process?
Duty is under process, let us see.
But so, what saying that they will be affected by this. So investigation has been started or not?
Doubts are there.
Yeah.
We will sort it out.
So investigation has been started or not?
Which one?
On this safeguard duty, because you have to first make some process.
Process is going on, let us see.
Okay, let's move on. And we had earlier spoken to the industry leader Sajjan Dindal, the CMD of JSW Group, and Naveen Jindal, CMD of JSPL, and they too pressed on the need for imposing duties to protect the domestic industry. Listen in.
If you open up the records and see China in 1990, what kind of protectionist China were? In 2000, what was their protection levels and what they are today? Today they are opened up because they become the factory of the world. I wanted to export steel in 98, 99 to China. I was not permitted to do that because China had tariffs. They removed the tariffs, but now today we have zero tariffs on steel. Chinese steel, which is surplus, they are nearly 60% of their capacity is surplus capacity. Yeah. So it comes via Japan, Korea, Vietnam, Malaysia to India at 0% duty.
USA, Canada, they have imposed suo moto 25% duty. Similarly, now Japan also. Japan, can you imagine? Japan is also asking for protection, Japanese steel industry. So the situation is serious. We are very efficient steel producers, so we can challenge them. But then the steel industry in India, they must have some surpluses also to be able to invest in growth, to be able to decarbonize. Decarbonizing is very important for everyone. So we do need resources to be able to do that. So the health competition must be healthy. So we are only against the unhealthy competition that we are facing from some of these countries, and I'm confident that the government of India is going to take the necessary steps. That would not be enough, because these prices, see, if they were selling at, and we put say 12.5 or 15% duty on the price at which they're selling in the domestic markets, it would be fine. But the market they are losing more than $100 per ton when they are exporting, and which is being subsidized by their governments as per the information that we have. So that's an unhealthy prices. They are not realistic prices. Those are just prices for dumping of their material to protect their domestic industry. But it is hurting our industry, so we have to safeguard against that.
Let's move on. The board of the market regulator Sebi will meet today to discuss the tightening of the listing regulations for small businesses. A review of some insider trading regulations is also on the cards. Let's go across to Yash, who's joining in with us with more details on that.
Market regulator Sebi's board meets And there are three important points which would be on SEBI's table for discussion. The first one would be regulations around small and medium enterprise listing, SME listing. The second one, insider trading regulations. And the third one, with respect to specified digital platforms. The most important out of the three things on the table would be tightening the regulations when it comes to SME listings. There are various suggestions which have come in the form of consultation paper from SEBI that came in November 2024. Some of those important suggestions were increase in the minimum application size to 2 lakhs or 4 lakhs from the current 1 lakh, introduction of draw of lot methodology for the HNI or NII investor category, also breaking up of NII category into small and large NII. Also what it included in terms of suggestions was OFS portion to be restricted to 20 to 25% of the total issue size, as well as requirement of minimum allottees to be raised to 200 from the current 50. There are various other points as far as tightening regulations around SME listing is concerned. That's been a point of concern for market regulators SEBI for quite some time. The second one would be expanding the definition of unpublished price sensitive information under the insider trading regulations. SEBI could consider including many things like change in ratings, proposed fundraising, agreements that impact the management control and company fraud, change in KMP as far as the definition of UPSI or unpublished price sensitive information is concerned. There could be certain regulations with respect to specified digital platforms also that could come up for SEBI's board meeting for consideration tomorrow.
Thank you so much for that, Yash. But on that note, we're going to slip into a very short break. Up next, we get your cues from the world of commodities, so stay tuned for that.
To show that the PMLA and the Black Money Act are actually giving their due returns of the taxpayer money, which has got to be obtained for the sake of the country.
Welcome back to Power Breakfast on CNBC-TV18. Now let's move on and go across to Manisha Gupta, who's waiting by to tell us what's happening in the world of commodities this morning. What are we watching out for? Good morning, Manisha.
Morning, Vinny, for that. Well, I'm looking at the crude oil prices, which are trading at a one-week lows. Overnight, we have seen 1% of decline in prices. This is ahead of the U.S. Fed meeting, which is underway now, and we will hear an announcement today in the evening in sense of rate cuts and, of course, outlook for 2025. In the meanwhile, there also are prospects of more U.S. sanctions on Russia oil supplies. That is something that the street will watch out for. The pressure continues because we are looking at weak economic data coming in from China and Germany. And then the trade is worried about fears of supply glut in 2025 as well. The markets will watch out for the U.S. inventory data. The API numbers do show that the U.S. oil inventories have seen a decline. If we see further decline, then that could perhaps support the prices. But a real surge has come in for the U.S. natural gas prices, which have gained 4% overnight. There is forecast of more winters and stronger demand coming in for the next week. There also is a rise in LNG exports, which really seems to be supporting the natural gas prices.
Okay, Manisha, thank you so much for that update coming in the world of commodities. But with that, we're absolutely out of time on this edition of Power Breakfast on CNBC TV18. Thank you so much for tuning in. But up next, your Bazaar Morning Call.
Le conseil est très clair, l'île est totalement dévastée, vraiment dévastée. L'habitat qui est un habitat précaire, les bangas, pour ceux qui ne connaissent pas, les bidonvilles, il n'y a plus rien, c'est très clair.
India's market news headquarters. Cutting-edge analysis, influential insights, market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Middle of the week, it's a Wednesday morning. Markets, of course, have been under pressure, especially yesterday. And today, of course, is the last FOMC Fed decision of 2024. Later tonight, US time. And of course, we react to it tomorrow morning. So I think that's a big talking point. Wait and watch. I'm Prashant. With me, my colleagues Rima and Nigel. Guys, hi, good morning.
Hi, good morning. You guys are counting down to your holiday. 3 days to go.
3 days
you
to
must have got the hours calculated,
I've
right?
got 72 hours left in the office for this year, so I'm happy. And when Prashant said that, it's the last, I was thinking, what? Oh, FOMC. So those last few of the calendar year are playing out right now, and looking forward to the festive times.
But you know,
the markets,
the other talking point was the kind of fall that we had in our markets, right? Like every single minor bounce was sold into yesterday.
Yeah. And I think because broader markets did well on Monday, yesterday everything fell, right? I mean, there was no real reprieve at all. Although I must say that even yesterday, if you just scan through the top, say 50, 60, 100 gainers and 100 losers, you still felt good about sort of winners as compared to losers, not because they were up, because there was more volume on the sort of gaining side, as opposed to stuff which was going down in very large volumes. And I think that's still a good thing. I'm maybe nitpicking and trying to find a silver lining here, but the fact is, I mean, that was very much true. So I'll get to the internals and levels, etc. in just a bit, but let me just start with what matters right on top. That's the US Fed decision. And of course, I mean, now with the benefit of hindsight, because the markets have been down for the last 2 days, you can wonder whether this was in anticipation of the Fed not exactly towing the line, the market line, and cutting by 25 basis points. So the decision is tonight, US time, 25 basis point, 95% priced in, 25 basis point cut. So there is, of course, the possibility that they don't cut and they hold on and they say, well, the last time we cut, yields went up. So maybe we want to wait and watch. But the bar not to cut is very high. But the point is, recent data, most of the recent data has been strong out of the US. So is it possible that Fed Chair Powell, in a gentle way, guides the market that maybe in the month of January, which is the next meeting, it's essentially going to be a hold and a wait and watch. Will he temper expectations? I mean, actually, I would say even that is a bar too high. But we'll have to see. Remember, the US fiscal deficit is some 6.5%. Trump is talking about tax cuts, extensions, and all kinds of things, which are all inflationary. So will they sort of take stock of all of that? We'll have to wait and watch. In any case, I mean, it's not just one thing. It's never one thing. How many times has it happened that the Fed sort of, does exactly in terms of rate action, and then, but it's interpreted differently, or vice versa, because they've got so many tools. They've got rate cuts, they've got the forward guidance, they've got, potentially slowing, ending quantitative tightening, and many other tools as well. So, a nuance is very much possible in terms of what really comes out of later tonight. So more on that later. Overnight, just a couple of price action points. S&P was down about 0.4%. Nasdaq was down about a third. And you got the Russell 2000, which was down about 1.17%. 10-year yield unchanged. Actually, 2 days in a row now, we've been stuck at 4.39. Intraday, though, early morning in the US, we did get to about 4.45, but then yields traced back. There was a 20-year auction as well, which was a little weaker. Dollar index that's struggling to break above the 107 levels. Now, again, should we read that as a bit of a signal? But yesterday during Asia, we got about to 107 plus. Last overnight in the US early on, we had 107, and then of course we ended below it. Oil prices down 1%, nothing very much. We've been in the low 70s for a while. You had the November retail sales data, and this ties in with what I said, which is that data has been strong lately. Although some are pointing to cracks under the surface for the retail sales number, but broadly headline 0.7 compared to 0.5 expected. So just to tie in the levels here, I would say frontline, the Nifty, Bank Nifty, the indices are a little oversold here. But it's tricky because even though the markets are sort of oversold and bounce should be expected, we are at a very critical zone, which is the 20-day moving average, both for the Nifty and for the Nifty Bank, not exactly for the Nifty Bank, but almost exactly at the Nifty, for the Nifty. So that level is 24,315. and we need to see if on a closing basis we are able to hold it. If on a closing basis the market actually sells off and closes under the 20-day, then upside is ruled out, at least in the near term, into the end of the year. So that's the thing to watch. Similarly, for the Nifty Bank as well, I think the close is important. Here, the 20-day is 52,578. We're a couple of 100 points away on the Nifty Bank from the 20-day. So I think those come into sharp focus. In any case, because the event is later after close here, which is the Fed decision, I think market perhaps would like to wait and watch before really jumping in one way or the other, despite the recent sharp sell down that we've had on the indices over the last two sessions. GIFT Nifty should give you a sense of what the open is like. It's another 50-odd points lower on the index. Rima.
Well, talking about economic data, there is, data coming out of Japan, and the country's imports have fallen by 3.8%, and this is below expectation of a 1% expansion. So once again, underscoring the global demand is muted. So Japan's imports have fallen by nearly 3.8%, lower than expectations. Exports have grown by 3.8%. So that is a positive. Let's quickly run you through some of the levels back home in India, just to add to what Prashant said. Yesterday, we breached the 50-day moving average on the way down, 24,386. But one level to watch will be Friday's intraday low of 24,180. If that gets broken, perhaps it opens up a little more downside. But for now, we're closer to the lower end of the trading range. Big FI selling yesterday. Yesterday, the FI sold 6,410 crore in the cash market, marking the biggest sell figure in the cash market, at least in the month of December, by the FIs. Lots of action on the IPO front. So 3 new listings today. The one which is gathering all attention is MobiKwik, and the other one is Vishal Mega Mart. Now, Vishal Mega Mart was a large IPO, 8,000 crore, and they've managed to get subscription of 27 times, and MobiKwik was more than 100 times, and the grey market premium, at least for Vishal and MobiKwik, is fairly high. And the third one is Sai Life Sciences. That's also, it was a largish issue, 3,000 crore is what they raised. Total subscription is close to about 10 times. IGI closed yesterday, again, pretty good. The company looked to raise more than 4,000 crore rupees. Subscription was 33 times. So keep your eye on the IPO market, the 3 new listings today. And then, of course, right, there's so much to talk about. We'll talk about steel in greater detail. Those stocks could be active. Then there is that Sebi circular, which prevents the FPIs from using ODIs with derivatives to hedge their position. So, I think that's also, we'll talk more with the guests about that.
Well, that's right. Talking about the headline markets, though, Rima, I think that the dip gets bought into in today's trading session. And there are a few factors at play. That's obviously provided Mr. Powell doesn't have a trick up his sleeve. And in fact, he does what the street is expecting, which is a 25 basis points cut. And hopefully it doesn't sound too hawkish. So that's what the street is factoring in. Getting into, the Fed meeting, since you have had some softness getting into that, maybe the bulls will want to preempt that we'll get what is, what was asked for. So that could be one factor at play. The other factors at play will be that the Nifty is down close to 500 points in the last 3 sessions on. But that's a December phenomena. Every December we have seen, yes, we talk about the Santa Claus rally, but the last 4 years or so, every December we see a cut of close to around 500 points, depending on the base. So it's roughly around 2 to around a 4% cut. For the time being, we have got a 2% cut. So I think maybe another percent, and then in fact, we should see a bit of a bounce. The PCR as well, that's the technical indicator. It's come to the lower end of the range. Normally, when you see the PCR go to 0.6, 0.65, you see that the Nifty bounces. So those are the 3 factors at play. What about the FIs? Well, they continue to add some short positions. And in the last few days, from around 40,000 contracts, now it's at around 91,000 contracts on the short side. And that's good to have some shorts in the system. The clients, they unwound some positions when we moved up, but now they're building on their long positions yet again. So from around 1 lakh contracts, now they're at around 1.65 lakh contracts. So both those two moving according to the plan, and that's what we have normally seen. Now, what about the options data? We have 2 strikes that are fairly active, and the reason that the PCR has come down, the call writers are feeling very, very confident. So they're writing those strikes. 24,400 call, 24,500 call. Both of them did see a fair bit of open interest build up, and there is writing being seen at those levels. So the bears believe that we won't get past the 24,500, 24,570 odd. That's what the data points are suggesting, which brings us to the levels. Now we're at very, very crucial levels. The recent low, that becomes important, which is at around 24,180. And the 20 DMA, that's another reference point, which all probability we should, go to in today's trading session itself in the start of trade. But I think this is a crucial support zone. So you'll want to fancy your chances if, in fact, the Nifty moves it towards this band. You'll want to buy into the dip. The Nifty Bank, yesterday it was actually weak, and you saw their FI selling as well because of the high allocation that they have out there. But now it's at a very, very crucial juncture. The 20 as well as the 50 DMA, well, those are the reference points on the downside. The short point is we've seen some softness in the last few days. The global markets as well in a bit of a tizzy. But I think today may not be such a bad day to look to buy into the dip and hope that the markets pull back a little bit. PCR as well, as I mentioned earlier, that's at a bit of an oversold level.
Thank you very much for that. That's the trade setup going into trade this Wednesday morning. Let's get you some equity calls then. Mahesh Nandarkar of Jefferies says, activity data shows a pickup in economy with Jefferies economic indicator for October-November averaging 6.5% year-on-year, up 2.4 percentage point versus Q3 numbers. He says the movement indicators like fuel consumption, vehicle toll, air traffic have strengthened, but consumption indicators like auto sales, card spend are still mixed. He says government spending has started to pick up, which combined with liquidity improvement should make growth improvement sustainable.
Taimur Beg is now with us, Managing Director and Chief Economist at DBS Group Research. Taimur, good to have you with us here. Thank you for your time. Before we get talking about the US, just a bit about the India sort of story as well as we wrap up in 24 and look ahead into 25. The stock market types all, of course, now believe that maybe some help is needed at the margin, government spending, monetary policy, etc. So just wanted your latest thoughts on that, Taimur.
I think that if we look at key components of the economy, it doesn't look as bad as the recent sentiment has been, especially with the angst over the latest GDP data. Look at the PMI. We are actually on a good phase of uptick. And this is not just India specific. We're seeing it across the region. All the doom and gloom about tariff and trade restriction notwithstanding, exporters in India and elsewhere in the world are actually seeing a pretty good order book. Global demand momentum is decent. All the bad news from Europe, uncertainties about the US notwithstanding, demand is good. So on the external side, I see a very nice setting right now. We still have stable commodity prices, which keeps import demand down. We have strong export demand, which keeps export demand up. So trade balances are going to be favorable. So starting with that, looking at the rest of the economy, surely we've seen a bit of a loss of momentum. But is it a function of the fact that real interest rates are too high? I don't think so. Is it a function that there's been a negative fiscal impulse which is draining from support for the economy? Not really. And hence the clamor for more monetary or fiscal support, in my view, is not quite justified. I can understand why. The market watchers certainly want some stimulus, some support to get the creative juices going, creative destruction juices going. But by and large, I think that as far as the RBI is concerned, as far as the Ministry of Finance is concerned, the current fiscal stance, the current monetary stance are just about right. We need to sort of put the inflation genie firmly back in the bottle. Core inflation under control, but headline not quite so. I think it's okay to keep stance as is for the time being.
Taimur, yesterday, and I'm just using that as a sort of connecting point. China put targets of GDP at 5%, right? It's a $19 trillion economy, and they're saying we'll grow at 5%. We're 3.5%, and we're in the 5% handle now. I mean, we got no business to slow down at this stage, right? For growth journey, a growth journey. I mean, so and if you talk about whether it's are there any large big reforms which are still left which can unleash a sort of growth potential, etc. I don't know. I mean, a lot has been done recently, maybe one or two more things. So just come in on that point. And the worry is that are we kind of falling back to sort of that quarter before COVID started, right? Growth had already slowed down before COVID hit. And are we going back to those levels? Q3, by the way, in all indications, that's October to December, some of the high frequency data that we're getting is once again not turning out to be all that great. Go on.
Right. So, like I said, on the Q3 data, on the fiscal year side and calendar year fourth quarter data, in my view, is actually not that bad, particularly when we talk about external facing indicators like exports and PMI related to that. I think that aspirationally, of course, India should be growing way more than 5%, 6%. It should be in the 6, 7, and sometimes when the stars are aligned, should be 7, 8%. No question about that. There are times when the global economy hits soft patches. It can be country-specific factors. In the case of India, I would like to think that some seasonality, some bad weather, some agriculture slowdown, some of the cost of living issues have come into play to crimp consumption demand. And I think even the last time I came on your show, we talked about the two-tiered economy, that, one part of the economy, tremendous wealth creation, strong consumption, another part of the economy, largely rural facing, not that great in dynamism. So I think that observation alone can point toward the direction of policy. More support for the rural economy, better infrastructure, better job creation, better opportunities, which probably will not be as headline grabbing as opening a new port or a new bridge, but still very important because that's where a large of the part of the population reside, and that's where the biggest struggle with cost of living is. I think the China comparison is apt. Where is China's growth momentum coming from, given the mountain of debt that they have and the property market crisis and the relentless pushback from the U.S. on trade and tariff front? I think China's secret sauce right now is the fact that at the central government level, there is not a lot of leverage, and therefore there's room to pump prime the economy, even if corporate and household balance sheets are stretched. Secondly, there's a lot of external savings. Large, persistent current account surpluses year after year for decades has allowed China to have a lot of external assets, which it can act as a buffer to support the economy when there's an external headwind. India is on the cusp of building those buffers. The central bank has bigger reserves than anything was imaginable a few years ago. I think that is a good starting point to think about India's financial wherewithal. The fact that Indian companies with strong earnings are again building up strong balance sheet, again, is a very good indicator for the medium-term vitality of the economy. Cyclical patches, sometimes soft, sometimes strong, but overall the economy is going the right direction. I'm sure about that.
Taimur, precariously close to the 85 handle now for the Indian rupee, 84.92 as we close yesterday. What's the outlook on the currency next year?
So for the first quarter of next year, we do see it going past 85 and heading toward 85.5, if not 86. But that is very little to do with India. It's all about the dollar exceptionalism and the market basically pricing in tariffs and restriction from the U.S., which make all the other currencies in the world want to sell off against the U.S. dollar. So this is not an India-specific phenomenon. You look at the region, everywhere we see against the dollar substantial weakness. I don't think FX investors are looking at India separately from the EMFX complex. Going into January 20, I don't think we can fight this. You just cannot fight the dollar at times like this. After January 20, when actual reality of policymaking sets in as far as the White House is concerned, I think there'll be significant differentiation in the FX spectrum, where countries like India, which have very strong external momentum, will outperform on the currency side than other countries where vulnerability to the US is substantially greater.
Hi, Taimur. Good morning and good to see you. And as always, Taimur, let's talk about the next big trigger that we'll get in the next 24 hours. Do you think the Fed has to go with a 25 basis rate cut? And I think earlier you were leaning towards 50 basis points cut from the Fed in the first half of 2025. Sticking to that?
Yeah, but not looking very good, that call. Look, the Fed should not be cutting tomorrow, but they will. They have pinned themselves into a corner. They should not have cut by 50 basis points in September. They did it. In hindsight, looks like the economy really didn't lose its momentum. Labor market is still pretty strong. Inflation has bottomed out. Why on earth would you want to cut rates at a time like this? But the Fed has given such strong forward guidance, they will go ahead and cut. 100 basis points rate cut for the fourth quarter of 2024, a parting Christmas gift from Jay Powell for those who are looking into the holidays. Coming into 2025, and that's where the statement of the Fed and the various forecasts that its members would share with us overnight become important. For 2025, are we now becoming a little more cagey about further disinflation? And if we don't see any further disinflation and see no landing at all as far as the economy is concerned, how do you then justify rate cuts, especially when you know that the Trump administration is strong on cutting taxes and doing tariffs? All of those things could well be inflationary. So that 50 basis points of rate cut forecast that we have for the first quarter of 2025, I am a bit unsure about. Got to look at it during the holidays. I think the January rate cut probably has to be taken out. I think the Fed, in its wisdom, would choose to wait and see what the Trump administration does. There's no upside to cutting rates in January. So I think that call probably will have to scale back. But for the remainder of the year, if the Fed is scared of Trump, and there are times when you should be scared of that big boss, then maybe they'll keep cutting. We'll have to wait and see.
All right. Well, absolutely. We'll see. Taimur, thank you very much for joining us. It's always a pleasure having you with us here on CNBC-TV18. All right. Well, we'll take a quick commercial break here. But before that, as always, we'll tease out what's lined up here over the next 2.5 hours. 8:35, you'll hear from the management of Zydus Wellness. And we talk to them about the outlook for the rest of the year. Vishal Manchanda at 9 o'clock. And we talk about the pharma space. I mean, that's one space where there's a lot of interest and a lot of activity. Rana Gupta of Manulife Investment Management is our market master today. This 9:15. Management of Narayana Health will be joining in as they explore strategic opportunities. G. Shivkumar of G Shipping will be with us to talk about freight rates and what's happening in that sector. And 9:15, we'll talk about Sebi's proposals on algorithmic trading for retail investors. So you've got two guests joining us, and it's the economy at 10:15. Lata will be speaking with, a couple of economists at HDFC Bank and IDFC First Bank, and of course the trajectory for the rupee very much in focus there.
That snappy break. As we do that, let's run you through all the top 10 stocks that we'll be focusing in on the other side of this break. Let's run you through the list. We're looking at Ambuja, GSW Energy, AB Real Estate, Edelweiss, REITs. All of them will be reacting to positive news flow. You had Restaurants Brand Asia as well that will be reacting to positive news flow. On the flip side, Sankey, Bartek Wabag, Oro Pharma, Yatharth Hospital, all of them will be reacting to negative news flow. So we take that break, come back, get into further detail on all of these names.
Shankarji, I know you've been watching Zakir Bhai as a child, and thereafter you idolized Shakti and all the concerts that you went for. From that period to the time when you actually met him, played with him, was a part of Shakti. All of this over a period of almost 3 decades. What was the one everlasting, overarching quality of Zakir Hussain? We know of him as a great musician, but very few know of him as the kind of person that he was. If you could throw some light on that.
Well, we've been playing and touring for the last 25 years. And if you ask me, one quality that he had is every night he never failed to surprise me.
Wow.
And every night that the feeling of awe, what an artist, that was there every night, even though we played like 30 concerts in 40 days. Second quality is his humble nature, his compassion towards other musicians. Sometimes he used to just take a step back and just be an accompanist, providing you the platform to showcase your art form, So that shows the maturity of a musician. And just the sound of his tabla, it's...
Welcome back. Yesterday was a tough session for our markets. The benchmark indices ended with a cut of about 1.33 percentage point, below 24,350 on the Nifty. And this morning, the GIFT Nifty is suggesting that we could start with slight cut, 62 points lower now. But let's talk about the stocks that you should have on your radar this Wednesday morning. Our entire research team is standing by with CNBC-TV18's list of top stocks for the day. Nigel, you go first.
Well, that's right. You know, Ambuja Cement, they have gone ahead and they have announced the merger of their subsidiaries with itself, and that includes Sankey Industries as well as Penna, which they have bought, you know, in the recent past. The reason is they're streamlining operations. They're looking at simplifying the entire compliance requirements as well. So this was expected to happen at some point of time, and that's taken place. They're saying that the transaction should get the green signal from most regulators and go through within the next 1 year or so. Now, post-merger, there'll be a small skimming off in terms of the promoter stake in Ambuja because there will be some dilution. The ratio is always most important in these cases. So, if you have 100 shares of Sankey Industries, you'll get closer around 12 shares of Ambuja Cements. What's the read-through? Your simplifying group structure is normally positive. So, there will be positive for Ambuja Cements, both because they're simplifying it. And it will be negative actually for Sankey Industries because the ratio is in favor of Ambuja, but it's actually not in favor of the Sankey Industries shareholders at all. And that's to the tune of close to around 11% in comparison to its last closing price. So negative on Sankey, positive for Ambuja, and also keep an eye out on ACC because that's the other subsidiary that they have in there. Will they be looking to go ahead and merge that entity as well? Probably that could happen. But the problem is, will it again be in favor of Ambuja Cement? So that's the case. ACC will be the stock that could be under some pressure as well. Well, let's talk about JSW Energy and AP Real Estate as well. Vivek joins us to help us out with the news on both those two. Vivek?
Well, good morning. That's right. So JSW Energy is in focus. A news report Reuters has mentioned, quoting sources, that South Korea's LG Energy Solutions is in talk with the company to manufacture batteries for electric vehicles as well as to set up a 10 gigawatt battery plant in India. This is expected to be a 50-50 joint venture between both LG as well as JSW Energy. LG will be contributing the technology as well as equipment for making batteries, while JSW Energy will be investing the money in the JV, investment pegged at over $1.5 billion. We reached out to the JSW Energy Group. At this point of time, they did not offer any comment. The second stock on the radar, Aditya Birla Real Estate, erstwhile Century Textile. Good development over there. The company has acquired a land parcel covering over 70 acres. This is in Boisar in Maharashtra, and the price of this particular parcel is over 104 crore.
Okay, all right, Vivek, thank you very much for that. We'll keep an eye out on those stocks. Edelweiss Financial stock was up 8% yesterday, back to about 140 levels. Abhishek, tell us more.
Well, RBI has removed supervisory restrictions that they had placed on ECL Finance and Edelweiss, ARC with immediate effect. Just to alert the viewers, RBI on 29th of May 2024 had imposed business restrictions on ECL Finance as well as Edelweiss ARC. RBI had directed ECL Finance to cease and desist from undertaking any structured transaction with respect to the wholesale exposure, and they had also directed Edelweiss ARC to cease and desist from any acquisition of financial assets in their ARC business. Other alerts to our viewers would be that Edelweiss Alternate Asset Subsidiary had filed a DRHP for an OFS of rupees 1,500 crore a few months ago. The rating agency had mentioned that there is material supervisory concerns due to RBI restrictions. So with these restrictions being lifted, there could be a rating action change from the rating agencies as well. Back to you.
Thank you very much for that. Vinny is now joining in for some more stocks that are in the news. Vinny.
Good morning. So first, let's start with Aurobindo Pharma. It's Unit 5, which is in Telangana, an API facility. There was an inspection that was carried out for that one. Now, they've received 2 observations, but this is mainly procedural in nature. So yes, we could see a bit of a negative start, but then it could move on to the neutral territory is what we're watching out for in terms of Aurobindo Pharma. Yatharth Hospital, that's the next one that we're keeping an eye out on. We're expecting pressure coming in on the stock today after the Income Tax Department's Assistant Commissioner has attached some equity equity shares, unquoted equity shares, as well as some property for the company and couple of its subsidiary is what they've highlighted. So because of that, we could see pressure coming in on Yatharth Hospital. Also, they have restricted from transferring or parting with any of these assets from the date of the order. Moving on, we have RITES that's in focus. They've won an order for around 122 crores, and this is from the Meerut Development Authority for a period of 5 years. This is for consultation services as well as preparation of detailed project report for the Meerut Development Authority. Lastly, other than that, we have Restaurant Brands Asia that's also in focus. The board will be meeting on 20th of December to consider fundraising plan. So on the back of that, we're expecting green for the company.
Okay, all right. Thanks a lot for that, Vinny. Well, let's go back to Vivek. Vivek, that's a negative development coming on Vatek Wabag. Run us through details on that front.
That's right. It's a concerning development as far as Vatek Wabag is concerned. Remember, in September 2024, the company had said that they had received a 27 crore mega order that they classify. This was received from the Saudi Water Authority in the Kingdom of Saudi Arabia. This was a 300 million liters per day mega seawater desalination plant order that the company had received. And given the particular size of the order, it was a significant development as far as Vatek is concerned. However, in a development yesterday, the company has informed the exchanges that this particular order has been cancelled. The company has given the reason that it is mainly due to administrative reasons from the Kingdom of Saudi Arabia, from the SWA. Now, what does it mean as far as the order book is concerned? Remember, the company's order book at the end of Q2 was 14,600 crore, which now drops down to 11,900 crore. And the guidance that the management had given as far as the order book was concerned was that at the end of FY25, they would be in the range of 16,000 to 17,000 crore. So whether they can meet that with other orders is something that we need to watch out for. Also, the reasons at this point of time, the company is trying to ascertain, expect a negative reaction on the stock today.
And this is a stock which is up 200% since the beginning of the year, and there is negative news flow, cancellation of a large 2,700 crore order. One more stock you should watch today perhaps is Tilak Nagar Industries, because as Money Control is reporting from sources, they've entered into the final race to acquire Pernod Ricard's Imperial Blue whiskey brand. So that's another stock we'll track. Here's a recap then of the stocks. Stocks with positive news flow are Ambuja Cement, JSW Energy, Aditya Birla Real Estate, erstwhile Century Textile, Edelweiss Financial, RITES, Restaurants Brands Asia, the owner of Burger King. Stocks with negative news flow are Sanghi Industries, Viatech Wabag, Aurobindo Pharma and Yatharth Hospital. Okay, not done with news flow. Sudarshan is now joining in with the latest on the December Vahan data. Sudarshan.
So we have tried analyzing the Vahan data for the first 2 weeks of December, and it has thrown a different picture than what we have been hearing till now. So till now, we are hearing that two-wheeler segment has been doing relatively better than other segments. But as per Vahan data for the first half of December, the one segment which has underperformed other segments is two-wheeler. If you look at the registration data in the first 2 weeks of December, overall registration has fallen 19%, while registration for two-wheelers has fallen 25%, and it's been the worst amongst all these segments. For the December 1 to 17, total registration was 9.78 lakhs in comparison to 12.10 lakh that we saw in December 1 to 17, 2023. Now, as per the fuel category, the segment which has done better is electric segment, where I've seen registration increasing by almost 7%, while petrol registration for petrol vehicles has fallen 25%. Even UBS has come out with a note indicating the same trend that we have been highlighting. It says December industry details are on track to post decline, and that would be led by Hero Motors and Bajaj Auto, while TVS and Honda are likely to gain both year-on-year and MOM, and Hero Motor is expected to lose the most, and it expects industry to post 7 to 9% year-on-year decline in retails in the month of December, with Hero Motor Corp and Bajaj Auto are expected to record 15% decline in the retail, with TVS Motor and Asher Motors are on track to post growth for December, and while electric vehicles are continuing to gain the traction amongst all the segments.
Neat data. Thanks a lot for that, Sudarshan. Well, let's move away from the equity markets for a bit and let's focus on commodities. Manisha joins us as always to tell us what's transpiring out there. Manisha, morning.
Morning, Nigel. And I'm looking at the energy as a sector right now, where the crude oil prices have declined a percentage point overnight and trading at a one-week close. Well, there are prospects of more U.S. sanctions coming in for Russia oil supplies. The markets also are looking at weak economic data overnight from China and Germany. And then there are fears of supply glut in 2025. But the U.S. Fed announcement really takes center stage today, and all markets would react to that. The markets also will watch out for the U.S. oil inventory data that comes in today. But the surprise run-up within the energy sector comes in for natural gas prices, where we saw 4% of gains overnight. There is a forecast of harsher winter, stronger demand in the next week. There is also a rise in LNG exports from U.S., and that clearly seems to be supporting the prices there. Within the energy space, the only gainer has been the natural gas design.
Thank you, Manisha, for that. We will slip into a very short break. On the other side, we'll connect with Deven Choksi for some fundamental stock talk.
Never ever going to come back again. So, really, really sad. I mean, I don't have any words to speak.
We can totally echo that sentiment. Just the sound of that tabla. I personally remember, there was a concert that you had done with him at Shanmukhanand, and you just asked the audience, hey, Lavani, should we play that? And the audience was enthusiastic. Zakir Bhai just strung one beat on the tabla, and everyone was suddenly transported to the Lavani. But what's also interesting is that the personal connection that you had with him, you had the joy of playing cricket with him, a lot of meals that you would share, y'all would share as well. Salim, I'd like you to come in on some of those memories that you've had with Zakir Hussain.
Well, yeah, there are so many of them. I mean, one thing I definitely echo this thing about Zakir Bhai, that he made everyone feel like a friend. I mean, this father figure, the guru that he is, he'd make you feel like, that you were just very, very special. And not just you, I mean, anyone and everyone. He may be, he or she may be just an intern or somebody working at the studio or something. He'd make everyone feel so special and so loved. That was a very incredible quality about him. And, when it came to food, he was, he always had the best places to go to. He always had the best cuisine that he'd recommend. And there's one memory of him while I was touring with him during Tabla Beat Science, which was this band, very special band, with Bill Laswell and Karsh Kale. I remember we went go-karting, and he beat everybody. I mean, he was just an amazing rider, and after that, I remember asking him that, Zakir Bhai, how do you manage so many concerts living in America? And then each time he has to travel anywhere, he has to secure a visa, because it's difficult to you have to get a visa. But then he said, and I asked him, like, at that time the Indian card had just come out, that one could get a card, just a Indian origin living, somebody who lives outside of India but of Indian origin. And I asked him, like, why don't you opt for that? And he just told me something that I'll never, ever forget. He said that I can't give away my Indian passport. It's too difficult for him to submit his Indian passport back to the government.
Wow.
And that really shook me. I mean, imagine each time he has to go to Europe, each time he has to go to the UK, he has to travel to LA, go to the embassy, secure a visa. And he's willing to do that all his life. But he never ever give up his Indian passport.
One of India's greatest sons.
I have so many episodes like that, so many memories of him.
Welcome back. One of the big stocks of the morning could be Wabag, as the company has seen a 2,700 crore order cancellation from Saudi Water Authority. Devin Choksi is now with us to talk about individual stocks and the outlook. Devin, first come in on Vietech Wabag because it's seen a fantastic run up and now you've got this big order cancellation.
Good morning. Well, I think when we have to see the details about, I think, the cancellation and I think in a particular period, what kind of impact it will have. As of now, it is only the information. So maybe I think once the interaction, I think thereafter probably it would be more appropriate to talk about the impact on the company.
Okay, all right. Devin, I wanted your view on the steel stocks. So we'll want to hear out your view, but I just want to address the news piece then first. Reports say that India is likely to impose safeguard duty or some kind of temporary tax up to 25% on imports that are coming in. This will help curb the cheap imports that are coming in from the top producer, which is China. This proposal has gained some momentum and some support at a meeting chaired by Commerce Minister Mr. Piyush Goyal yesterday. In fact, we have had the steel minister and we have had industry batting as well for some kind of duties. The steel minister had indicated that there was some kind of talk with regard to safeguard duties. Let's listen in to the industry's pitch.
Under process? Is under process, let us see.
But so, what saying that they will be affected by this?
So investigation has been started or not? Doubts are there.
Yeah.
We will sort it out.
So investigation has been started or not?
Which one?
On this safeguard duty, because you have to first make some process.
Process is going on, let us see.
Well, we've also spoken to industry leaders, Mr. Sajan Jindal, the CMD of the JSW Group. We had Naveen Jindal, the CMD of JSPL as well. They as well propose some kind of protection for the domestic industry. Let's hear their pitch.
If you open up the records and see China in 1990, what kind of protectionist China were? In 2000, what was their protection levels and what they are today? Today they are opened up because they become the factory of the world. I wanted to export steel in 98, 99 to China. I was not permitted to do that because China had tariffs. They removed the tariffs, but now today we have zero tariffs on steel. Chinese steel, which is surplus, they are nearly 60% of their capacity is surplus capacity. Yeah. So it comes via Japan, Korea, Vietnam, Malaysia to India at 0% duty.
USA, Canada, they have imposed suo moto 25% duty. Similarly, now Japan also. Japan, can you imagine? Japan is also asking for protection, Japanese steel industry. So the situation is serious. We are very efficient steel producers, so we can challenge them. But then the steel industry in India, they must have some surpluses also to be able to invest in growth, to be able to decarbonize. Decarbonizing is very important for everyone. So we do need resources to be able to do that. So the health competition must be healthy. So we are only against the unhealthy competition that we are facing from some of these countries, and I'm confident that the government of India is going to take the necessary steps. That would not be enough, because these prices, see, if they were selling at, and we put say 12.5 or 15% duty on the price at which they're selling in the domestic markets, it would be fine. But the market they are losing more than $100 per ton when they are exporting, and which is being subsidized by their governments as per the information that we have. So that's an unhealthy prices. They are not realistic prices. Those are just prices for dumping of their material to protect their domestic industry. But it is hurting our industry, so we have to safeguard against that.
All right, let's wait and see. The industry has made a pitch. Will finance and commerce oblige? That's the big question. Devin, what's your view? Many on the street believe that maybe this is some kind of bottom for the steel industry. We'll get some protection that will come in there. Chinese exports hopefully will go down, which are clocking an annual run rate of more than 100 million tons for the first time since 2016. Your approach to these stocks?
So Nigel, I stay, I think, convinced and probably, I think, bullish on the prospects of the steel industry in particular. The Indian steel demand is increasing largely because of the government spending. That is a known fact. On the other side, the mix of renewable energy in the energy consumption is also increasing for most of the companies. And I think from the factory point of view also, they are increasing the renewable component therein. So obviously, I think this cost of energy is coming down, which is a critical key input factor here. if China has actually succeeded largely with that, I think they have started bringing down the cost of energy into the production. And that's where probably I think India will walk farther. And according to me, I think that is a positive thing. So I would remain positive. Maybe in the interim term, the government putting the import tariff, I think that would probably help the industry to scale up faster. So, but one can remain positive about the prospects and add these stocks into the portfolio.
Devin, one of the big movers yesterday was Quest Corp. Some bullish notes coming through that the company is a big beneficiary of the increased hiring seen because of gig workers, the surge in GCCs, the formalization of the economy, the PLI schemes, the capex push, manufacturing thrust. So Quest and Teamlease are both beneficiaries of that. Are you bullish on staffing companies, and do you have a preference between the two?
Well, I think we remain bullish about the prospects of growth, I think, because of whatever the facts you have mentioned, they are true actually. But they are not new ones. I think they are already there in the universe. And today, I think we are all aware about it, and how the growth is taking place in the industry. Maybe I think in a particular period, with the kind of performance that we expected, performance coming in from Quest Corp, could be, I think, relatively better, which I have not studied is in this quarter or next. So maybe I think that is the reason for which this particular bullishness. But we in general remain positive about the prospects of this company going forward.
Okay, all right. Devin, stay with us. What we're going to do is we're going to take a quick commercial break here. We'll come back and we'll connect with the management of Zydus Wellness. You may want to listen to this conversation. Interesting one. My colleague Mangalam caught up with Tarun Arora of Zydus Wellness at the sidelines of the Motilal Ideation Conference, which finished yesterday. Stay tuned.
Telling me so many amazing things. His knowledge about music, in general, about classical music, about Western classical music. I mean, so much to talk about. He has such an incredible, so much knowledge about Western classical music, and about orchestras and about musicians. It was incredible to just be around him.
Right. The thing that you spoke about him not wanting to give up his Indian passport tells you how great a son he was to the nation. Shankarji, I have to ask you this. Which of your songs did he like the most, he enjoyed the most? And if you were to, give him that vocal tribute, if you would.
Oh my God. I used to, we used to travel a lot by bus, because we used to have long bus journeys, 8 hours, 10 hours, 12 hours. So that was one opportunity where I used to play my mixes, or, something that is recently released, some film song or some, non-film song, some piece of music. And he used to listen to it and, appreciate every single, thing that, piece of music that I played for him, and give me his blessings. See, I don't want to sing something from what I've composed for him or anything like that. All I would like to sing is Guru Brahma, Guru Vishnu, Guru Devo Maheshwara, Guru Sakshat Parabrahma, Tasmai Shri Gurave Namaha.
Om Shanti is what we can say to Zakir Hussain. We celebrate his life on that. And one of the most amazing anecdotes that he speaks about his life is he, got up early in the morning, heard, the namaz being recited. Thereafter, he went to a school which was a Christian school where he learnt all the carols, etc. And then thereafter, he prayed to Saraswati as well. He was what India was. Salim, we've done Guru Brahma, Guru Vishnu. I would like for Zakir Hussain to be present on this earth. I would like you to, thank Lord, if you could, hum a line of Shukran Allah, because that's exactly what one has to say when they think of Zakir Hussain.
Sure, it was a difficult time right now. And speaking of Shukran, I must say, this song had just released, and I walked in late at Shanmukhananda Hall at one of his teas.
Welcome back. You're tuned into Bazaar Morning Call, and hopefully you're having a good morning. For starters, the Gift Nifty suggesting that we're likely to start off a little bit on the red. We'll expect to achieve 17 to 18% EBITDA margins over the next 2 to 3 years. That's the word that's coming in from Tarun Arora, CEO and whole-time director of Zydus Wellness, on the sidelines of the Motilal Oswal India Ideation Conference 2024. Manglam spoke to him on consumption trends, the categories they expect to perform well going forward. Let's hear out what he had to say.
When I look at Zydus Wellness, it's a very unique company because it's FMCG brands, but it is built around brands which are science-based, which are good for you. And we have two parts of our portfolio. One is the food and nutrition, and the other is a personal care. Yes, you're right. Over the last few years, if you look at it, the growth looks a little underwhelming given the expectations that we had. But it's still ahead of the industry. And actually, if we include 2019 post-acquisition of Kraft Heinz, which is what the benchmarks mostly look at, we had a great year. And then 2020, a lot of categories sunk. For example, Glucon-D had glucose powder had 30% degrowth in the category, and the consumers went away. So I would say a good way to look at us would be last 3 years' growth post-COVID, when things have settled down. And our growths have kind of got better and more consistent over that period of time. And we do believe we are well entrenched or well prepared for building a double-digit growth across our portfolio. One of the important things or unique things about us is that in our portfolio, with the exception of only one brand, most of the brands are category creators, they're market leaders, they actually build the whole category. So the task of growing the categories is what lies on us, especially in our core of our product portfolio. And therefore, what will drive our category growths going ahead will be largely focused on recruiting new consumers. So penetration is a single most key driver for us. Of course, we'll drive consumption. We are also looking at adjacencies. We're adding more products. But most of our products, being market leaders, are not focused on only just a market share gain, but focusing on growing those categories.
Right. So let's talk about
fortunately,
those.
if you really look at us last 3 quarters, yeah, sure.
Right. So let's talk about some of those growth drivers itself. You said that you have been category creators, and the key driver would be penetration. If you could give us a sense of what your overall distribution reach right now is, where do you intend to take this over the next couple of years, and how would you define an increase in penetration? What do those levels stand at across your categories right now, and what your target is?
Yeah, I think so. If we really look at it, when we acquired Kraft Heinz about 3 to 4 years back, when we looked at our availability across our portfolio, as reported by Nielsen, was only 1.8 million outlets. Today, that's already gone to about 3 million outlets. For us, it'll be great to get to 4 million outlets as in next couple of years, next 3 years, we should cross 4 million outlets in terms of just availability. Also, we've been pushing fairly hard to reach out to new age consumers, and therefore our organized channel, which is mounted in e-commerce, stands at 22% kind of numbers as a portfolio, where e-commerce has really been at a cutting edge. We are at 10-11% of our business coming. Some of our products like Complan, Evyouth do even more than that. So we've been pushing that number pretty hard in terms of getting new age consumers, building the reach. From a penetration point of view, if we look at it, we have seen almost 20 to 25, sometimes 30% growth in penetration levels across our portfolio, especially for brands like Glucon-D and Nycil. And almost 2/3 of that growth, for example, in glucose powder, has come from Glucon-D in the whole segment that we play. Similarly, in prickly heat and cooling, the functional talc space, we've been more than 40-45% of the growth of penetration has come through Nycil, and coming not just from new consumers but also from people using other kinds of talc. So similarly on Evyouth, when I look at scrubs, now that category was almost about 7-8 years back 130, 140 crores. It's become 310 crores with our market shares moving from a 30% to a 46%. So recruiting new consumers, growing these categories, and clearly enhancing market shares, because these new consumers come at a disproportionate level to our business. And that's really been a fundamental of ours.
All right. Final couple of questions before we let you go. One is on the acquisition that you made of RightBite. It does about 120 crores in annual revenue. What is the total addressable market here? And what is your plan here? What's your target? Are you looking at 500 crores in the next 3 years? What are the milestones here?
So the addressable market may be about 300 to 400 crores as it stands, but it is growing. There is a reasonable amount of tailwind because consumers are seeking nutrition through this new age products like bars, protein chips, protein cookies. We could grow this market itself, which could be a much larger space, because really speaking, if it starts getting into adjacencies, it starts picking up market from the base categories, like for example chips and other spaces, it could get much bigger. Last 3 to 5 years before the acquisition, we've seen a good 25% growth. We do believe that going forward, we have every reason to build on it as we move forward. So that is the kind of trajectory we believe we'll take forward and grow it bigger from that. So
all of this,
we are quite excited about what we can do with it. It fits in very well.
All of this brings us to a two-part question.
Sorry?
One is on your margins, and the other one is on your ad spends, because you will have to spend on increasing your distribution, increasing your reach, etc., and obviously marketing, putting money behind those brands. So what are the margins that you're targeting in the very near term, and what are your ad spends likely to be going forward?
So fortunately, we have a reasonable fix on how we want to build it. Our EBITDA margins came under a little bit of pressure during when the inflation was running high. In our last 6 quarters, we've been able to expand our gross margins and EBITDA margins. Some part of it we have invested back in the marketing. We believe going forward in next 2 to 3 years, we should get to a 17-18% EBITDA margins. Investing on growth for distribution, etc., is something already baked in. We want to retain a 13-14% level of investments on advertising and other marketing activities. I think that should be sufficient money for us to, build on our portfolio growth that we're looking at in double digits going forward.
Final question: double-digit growth implies what? Mid-teens, low teens, high double-digit, high teens, above 20s? I'm just trying to understand.
Yeah, double-digit is. Means a lot, but we're looking at teens given the earlier, given the way the market is, and I won't be able to give you any specific number around it, but I think that's the best I could let
First half of this year,
give it to you at this stage. And
first half of this year, you
Sorry?
did about 15%. Do you think that is a number which is sustainable?
Correct. I hope it is. The market is much harder, but we're working, trying to get to that over a longer period of time.
Interesting conversation. Get into a break. We'll come back closer to pre-open, and we'll also get you a few technical trading ideas.
And he was playing a solo, and he just jumped into playing Shukran Allah on his baya, which was, which was just...
Yes.
But we thank the Almighty that we have learned. Everybody, every single person on this panel and in the music world has a little bit of Ustad Zakir Hussain, because we've learned so much from him. And on that note, Shukran Allah walhamdulillah, Shukran Allah walhamdulillah, Shukran Allah walhamdulillah, Shukran Allah walhamdulillah.
Thank you so much. The heavens are blessed with a new, with a star. You've had, a lot of experience with him as well, playing on the stage with him. One thing I remember, people would say when they were bowling to Sachin Tendulkar that you're not only bowling to get him out, but you're also bowling to impress him. That's exactly what happens when you played with Zakir Hussain as well. You're not only, playing the music to present to the audience, but you're also playing to impress Zakir Hussain. How did he, change the way you played on stage? Playing with Zakir Hussain versus playing with others. If you could talk about that and maybe, speak about some of the things that celebrated, that Zakir Hussain celebrated the most.
Well, I go back to a memory from the year 2007. And that was my first time on stage with him in Kolkata back in the day when I used to live there. And I was just in the wings and facing the usual jitters. I mean, I kind of telling myself that, in a few minutes I will be on stage with this larger than life, this person who we have looked up to and idolized so much. And he comes quietly from behind, gives my kurta sleeve a little tug, pulls me aside, whispers into my ear, says, "Look, my kurtas are a little more expensive and a little better ironed, but at the end of the day, I'm just a tabla player." And just little moments like this, there's humor in it. But there is also, I have seen him as such a spiritual guide and of course, the great artist that he is. I don't think I'm even qualified to talk about that in the presence of all these great masters of music. But just how deep he was. And he was one of those people, look, there are great artists and then there are leaders. There are people who believe in things. There are people who can carry you forward into the next century.
Welcome back. Mitesh Thakkar and Sudarshan Sukhani are now with us on the show now. Gentlemen, good morning. Mitesh, starting with you, after yesterday's big fall, what is the approach to trade?
Good morning. So, yesterday, one very important thing which happened was that we kind of broke this and closed below the support of 24,500. And, that is to me a negative thing. Now, I think today I would want to watch 24,300 and we are about 35, 36 points away from that. And the GIFT Nifty is indicating opening 50 points below. So if we trade below 24,300, then I think good chance that we will see levels of sub 24,000, 23,950 to begin with and maybe even lower levels. And therefore, I think, it's important for me that some kind of recovery happens post the gap down opening. Now, if that doesn't happen, we'll trade on the short side. If that happens, then, we will avoid it. So 24,300 for me is the balancing line above which I'm slightly positive, not exactly bullish, but slightly positive and for a bounce back. Below it, I think the declining trend would continue.
Sudarshan, same question to you. The index trade that you would recommend?
Yeah, good morning. Well, the market, the Nifty broke down from that support level. It's the same support level, 24,500. And that told us that long positions should be closed. Now, the trading range has probably expanded with support at 250, resistance at 24,750. But that doesn't help traders. It just means that maybe the Nifty can move around in this range and hold on to 24,250 maybe. That's possible. A much bigger event is coming today when the US Fed announces its decision. We don't know how the markets there will react and how we will open tomorrow morning. So when a big news event is imminent, I would think that trading for the day should be avoided in the indices and we should simply focus on stocks.
Okay, let's get to the stocks then. Sudarshan, your recommendations?
Well, I have 4 buy ideas. I must also tell you that for the last few days, many days in fact, good quality buying signals have been coming and these 4 buy ideas are not in the same quality. But whatever it is, Ramco Cement is a buy with a stop under 1,030. By quality, I mean the technical quality of the chart. UBL is a buy with a stop under 1980. Wipro is a buying opportunity with a stop under 303. And ABB is a buy with a stop under 7,600. But for all the stocks, I would suggest watching the market hold on its support levels before taking a trade.
Gentlemen, morning. Mitesh, what about you? What are your trades?
Morning, Prashant. So for the first time, I have more sell calls. But as I said, I think I would react to the index, and I would avoid shorting in case we recover back post the gap down. But for the timing, it looks like a lot of stocks have given breakdowns yesterday. So we'll go with a sell on HFCL with a stop at 125, targets of 110. NGL is a sell with a stop at 1266 for targets of 1185. ACC is a sell with a stop at 2225 for targets of 2150. And Infosys, and in fact, IT in general is looking slightly better. Infosys is a buy with a stop at 1949 for targets of 2040.
Okay, thank you very much for that. Vishal Manchanda is now joining in to talk about the pharma space. Yesterday, stocks like Cipla, Piramal Pharma were all on the higher side on the back of bullish brokerage's notes. Vishal is now joining in. So Vishal, as we look into 2025, what would be the big themes and trends to watch out for? Will it be CDMO, which does well, though there was some negative news flow, delay of the opportunity coming in from the US? Will generic make a comeback? Give us the big picture looking into next year.
Yeah, so I think as we move into 2025, we'll be a bit nervous as it comes to the pharma sector. I think the large cap names, we will see, we'll be looking at Revlimid cash flows coming to an end, and people would be anxious whether companies have the new launches in place to replace the Revlimid erosion. That's one thing that will be on top of everybody's mind in 2025. On the CDMO front, I think things are looking good. The order flows are good, while the Biosecure Act is delayed. But there is one theme that's playing out for the CDMO companies, the China plus one theme. So companies continue to look to diversify. The other thing that would be on top of everybody's mind would be the GLP-1 opportunity, the weight loss drug opportunity for Indian companies, either as a CRAMS opportunity or either as launches in emerging markets and India branded formulation markets. So some of the developed markets would also open up in 2026 as far as the GLP-1 drugs are concerned. Overall, I think structurally 2025, from an India branded formulation perspective, we should see a similar kind of growth, say high single-digit growth for the IPM. The US probably will be selective. Some of the companies will have some very high-value launches, like Lupin is one that's going to probably outshine everyone else in 2025 in terms of the high-value launches. And then there are surprises in the US. We can see some approvals coming through which aren't expected. So I think overall it will be a mixed bag 2025.
So let's talk about the first point, the nervousness caused because of the Revlimid opportunity now getting eroded. What would be the overall loss in revenues, or what was the revenues on account of this, say, last year? And which are the companies that would get hit?
I think if you look at exposure, the large ones are Dr. Reddy's, Cipla, Zydus, and Sun Pharma, and Aurobindo to an extent. So in terms of, I think Reddy's would be the most exposed, followed by Cipla, then Zydus. Sun would be the least in terms of the net earnings exposure to Revlimid. So the concerns would probably weigh in more for Dr. Reddy's here.
Vishal, your coverage on Walk Hard?
Yeah, I don't have a coverage there. I'm just tracking that they have this NC molecule WCK5222, which probably is creating interest in the stock.
Interest on how, right? It's gone up. 24 has been a blockbuster year. We on hopes that the drug will be blockbuster. It'll clear phase 3. But is it a bit of a binary situation, Vishal, or you think as they say, it's like, drug discovery and approval is akin to, in a way, success rates in finding oil. Both are very, very low to clear the final hurdle in that sense, right? Now, of course, it's in human testing. So just wanted your thoughts there. Is it binary, or you think there's greater confidence that it'll get done?
I think my sense is, looking at whatever we have seen in terms of data, it looks like the drug should get through because we have seen this work in a lot of patients who have been resistant to almost all other treatment options. So the drug is working, and probably we have also not heard about any safety issues coming through so far on this one. So it should be through. I think the question is what should be the peak sales opportunity for this one. As far as I understand, so far we haven't seen. If I look at launches in the last 10 years, the largest antibiotic that has kind of the largest antibiotic so far is about $600-700 million in peak sales. And so this is a niche market. I think scaling up a drug in the antibiotic space is a difficult thing to do.
Right. Since you track this one for Wockhardt specifically, if they get this approval, right? And then of course you got to scale, etc. as well. Could the stock do very well? I mean, what you read is that there is no competition for many years, a decade plus. I mean, at least they don't see competition, right? The company itself. Is it possible it does very well, provided the approval comes through from here?
So there'll be no generic competition for the next decade, but probably we'll see competition coming in from other options. So basically we'll have, Pfizer is one large company which is focused on antibiotic research, and they have late stage candidates in their pipeline on the anti-infective side. So maybe not a generic competitor, but another branded competitor is obviously expected. Then we also expect to see some pressure because of a large drug in the same category like those. So this one is specifically focused around patients who would be resistant to many treatment options, and hence it would compete with drugs like Zavicefta in the US. So this drug Zavicefta is expected to go off patent around 2027. So if that goes off patent, then there will be some pressure on this WCK-5222 when it reaches the market.
Okay, well, there are competitors out there, maybe not immediately on the generic front, but generic also will come. But the market is very large. That's the point, right? I mean, the size of the market is.
I think the market is niche, I would say, because it's focused on the last stage of patients, those who don't respond to the traditional option. So it's probably the last line treatment options. That's where it will be positioned, is how I look at it.
All right, Vishal, we'll leave it there. Thank you very much for those quick thoughts this morning, but very useful. And appreciate your time on CNBC-TV18 as always. Well, 9-10 calls with Sudarshan and Mitesh now. Sudarshan, good morning. What do you have?
Yeah, good morning. Well, John, it's very cold in Delhi. So maybe we can consider buying UBL, United Breweries, with a stop under 1980.
But Sudarshan, UBL is beer. I thought you know, cold is some of the harder stuff. No?
Maybe some whiskey.
Anyway, I mean, just joking, but point taken. So UBL with Sudarshan. Mitesh, what do you have?
Yeah. I'll go with the sell on HFCL for targets of 110.
Okay. HFCL, I think, was a bit of a mover yesterday as well, but I think on the I think on the downside, but with large volumes as well. But those are calls, UBL and HFCL from Sudarshan and Mitesh. Well, let's talk about a bunch of other stocks as well. Fintech is what we want to put the spotlight on. Vamakshi is with us. Vamakshi, morning.
Well, good morning, Prashant. Yes, Fintech is in focus, and this is in focus on the back of a brokerage note that has come in from Jefferies. They've gone ahead, given a buy rating, and raised the target price to 1,530 rupees per share, which implies a roughly 24 to 25% upside. The company says that domestic businesses are doing well. They can expect 15 to 20% growth in the medium term, despite the current growth being already very strong. They also see opportunity in international businesses, and this opportunity is quite exciting as the company is getting licenses to launch their products and services in the Southeast Asian markets, and they also can pursue some newer markets. Apart from that, M&A in this space can also help the company speed up its progress, and the management seems quite balanced out here in their opinion. Overall, they're quite positive on the long-term opportunity that the overall sector offers, and in this sector itself, Fintech is among some of their top picks. So given that, Fintech in focus today.
Thank you very much for that. Over to Abhishek now for the latest on LIC Housing Finance and M&M Finance.
Well, Citi is holding conferences, and over there, management have come in from financial sector. So the LIC HF had come in over there. They say that the key takeaway is that there is temporary hitch in Hyderabad and Bangalore that constitute more than 1/4 of their disbursements, which could adversely impact the disbursements growth in Q3 FY25. Seasonally, robust traction was seen in 3Q. However, this will not be evident this year, and things may come on course in Q4. So net interest margin to sustain at lower end of the guidance of 2.7%. They expect a resolution through ARC for a cash consideration of around rupees 250 crore, which would release provisions over there. So also LIC Housing Finance has given a soft launch with respect to affordable housing book, wherein they are charging an yield of 11% versus industry rate of anywhere between 14 to 16%. Now M&M Finance had also come into the conference, and over there the management did mention that they expect a 5 to 7% kind of a disbursement growth this year and high teens AUM growth in FY25. Fee levers including corporate agency, credit protection penetration, health and renewable motor premium, co-branded credit card, all will be the key ROA delta for the company. They have given their reiteration with respect to credit cost guidance being at 1.3 to 1.5% for FY25. Cost stage 2 and 3 pool will be capped below 10% with lower PCR requirement. Now OPEX to asset ratio, they say that it will be at 2.7%, which is at the higher end of their guidance given after Q2 FY25 con call, with 10 basis point upward possible also being over there. They are evaluating equity fundraise in H2 FY25 because their tier 1 ratio is now at 14.8%. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. By the way, guys, we're just going to get to pre-open, but I'll tell you what. India is putting in a fight in Australia. It's the third test, day 5. The boys have come in there. We're, bending our backs. We have knocked off 5 wickets for 40 runs for the Australians. I don't know whether or not it can be a cliffhanger. India chases 300 runs in 50 overs. All in hope, but, that match is shaping up quite well. Last few days I've been hoping for rain. Now I'm hoping that we get a few more overs. I think our boys are putting in a good fight.
I dare say not end of the week, middle of the week, but we can have a screen here somewhere. We have a couple here, and we'll track that for you as well. But let's look at what the market is doing, and I think we're about a minute away from market open. So it's going to be a quietish start. Yesterday was more definitive on the downside, even at this point, and day before as well. So this is down 40. Sensex is down about 20. And in terms of individual stocks, etc., we'll get straight into it. VA Tech, Wabag perhaps will be one. K Fintech and Edelweiss Finance, etc. So a bunch of them, which we will get to. But indices first, as we always do. What do we have? So Nifty 24,300, still trading about 15 odd points. Okay, back to the 20-day. So you're essentially at the 20-day for the Nifty with this kind of a rate, slightly under. The close is what matters. Bank Nifty is down about 0.25%, 52,725 on the Nifty Bank. You've got the Sensex, which is down about 0.12, not very much. Market breadth is slightly positive, 965 up and 630 down, although this is very early. IT index is starting higher. And I think the Nifty heat map will come up on your screen, which will give you a sense of how we are likely to begin on stocks as far as Nifty 50 are concerned. So what do we have? 30 down and 20 odd up. That's basically on the Nifty heat map up on your screen. So 24,315, almost exactly at the 20-day.
Well, in terms of large cap action, autos on the back foot. Remember, the December Vahan registration data shows that the overall registration is down 19%. With two-wheeler registrations down 24%, with stocks like companies like Hero MotoCorp losing market share. Tata Motors, top loser, 1.3% gone. Hero MotoCorp is down close to about 0.8%. Maruti, Bajaj Auto, across the board, auto is on the back foot. Outside of that, in large cap action, it's L&T, ICICI Bank, State Bank of India, Power Grid, which deserves mention. These are stocks with cuts of more than about 0.5% going up to 1%. On the way up, Shriram Finance has bounced back. Over the last 2 days, Shriram Finance lost more than 5%. So some recouping of losses. Pharma has opened up in the green. So Sun Pharma, Dr. Reddy's, Cipla, again, higher. IT2, marginal gains coming through for Wipro. And ITC, where we're getting closer now to the demerger of the hotel business. ITC adds on. I think ITC was one of the only stocks which closed in the green yesterday, and it's added on another 0.5%.
Well, that's right, Rima. And just take a look at this casualty of this morning is VA Tech Wabag. The stock is down close to around 17%. More than 1,000 crores of market capitalization gets wiped off. I'll tell you what, after they won this order, actually the stock had rallied more than 35%. So now it's given up only half of what it put on. And it's 1,000 crores out of there. I think roughly this project should have given 10% margins, which should have been around 250 crores. Over the next 3 years, around 70 crores per annum. And you give a multiple of around 15 to around 18 times also. That's why that 1,000 crores is what has got shaved off VA Tech Wabag. Sanghi Industries, the ratio is out. It's going to be merged into Ambuja Cement. But the ratio is in favor of Ambuja, not in favor of Sanghi. That's why the stock is down close to around 9%. TARC, they're getting into trouble with, Sebi. So that's down another 6%. Yesterday as well, it was down circuit limit. You have IRCTC as well. That stock is another one that is a little under the weather. What's doing well? Well, in terms of volumes, you have Edelweiss Financial ended up close to around 8%. Today it's building on some gains. Swiggy, well, the limited free float is having a role to play out there. So that as well is up close to around 2.5%. And 63 Moons moving with very, very large volumes this morning. So Prashant, we're a little bit lower. But I think we're at very, very crucial levels, and the bulls could fancy their chances from here.
Almost like a holding pattern, right? I mean, 24,300 is on the Nifty, which is a short-term daily moving average, which is the 20-day. By the way, the market breadth has flipped a little bit. But again, I mean, just to emphasize, this is early days, more down than up, though. With what we have going at this point in time. Maybe just a few other names before we bring in our market master for the day. I mean, there is a fair bit which is starting up, and a lot of stuff which is moving around. Swiggy, of course, you saw that up on the top of your screens, which has been a big performer. So Mazgaon Dock is down about 2%. It's got decent sized volumes on it. Mazgaon ramped up to the top of the volume-led gainers list yesterday. It was a late mover. It's got large volumes, and it's down 2 this morning. Tata Motors is down 2%, 763 on Tata Motors, and it's got very large volumes. Max Healthcare is down about 1.6, so about just under 1,200 rupees on Max Healthcare. Premier Energy is down 2%, about just under 1,300. Only mentioned these are not large price changes, but they've got very large volumes, all of these. So keep an eye. Gale is starting down about 1.6%. Recent listing, Sagility is down about 1.6 odd percent. There's Garden Reach, which is down about 2% or so at this point in time. So this is, what is down with volumes. Jyoti CNC was a big mover on the upside yesterday. I think ended about 8% higher. And it's up 3% this morning, second largest volume-led gainer. But this is the first few minutes, so I'm sure things will change. EMS Limited is up 3.5%. Stocks now almost $1,000. I mean, what a runner. You got Coromandel, I think 3% higher, 1866, very large volumes. The crane company, Action Construction Equipment, 2.5%, 3%, 1494 on ACE. Radico is up about 1.2%, 2485. Pokarna, Jindal Saw, Route Mobile, Car Trade, these are all up between 2 and 4% at this stage. So, it's evened out. Market breadth is evened out. The Nifty's moved up into the green. We're about 10 points higher now on the index, 24,350. So, holding on at this point. Rana Gupta is with us, Senior Portfolio Manager and India Equity Specialist at Manulife Investment Management. Rana, good to have you with us here. Thank you for your time. I mean, since you have a bird's eye view of what's happening in global markets, what foreign investors are doing, this wait has been has been a long one, right? For foreigners to show some interest. The constant refrain has been valuations are too high. So I just want to start with that point as we wrap up 24 and head into 25. Will foreigner interest start to reappear? Typically, this allocation happens in the first 20 days or so of January. So that's an important time. How are things looking to your mind?
Sure. Thanks. Good morning. Thanks for having me. I think as far as foreigners are concerned, they, of course, will look at the valuation, the earning growth, and all of those things. But I think when you talk about if we have looked at outflows from India for last couple of months, I think this outflow is not India specific. This is more emerging market because of the US dollar going up and the expectation of US exceptions to continue and so on. But I think as the new year comes, we will see that even in the emerging markets, India still looks one of the best placed markets. I mean, just look at one few of the larger emerging markets, right? China has its own issues to deal with, whether the fiscal stimulus will come or not come. People are waiting, but there is not much clarity how much it will boost growth. Brazil, you have seen what has happened overnight. The fiscal concerns are kind of blowing up there. So I think in the emerging market space, there are a lot of challenges, and within that, India, with its very solid macro, looks very well positioned to receive the emerging market flows that the foreigner is going to make.
I just want to make a quick mention of the flash which is at the bottom of the screen. This is source space information. Remember, the union budget this time is that's 2025 is on a Saturday, which is the 1st of February is a Saturday, and the budget is on a Saturday. And the obvious question is, will markets be trading? And what we learned from sources is that exchanges are going to be discussing this today, and essentially to keep markets open on the union budget day that is on a Saturday. And sources are saying exchanges would like to give investors the opportunity to be able to do something on an important day like the union budget, and not just sort of come back on a Monday and then react to what really happens. So it's an important Saturday, and the first big domestic event, of course, of 2025. That's the union budget. Nigel.
Yeah, we'll keep an eye out on that as well. Important alert coming in there. And by the way, Prashant, the reason I got pumped is because Travis Head, which has been a big problem for India. Shiraz has sent him back to, so that's 6 wickets down. Our boys are doing well out there. Well, let's get back to the markets. So, hi, Rana. Good morning and good to see you win. Sorry for that. Just need to update our viewers with regard to the cricket match action as well. India is doing quite well out there. But Rana, tell us, top theme for 2025. What are you most bullish on? Reasonable valuations, good outlook. What do you like?
So first of all, I think from a top-down perspective, I think there are reasons to like India is that India is one of the few emerging markets which has got policymakers got enough room without disturbing the macro stability to kind of boost or incentivize growth. So I think from that perspective, we expect government spending to resume for the latter part of this financial year, as well as government to reprioritize its spending in the budget when it presented February next year. We also expect, RBI has already cut CRR, injected liquidity, and we also expect RBI to keep doing that, and also somewhere in the April, probably to cut rates. With that background in mind, we expect the rural consumption-focused stocks, they have done not really too much, and they look like they are poised for a bounce into the next year. And by saying rural consumption, I really don't mean the consumer staples companies. What we are referring to more like tractor, some select two-wheeler stocks, cement, some construction stocks, so on and so forth. So that's one segment that we like. As the liquidity improves, we also like the large banks, which have struggled for deposit growth. For them, situation will ease at the margin. And as the rates fall, we also like the non-banks, which are into secured lending. So these are the two spaces that we like, and we have always liked digital platforms. But given the run-up that we have seen in the stock prices, they could take us some shorter-term pause. And within domestic sector, we continue to like telecom. Among the sectors which are outside focus externally, given IT is a good play on US growth continuing, we continue to like the large cap IT. We also like the pharma CDMO space, where the capacities are already available. So I think that sector, irrespective of the Biosecure Act, is going to see pretty strong traction in the years ahead.
Outside of the non-traditional conventional sectors, Rana, there are lots of ways to now play some of these themes which were not there 2-3 years back in the listed space, and many more are coming because the primary market is so hot. Anything comes to mind which I think one could work with?
Sure, I think one of the historical examples will be the digital space. I think we were bullish on that when this was still a new theme, and now the theme has caught on, and it's now a mainstream theme with new IPOs coming to the market. I think another theme that we like and we can play it in not in the main stock but through other ways is the EMS. I think domestic component manufacturing is going to grow. Of course, the listed stocks have had a fantastic run and their valuations are quite high. But you can play the EMS component sector. I mean, some of the component sectors will be going for EMS, will be the CNC machines, will be the glass making companies and all these companies. So I think that is one example that comes to definitely comes to mind.
Rana, EMS companies, you want to narrow down on that one because there is clearly a big runway, but they're coming at very hefty valuations. So if you could narrow down on that theme, what do you like out there? And I guess if you're getting into these themes at these prices, then you must have a longer term view. You can't have a year or so in terms of a time frame because these stocks have seen a very, very sharp run up.
Oh, absolutely. I think, first of all, I think I'm not talking about the EMS mainstream companies, but I'm talking about the component suppliers to them. And definitely their valuation is also not too cheap either. We do see a long-term growth runway to till about 2030, and given all the focus on producing more in India, we also see the corporate interests like the US multinationals giving more orders to them, making more in India. In fact, the iPhone shipments from India is really going up. So we like to play that value chain, and we are talking about the components to the EMS spaces like a CNC machines and like glass, the phone glass making and all those things. There the valuation is still high, but given the long-term opportunity, we like that space. Also, I might point out, if I call them EMS ancillaries kind of thing, they are still a lot cheaper than mainstream EMS companies. One can say that these companies, as long as the EMS growth continues, which we think it will, they even can grow at a faster pace than the mainstream EMS companies.
Okay, all right. One more theme I want to discuss with you, Rana, is this entire stock market play. Whether you bought brokerages, exchanges, everything has done well. Now, there is some curbing with regard to trading action by the regulator Sebi. How would you approach this theme? Because you're sitting on big profits out there. Financialization theme in India is likely to pick up pace, but in the near term, that could be a bit of an issue due to the change in regulations.
So that's a very good point. We also like the financialization place because it's again a long-term, structurally very good place to win. But the way to approach it, if one is playing let's say the companies which are exposed to the markets, where their earning is determined by the markets, and there you are getting into a lot of volatility, because going forward we expect markets to return moderate returns from here, and the earning estimates are high, the valuations are high. So it could be that if someone is buying brokerages, which are essentially transaction-based revenues, those kind of companies can be exposed to some earning disappointment and maybe some PE disappointment. But having said that, we still like this place. What we like in this place are the companies who have annuity kind of revenues, or as we call it, annual revenue, high retention of clients and annuity revenues. These companies typically will be in the wealth management space. So we like that space. We would like to play that space through wealth management. And these wealth management companies are not necessarily only about mutual fund distribution. They do a lot of products which other financial intermediaries cannot offer. And in India, the top portion of wealth is growing, and demand for those kind of products, sophisticated financial products, is also growing. So we like that space.
By the way, Rana, so many IPOs, right? I mean, most of them, of course, by the time they hit the market, are kind of they're priced aggressively, and they further get juiced out on day one and immediately after listing. But sometimes some go under the radar, and there's no interest on day one, but they turn out to be big winners. Anything you looked at which seems interesting to you?
Again, I won't be able to comment on specific names, but you're right. I mean, if you just look at the IPOs that are listed, there is one construction company which listed pretty subduedly, but then the interest kind of ramped up. Now, as far as IPO concerned, I think one has to be careful in terms of participating, because as you rightly point out, the valuation comes at a place where it plays out in the first 1-2 days. So best time to participate in IPOs would be when the markets are a little sentiment is a little bad. The IPOs coming there, we have seen that management is also willing to offer reasonable valuation, and those kind of start making money for investors. And recent listing of a digital platform will be a good example of that. But regarding IPO, I think another thing worth mentioning is that one has to be careful about in terms of market fundamentals. the IPOs by the foreign promoters. Foreign promoters, when they're selling stock and taking the money out, this is basically India exporting capital. And the foreign promoters taking this money out, they're not even going to invest back, which can have a bearing for the long-term earning growth for the market as such. So, we hope going forward, we will see some sell downs, and that sell downs will come. Let's be honest about that. But we should see actually reasonable IPOs, reasonable fundraising from the Indian promoters or the foreign promoters who will reinvest back into the company's growth.
No, absolutely. Rana, it's a great chat. Thank you very much for joining us, and thank you for being with us through 24 like in the previous years, and we hope to speak with you in early 25 as well. Thank you very much for joining us. Well, the big listing, or should I say the Vishal listing today, is going to be Vishal Megamart. Mangalam is here to run us through, just the basics, the business, the subscription numbers, the interest from investors, and of course, how it's priced.
Well, Vishal, indeed, the reason I say that is because it was an 8,000 crore offer for sale by promoters. The issue price at 78 rupees. There are two reasons why you expect the listing to be a lot stronger than, what the street would have believed. One is the overall demand for the IPO. While the total subscription was just around 27 times, the QIP portion of which was subscribed by almost 81 times. You had the HNI subscribed by around 14 times and retail by about 2.3 times itself. So there could be a bit of a fear of missing out on the retail and HNI side. And the second thing is they did leave value on the table. One would say at 55 times, how do you define value on the table? Because the other listed peers are all trading anywhere between 80 to 110 times. So to that extent, we would see some sort of up move on the stock at the open itself. And if you were to look at the stock at around 70 times, it would be trading at around 100 rupees, maybe around at 85 times, 120 rupees against the issue price of 78%. It's a diversified retailer, 645 stores. They do not require cash, have around 700 crores of cash on their books, of which they will use to open 80 to 100 stores per year. The strong moat for them is nearly, 3/4 of their revenue comes in from apparel and general merchandise, and nearly all of that is their own brands, private labels. So as a result of which they do have strong moat. The only thing that stops them from growing is limited real estate availability or maybe some sort of sentiment downtick in the consumer space itself. They've been compounding at around 24 to 26 times. No reason why the multiple shouldn't be higher than what the issue is offered at.
Brilliant. Thanks a lot for that, Mangalam. But giving you company today is Vinny, who's here to track Sai Life Sciences, the listing today. Vinny, tell us, what do you expect from that one?
So for the listing today is expected to be a decent listing coming in from Sai Life Sciences, 3,000 crore IPO. It was a part OFS as well as a part fresh issue. Now market cap, that would be at the base price. That's the issue price would be around 11,420 crores. So yes, over and above that, when you look at it, because the PE ratio for FY24, when you calculate it on the basis of FY24 was 137 times, which is much higher than the peers, Indian peers and other CDMO players in India. So look at it in terms of the PE also. When you look at it for something like a Syngene, it's just 81 times. While Sai Life Sciences is 137 times. Then we have TVs at around 88 to 89 times almost in terms of the PE listing. So yes, that is something that is a bit of a concern coming in for analysts because it's a bit more expensive than other players. But nonetheless, the company is involved in a good geography mix. They are mostly in the international market. 97% of the revenue comes in from this international market front and 2.6% from the Indian markets. CDMO segment accounts for around 57% of the revenues, while contract research accounts to around 43%. And in terms of revenue also, they have been consistently seeing growth over the last couple of years as well. One interesting thing is in terms of margins, they have jumped up to 20% in the last year. Will be interesting to see because versus peers, it's still lower. So where that moves on, but an interesting listing coming in. We're expecting a decent move in today's trade.
Okay, all right. Thanks a lot for that, Vinny. Well, let's turn our attention then to the healthcare space now. Hospitals and diagnostic space is witnessing an increase in M&A activities. One such company that's exploring strategic opportunities is Narayana Health. To talk about more of this as well as the business outlook, we have with us Ms. Sandhya, the Group Chief Financial Officer. Hi, Ms. Sandhya. Good morning and thanks a lot for joining in. Well, tell us about the M&A opportunities that you're looking at. Should we hear about something soon and what could the potential size be?
Good morning. Thank you for having me here. We've always, whenever we've been asked about M&A, I think as far as India is concerned, we've always been opportunistic about it. And the price of the assets in India are on the higher side, and we really can't deliver the kind of value that we want to deliver to our customers at that price point. So we've been cautious in terms of M&A in India. As far as M&A outside is concerned, again, it is an opportunistic play. We are interested in the Caribbean and we look at opportunities from time to time. But there is nothing meaningful at this time to share or announce, or there isn't anything that is of significance that we can share at this time.
All right, Ms. Sandhya, so let's talk about more on the macro setup then, with regard to India. I think, various studies suggest that India should be doing roughly around 70 million surgeries, but I think as of now, we're doing half of that. Could you tell us what is the problem? Is it affordability? Is it, how equipped are we technologically? How do we bridge that gap? If you're doing only half of what is required, why is that? And I think as a company, I was going through your annual report as well. Out of the total heart surgeries that are done in India, I think y'all as a group do close to around 15%. Tell us about a little bit more about that as well.
Yes. So there are 2-3 aspects why the industry is not able to catch up to the demand. One, of course, is the availability and access to care. And I think that is solving to a large extent, though a little bit of geographical concentration is there and care is available more at geographical hubs and people have to travel in from across the country to access care, and that causes a little bit of difficulty. But definitely as a country, we are solving the availability, and over a period of time, we will definitely have enough capacity. The second aspect is affordability. Now, one part of it is solved through government schemes and government programs, which give access to care to the lower end of the spectrum. And the top of the pyramid is anyway have reasonable access to insurance. Really, the people that struggle on affordability are what we call as the missing middle, which is where we as Narayana have launched our missing middle program, where we seek to provide access to care at a very affordable premium. And we believe that more and more such initiatives, with also the insurance, IRDA being far more aggressive in the growth of various insurance products, I think that part will start bridging the affordability part of it. The third part is really people wanting to access care. I think as a country, we are far more conservative in seeking care. For example, if we have a knee pain, we will run as long as possible with the knee pain, but we would not take that knee surgery to solve for the pain. So there is that little resistance to access care as a country, and that I think over a period of time, as people have more and more exposure and they see more and more people getting better results from accessing care, I think that will bridge. Of course, it's a long journey, but we are definitely on the right path.
Right. Sandhya, we're wrapping up. Good morning, Prashant here. We're wrapping up 24, getting into 25. And you always told us, right, that Narayana puts up sort of, surgery-wise cost and et cetera at the start of the year. If there's a price hike, it sort of reflects there and it's clean and out there. So what are you doing now for 25? I mean, on an average across procedures, what kind of price increase are you taking?
So normally our price increases are in low single digits. We don't go beyond that. Mostly we try to cover for inflation. That's exactly the exercise we are going through right now. We are trying to cover for inflation. Inflation is very heavy on the medical side, both wage inflation, equipments inflation, and also in general, medicine consumables. We have seen inflationary trends. So we are trying to cover inflation partially through our own efficiencies, and we are trying to cover partially through price hike. 1st January, we will have our this year, next FY 25 price hike, which we will take. And like every year, we will put it up in our website so that it's transparent for everyone.
So would it be sort of high single digits? I mean, just or you think it'll be around the 5-6% level?
Yes, it will be. We are still finalizing that number, but I think it will be in the mid single digits kind of range. We try to keep it lower in that range because that's what is affordable.
And this is blended across the portfolio, right?
Exactly. See, what happens is that in pricing, the insurance contracts are frozen for a period of 2 years. So, which means that when it comes for renewal, that price hike takes effect. And government schemes don't normally do a meaningful price hike at all. So most of the price hike typically only takes effect immediately for cash patients and for insurance patients whenever the next cycle of renewal for that insurance contract comes.
Okay. All right. Ms. Sandhya, before we let you go, normally we get you post the results and we are very keen on various numbers. But I just wanted to ask you a little bit about robotics because you all are focusing on that aspect. I think you all were gunning for around 10,000 surgeries to be done in a year. You could help me out with that number. How many are you all doing? What is the cost matrix? And if you could tell us what is the path ahead, because that is one very small right now, but that's a focal point as well.
Yes. So we've invested in robotic capability across our hospitals. At the moment, we have 12 robos. And we have in H1 done about 900 plus robotic surgeries. From the cost part of it, robotics does not bring down the cost of the procedure significantly because there is a consumable cost which comes through. But what robotics does is it brings down the time taken for recovery. So we are able to discharge patients much faster and they are able to also recover much faster. We've had people who've undergone, say, a knee replacement and they're able to walk in a matter of few hours after the surgery. So that's the benefit that we are able to get, and we are very aggressive on our robotics program, and we are working quite a bit in terms of both expanding the program and also expanding the number of people that we are able to touch with the program.
And financially, how does it work? Is it margin accretive? And you said 900 odd surgeries in the first half of the year. By when do you get to that 10,000 mark that you'll have set out in the next 3 years from now? Should it be at that level?
I think it's a good aspiration for us to drive. And from a margin point of view, at the moment, I think it is similar to traditional surgeries only. Mainly because from a pricing point of view, we are not doing a significant premium pricing. We do want to build the demand for robotics. So therefore, I will not call it as a margin accretive item. But then if you look at it, if I'm discharging patients faster, then it improves my throughput. And therefore, I am able to turn around my facility better. And therefore, it does give me benefit indirectly in terms of profitability.
Got it. Okay. All right. Thanks a lot, Ms. Sandhya, for joining in. Wishing you and your team all the very best in 2025. We'll wait for the actual rate in terms of that price increase. But you're doing good work on ground, and we thank you from from all of us here at CNBC-TV18. By the way, Prashant, tracking the match yet again. Australians have thrown in the target over there. They're saying, India, you go bat, you want to chase. I think 280 odd is the target that they have put up. Gutsy declaration, one would have to say. India needs to chase 275 runs. I think we've got around 53 overs. Nail-biting stuff.
Okay, all right. And that's the update. That's the cricket update as we sort of track markets as well. 24,382 is where we're at. We're going to take a quick commercial break here. G Shipping is going to be the next company we speak with on the other side. Stay tuned, coming up.
Whatever. And I feel Zakir Bhai was one of them. So for me personally, and I think for a lot of us, it's a deep sense of personal loss, like losing a father or a spiritual guru. It's somebody who gave you a sense of tethering, a sense of belonging, a sense of belief, a sense of faith even. I mean, he told me, I remember one of the instances which were a little deep, and it took me a little while to comprehend what he was saying, is he just asked me once, just off the cuff, he said, why do you think Ustad Vilayat Khan Sahab or Pandit Ravi Shankar ji or Ustad Ali Akbar Khan Sahab or Pandit Nikhil Banerjee are what they are? Why do you think? And of course, I knew better, than to give a reply, kept quiet. And I let him answer, and he said, it's not because of what they play, it's not because of how they play, it's just because of how much conviction they have in whatever statement they're trying to make.
Okay, welcome back. We've got the market, which is up about 35, 40 points. Broader markets are sulking a little bit, but it's that kind of a day. And of course, later today, you've got a big global macro event, which is the last Fed decision for 2024. Well, the shipping industry is in focus next, and we've got one of the largest companies with us, G. Shiv Kumar, Executive Director and CFO at G Shipping, is now with us to take some questions. And, 25 could be material once Mr. Trump is in office. And depending on what he does, I think consequential for freight rates. Mr. Shiv Kumar, great to have you with us here. Thank you for your time. At the last you were on with us, you said the Russia-Ukraine conflict and what really happens there is very, very material for freight rates, right? Have we seen any, as we get closer to the inauguration, have you seen any movement in freight rates in anticipation? I'm not sure if freight rates move like stock prices in anticipation, but has there been any movement at all?
Yeah, morning, Prashant. Thanks for having me. No, there hasn't been a movement in anticipation of the inauguration. But freight rates, tanker freight rates, in any case, have been pretty weak, driven more by market fundamentals than anticipation of geopolitical events. So we've had poor refining margins this year, and they continue to be poor even in this quarter, which means demand for transportation of crude oil has been pretty poor, and so also for refined products. So the market was expecting the normal winter bump in rates. That has not happened, and therefore we've had a pretty weak quarter. So that's been happening, and as I said, it's driven by fundamentals. On the Russia-Ukraine front, we are seeing actions almost every day from the EU, the UK, sanctioning ships that have been in the trade, in the Russian trade, which eventually could have some impact because those ships then get taken out. But that's not going to have a short-term impact, really.
Okay, all right. Hi, good morning, Mr. Shiv Kumar. Thanks a lot for joining in. Could you quantify the fall? If you compare the spot rate with regard to what we saw, say, in the previous quarter, how much lower are they?
Yeah, so the previous quarter anyway was part of the summer lull, so that would have been pretty low. Let's compare it seasonally, which is a year ago.
Year on year. Perfect. Yes.
Yeah. So product tanker rates, so small product tankers, which is a workhorse of the fleet, 45 to 50,000 ton refined products carriers. They're probably down $15,000 a day from a year ago numbers, $10,000 to $15,000 a day. Crude tankers haven't suffered as much, probably $10,000 a day. So we're talking 25 to 30,000 for product tankers, coming down to maybe around $15,000 a day for the small product tankers. And for the Suezmax crude tankers, which carry 1 million barrels of crude oil, coming down from maybe $45,000 to $30,000 to $35,000 a day.
Okay, all right.
So that's across the board, about a $10,000 cut year on year, approximately.
Okay, we had a good couple of years, Mr. Shiv Kumar. Do you think this is the start of a bit of a downtrend? You have warned us in the past that some of these rates that we were seeing may not hold out, and you have cautioned investors as well as our viewers. Do you think we're at a start of a fresh downtrend, or do you think that we're more or less going to stabilize in this sort of a band?
It's tough to call. Rates have been pretty low, so it's surprised most tanker market participants that we've had rates at such low numbers for the last 3 to 4 months.
Yes.
Again, it's down to oil demand, which has been pretty poor. Specifically, transportation fuel demand has been pretty poor. So diesel and petrol demand worldwide. And in the 3 large blocks, which is China, EU, and US, are negative growth year on year. So that's a little bit of a concern, whether there's an underlying problem really, and whether that will get sorted out. So that's a macro issue really. And of course, you have the EVs, growth in EVs fleets in China. So it could be, but again, the spot market moves with short-term factors. It is, all I'd say is that it's been weaker than one would have expected. And if the next quarter, because these are the 6 months in which tankers make most of their money, the winter months, And if the next quarter is poor, then I think the market participants will say, then maybe this market is over. We've already seen ship prices come off maybe 10 to 15%.
I see. And I think I will just come to that with what you're doing there in terms of purchase of ships, etc., which we've spoken about in the past. 70-80% of your fleet is spot, right, Mr. Shiv Kumar? Exposed to spot.
Right.
Yeah.
That's right.
Okay.
70 to 80% of the tanker fleet is spot.
And on rigs, offshore rigs, is there going to be, what's the outlook looking like? I mean, where are these deployed? I mean, in the US, for example, now we are talking about maybe a bit of a boom for the industry, for the oil industry. And I'm not sure whether that will reflect in what way it will reflect in prices, but for the business itself, will that mean anything for you?
Drilling business is very localized. So what happens in the US, and the US will probably be an onshore shale kind of thing. So unlikely to affect offshore to that extent. And in any case, it's a very regional kind of business. In our case, we had a rig which came off contract a month and a half ago. She's got a short-term contract. She'll go on to the contract sometime within the next 3 to 4 weeks. We have another rig coming off contract. We bid into a tender in India. So we'll await what the rates are in the next tender.
But this tender that was cancelled for 2 jackup rigs, with the ONGC, that will impact the second half performance. If you could give us an update on that front.
Not really, because we've got a short-term contract. So we got a short-term contract for the rig which was bid into that, the first rig which was bid into that tender. So at least for the next 4 months, we've got employment. And now there are options to extend it as well. So not a short-term impact. Maybe it could have an impact over maybe the next year or so. But again, there will be more tenders coming through, hopefully.
All right. Mr. Shivkumar, final question before we let you go. In Q2, as you said, that the rates were a little bit softish, seasonally weak as well. But the NAVs were maintained. That's because, some of these contracts are already, longer term. So you're already enjoying the benefits of higher rates there. And you're throwing up cash as well. So NAVs didn't come down. Do you expect more of the same, say, in Q3, Q4? Because some of them are locked up. You're throwing up cash as well. So NAVs will not dip?
So in the previous quarter, while rates were weak, people were still, and especially in tankers, which form a majority of our fleet, participants were still expecting rates to recover during the winter. So prices of ships didn't really come down, especially not for tankers. Now they've started to come down. So you will not have that impact, meaning you will, so that will definitely pressure the net asset value in this quarter. To some extent, not a huge extent because we're talking 10 to 15%, but to some extent that will have an impact.
Okay, Mr. Shiv Kumar, we'll leave it there, sir. Thank you for joining us as we wind down 24 and see you in the new year. And thanks very much. So that's G Shipping with the perspective on the business and outlook for the company as well. Well, on the regulatory front, there is a fair bit happening as well. Sebi has proposed algorithmic trading for retail investors with additional safeguards. Sebi has submitted a consultation paper on the same and has sought comments from the public by the 3rd of January. We have Rajesh Baheti, Managing Director at Crossseas Capital Services, and Tejas Khore, Co-founder and CEO at Fires, now joining in. Tejas and Rajesh, great to have both of you here. Thank you for joining in. Rajesh, so just to put this in context, I mean, is this to safeguard, is this to kind of frame regulations around a new segment which is opening up for retail, or is it to kind of put in guardrails for a lot of the offerings which are already there? Because I suppose it's the latter. A lot of these offerings are already there for retail investors, right? For a certain fee, you can get access to these programs, and I mean, it's been on for years. So just wanted your thoughts, Rajesh.
Yeah, so it's not a permission for retail to do algo trading. They were already doing it. It's actually a guardrail. You're absolutely right. What was happening currently was that there were these marketplaces that were displaying algos from independent algo providers. They had connectivity established to maybe 10, 15 brokers. So you could choose your algo provider. You could choose your broker. These brokers had given their APIs out to these marketplaces as well as to anybody who wanted to develop an algo. And then you were connecting to one of these brokers, but these trades were not getting reflected on the exchange system. As an algo trade, they were just simply being reflected as an internet-based trade. So what Sebi has said that you cannot simply expose your API now and have these people log in and do that automation. And you cannot call this an internet-based trade. Each and every algo has to be identified as an algo trade, and permission has to be taken from the exchange. The algo has to be approved, and the algo providers also simply cannot lend their algos out to the public. Just like that, they have to be registered as investment advisors. So it's being made much tougher now for people to simply offer their algos because they have to be registered as investment advisors. And if you make your own algo, you can only do it for your own family, and you can't simply farm it out to other people.
Okay, that's interesting. Because the way I said it, I read a couple of reports which basically said it's kind of to level the playing field. Institutional investors have access. Why shouldn't retail? But what I'm hearing from you, Rajesh, is actually, if anything, it'll make things tighter in terms of access to these algos. It's the opposite.
Yes. Currently, a lot of retail algo was being represented as an internet-based trade and not technically an algo trade. So you could argue technically a lot of this will move into algo trading, and therefore you can say that retail is doing algo. But all this is just simply change of nomenclature with a lot of conditions.
Tejas, your first thoughts on the subject?
Hey, Prashant. Yeah, so Rajesh is on the right track. I feel like it's going to be more compliance-oriented, operationally cumbersome, especially for brokers and the traders, because algo trading is all about iterating strategies on the go as well. It's not as though you create a strategy and run it all year round. That's not how it works. So there is still no clarity about if every iteration needs approval, especially if it's a black box strategy. So it's something to wait and watch for. We are going to give our detailed feedback to the regulator about this. But largely, like Rajesh said, algo traders are already doing what they need to do, right? Algo trading is already democratized, and we have been at the forefront providing these services. But from a regulatory standpoint, I think what they are doing is trying to increase the span of control and making the buck stop with the broker, because they are the regulated entities. And I see long-term benefits to this, like I always do. And it's ultimately going to help expand the ecosystem, albeit at a gradual pace.
Okay. Rajesh, you said that trades were not getting reflected as algo trades at the exchange at the exchange level. I mean, a trade is a trade, I would imagine, right? Why is that? How is that different, and why should it be? What's the reason?
Well, one of the reasons could be that if you run black box strategies, you could have a situation where there's a runaway loop that an algo creates. There could be coding errors. And what exchanges need to understand is if some of that is happening, or if there are any algos that are detrimental to the integrity of the market. And if these trades simply get reflected as an internet-based trade, it looks like a manual trade. And you've got to be careful when you run algos in terms of risk management, because these are automated systems, and if there's one coding error, it's likely to get repeated over and over again in a loop. So from that point of view, reflecting it as an algo trade, also for understanding how the market is evolving, I think data gets collected on what percentage of trades are algo, what percentage is institutional, blah blah blah. So from that point of view, also it is not a bad idea to identify them as an algo trade. But I think the problem, as my co-participant has just said, is that algos are not static instruments. You really ought to, if you want to survive in this market, there is a change needed maybe every day, every week, and you've got to tweak your strategies, go back and back test them every evening with the new data coming in. And to say that every time you change a parameter, you've got to go back to the exchange is simply saying that, you've got to eat a stale apple every day, because you've got to make a fresh one and you've got to put it in the market out there. So I think that's the problem area. Let's see how that gets sorted out.
The iteration bit, which Tejas also referred to. By the way, the three listings are up on your screen. Vishal Mega Mart, 36% odd. I mean, listed, I think, with a 50% premium on top of the issue price. Sai Life Sciences, that's a 21 odd % pop on top of the issue price. And you got Mobi Quick. They cut down their valuations by basically down to 1/4 and the stock's jumping, and how 75% on MobiKwik, so $490 coming through there. So that's a rich screen. Primary markets are red hot, and more companies, interesting companies from different sectors, older sectors, conventional sectors, are coming to the market. You'll hear, by the way, we've already spoken with the three managements over the last couple of weeks as the issue opened, and you'll hear from all of them later through the course of the day on day one. So from Vishal, from MobiKwik and Sai Life Sciences, and hopefully you'll get some sort of, forward-looking numbers, etc. as well in terms of what growth expectations, etc. are. So those are the new listings out there. Tejas, just in terms of your platform, is there any way to quantify how much of the volume is, or maybe even for the broader market, if you have a number, how much of this is retail algo volume?
Very small currently. Discretionary trading dominates retail volumes. At Fires, it's in the single-digit percentages in terms of the number of clients that participate using algos. If you've read the white paper, right, the regulations that are being proposed by Sebi are, I would say, positive in the long term, but in the short term, it's going to create so many hassles. It's one thing to identify a trade as an algo, which is required from a regulatory standpoint. It could cause loops, it could cause flash crashes, very unlikely for retail. But I'd say it's definitely positive, and it's a growing sector. I think it should grow much more, because these days people don't really have the time to trade during office hours, right? They're either stuck in traffic, in meetings and whatnot. So automating trades is the way of the future, and we should not resist it too much, because it will stall the evolution of stock markets, in my opinion. And it also helps, right? Because retail traders are able to control their risks much better and trade in a more objective, less emotional manner. And that is actually a desired outcome for all stakeholders.
All right, we'll continue this chat, and once the sort of rules come into effect. Right now, of course, it's a consultation paper open for comments till the 3rd of January. Rajesh and Tejas, good speaking with you. Thank you very much for joining us as we look at this issue. Well, look at the market, which has taken a big turn. We were up about, I think, 30 points. We are down 60 on the Nifty. So this is a bit of a turn which has come through in the last couple of minutes or so. And maybe just a quick look at what is really causing this before we go any further. On the Nifty, which are the biggest drags actually? So HDFC Bank, ICICI Bank, 22 points from HDFC Bank and about 18 points from ICICI Bank. These are the two biggest drags. So banks yesterday were a problem point. And I think this morning, once again, you got a bit of a drag coming through. On the other side of the equation, of course, you got Reliance pulling its weight a little bit. So 1252 on Reliance, about 10, 11 index points. And you got a bunch of pharma and IT names, Sun, Dr. Reddy's, HCL Tech, which are also pulling in the positive green direction. We'll take a quick commercial break here. We'll come back. More stocks in focus, commodities with Manisha as well. Stay tuned.
To what Shankarji said, is that, this one thing that Zakir Bhai taught the world of music, it was to be in the moment. It was to live the moment, in the words of Steve Jobs, as if it were your last. And when then he could move on to the next moment and live that moment as if, that was a complete separate, entity unto itself. There's so many little things. There was humor. Right. I have not seen a more well-rounded individual in my life. I can safely say that. And there is, it is incredible how many of us feel like he was a guru or a mentor. You may be a musician. You may even not be a musician. You may be from some other walk of life, but he was still a guru for you.
He was. Shankarji, if you could tell us a little about how Zakir Bhai prepared, because you've spent so much time with him, Could you give us a sense into the brain of that genius? Because we know, what was on stage, but before that, how his preparation was and what his thoughts were then. If you could take us through that journey.
Okay, now here is a man who has been playing for years and years and years, and he need not prepare actually, because it's all there. But before every concert, so that he doesn't disturb the other artists, he used to put a piece of cloth on his baya and chati, and we are all doing our sound checks and creating a ruckus over there on stage. This wire is not working, that in here. He used to be just sitting there and he used to be doing his riyas, continuously. Now you asked about his brain. What differentiates a Zakir Hussain from any tabla player in the world? I'll tell you what it is. I've analyzed this. See, there's a lot of learning that you do, talim, as you say. Every tabla player, every instrumentalist, he learns a lot, and there's a lot of information in one's database. Okay, so Gyani, bahut log hain. You got a lot of information, lot of education as far as your core instrument is concerned. The difference between other players and Ustad Ji was, at that spur of the moment, from that database, which is that information that he needs to draw and present it, and it happens in a split second. So that was his mastery. The spur of the moment. That improvisation, that analysis of what you're singing and removing that information from his database and putting it out there, that nobody can do. That's why I'm saying tabla will never sound the same again on this planet.
For our audience, would you be able to give us a more relatable example out here? Like, you were doing a certain thing in the concert.
Okay, welcome back. 90 lower now on the Nifty. So, the direction is down, not up. It was up briefly, but all that's been given up and we're at the day's lowest point now. What's happening in commodities, though? Manisha is standing by with that bit. Manisha, good morning.
Morning, Prashant. Well, I'm going to talk about those commodities which matter the most as we have holidays coming in. And, well, it's not good news because when you look at the cocoa and the coffee prices, well, they are trading near all-time highs. I'll start with cocoa first, and these are the all-time highest prices that you have seen at $11,900 a ton. The prices have gained up quite strongly in this year. Until now, we are up by nearly 185 percentage point. Well, it has to do with the rising cost, and that has impacted the downstream companies. There are various reports suggesting on how the chocolate companies, dessert companies and cake prices have gone up in this year. And the final week or 10 days of this year could be looking at higher prices as well. The gains come in on the back of global cocoa markets facing their worst or the biggest deficit in 60 years and for the 2023-24. And the current year also is expected to be on a deficit side here. The global markets are facing this deficit for a third straight year, and the next year isn't expected to be any better. Well, it has been about crop failures in the major producers like Ivory Coast and Ghana, the crop diseases, aging trees. The newer trees will take time before they start productivity. And then it also has been about lower wages to farmers. So the sector clearly seems to be staring at various concerns there. If you look at the ICE, and that is where the global prices really get form on the US ports, the inventories are at an 18-month lows. Also, when you look at the inventories, they are at a 20-year lows on ICE itself at around 38,000 bags there. The markets also are looking at the International Cocoa Organization report, which says that the next year the crop prospects seem better, but the higher prices for the retail perhaps could still be a reality. Take a look at the coffee prices, and we have seen very strong gains come in for that one at multi-decade highs for coffee prices also. So when you look at the prices in this year itself, we have seen strong fundamentals, speculative positions on the higher side, and the Arabica and Robusta prices have seen very strong gains as well. So 70% up for Arabica and 90% up for Robusta prices is how coffee is also trading at. The only respite clearly comes in case of sugar prices, which have seen 4% of a decline overnight. And with that, sugar is now trading at around 3-month lows. Well, the global supply outlook has improved from Brazil, from India and from Thailand as well, which is bringing the prices down. The Brazil crushing in the second half of November actually has been on the higher side. And the markets also are looking at the USDA report, which says that we are looking at sugar consumption and production higher in this year. If you look at the sugar prices in this year until now, we are down by 4%. So only respite when it comes to sweets and desserts and chocolates during Christmas and holidays comes in from sugar, because cocoa and coffee prices are trading at an all-time highs.
All right, Manisha, thank you very much for that. So that's commodities in focus. Shoppers Stop is the next one we want to focus on. Back to stocks. Nimesh is standing by to tell us why. Nimesh, morning.
Morning, Prashant. So we just flashed the exclusives on Shoppers Stop. There's a large block in Shoppers Stop in the pre-open trade today. I understand Amazon, who owns 4% stake, has completely sold out its entire stake in Shoppers Stop today via block deal. In terms of buyers, it was largely dominated by DIs, but I understand some FIs have also bought in today's block. So no hedges. It was purely long onlys who've bought in today's block deal. If you look at the shareholding pattern, it's quite interesting. The promoters on 65%. The institution within institutions, it's largely owned by mutual funds. They own close to 22% stake in Shoppers Stop, and FIs own close to 7%. Just for records, Amazon bought the 5% stake in Shoppers Stop way back in 2017, and now they've sold out completely. They haven't made much money out of it. They invested close to 180 crores, and now for the 4% stake, they've garnered close to 280 crores. So not much gains as far as their stake is concerned. But for records, it's a clean out trade. Amazon has completely sold out its entire 4% stake in Shoppers Stop via block deal today.
All right, thank you very much, Nimesh, for that. That's exclusive information. And that's an interesting one as well. Stocks up about 2 1/3%. Clean out trade in Shoppers 642. Well, we'll take a quick commercial break here. But on the other side, it's our special segment. It's the economy. My colleague Latha will be speaking with HDFC Bank economist Sakshi Gupta and IDFC Bank's Paritosh Mathur on the impact of the rising trade deficit on the Indian rupee. Stay tuned. That's coming up.
Zakir Bhai did, and that floored you on the stage itself.
No, I mean, you tend to take some, complicated variation in your rhythmic improvisation. He catches on to it after the first beat. He knows and he's in sync with you. And you always wonder, how is this man reading you like this? It's almost like mind reading.
Well,
I'm sure that when Rahul also plays, some of the times while he's playing and suddenly he pauses, you see that Guruji has also paused in the same place as if they've been rehearsing for 10 years. I'm so sure, Purban, you agree with me. And you just wonder, how is he read you like this? So he had a different kind of brain and interpretation of what he's playing. And one thing that I've learned from him is that moment, he's there with you 100%. 1 hour concert, 2 hour concert, he's there with me, or he's there with Salim, or with Rahul, or Purban, or Aditya. He's there 100%. After that concert is over, maybe he's completely erases it and goes forward to the next one. But that minute, he's with you, whether he's conversing with you, whether he's playing with you, or whether he's just eating with you or just being with you, he's there 100% with you.
100% present for his co-artists and more importantly for his audience as well. I remember there would be a lot of technical difficulties when a concert is happening, say the mic falls or anything. He would just make a joke of it and continue because he was there with the audience. A lot of time feedback sounds would come, etc. He would just converse with 10,000 people in the audience, with all of them feeling like he's speaking only to them. There is a circle of life. Zakir ji's first, major concert was with Pandit Shiv Kumar Sharma, and as fate would have it, his last concert tour was with you in the US as well. That circle of life, what you saw Zakir Hussain as while he played with your father, to the time when you played with him, and till the last concert that you played with him. If you could give us that experience, what you learned from him, and just celebrate the life of the maestro.
Apart from, of course, having my own father as my guru, there are so many other great artists one learns from. And, Zakir Bhai was one of them. And each performance, I think, playing on stage with him was something you take back. You'd wonder how this person, who is so talented, who has seen everything in life, has seen all the success, would be so attentive when he is accompanying an artist on stage. It's not about him, it's about the artist. And the little detail, he may have done it millions of times accompanying various different musicians, but he was so attentive. He was not all over.
Welcome to It's the Economy. The rupee has depreciated by 0.5% this month and by 2.7% this quarter, that is from October. And it looks poised to touch the 85 rupees per dollar mark. While foreign portfolio investment sales, as you can see on your chart, have been very strong in the past week, the latest piece of bad news to hit the rupee is the November trade data. The deficit has come in at an all-time monthly high of $20 billion if you count goods and services, and an all-time high of $38 billion if you only count goods deficit. The rupee is still one of the better performing currencies in Asia, but it is, if you looked at only the month-to-date data, it has slipped a little more than it was slipping quarter-to-date. So is the trade balance data and other probably, slower growth in Q3 likely to lead to more dollar purchases and rupee sales? I have with me two experts to discuss the trajectory of the rupee. Paritosh Mathur, the head wholesale banking from IDFC First Bank, and Sakshi Gupta, economist from HDFC Bank. Paritosh, Sakshi, thank you very much indeed for sparing time for me. Sakshi, first to you. This trade deficit data coming at a monthly all-time high, whether you took services and goods or only goods, is that likely to worsen? Are you going to see even more deficits, and are you changing your current account deficit forecasts?
Right, Lata. So this month's November trade deficit number was clearly very, very weak. But, when we are looking at the trade data, we also have to firstly remember that, there's a huge seasonal component that plays out in Q3, right? So you have the festive season, which leads to an increase in gold demands. Gold demand volumes went up, for the November data, and that was the reason why our gold imports were significantly higher. Also, November is usually a slow month in terms of exports, but they usually tend to recover a little bit in the month of December as you have, the holiday season in the West. So, clearly one way to look at this data is that, yes, there is some amount of seasonal, component here. But even if I kind of correct for all this seasonality, clearly there is a pressure building up on our trade deficit and consequently on the current account. I think we are going to see export growth continuing to slow down as we move forward in the coming months, particularly as major trading partners like Europe and China continue to see slower growth. So there are headwinds coming from the external front. In terms of, our import basket, while, oil prices have been broadly contained for now, they still continue to remain elevated. So we haven't seen a sustained fall in oil prices as of yet. And on the gold front, I think given the continued, uncertainty globally, both on account of, Mr. Trump coming and taking power in the US and the geopolitical tensions that continue to kind of simmer on, gold prices are expected to remain elevated. So, the sense that we are getting on the current account and our trade situation clearly is that, we are looking at a print of 1.5% of GDP for the current account deficit for this, fiscal year. I think I just want to mention one thing.
Sakshi, the point I'm driving at is, have your numbers deteriorated after seeing the November data?
No, absolutely.
Were you at 1.1 and you went to 1.5% CAD? Because some of the economists have increased their current account deficit expectations after seeing the data.
Absolutely, Lada. So we were at 1.2% in terms of our current account deficit, and we've raised that to 1.5. As I said, that this is coming on the back of that. Even if I make adjustments to the seasonality that we see in this data, the weakness clearly has been much more than what we would have witnessed.
Okay. Paritosh, if I may toss that to you, we were pointing out the FII sales data would come both month-wise as well as day-wise for the last 5 days, for the last 5 months. It has been showing increased selling, but has the mood deteriorated after the current account the trade deficit number? Sorry.
Hi, good morning, Lata. Look, I think the overall dollar demand has been sort of increasing through the months of October and November, more so in November. And frankly, the trade deficit data is, I would think, a corroboration or a confirmation of the fact that there's been dollar demand going on, and it's just telling you that where the dollar demand was actually coming from. Therefore, it's it's data in the rear view. It does not imply that therefore going forward immediately there should be either a large depreciation experience on INR or that the flows would suddenly start to pick up and see more dollar demand because
just
of the trade deficit.
1 minute, Paritosh. I take your point entirely that the trade deficit was lagged data, and you all must have seen that demand in November. It's not something that's happening today, but it can sour sentiment is what I'm asking. Would people think that, oh, we are going to head into greater purchases of dollars because our imports are going to be higher than our exports even for the coming months? Is it leading to people buying dollars forward, importers or whoever?
I think not. And I say so because, like Sakshi also pointed out, the specific extraordinary dollar demand that we saw in November could be attributed also to the the large gems and jewelry buying, gold and jewelry buying that's been that's taken place. You could consider that for the festive season, marriage seasons, etc. And also, obviously, the customs duty cut that took place in July, August is further boosting demand for gold. So if you take out the gold component from the trade deficit number, it's a moderate increase. It's not a very dramatic increase that should fundamentally make us believe that trade deficit of this order is here to stay on a month-on-month basis. So we would right now be inclined to believe that trade deficit would sort of settle back into a 25 to 28, 29 billion dollar range. Probably not go back all the way to 20, 22 billion dollar range, but could settle back into a 25 to 28 billion dollars range, and therefore overall deficit of a 1.3 to 1.4%, maybe 1.5% is potentially the outcome for the full financial year.
Okay. No, I'm worrying only because we have never seen 15 billion. You know, the highest we last saw was $10 billion of gold imports in the month of August. So I'm just worrying that we may not go, will we go back to that $3 to $5 billion? And I don't know if, it can fall that much. Will it be a new low or rather a new normal in terms of higher deficit? Paritosh, no fears like that in the market?
I don't think that market is currently believing that, this trade deficit number is going to be sticking around and the gold buying is going to be sustained at these levels.
Okay. No, not at these levels. I'm just wondering if it's a new high. The other question I wanted to ask you is, therefore, how are you looking at the dollar rupee? Your year-end forecast, and if possible, a Jan-Feb forecast. I know it's difficult because when President Trump comes in, it's a binary event. It's not like a business as usual event. But nevertheless, your forecast for December end and possibly quarter end, March quarter.
So I think what we've been experiencing is largely a gradual depreciation in rupee, and fairly well managed, both in terms of the usage of reserves for supporting rupee at various points in time, literally a daily activity that's going on there. And given that I mentioned that I do expect at least the trade deficit to start correcting back from this type of a peak that we saw in November. Yes, the rupee should and will continue to depreciate, and there's nothing wrong with it crossing a 85 mark between now and say 31st of December. But yeah, we could as well think that it can hover around any levels now. It's very difficult to actually predict a very short term view on it, but 84.90 to a 85.10, 15 kind of range is something where dollar rupee could end for December.
And for 2025,
yeah. So if we project out over Q4 is normally a good quarter from a balance of payments positioning. We normally do get a positive BOP play out, at least seasonally, each quarter, each fourth quarter. We've witnessed that over the past many years, and so keeping that as the base of thought process, still rupee would still depreciate because of various global factors, like you pointed out. Trump's administration, President Trump's administration coming in.
Yeah, so your range is. I'm out of time, Paritosh. So what's your range?
So I would think, if we end Feb, March somewhere between 85, 40, 50, it should be good.
Within the range of expectation. Sakshi, very quickly, sorry, out of time. The Vahan data that my colleague presented is also quite terrible for the month of December. And it is year on year. So there's no point saying that December people don't buy vehicles, because we are comparing December over December. So does that reduce the expectations of Q3 growth as well? And could not that exacerbate foreign selling?
No, Lata, we actually have a lot of the data that we track on the economy has been very, very mixed so far. So it is not like you are getting a, unanimous increase or improvement in activity, including the Vahan data that you are talking about, right? So we would expect GDP growth right now for the third quarter to be somewhere close to 6.5, 6.6. That is where we are tracking the data to be, which is more than where the RBI is. And for the annual number as well, we are lower than the RBI's projection at 6.4 right now. But I think the bottom line on the growth data is that while there has been this expectation of pickup in economic activity in the second half of the year, the data has been much more mixed and uneven in that regard.
All right. I'm sorry, I'm rushing you all because I'm out of time, and there are a lot of IPOs that are getting listed, and we are very keen to listen to those managements as well. Paritosh, Sakshi, thank you very much for joining us with your discussion on the rupee. Rupee slightly weaker, 84.93. We wrap up on Bazaar. Chartbusters coming.
His mind was not anywhere else, although he has a million things on his mind. But if you're playing a particular tal, what we are playing, he's listening to the alap when the tabla is not being played. These were qualities which were completely, of a different level altogether. And his observation level, anything and everything was observed so well. In fact, I remember in concerts, after concerts, there was no talk about music. It was just about everything else under the sun except music. An amazing conversationalist and amazing person to just sit and imbibe from, So many memories right from my childhood when he used to come to my house. He used to host some amazing home parties on my father's birthday, which was 13 January. So I remember Nusrat Fateh Ali Khan Sahab and so many other great artists coming, and Zakir Bhai would host the entire evening. From that time when I was about 7 or 8 to this time now, having seen my father on stage with him, and recently, just a month ago, performing with him, it's just a title, which is kind of, I have no words. It's pretty amazing to see this an artist of his qualities. It's very hard to come by.
Purbayanji, if you could give us a musical tribute of a rag that you could just give some notes of.
Well, I would like to mention that I was incredibly lucky, and even now, Shankarji is also one of my mentors and gurus, and I was incredibly lucky to be able to do this one song during the times of the pandemic, which was called Shiva Shankara. And I remember I had asked Shankarji, and of course he very kindly agreed, and he said, yes, I will do this. And then we were kind of talking about who else we could have on it, and just on a whim I thought I would talk to Zakir Bhai and ask him if he would. So I texted him and he called me back, and I said, Zakir Bhai, here's this song that Shankarji very kindly agreed to do with me, so can we have you do something on it? And in his characteristic fashion. He asked me, what is the something that you would like me to do? And I think I kind of bumbled and I said, well, play some tabla on it. And it's a song that we did, and it's been a very, very much cherished memory. I still have some of the video rushes of when we shot his video or on Zoom, actually, when he was in his studio in California. And it's a little composition which if I may, I'll just hum the first line, but it's sung by Shankarji, who the man himself is here. So it goes like this: Shiva Shankara Mahadeva, Shiva Shankara.
Ambuja Cement announces an amalgamation of its subsidiaries Sanghi Industries and Penna Cement with itself. Street sees the merger in favor of Ambuja and negative for Sanghi as the swap ratio values the latter at a discount. Sanghi, as a result of which, down 10%.
Wabag tanks in trade after a 2,700 crore order from the Saudi Water Authority gets cancelled.
Shoppers Stop climbs in trade today after nearly 3.5% equity worth 236 crore rupees changes hands at 628 rupees a piece in a block deal window. Sources tell CNBC-TV18 that Amazon.com is the likely seller in a clean-out trade.
Vishal Megamart has good listing, list at around 104 rupees per share versus its issue price of 78 rupees. To talk about the listing and the company's future plans, we'll be joined by Mr. Kapoor, the MD and CEO.
It's a day of bunch of listings. MobiKwik and Sai Life Sciences too listed a premium against their issue prices. MobiKwik lists at around 440 rupees per share against its issue price of 279, holds about that 505 rupees mark. The other one, Sai Life Sciences as well, lists at around 650 rupees versus its issue price of 550. Currently, the stock above that 710 mark. But you don't go anywhere, because very shortly, Upasana Taku, who is the chairperson and CFO of MobiKwik, will join us to discuss the company's post-listing plans.
Hello, welcome to Chartbusters. I'm Nigel. With me is Mangalam. It's IPOs today that are center stage. We have 3 IPOs that listed. All 3 of them, if you got allotted, you'll be very, very happy, because all of them have seen a blockbuster listing. For the Nifty, well, it's down close to around 50 points at one point of time today. It was up close to around 50 points. I think the sense you get is, at lower levels, we should see some buying. 24,200, well, that's the mark from when we have bounced in the past. Today as well, we almost went to those levels. So keep an eye out on that. And the Nifty Bank, that's at a very, very crucial juncture. In 2 sessions, that index has lost more than 1,000 points. So I think it's due as well for a bit of a bounce. It's taken support at lower levels. Let's see how this goes, Mangalam.
A bounce is due, Nigel. We'll keep an eye out on that. Largely because, one, we have seen a bit of a sell-off. Secondly, we have the options expiry tomorrow. The put-call ratio at around that 0.64 mark. Also at the lower end of the range. We'll watch out for whether there is an upside coming in on that one or not. And the Nifty around that 20-day moving average. But most importantly, just keep an eye out on Reliance. The big index heavyweight currently is now moving higher, currently around the higher end of today's trading range with a gain of 1%. If that continues to support the frontline index, then maybe we will see a bit of an uptick. But let's kick off the show with a new listing on the bourses. Payment platform One MobiKwik saw a strong debut on listing. What we'll do is take a short break, come back. On the other side, the management, Upasana Taku, the executive director and chairperson, along with the CFO of the company, joins in to discuss the company's post-listing strategies and future itself. And as we take that short break, also get the idea of a profit coming in from our Money Control Pro colleagues. Bharat Jinani joins in. Bharat Jinani talks about that idea for profit, take a short break, and on the other side, we have the management of MobiKwik.
The demand momentum continues to remain strong across the verticals, that is business, leisure, meetings and conferences. With the upcoming wedding and the holiday season, the demand momentum would continue. Further, the foreign tourist arrival, which were below pre-pandemic levels until last year, are expected to witness a significant increase this season, which is beneficial for hotel players like EIH. The hotel industry upcycle is expected to sustain over the next few years. The demand is expected to remain strong given the rising income levels as well as development of new tourist spots. The supply, while it is increasing, is expected to trail the demand over the next few years. The demand-supply favorable dynamics is positive for the hotel industry, and players like EH. This is more so the case in the luxury segment where there is limited supply addition. And this is beneficial for EIH, which has a luxury positioning. The company has unveiled a good expansion pipeline of 20 properties and will add 1350 keys. Some of the properties will have mixed use, that is, it will have a hotel as well as an office leasing space, which will lead to an improvement in the return ratios. The company has a strong balance sheet and healthy cash flow generation. At the current market price, the stock is trading at an EV by EBITDA of 23 times FY26 projections. Investors can add the stock in the book. Thank you.
Mahadeva Parameshwara Amrita Rupa Karunakara Dhyana Priya Shiva Shankara Mahadeva. It was something that we did during the pandemic.
Our collective prayer will give him a lot of peace.
Welcome back. Well, one of the blockbuster listings today is MobiKwik. It saw a strong debut, listed at a 58% premium in comparison to its issue price. To help us out with what's the way ahead, we're joined by Ms. Upasana Thakur, the Executive Director, Chairperson of the company. Hi, good morning, Upasana. Thanks a lot for joining in. First of all, congratulations. You and your team will be pleased because the stock market has given you a thumbs up. They believe there's going to be better times for them going ahead. So you're the best person to help us out with that. Fill us in with a few details. Most financial institutions, they are coming out with their own apps. Most lenders as well are coming out with their own digital platforms. So there is a bit of a fear with regard to competition and your existence. In that sort of a backdrop, how do you expect growth to shape up in the coming years? Please go ahead.
So I think the audio is not very clear, but I think you are asking me that how do I expect to see growth in the next few years? Am I right?
That's correct. And I'm also in that sort of a backdrop where every lender is coming out with their own applications, with their own digital platforms. So there is a fear with regard to your existence. So, if you could comment on that first of all, and then you could tell us what is the growth trajectory. For now, the stock market believes there are good times ahead, and that's reflected in your stock price. Please go ahead.
Yeah, hi. So I think this has been a fabulous, morning for us. We've been working towards this for the last 15 years with a lot of conviction. I'm very happy to be sitting here today and talking to you. The faith and the trust that the 161 million Indians have put into MobiKwik, is something we can see today in the listing of the company. I can tell you that there have been a lot of detractors the last several years. But it's really humbling, and it's absolutely a pleasure to see the way investors have come into this IPO. I think it bodes well for the fact that MobiKwik is now the largest wallet in India, and in the last financial year, MobiKwik has grown 59% on the top line, both in terms of our payments business as well as distribution of financial products. We've also turned profitable in FY24. I think we want to build the company just we have been building the last 15 years with honesty, with innovation, with frugality, and with the intention of creating amazing shareholder value. I think we will not try to grow extremely fast. We will not try to grow extremely slow. The pace at which we've been growing the last few years, which is roughly 50 to 59%, that is the kind of growth we are working towards. And our aim is to always work in a frugal manner so that the company is able to show positive results, both at the bottom line as well as at the top line.
So let's talk about that itself, Upasana. Congratulations on the strong listing. But now that you've listed, the responsibility increases as well. You've grown at around 58, 59% in the past. what clip can you continue this growth rate at on the top line? And on the bottom line, after many years, it was in FY24 where you became PBT profitable and net profit positive as well. What are the kind of operating leverages that you have? What kind of margins and net profits can we see you report going forward?
So, see, we have a lot of growth drivers in our foundation business, which is the digital payments business, which is what we have been operating for the last 15 years. So, whether it is wallet in e-commerce, whether it is wallet on QR codes, and whether it is our innovative new product, Pocket UPI, which is pay with your wallet on all the UPI QRs in India. All of these are growing fantastically, and we expect to get a good growth from there. Even on the merchant side, now we are going deeper into tier 2, where we are deploying, acquiring new merchants. Just in the June quarter, we acquired 2 lakh new merchants. And then we are giving sound boxes and EDC machines to them. And then we are also giving them merchant loans. So the proliferation of payments continues to be the main business of the company, for which we acquire users and merchants. And we have at least 3-4 different growth drivers just in the core payments business. In addition to that, given that we have a full KYC base on a large user base of 160 million users, roughly 60 to 70 million of our consumers are full KYC'd. And on the merchant side also, we have 4.3 million KYC'd merchants. So our distribution of financial products, be it insurance products, be it saving or investment products, or be it credit products, they will be the cream on top of the core payments business. And that is sort of how we expect to continue growing in the manner we have been demonstrating in the last few years.
So just to follow up on that, you said, the leverage that you have on the data that you have of your customers will get you into selling other products as well. If you could give us a sense of, say, 1-2 years from now, how big will your core business be? And how big will your value-added services, all the other financial products that you're selling would be? And what does that do to your overall margins?
I'm sorry, you'll have to repeat your question because the voice is coming very choppy. So if you can say it in one continuum, it will be helpful.
We were trying to say that in a continuum. What we're trying to say is that, over the next 1 year or 2, what would your revenue mix look like from core products and the new financial products that you have? And what would that do to your margins?
No, see, the way it works is that we have shown in our numbers that are available in our prospectus that we make money both in our payments business and in our distribution of financial product business. Now, of course, in payments, we make roughly 20% contribution margin. And in the distribution of financial products, that number is 40%, which is why the blended contribution of margin of the company is 30%. Now, another way to look at it is that the reason payments is globally a lower margin business, number one. Number two, we are already booking all the cost of user acquisition, merchant acquisition, in the consumer payments business itself. So when it comes to distribution of any financial product, there is no more CAC or customer acquisition cost to be paid. And the operational cost is very low. And so any revenue we make in distribution of financial products directly flows to the bottom line. So while it continues to be the case that payments is a lower margin business and distribution of financial products is a higher margin business, but on a blended basis, the company expects that it will be doing a 30% type of contribution margin long term. And below that, we only have fixed costs. Fixed costs are coming off. As you can see in the last 3-4 years, they've been coming down drastically. And that's where the operating leverage kicks in. And the company has been able to demonstrate 4.3% EBITDA margin in FY24. And that will only continue to expand in the next few years as the costs will be in control, but the revenue keeps ramping up.
Thanks, Upasana, for joining in. Wishing you and your team a good day ahead. It's been a good start to the trading session. We're going to hold you at some of these numbers. I think for the day, you go enjoy it. And we look forward to chatting up with you on your quarterly numbers as well. We'll hold you to some of them. For the time being, though, let's slip into a short break. On the other side, we'll be joined by the other management that we promised you, that of Vishal Mega Mart. Stay with us.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC-TV18, Mumbai.
Hello, I'm Surabhi Upadhyay and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen. We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go. Well, from one listing to another, the other new kid on the exchanges is retailer Vishal Mega Mart. It has been a mega listing, stock listing at a 34% premium to its issue price of 78, currently at around 108 odd rupees. Kuninder Kapoor, who's the MD and CEO of Vishal Mega Mart, now joins in to discuss the company's post-listing strategies. Thanks a lot, Mr. Kapoor, for joining in. Congratulations. You've been talking about leaving value on the table. You offered, priced the offer at around 55 times. The competitors were around 80 to 110. Now, after the listing, the stock has moved to around 80 times itself. So that easy money has been made. The value on the table has been taken out. What next is the big question. You've been talking about this 24 to 26% growth CAGR over the last 3 years. Can that sustain? That's point number one. And secondly, what are the risks to that growth sustaining? If you could give us a sense of your 3-year growth plans from here on.
Thank you very much indeed. Firstly, let me take this opportunity to thank all the new investors who've joined the Vishal family. We are absolutely and deeply grateful to you for your support, and thank you very much. To your question, yes, we are very optimistic about our growth in the future. I think, as you rightly mentioned, our CAGR over the last 3 odd years has been in the ballpark of 26%, and we are tracking well at this moment, and we remain very optimistic about the growth in future.
Yeah, I understand you remain optimistic. I just wanted to know what are the risks to this, because while there is a clear sign of growth, there could be some risks if you could foresee some of them. And this 24 to 26% growth band, if you could break that up into new stores and same store sales growth.
So let me take that first. About 50% of our growth is coming from same-store sales growth, and the balance is coming from new store openings. And if you were to specifically focus on the risks, of course, we would face the challenges, if there are any, on the macro front. We've done that in the past also, and that would always be something which is on the agenda. Equally, I would say that to ensure that we are the best offering for our customers and consumers in a very dynamic and fast evolving retail scenario in India would always continue to be a challenge. So yes, the challenges are there as much as any other consumer businesses, but we remain optimistic about the future.
All right. Hi, Mr. Kapoor. Good morning and good to see you, and congratulations to you as well as the entire team. Very, very nice signs we saw. You know, when you all were all ringing the bell, it appeared you all were pros over there, one after the other, you know, giving the gong a whack. But let's talk about your expansion plans then. What is the geography you're looking at? You know, if you could give us some clarity on that front.
So firstly, we were told that the louder the bell, the more would our price go up. So
you should be ringing it till now then.
That brief which was given
should
to
be
us.
ringing it.
Yeah, and we gave it our best. We put everything into it, and I suppose that hypothesis is turning out to be true. So that was good. In terms in terms of where we are present, we are currently in 30 states and union territories. There are 4 states in India where we are not present at the moment in any significant way. These are Kerala, Tamil Nadu, Gujarat and Maharashtra. As we speak, our expansion is happening into Kerala. Whichever state we go to, we open a cluster of stores, a significant cluster of stores, to ensure that our operations become efficient and productive, and then we go on to the next state. I must quickly clarify that while we are opening stores in Kerala at the moment, in the rest of the country where we are present, we continue to fill the gaps which exist in terms of our stores. So that happens simultaneously. So at the moment it's Kerala, and we hope to be in the other 3 states in a systematic fashion in the very near future, I suppose.
All right, 80 to 100 stores every year is what your target is. But you know, what's interesting is that you don't need any funds for expansion. You generate a lot of free cash flow. Via this IPO as well, there was an offer for sale and no fresh funds coming into the company itself. So with all this money that you have on your balance sheet, I had 2 questions. One, are you eyeing any acquisitions for quick expansion into the geographies that you mentioned? And secondly, what would your stated dividend policy be? Because if you have cash, no dearth of, free cash generation, the street would then want some dividends as a policy.
So on your second question first, the decision on dividend is something which has to be taken by the board. And at the appropriate time, we would make our recommendations to the board, and they will take a final call on the dividends that we are paying out. I'm sorry, I forgot your first question. You'd asked me a question earlier to this one also. So if you could just
because you said that you're
that.
not present in a few geographies.
Correct. So that as I mentioned, we are opening stores, as you mentioned, every year. We are accelerating the rate of store openings. So I'm quite optimistic that in the 4 states in which we are not present at the moment, we will be there very soon. In Kerala, as we speak, the expansion is taking place. But as I mentioned, we'll open a large number of stores in a cluster, and then we will move on to the next state.
All right. Mr. Kapoor, very quickly, you have plans on having a longer innings, right? At the company as the MD and CEO, right? There's no plans of moving on because there were some changes ahead of the IPO and some part of the market is a little bit nervous. So your plans are to stay put, right?
Absolutely. I'm here for the foreseeable future. And there's been no discussion between me and the board at any stage about any change at the moment. So I can confirm with full confidence that I'm here for the foreseeable future.
And if we may ask, what is typically the retirement age one has, and how long before, what's your age? Let's put it that way.
We don't have any age limit in our contracts. All the contracts with all the employees of the company are open-ended, and they get decided mutually closer to when both the board and the concerned employee feels that it's the right time.
All right, so you're in for a longer haul. Thanks a lot for joining in, Mr. Kapoor. Wishing you, your team, all the best. Celebrate the day, and we look forward to chatting up with you rather soon. On that note, though, we'll have to wrap up on this edition of Chartbusters. We've got the latest in terms of managements with regard to have listed today. Trading hour will take all the action forward.
the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC TV18, weeknights at 7 p.m.
GDP growth rate was lower than 5.4% in 2 quarters, quarter 4 of 21-22 and quarter 3 of 22-23. So it's important to understand that this drop happened just 2 quarters in the last 12 quarters that we're talking about. So let us not sort of pick on that one and predict future. This has been a steady growth and a steady sustained growth. So I'd like to place that perspective with the numbers before me. The regular union budget was passed by the newly constituted Lok Sabha post-parliamentary elections in middle of August 2024. Effectively, the implementation of new announcements of this government commenced after the Appropriation Act was passed by the Parliament in August 2024. Effectively, it is from August that we are starting to give emphasis to many of the things, inclusive of capital expenditure, and therefore we are now talking within 4 months after the full regular budget was presented in August. So the situation is no different from one.
Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me is Sonal Bhutra. 0.5 percentage point gone now on the Nifty and the Sensex. The Nifty is down more than 100 points. Sensex down close to about 400 points. And this is the 3rd consecutive day of losses, right? And it's a bit disappointing because we opened up flat. There was a little bit of a green on the screen. And again, the markets are selling off. So every minor kind of bounce is also being sold into. One level to watch, because we're close to that, will be Friday's intraday low of 24,180. That has been the recent low in the markets. So we're about 40 points away from that. And that, in a way, would be the marker of this range that we've been in. If that breaches 24,180, then it would be a bit worrying.
Yes, and it's a lot about Bank Nifty yet again, right? So the fall that we've seen in the last couple of minutes has also come in because of the fall that some of these big banks are seeing. So Nifty Bank is down 1%. It's HDFC Bank, you have ICICI Bank, Axis Bank, SBI, you name any of these heavyweights, all of them have come off from the highs. They are at the day's low as well. So there is some pressure that continues with Bank Nifty as well. That was the case yesterday. That continues today as well. We do have have the other names, the likes of BEL, HDFC Life or SBI Life. So some of these insurance names are also coming for some profit booking, and that is something that is putting a lot of pressure on the markets as well. Only two sectoral indices in the green today. We have the pharma space and the FMCG space. In fact, even FMCG has slipped into the red as we speak. So defensives, they are coming forward, but other than that, the markets are not looking so good for now. We'll see which way things go. But we do have a lot of primary market action. In fact, stellar listings, all three of them. We addressed Vishal, Megamart and MobiKwik previously, but let's talk about Sai Life Sciences. They made their D-Street debut at 650 rupees per share, which is a premium of 18% to its IPO price of 549. The company's 3,043 crore IPO saw a subscription of 10.27 times during the 3 days of bidding between December 11th to December 13th. To discuss more on the company's future plans, we are now joined by Krishnam Raju Kanumari, who's the MD and CEO of the company, joining in now. And we also have Shiv Ramakrishna Chittor, who is the CFO of the company. Gentlemen, good morning. Thank you so much for joining in. And finally, the listing is done, so we can get more out of you in terms of the outlook going forward. Mr. Krishnam, let me start with you. Now that we are through with the listing as well, if you can share your growth plans. The first half saw a single-digit growth for you. What are the plans going forward for FY25 and especially FY26? Now that the debt will be lower, you will be able to finance it with the IPO proceeds.
Look, I think I just don't want to get into the exact numbers yet, but essentially our growth plans remain pretty aggressive going forward. But I'll just point to the market opportunity in front of us. If you look at the global CRDMO market, India is only about 5% of the size of China. So I think the potential of repeating the growth for the industry at large is pretty significant. So I think the opportunity has to be a multi-year, 5-10 year opportunity, and the scale opportunity is significant. And to that effect, we actually do have significant capex plans going forward. We are working on those capex plans along with our customers to figure out what is important for them in terms of technology platforms, scale. So we are actually working very closely with our teams to outline a capex plan, which we will finalize in the next few weeks. We have enough visibility in our revenue that we will be generating internal accruals, healthy internal accruals in the next few years, along with some debt capacity. So we think we have enough capital to fund our expansion for the next few years going forward and to maintain high level growth as well going forward. And just pointed to you mentioned a flattish growth. If you look at historical numbers, our second half has always been stronger than the first half of the year. And historically, this industry itself is not quarter to quarter, is lumpy. And so I think we just historical trends wise, in fact, ahead of in terms of EBITDA growth, even what we were last year.
So Krishna, just as a follow-up, since second half of the year is stronger than first half, with the strength in H2, do you think for the full year you will get back to at least a double-digit kind of a revenue growth? And also, revenues have been a bit lumpy. FY23 was 40%, FY24 was about a 20.4% top-line growth, and then H1 was 5%. How should we read this?
I think you will have to assume that the lumpiness is going to stay in the business. This is just the nature of CDMO business, because essentially you're going with the product development life cycle. You're not dealing with mature products. These are about new products launching in markets, coming and going to phase 1, phase 2, or multiple phases based on clinical data. So inherently, these products are now going to have a long-term scope until they hit commercial. And even commercially, you have different phases like launch phase. So there are multiple aspects which make it inherently lumpy. So you'll have to track this business really on an annual or multi-year basis. So I think what you will see is double-digit growths should not be a challenge mostly going forward. But I think the opportunity is much more significant than that as we look at it.
Okay, so double-digit growth is something which is possible going forward. Mr. Chittor, let me get you in the conversation as well. So Mr. Krishnam spoke about the opportunities which are available going forward. What do you think in the near term would be an EBITDA driver or an EBITDA trigger for the company? CDMO is a market which is growing very well. Can you give us a sense of what is the EBITDA margins the street can work with? And what would the capex do to it? What kind of capex are you looking at? How much will you be spending? If you can give us that amount.
Sure. So I think if you look at the 12-month ended September 24, we presented the September 24 data in the document that we had presented to the public. If you look at the September 24 12 months, we've actually clocked closer to a 24% EBITDA, which is up from the number that we presented for fiscal 24, and that is up from the numbers that we presented for 23. So we believe that there is leverage at play in the business. The CDMO business, particularly the manufacturing business, tends to get, provide leverage to the business, particularly when molecules are scaling up. We mentioned earlier that our business has a lot of commercial molecules. We talked about 38 commercial products, which are fairly early in their patent life, which just gives us an ability to scale and grow. And as we scale and grow, we believe operating leverage is a natural consequence of that action. And I think that would help us grow our margin, and growth of margin is a big focus within the organization. The entire management team was focused on that.
Chittor, Mr. Chittor, what's the view on reducing your dependency on raw materials imported from China? Currently, it's close to about 30%. Do you all wish to bring it down? If yes, how would you go about it?
Yes, so I think the way we've looked at it today, I think every product that is going into a late phase, which is phase 2 and later, there is a very specific activity that we conduct by product, looking at the scope for the raw material. We actually take a look at what can be done, how can this be outsourced. We work with a lot of Indian partners to kind of get these products locally sourced. And as part of an overall strategy, we kind of reduce dependence as products become commercial. There are early phase and very early discovery molecules that we buy. We do have some amount of exposure with China, but I think we are constantly working to reduce that. But we already have anything that is commercial and larger volume. We have now a specific program in place that kind of continues to reduce. And if you look at our historical trends, we have significantly reduced dependence on China, just from a potential disruption of supply.
Just one final question, Krishnam. There is a lot of uncertainty, ambiguity surrounding the US Biosecure Act. It could get delayed, the form may change. What are your clients telling you? And if it doesn't go through, would it be a big hit to the kind of opportunity that lies in front of you?
To be candid, I think if you look at historically last 3 years itself, we've seen a significant change in customer behavior. Post-COVID, I think most companies were looking at diversification of supply chains. I think that was primarily driven by being in a single source in the core situation. But over the last 2 years, most of our customers have voiced, even before Biosecure came about, and Biosecure was only 6 months old, a phenomenon, but the diversification started almost 3 years back. And customers have consistently said that they want to have alternate supply chain, which is equal size to China at least, because they want a true redundancy. It's not really China plus one anymore. And I think companies have taken a long view on it. They have not taken a short view on it. They understand China has built huge capacities, but they expect over the next 10 years to build up significant capacity overseas in terms of partners they choose and build with them. So I think this is a multi-year opportunity for partners who do choose to invest with them and work with them. But again, this industry will have few winners. It's not going to be a case where there will be 10, 20 companies benefit. There might be 5, 10 companies. But these companies will be much more integrally involved in the supply chain of global innovative pharma companies. And I think, I really don't think this is going to have a really adverse impact in terms of the long-term secular trends.
Okay, all right. So we'll watch out for that. Thank you so much, Mr. Krishnam and Mr. Chittor, for joining in today with your thoughts and the outlook going forward. That's the debut or the new kid on the block. Life Sciences doing really well. The stock is up 40% as we speak. Let's slip into a short break. Up next, we'll discuss what's buzzing in the commodity space with Manisha Gupta. Stay tuned for that.
years when parliament elections were conducted. So that's a very important consideration which I would like the honourable members to take on board. When annual Lok Sabha elections happen, those years do have a certain flow of resources, do have a certain ground-related expenditure happening, and when it picks up, the growth rate also picks up. But the blip is got to be understood in the broader context. Headline inflation was controlled at 3.9% between 1999 and 2004. Between 2004 and 2009, inflation surged to 5.6%, and again, come over, you can compare it with the previous 99 to 2004, which I'm talking about. But when you came to 2009 to 14, it spiraled to 10.2%, representing a catastrophic failure to control rising prices. Come again to 2014 to 24, inflation was brought back to 5.1%. The pattern that is emerging, if you look at it for the last 25 years nearly, is NDA period times inflation is well under control, whereas non-NDA, particularly UPA, it touches double digit. So let us not forget this pattern when we want to criticize one another about inflation and inflation control. Number of taxpayers disclosing, this is a very interesting information, sir. Number of taxpayers disclosing foreign assets were 60,467 in the year 21-22. Now it is 2 lakh taxpayers in 24-25. The Black Money Act is actually having a deterrent effect on a lot of taxpayers that today they come forward on their own to disclose their foreign assets. Sir, very important data is 82 cases till 30 June have been referred to the ED under the PMLA Act. 82 cases. Sir, specific numbers were asked. Total tax collected under the BMA, Black Money Act, in crores of rupees is 2,655 crores as of June 2024. Total money raised under the Black Money Act. Number of cases in which assessments have been passed are 697. Demand raised 17,520 crores. Number of cases in which penalty has been levied, 341 cases. Penalty levied in crores, 9,971.
Welcome back. You're still tuned into Trading Hour. It's time to talk about the commodity space. Manisha is joining us today. And for a change, it's not Bitcoin today. Manisha, focusing on gold.
Well, yes, I am. And it's going to be quite interesting to see on how gold behaves after we are done with the most final important event of this year, which is the US Fed meeting today in the evening. The announcement, of course, about the interest rate cuts and the policy and the guidance for 2025 is something that we will be looking for. In the meanwhile, you have the gold prices trading and holding above $26.50 an ounce. Well, the kind of gains that we've seen in gold prices in this year, in the dollar terms, we are up by 28%. In the Indian markets, because of the rupee depreciation, we have seen better gains coming for the gold prices. But either ways, whichever way that you look at it, this is the best gain that you have seen in gold prices since 2011. When it comes to the Indian markets as well, one would have expected that with the all-time high prices and very volatile prices, you perhaps would see some decline in demand, but that clearly is not the case. The kind of gold imports that we've seen between April to November, a 49% of a jump from the previous year, does tell you that in value and in volume, we are looking at very strong gold imports. The month of November perhaps is the highest level on record when it comes to gold imports. The markets anticipate that for the month of December as well, the import numbers would be on the positive side. So last year, the total import of gold within the country was 743 tons. We are already done 780 tons in this year by now, and the markets do believe that by the time we close this year, we could be more than 800 tons, which would be the highest since 2015 as well. So higher gold prices, higher consumption, higher imports when it comes to gold for this year.
Thank you very much for that. Get into a break. We'll come back and talk market technicals. Mitesh Thakkar will join in next.
crores. Prosecution launched 163. Number of cases where assessment is pending 531. Number of cases where penalty initiated and pending 532. So these are the actual figures to show that the PMLA and the Black Money Act are actually giving their due returns of the taxpayer money, which is got to be obtained for the sake of the country.
Welcome back. Mitesh Thakkar is now back with us for a quick technical check on the markets. Mitesh, disappointing session, right? No recovery after yesterday's big fall. But how would you proceed with trade from here on?
Yeah. So, good morning again. I think, we're trading below 24,300. That's not a very good sign for me. We did attempt a pullback, I think, around, 10:30, 10:45. And that pullback also ended around 24,300. So, I think once you clear this 24,300, 320 zone, then only play for long term. Otherwise, my idea is to just avoid. We've taken some bearish spreads on the index, buying near the money put and selling slightly out of the money put options. Because the market can get choppy, it's oversold. The PCR is also oversold, but the structure remains weak. So, I think play for long only about 24,325. If it starts getting past those levels, take a very short stop, tiny stop at about 30, 40 points. And then go long. Otherwise, avoid longs. Is my idea, and you can always, get into some bearish options aspects.
Okay, all right. So, in a market like this, then, what are your trades looking like, Mitesh?
Yeah. So, on the individual stock side, I think Tata Steel for me is a sell. Because the STBT yesterday as well, even now it's still weak. So, keep a stop at about 147, half 148, and look for target of around 139. And some of the pharma names, are trying to recover. Aurobindo Pharma looks interesting to me. It's trading above yesterday's highs. So why here with a stop at about 12.25 and a target of 1300.
Okay. All right, Mitesh. Thank you so much for joining in today. So those are some technical bets and levels to watch out for on the Nifty as well. But it's time for a short break. Sebi has introduced a new asset class called as specialized investment funds. Firoz Aziz from Andrati Wealth will join in next to understand more about this and who would this be an investment avenue for. Stay tuned for that conversation.
Le conseil est très clair, l'île est totalement désastée, vraiment dévastée. L'habitat qui est un habitat précaire, les bangas, pour ceux qui ne connaissent pas, les bidonvilles, il n'y a plus rien, c'est très clair.
Welcome back. You're still tuned into Trading Hour. Well, solar cell players, they've had a stellar run in 2024 with stocks of Premier Energies, Vari Energies and Tata Power rallying up to 170%, largely because India has been in a sweet spot and also on the back of strong demand. Vivek decodes the rally and what lies ahead for these players in the years to come.
Well, one particular pocket of the market that did very well in 2024 was the entire solar value chain. Just have a look at some of the companies that are involved in solar cell module manufacturing and see the kind of returns that they've given to the shareholders. Now, this particular stellar rally can be attributed to several key factors. As India continues to push towards ambitious renewable energy targets, there has been a substantial increase in domestic demand for solar products. Remember, the USA too has seen an increasing demand for solar energy solutions as part of its broader clean energy transition. The Inflation Reduction Act, passed in 2022, includes significant incentives for clean energy production, including solar power. Both India as well as the USA are keen on reducing their dependence on Chinese imports, particularly in sectors like solar energy, given the fact that the US has concerns over its supply chain security, intellectual property, as well as its ongoing trade tensions with China. These particular tensions have driven a desire to diversify sources of solar products. India, on the other hand, is positioning itself as an alternative supplier, benefiting from the global desire to avoid over-reliance on China. Both the USA as well as India have implemented policies to curb the influx of cheap Chinese solar products into their market. Remember, players in the India's solar sector are quite optimistic about growth prospects driven by a strong order pipeline as well as expansion plans. Remember, Premier Energy has reported a significant order book worth approximately 4,000 crore rupees. Vari Energy plans to increase its manufacturing capacity from 13 gigawatt to 21 gigawatt by the end of FY27, while Tata Power reported a strong order book of 15,900 crore rupees in its solar EPC business. Its cell as well as module manufacturing capabilities are also being ramped up as far as Tata Power is concerned. Now, talking about the entire solar value chain, remember, China controls 90% of the world's solar module as well as cell manufacturing capacity. This makes China the dominant player as far as the global supply chain is concerned. Solar manufacturers are actively looking for alternate routes to enter the global markets. Remember, pricing as far as solar modules are concerned in China are at a very competitive 9 to 10 cents per watt, owing to the country's massive manufacturing capacity, economies of scale, as well as cost efficiencies. Now, remember, when you're talking about India, the prices are much higher at 16 to 17 cents per watt, and the USA prices are significantly higher at around 25 cents per watt. Remember, when you're talking about ongoing capacity addition, India's largest conglomerate, Reliance, is on track to commission its first tranche of its solar PV manufacturing by the end of FY25. Also plans to scale up its solar manufacturing capacity to 20 gigawatt by CY26. Adani Group too plans to increase solar manufacturing capacity to 10 gigawatt by 2027. Remember, not only them, other players too have evinced interest to set up facility as India's solar manufacturing sector expands rapidly. However, several crucial questions arise concerning the sustainability of current industry dynamics and the challenges that will be posed by increased competition. Remember, India's solar manufacturers, along with their counterparts in the US, are benefiting from a price arbitrage advantage in comparison to global markets, particularly that by China. In markets like the USA, tariffs on Chinese-made solar products have made domestic production more competitive, benefiting the Indian exporters. The Indian government has introduced import duties on solar panels and cells, particularly from China, to protect the domestic manufacturing industry. To promote domestic manufacturing, ALMM is a critical regulatory safeguard that ensures only approved solar manufacturers' products are used in government-supported projects. Analysts, however, are worried about the supply glut in coming years. Will spreads Indian players enjoy be impacted? As the table indicates, when you're talking about valuations, Indian players are actually enjoying a significant premium to global peers both in India as well as China. Remember, some of the listed peers in other markets enjoy larger product portfolios. Some global players also own separate polysilicon as well as ingot as well as wafer facilities. So going into 2025, it will be a cautious stance that analysts will keep as far as the entire solar value chain is concerned.
Thank you. Very interesting recap of the way it performed in 2024. Get into a break. As we do that, here is some good news for all you viewers. India's business news leader is now just a click away. So we're introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, financial world updates at your fingertips. So download the app now from the Apple Store or the Google Play Store.
Shankarji, I know you've been watching Zakir Bhai as a child, and thereafter you idolized Shakti and all the concerts that you went for. From that period to the time when you actually met him, played with him, was a part of Shakti. All of this over a period of almost 3 decades. What was the one everlasting, overarching quality of Zakir Hussain? We know of him as a great musician, but very few know of him as the kind of person that he was. If you could throw some light on that.
Well, we've been playing and touring for the last 25 years. And if you ask me, one quality that he had is every night he never failed to surprise me.
Wow.
And every night that the feeling of awe, what an artist, that was there every night, even though we played like 30 concerts in 40 days. Second quality is his humble nature, his compassion towards other musicians. Sometimes he used to just take a step back and just be an accompanist, providing you the platform to showcase your art form. So that shows the maturity of a musician, and just the sound of his tabla. It's never ever going to come back again. So really, really sad. I mean, I don't have any words to speak.
We can totally echo that sentiment. Just the sound of that tabla. I personally remember, there was a concert that you had done with him at Shanmukhanand, and you just asked the audience, hey, Lavani, should we play that? And the audience was enthusiastic. Zakir Bhai just strung one beat on the tabla, and everyone was suddenly transported to the Lavani. But what's also interesting is that the personal connection that you had with him, you had the joy of playing cricket with him, a lot of meals that you would share, y'all would share as well. Salim, I'd like you to come in on some of those memories that you've had with Zakir Hussain.
Well, yeah, there are so many of them. I mean, one thing I definitely echo this thing about Zakir Bhai, that he made everyone feel like a friend. I mean, this father figure, the guru that he is, he'd make you feel like, that you were just very, very special. And not just you, I mean, anyone and everyone. He may be, he or she may be just an intern or somebody working at the studio or something. He'd make everyone feel so special and so loved. That was a very incredible quality about him. And, when it came to food, he was, he always had the best places to go to. He always had the best cuisine that he'd recommend. And I mean,
Welcome back. Now, Sebi has introduced a new asset class, Specialized Investment Fund, SIFs. Now, they will enable mutual funds to deploy advanced investment strategies in open-ended, close-ended and interval structures. The new asset class will have a minimum investment amount of 10 lakh rupees. To talk more about this, we have Feroz Aziz, Deputy CEO at Anand Rathi Wealth, joining in. Feroz, first, just give us a little more details about this new product and how is it different from what is available and what would be the investment strategy?
Good morning, Rima. Like you rightly said, this is a new product class. Unlike in the past, the regulator had called it an asset class. Asset classes are equity, debt, commodities. Maybe even today, people indulge in crypto as an asset class. So this is a product class, point one, and it is called a special investment fund, which is a fund which a mutual fund company can launch only. Okay, this, unlike AIF and a PMS, alternate investment funds and PMSs can be independent licenses. As I read this circular, this is a tagged along license with a mutual fund license. That's point one. Point two, what does this investment fund do? As of now, of course, there's a lot desired, but it actually has limits of investing in equity, debt, and even in REITs and InvITs. So these three, it has been spoken about. This circular does not speak about derivative and its exposure, which was the most important thing which I was keenly looking at, because that's what would distinguish it from a PMS and an AIF for that matter, because mutual fund is a very restricted platform. So to answer your pointed question, Rima, this is somewhere between a mutual fund investor and a PMS investor. We are seeing that there are a lot of people dabbling in derivatives in a very unstructured, more speculative manner. Can they come into a structured investment vehicle? I think that's where this whole argument started. And that's why derivative is something which is important. So, but I think this is a very good move, immensely important move to give only these 40 odd companies the license to run an SIF and not make it like PMS AIF. Because that then you have thousands of licenses, and that creates even more a non-transparent, confusing environment for an investor.
Firoz, good morning. Exactly, that was going to be my next question, because it doesn't speak about derivatives, and that is something we had discussed at length earlier as well. What would it mean if derivatives actually are specified in this asset class as well? But tell us, generally, you did indicate that there are more things that need to be discussed in detail in the final paper. So will we get more details in the final circular? Is there an indication, and what more could have been added in terms of specifics here?
Sonal, I'm a avid viewer, and most often than not, Sonal, you discuss things which generally get missed out also. So you're really ahead of times because you're tracking mutual funds so closely, and I'm not just flattering you by giving this compliment. Yes, we discussed, incidentally, on one of the shows also, we discussed derivatives, and that has been missed out yet. Why is it important? Is because the AIF industry, I have a observation which really scares me. It gives me sleepless nights as a stakeholder, not an investor, because I don't invest in AIFs, is because even debt AIFs don't disclose whom they are lending to. To an investor who has put a crore, if you are getting a bond portfolio with 13% yield, would I not want to know whom you have lent to? Unless I ask you, you're not going to tell me. For the reason of non-transparency, so that nobody else should replicate my portfolio. That's how non-transparent it is. Yesterday, I was seeing an AIF portfolio of one of my clients who had externally invested 10 crores and has a 13.59% yield, but there is no issuer information unless seeked. So AIF is not so transparent. PMSs have a regulation on the restriction of derivatives. So I personally think in the next circular, because derivatives is the most controversial topic, I think the regulator wanted to get this off the ground. I'm sure there's going to be a lot of manthan, a lot of debate happening behind the scene, and I'm sure they're going to come up with something which has, for an accredited investor who proves that he is more informed, can you give him leverage limits of 2 times when options in the direct market can have 100 times leverage? You can have 1 rupee option and a 25,000 crore notional on Nifty. Like when you buy 1 rupee option, you're taking a notional contract value of 25,000 rupees of Nifty, or 24,000 as we speak. Can you at least permit 2 or 3 times the leverage on a platform which is more well managed and is regulated and is only given to 44 companies in India as we speak? So I think definitely there's a lot of work happening in the back.
Yes, so we'll await those details very closely. Firoz, in that case, this is something that everyone asked us yesterday as well. Who would this be suited for? Do you think people will start moving out of PMS or from mutual funds? Because this would be somewhere in the middle, right, in terms of risks. And how attractive would this be as an asset class for any investor for that matter?
I think it will be very, very attractive. And I think most people will, in the current retail segment, if they do disciplined investing, they will graduate to 10 lakhs anyway. So any platform which is so revolutionary and has to be forward looking. So today, if you have a client who's got 3 lakh rupees as his overall portfolio, he will be a 30 lakh client. Even if he did nothing for 15 years, added no rupee, if you compound the money at 14-15%, it will get to 10 times either way. So he can have 1/3 of his money in an SIF, which I think is a very, very exciting platform. From where I see it, of course, we don't cater to retail investors. We only cater to clients who are HNIs. But as an Indian, I feel very happy that people will get access to more intelligent investments. That's where fund management skill is very useful and not so unaffordable, because 10 lakhs pe pahunch hi jayega insaan.
Okay, all right. Firoz, thank you so much for joining us. These are the initial days of this notification as well. As you said, there'll be a lot of manthan, a lot of discussions on this. So we'll have this discussion some other time as well in detail when there are more details available, especially on the derivatives bit as well. But thank you so much for joining us with your initial thoughts. Okay, with that, let's quickly take a look at the markets as well. Continues to be where we saw the levels initially. So 24,230, that's where the Nifty is at. It has slightly recovered from the lows, but Bank Nifty continues to be under pressure. In the Nifty pack, we do have Trent, which has made a recovery from the lows. There's TCS as well, which is seeing some uptick. But other than that, there are certain stocks which continue to be at the lows of the day. JSW Steel and Tata Steel. These two names are added to that list as well. The stocks which are at the day's low. So we'll keep tracking the market action for you. But for now, we'll slip into a short break. When we come back, we'll put spotlight on the other two news listings of the day on the other side. Stay tuned for that.
One. Hello, welcome to Young Turks Reloaded. I'm Shireen Bhan. Hi. Thank you so What have been the big insights that, or the course corrections, the mistakes that you made at Upgrad that you would like to undo, redo with this one?
I always felt that India talent, there's a very large talent pool available. And I think if we do not tap into this talent, whatever we call as demographic dividend will end up being demographic disaster.
Do you believe that entrepreneurship is inherently a lonely journey?
I mean, absolutely it is, Shireen. And it's fair because, you know, you're sort of in some sense already living in the future.
It is a lonely journey. I mean, you have your spouse, you have your partner, you have your co-founders, but in many cases you end up being very lonely. You don't want to be seen as very weak. I've had instances where you are sitting in the office and then you rush to the loo, you have to throw up and then come back and you feel relieved.
The difficulties and the challenges of just getting the team in place to work with technical fabrics and so on and so forth. I mean, what has that experience been like for you as you set this up?
As an early stage entrepreneur, you only have two things. You have momentum and you have conviction. That's it. If you lose one of them, then you have no right to play.
How much of confidence do you have today to say, why the heck not? I just want to do this because I want to do this.
Saying no is strategy, saying yes is execution. And if you have been very, very strategic about what you're doing, you have to say no multiple times.
One memory of him while I was touring with him during Tabla Beat Science, which was this band, very special band with Bill Laswell and Kirsch Kale. I remember we went go-karting and he beat everybody. I mean, he was just an amazing rider, you know. And after that, I remember asking him that, Zakir bhai, how do you manage so many concerts living in America? And then each time he has to travel anywhere, he has to secure a visa because, you know, it's difficult to, you have to get a visa. But then he said, and I asked him, like, you know, at that time, the Indian card had just come out, you know, that one could get a card, just a Indian origin living, somebody who lives outside of India, but of Indian origin. And I asked him, like, why don't you opt for that? And he just told me something that I'll never, ever forget. He said that I can't give away my Indian passport. It's too difficult for him to submit his Indian passport back to the government.
Wow.
And that really shook me. I mean, imagine each time he has to go to Europe, each time he has to go to the UK, he has to travel to LA, go to the embassy, secure a visa. And he's willing to do that all his life. But he never ever give up his Indian passport.
One of India's greatest sons.
I have so many episodes like that, so many memories of him. telling me so many amazing things. His knowledge about music, in general, about classical music, about Western classical music. I mean, so much to talk about. He has such an incredible, so much knowledge about Western classical music and, about orchestras and about musicians. It was incredible to just be around him.
Right. The thing that you spoke about him not wanting to give up his Indian passport tells you how great a son he was to the nation. Shankarji, I have to ask you this. Which of your songs did he like the most, he enjoyed the most? And if you were to, give him that vocal tribute, if you would.
Oh my God. We used to travel a lot by bus because we used to have long bus journeys, 8 hours, 10 hours, 12 hours. So that was one opportunity where I used to play my mixes or, something that is recently released, some film song or some, non-film song, some piece of music. And he used to listen to it and, appreciate every single, thing that, piece of music that I played for him and give me his blessings. See, I don't want to sing something from what I've composed for him or anything like that. All I would like to sing is Guru Brahma, Guru Vishnu, Guru Devo Maheshwara, Guru Sakshat.
Welcome back. It's time to get your CNBC-TV18 exclusive. We learned from sources that Karnataka government may be looking to increase duty on iron ore. Sudarshan, who's gathering these details, is joining us now. Sudarshan, what are you picking up?
So that's what we are hearing from sources, that Karnataka government is likely to increase the duty on iron ore mining. And related to this, draft has already been circulated. What I understand, that draft has been circulated few days ago, and the decision on this Karnataka government is likely to take very soon. One company that is likely to be impacted from this is NMDC. For a company of total mix, nearly 35% is contributed from the state of Karnataka. Remember, Supreme Court in the last order had already announced that this duty on royalty will be taxed retrospectively, and that will be from 2005. Now, Karnataka government taking this decision will have the further impact, and we can see that duty on the iron ore can be increased further very soon in Karnataka.
Thank you very much for that. It's been a good day for the listings. We have 3 of them. We spoke to Sai Services, and they said that they're confident that there's no reason why a double-digit kind of revenue growth is not possible, even though in H1 they had just a 5.5% top-line growth. H2 is typically stronger. But look at the other one, MobiKwik, 87% higher on that. It was a smaller issue, but it saw very strong subscription, 120 times. And Vishal Mega Mart, that was literally a mega IPO. The company raised 8,000 crore rupees. It was a pure offer for sale where the promoter Kedara Capital sold their stake by nearly 8,000 crore rupees. But that too saw a 27 times subscription. And this is I had a chance to chat with the management earlier. So it's a pure offline retailer. They're present. They have about 650 stores thereabout. But they've managed a double-digit same-store sales growth in all their stores. And their focus is on affordability. So the average price of their garment is just 200 rupees. That's it, right? So, and 72% of their revenues comes in from their own brands. And they're saying they're using their own brands not as a margin contributor. So typically when you have your own brands, you would assume the margins would be higher. But here they're saying the reason we are focusing so much on developing our own brands is so that we can make garments that are affordable and aspirational. So they're using that lever, to grow their top line rather than just focus on, increasing their own brand contribution to boost margins. We had a chat with the managements of both the companies post their listing. Listen into some key excerpts.
In addition to that, given that we have a full KYC base on a large user base of 160 million users, roughly 60 to 70 million of our consumers are full KYC'd. And on the merchant side also, we have 4.3 million KYC'd merchants. So our distribution of financial products, be it insurance products, be it saving or investment products, or be it credit products, they will be the cream on top of the core payments business. And that is sort of how we expect to continue growing in the manner we have been demonstrating in the last few years.
About 50% of our growth is coming from same-store sales growth, and the balance is coming from new store openings. And if you were to specifically focus on the risks, of course, we would face the challenges if there are any on the macro front. We've done that in the past also, and that would always be something which is on the agenda. Equally, I would say that to ensure that we are the best offering for our customers and consumers in a very dynamic and fast evolving retail scenario in India would always continue to be a challenge. So yes, the challenges are there as much as any other consumer businesses, but we remain optimistic about the future.
All right, that's the mega listings of the day today. But quickly, before we wrap, let's take a look at some of the movers that are on our radar. NMDC, we just had Sudarshan telling us there is a possibility of increasing duty on iron ore, so the stock is down around 4.5%. There's been a sharp fall. Look at that, a steep fall from the high, so 5% lower there. Geo Financial Services, the stock is down 3% as we speak. A lot of these metal names are under pressure. So if we talk about Hindustan Copper, that's lower right now. We had JSW Steel in the Nifty pack also, which came off from the highs of the day. Tata Steel is the other one. If we talk about something like an Ashok Leyland, that stock too is lower by 3% as we speak. And the other names from the broader market, Shilpa Medicare, for instance, is up around 3.5%. So pharma names are back in flavor. That's the only index which is in the green as well today. We have Radico Khaitan, which is doing well, so 4.5% higher there. Other than that, some of these realty names continue to do well. So we have Max Estates up 2%, Suntech Realty is higher by 2%, and these are moves on big volumes as well. So just watch out for these names seeing some traction in trade today. But for that, we'll take your leave on this edition of Trading Hour. Stay tuned. Halftime Report is up next.
Brahma Tasmai Shri Gurave Namaha.
Om Shanti is what we can say to Zakir Hussain. We celebrate his life on that, and one of the most amazing anecdotes that he speaks about his life is he, got up early in the morning, heard, the namaz being recited. Thereafter, he went to a school which was a Christian school where he learnt all the carols, etc. And then thereafter, he prayed to Saraswati as well. He was what India was. Salim, we've done Guru Brahma, Guru Vishnu. I would like for Zakir Hussain to be present on this earth. I would like you to, thank Lord, if you could, hum a line of Shukran Allah, because that's exactly what one has to say when they think of Zakir Hussain.
Sure, it's a difficult time right now. And speaking of Shukran Allah, I must say, this song had just released, and I walked in late at Shanmukhananda Hall at one of his concerts, and he was playing a solo, and he just jumped into playing Shukran Allah on his baya, which was, which was just,
yes.
But we thank the Almighty that we have learned. Every single person on this panel and in the music world has a little bit of Ustad Zakir Hussain, because we've learned so much from him. And on that note, Shukran Allah walhamdulillah, Shukran Allah walhamdulillah, Shukran Allah walhamdulillah, Shukran Allah walhamdulillah.
Thank you so much. The heavens are blessed with a new, with a star. You've had, a lot of experience with him as well, playing on the stage with him. One thing I remember, people would say when they were bowling to Sachin Tendulkar that you're not only bowling to get him out, but you're also bowling to impress him. That's exactly what happens when you played with Zakir Hussain as well. You're not only, playing the music to present to the audience, but you're also playing to impress Zakir Hussain. How did he, change the way you played on stage? Playing with Zakir Hussain versus playing with others. If you could talk about that and maybe, speak about some of the things that celebrated, that Zakir Hussain celebrated the most.
Well, I go back to a memory from the year 2007. And that was my first time on stage with him in Kolkata back in the day when I used to live there. And I was just in the wings and facing the usual jitters. I mean, I kind of telling myself that, in a few minutes I will be on stage with this larger than life, this person who we have looked up to and idolized so much. And he comes quietly from behind, gives my kurta sleeve a little tug, pulls me aside.
Stocks open firm but failed to hold on, slipping back into negative territory ahead of the US FOMC decision today. Utilities and capital goods are the big drags, even as healthcare and telecom notch some gains.
Vishal Megamart lists at a 40% premium to its offer price. Sai Life Sciences debuts with gains of over 20%, and MobiKwik shines with a nearly 60% listing gain and has built on to that after its listing.
Adani Group's Ambuja Cement is set to merge recent acquisitions Sanghi and Penna Cement with itself. The move is aimed at streamlining operations and simplifying the compliance. The proposed swap ratio weighs on the Sanghi stock.
Retail sales of automobiles slide 19% in December, led by a sharp 24% year-on-year drop in offtake of two-wheelers, even as passenger vehicles fare better with a moderate dip of just 3%.
The board of market regulator Sebi is set to meet today to review norms for SME IPOs, deliberate on insider trading rules and evaluate the role of digital platforms.
Good afternoon. You're with us here on Halftime Report on CNBC-TV18. I'm Hormas Patakia. With me is Manglam Malu as always. And yet another day when we opened higher, failed to hold on to gains. And now we are back at very, very critical levels, which is at the 24,200 mark for the Nifty. Right now doesn't look good for the broader markets either. They are also facing losses. A third day of losses for the benchmark index and the Nifty as well. Now 100 points down as we speak. The broader markets continue to face some pressure. 77 stocks on the Midcap index trading with losses and 74 stocks on the small cap index also trading with losses. What is not doing well though is the Nifty Bank, another 1% cut there, now struggling to hold on to 52,500 as well. Now it's on to the 52,000 level on the downside, almost 530 points shaved off after a 750 point fall yesterday as well. So not good going, but a very important day lies ahead as well.
An important day lies ahead. It's not good going as of now, but the question is for how long? Because we have the FOMC outcome. Typically, the street goes long into Fed events. Secondly, you have the put-call ratio, which has moved to 0.58. Again, typically, you do see a bit of a relief once it goes below that 0.7, 0.65 sort of mark itself. And we're very close to the, low that we hit on Friday as well. 24,180 was the low, if I remember correctly, on Friday, from where we saw that big 700-point recovery. So are we likely to see an up move from there as well or not is what we'll watch out for the market. The key for the index, for the overall market would be the Bank Nifty, which is down about 1% right now, down 500 points. Will be very important to track where it goes from here on. But a lot of individual stocks on our radar, and the cement pack is in focus, specifically the Ambuja Cement pack, as the companies have announced amalgamation of the recently acquired subsidiaries, both Sanghi Industries and Penna Cement with itself. The street sees the merger in favor of Ambuja, and as a result of which, we have seen a sharp decline on Sanghi as well. Nigel joins in with more details on this one. Nigel.
Right, Ambuja Cement has gone ahead and they're continuing with the consolidation phase. So they had acquired two assets in the last few years. One is Sanghi and the other one is Penna, which they acquired this year. Penna, as we know, is unlisted while Sanghi is listed. The reason that they say they're doing this is to simplify the group structure, as is the case with most organizations. They're given a timeline that within the next 1 year or so, If they get all the regulatory green signals, then it should be complete as well. Now, it'll be good news for Ambuja Cements because, when you see this sort of a consolidation happening, it's normally good news. So, neutral to positive for Ambuja Cements. The problem is for Sanghi Industries, if we're looking at the ratio, 100:12, then in fact, it is at a discount of close to around 11% in comparison to yesterday's close price of Sanghi Industries. So, that's why, in fact, Sanghi Industries is down. It's corrected that entire 11% odd. The next one to track will be, will ACC and Ambuja finally get merged? I remember even before Adani Cement, had taken over Wholesome's assets, there was a proposal even at that point of time, but it didn't happen. Now all eyes will be whether or not at some point of time we see ACC as well getting merged in Ambuja Cements. But the bigger point is, it seems these ratios will be in favor of Ambuja Cements. So that's why even ACC is not running away in today's trading session. So consolidation, good for Ambuja, may not so be good for the others. Back to you.
Consolidation, right, in the cement space, and Sanghi is facing that on the stock price as well, down, like recovered slightly from the lows, but still down around 10%. As flashes on your screen, J Kumar Infra has won some order worth around 630 crores from NBCC for the development of the Harinagar colony, and the stock now up over 2%. But in our special segment, Inside Edge, Mangalam is focusing on Zydus Wellness. Mangalam.
Yes, it's a rare conversation that we have with the management of Zydus Wellness. They joined us from the sidelines of the Motilal Oswal conference itself, and it's a company that has brands like Glucon-D. It has regular brands like Nycil. It also has sugar free, and very recently went ahead and acquired Complan about a couple of years ago. Also very recently acquired Right Bite, or Max Protein as we know it. We spoke with the management, and with the strong brands that they have, the growth wasn't coming by for the last few years. Management agreed to that, and they did say that they are well prepared for double-digit growth going forward. Most brands owned by company are actually category leaders, so it's not market share that will drive growth going forward. It will be penetration, which will be the key growth driver. How do they increase that penetration? They're currently reaching at 3 million outlets. They target 4 million outlets in the next 2 to 3 years. And also, the other leg of growth would be modern trade and e-commerce, which currently account for nearly 22% of their sales. E-commerce is around 11% of their sales, growing very fast. So calibrating that would be crucial too. The other growth driver for them would be the recent acquisition that they made of Right Bite Max Protein. That is, the company does revenues of almost 119 odd crores in the previous year, but the total addressable market is 300 to 400 crores. Pre-acquisition, this business was growing at 25%. They believe this can grow faster than 25% as well going forward. And margins for all of this currently around mid-teens, targeting around 17 to 18% over the next 2 to 3 years, while maintaining ad spends between 13 to 14% of sales itself. Revenue growth in teens, EBITDA margins at 17 to 18%, with ad spends maintained between 13 to 14%, tells you that despite the stock having seen a correction in yesterday's trading session and been a bit of an underperformer, it's moved back into the green. A bit of green tinge is what we're seeing in an otherwise wobbly market. So that tells you about the insight that the management gave to us. That's the inside edge. In fact, let's hear out Tarun Arora, who was the CEO of the company, spoke to us.
Our EBITDA margins came under a little bit of pressure during when the inflation was running high. In the last 6 quarters, we've been able to expand our gross margins and EBITDA margins. Some part of it we have invested back in the marketing. We believe going forward in next 2 to 3 years, we should get to a 17-18% EBITDA margins. Investing on growth for distribution, etc., is something already baked in. We want to retain a 13-14% level of investments on advertising and other marketing activities. I think that should be sufficient money for us to, build on our portfolio growth that we're looking at in double digits. A good way to look at us would be last 3 years growth post-COVID, when things have settled down. And our growths have kind of got better and more consistent over that period of time. And we do believe we are well entrenched or well prepared for building a double-digit growth across our portfolio. What will drive our category growths going ahead will be largely focused on recruiting new consumers. So penetration is a single most key driver for us. When we acquired Kraft Heinz about 3 to 4 years back, when we looked at our availability across our portfolio as reported by Nielsen was only 1.8 million outlets. Today that's already gone to about 3 million outlets. For us, it'll be great to get to 4 million outlets as in next couple of years, next 3 years, we should cross 4 million outlets in terms of just availability.
The management there of Zydus Wellness. Time for a short break. Up next, we put the spotlight on the auto sector, and we'll be in conversation with Rahul Bharti, the Executive Director of Maruti Suzuki, on their growth outlook. Stay tuned.
says, look, my kurtas are a little more expensive and a little better ironed, but at the end of the day, I'm just a tabla player. And, you know, just little moments like this, there's humor in it, but there is also, I have seen him as such a spiritual guide and of course, the great artist that he is. I don't think I'm even qualified to talk about that in the presence of all these great masters of music, but just how deep he was. And he was one of those people, you know, look, there are great artists and then there are leaders. There are people who believe in things. There are people who can carry you forward into the next century or the next millennium or whatever. And I feel Zakir Bhai was one of them. So for me personally, and I think for a lot of us, it's a deep sense of personal loss, like losing a father or a spiritual guru. It's somebody who gave you a sense of tethering, a sense of belonging, a sense of belief, a sense of faith even. I mean, he told me, I remember one of the instances which were a little deep, and it took me a little while to comprehend what he was saying, is he just asked me once, just off the cuff, he said, why do you think Ustad Vilayat Khan Sahab or Pandit Ravi Shankar ji or Ustad Ali Akbar Khan Sahab or Pandit Nikhil Banerjee are what they are? Why do you think? And of course, I knew better, you know, than to give a reply, you know, kept quiet. And I let him answer, and he said, it's not because of what they play, it's not because of how they play, it's just because of how much conviction they have in whatever statement they're trying to make. And that takes me to what Shankarji said, is that, you know, this one thing that Zakir Bhai taught the world of music, it was to be in the moment. It was to live the moment, in the words of Steve Jobs, as if it were your last. And when then he could move on to the next moment and live that moment as if, you know, that was a complete separate, entity unto itself. There's so many little things. There was humor. Right. I have not seen a more well-rounded individual in my life. I can safely say that. And there is, it is incredible how many of us feel like he was a guru or a mentor. You may be a musician. You may even not be a musician. You may be from some other walk of life, but he was still a guru for you.
He was. Shankarji, if you could tell us a little about how Zakir Bhai prepared, because you've spent so much time with him, could you give us a sense into the brain of that genius? Because we know, you know, what was on stage, but before that, how his preparation was and what his thoughts were there. If you could take us through that journey.
Okay, now, here is a man who has been playing for years and years and years. And, you know, he need not prepare actually, because it's all there. But before every concert, you know, so that he doesn't disturb the other artists, he used to put a piece of cloth on his baya and chati. And he used to be, we are all doing our sound checks and we're creating a rakas over there on stage. This wire is not working, that in here. He used to be just sitting there and he used to be doing his riyaz, you know, continuously. Now you asked about his brain. You know what differentiates a Zakir Hussain from any tabla player in the world? I'll tell you what it is. I've analyzed this. See, there's a lot of learning that you do, you know, Talim, as you say. Every tabla player, every instrumentalist, he learns a lot, and there's a lot of information in one's database. Okay, so Gyani, bahut log hain. You know, you got a lot of information, a lot of education as far as your core instrument is concerned. The difference.
Welcome back. Now, Maruti Suzuki has reached a historic milestone of 2 million units produced in a calendar year. Now, to talk more on this milestone and the company's growth outlook, my colleague Parikshit caught up with Rahul Bharti, the executive director of Maruti Suzuki. Listen into a slice of that conversation.
It's a very proud moment for us. We were able to do 2 million in a single calendar year. Out of this 2 million, about 2.9 lakhs were exports, about 93,000 were sales to other OEMs, and the rest was the domestic market.
Right. I would like to ask you about the run rate that Maruti Suzuki is going to be expecting over the next few years. So you're talking about calendar year 2024. What about calendar year 2025? How do you expect production to increase?
So it's slightly easier for us to look at a more medium-term to long-term projection. So India was at about 4.2 million cars market size year ending March 24. We expect that in about by the turn of the decade, by 2030, 31, India should be doing something like 6.5 million a year.
Also asking you, how do you plan to focus more on exports and find new markets? If we were to quiz you about the strategy going ahead for the next fiscal, what would that be?
Great. So exports has turned out to be a very powerful de-risking strategy for us, and we would like to grow it exponentially. Just to have an idea of India's size in the global market. So today Maruti completed 2 million as a single company in a single country in 1 year. You would be very interested to know that there are many countries of the world where all manufacturers put together were not able to reach this number, and they are quite known names. For example, France, Italy, UK, Canada, Brazil. These are all below the whole country. They are all below what Maruti Suzuki has done in production in a single country. Now, if that be the manufacturing footprint size of India, there is every reason that we should take a larger share of the global trade. So export more and more. We've been doing something like 1 lakh exports about 3 years ago, averaging. This year, we might close above 3 lakhs, which is 3 times growth in 3 years. And we'll possibly do another tripling, which is 3x growth by the turn of the decade, which is just about 6-7 years from now. So there is every reason that India should increase its exports, having achieved this global ranking in production and sales.
Right. And going forward, how do you expect to finish this fiscal year in terms of sales? How do you think the industry will finish, and where will Maruti Suzuki be?
So if we talk about retail sales, which is a direct barometer of consumer activity, we should be closing between 3 to 4% retail sales growth.
Ustad ji was at that spur of the moment, from that database, which is that information that he needs to draw and present it. And it happens in a split second. So that was his mastery. The spur of the moment, that improvisation, that analysis of what you're singing and removing that information from his database and putting it out there, that nobody can do. That's why I'm saying tabla will never sound the same again on this planet.
For our audience, would you be able to give us a more relatable example out here? Like, you were doing a certain thing in the concert and this is exactly what Zakir Bhai did, and that floored you on the stage itself.
No, I mean, you tend to take some, complicated variation in your rhythmic improvisation. He catches on to it after the first beat. He knows and he's in sync with you. And you always wonder, how is this man reading you like this? It's almost like mind reading.
Well,
I'm sure that when Rahul also plays, some of the times while he's playing and suddenly he pauses, you see that Guruji has also paused in the same place as if they've been rehearsing for 10 years. I'm so sure, Purban, you agree with me. And you just wonder, how is he radio like this? So he had a different kind of brain and interpretation of what he's playing. And one thing that I've learned from him is that moment, he's there with you 100%. 1 hour concert, 2 hour concert, he's there with me, or he's there with Salim, or with Rahul, or Purban, or Aditya. He's there 100%. After that concert is over, maybe he's completely erases it and goes forward to the next one. But that minute, he's with you, whether he's conversing with you, whether he's playing with you, or whether he's just eating with you or just being with you, he's there 100% with you.
100% present for his co-artists and more importantly for his audience as well. I remember there would be a lot of technical difficulties when a concert is happening, say the mic falls or anything. He would just make a joke of it and continue because he was there with the audience. A lot of time feedback sounds would come, etc. He would just converse with 10,000 people in the audience, with all of them feeling like he's speaking only to them. There is a circle of life. Zakir ji's first, major concert was with Pandit Shiv Kumar Sharma, and as fate would have it, his last concert tour was with you in the US as well. That circle of life, what you saw Zakir Hussain as while he played with your father, to the time when you played with him, and till the last concert that you played with him. If you could give us that experience, what you learned from him, and just celebrate the life of the maestro.
Apart from, of course, having my own father as my guru, there are so many other great artists one learns from. And, Zakir Bhai was one of them. And each performance, I think, playing on stage with him was something you take back. You'd wonder how this person, who is so talented, who has seen everything in life, has seen all the success, would be so attentive when he is accompanying an artist on stage. It's not about him, it's about the artist and the little detail. He may have done it millions of times accompanying various different musicians, but he was so attentive. He was not all over the hall. His mind was not anywhere else, although he has a million things on his mind. But each, if you're playing a particular tal, what we are playing, he's listening to the investment.
Well, extending its cuts, Nifty right now at 24,200, 127 points lower right now. But despite that, a couple of stocks which are doing well. We have Trent, which has moved to the high point of trade, recovered about 3% from the lows as we move into the business end of the year with festive season and wedding season behind. Maybe after weakness that we saw in the previous quarter, the street is penciling in decent performance in Q3. And we do have some traction that we're seeing on names like Tube Investments, again, an F&O entrant in this series itself, along with Oil India, which too has recovered from the lows. But what hasn't been doing well over the last 35 odd minutes is NMDC, down about 6% right now, and a big gash currently at the low point of trade. And the big reason for that is the exclusive that our colleague Sudarshan has got, that the Karnataka government may be looking to increase duty on iron ore. Sudarshan joins in with the details. Sudarshan, it's a negative, and the stock's reacting.
That's correct, Mangalam. So what we understand from sources that Karnataka government is likely to increase the iron duty, and that announcement is expected very soon because draft has already been circulated. What I understand, that draft was circulated a few days ago. One stock that has been in focus, obviously you are seeing that in the last 30 to 40 minutes the stock has fallen. The stock was flat before our exclusive. Now it's down almost 6%. So the reason of this fall is because of total mix for NMDC. Karnataka forms nearly 35%. That's the reason that stock is under pressure. Another stock that might be under pressure is JSW Steel, because these are the two stocks that are likely to be impacted the most because of this if government goes ahead and increases the duty further. Now, recently in the latest order, as per the latest order, Supreme Court on the current royalty had already announced that government can tax it retrospectively, and the date was given 2005. So from 2005, the taxes can be done retrospectively. So because of all these reasons, but major reason is increase in duty that government can announce very soon. That is Karnataka government.
Indeed, Sudarshan, thanks a lot for that. And we spoke to the industry players as well after that mining verdict that came in from the Supreme Court, and they had mentioned that it will be having huge financial implications of that. And it's showing up on the stock now, 5% lower on NMDC. 211 is the level to watch out for on the stock. Slips below that level and it turns negative for 2024. That's NMDC for you, an exclusive news break by Sudarshan. On to some new listings of the day, and MobiKwik and Vishal Mega Mart, both the companies saw very strong debuts. While MobiKwik shares listed at a 58% premium at 440, and take a look where the stock is now, 85% above its IPO price at 518, almost doubling from its IPO price. And Vishal Mega Mart had an equally good debut, 8,000 crore rupee IPO, complete OFS, 27 times subscription, listing at a 33% premium and building on to those gains, now 41% higher after the listing. We spoke to both their managements post the listings, and let's listen into what they had to say.
In addition to that, given that we have a full KYC base on a large user base of 160 million users, roughly 60 to 70 million of our consumers are full KYC'd. And on the merchant side also, we have 4.3 million KYC'd merchants. So our distribution of financial products, be it insurance products, be it saving or investment products, or be it credit products, they will be the cream on top of the core payments business. And that is sort of how we expect to continue growing in the manner we have been demonstrating in the last few years.
About 50% of our growth is coming from same-store sales growth, and the balance is coming from new store openings. And if you were to specifically focus on the risks, of course, we would face the challenges, if there are any, on the macro front. We've done that in the past also, and that would always be something which is on the agenda. Equally, I would say that to ensure that we are the best offering for our customers and consumers in a very dynamic and fast evolving retail scenario in India would always continue to be a challenge. So yes, the challenges are there as much as any other consumer businesses, but we remain optimistic about the future.
Both the managements there after their listing. And as we slip into a break, here is some good news for viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. And you can download the CNBC-TV18 app now from the Apple Store or the Google Play Store.
Tabla is not being played. These were qualities which were completely, of a different level altogether. And his observation level, anything and everything was observed so well. In fact, I remember in concerts, after concerts, there was no talk about music. It was just about everything else under the sun except music. An amazing conversationalist and amazing person to just sit and imbibe from, So many memories, right, from my childhood when he used to come to my house. He used to host some amazing home parties on my father's birthday, which was 13 January. So I remember Nusrat Fateh Ali Khan Sahab and so many other great artists coming, and Zakir Bhai would host the entire evening. From that time, when I was about 7 or 8, to this time now, having seen my father on stage with him, and recently, just a month ago, performing with him, it's just a title, which is kind of, I have no words. It's pretty amazing to see this, an artist of his qualities. It's very hard to come by.
Purbayanji, if you could give us a musical tribute of a rag that you could just give some notes of.
Well, I would like to mention that I was incredibly lucky, and even now, Shankarji is also one of my mentors and gurus, and I was incredibly lucky to be able to do this one song during the times of the pandemic, which was called Shiva Shankara. And I remember I had, asked Shankarji, and of course, he very kindly agreed, and he said, yes, I will, do this. And then we were kind of talking about, who else we could have on it. And just on a whim, I thought, I would, talk to Zakir Bhai and ask him if he would. So I texted him and he called me back. And I said, Zakir Bhai, here's this song that Shankarji very kindly agreed to do with me. So can we have you do something on it? And in his characteristic, fashion, he asked me, what is the something that you would like me to do? And I think I kind of bumbled and I said, well, play some tabla on it. And it's a song that we did, and it's been a very, very much cherished memory. I still have some of the video rushes of when we shot his video or on Zoom, actually, when he was in his studio in California. And it's a little composition which if I may, I'll just hum the first line, but it's sung by Shankarji, who the man himself is here. So it goes like this: Shiva Shankara Mahadeva, Shiva Shankara Mahadeva, Parameshwara Amrita Rupa Karunakara Dhyana Priya Shiva Shankara Mahadeva. It was something that we did during the pandemic.
Our collective prayer will give him a lot of peace.
Welcome back on to Corporate Conversations. Then Route Mobile is the management that we'll be in conversation with after the integration with the Proximus Group. Remember, Proximus had acquired a majority stake in Route Mobile in May of 2024. Now, this will allow single streamlined operating model and unified global leadership team as well. And to discuss more on this, we have Route Mobile's Managing Director Rajdeep Kumar Gupta and CEO Gautam Badalia, both of them joining us this afternoon. Gentlemen, good afternoon. Thank you so much for joining in. First up, I'd like to talk about what is going to be this post-integration structure, right? How does it look like? And if you could also give us the size of what the entire Proximus Group now becomes after this integration of all these three units, including Route Mobile, in terms of revenue, margins. If you could tell us more on that.
Yeah, let me just start with, maybe Gautam can add to that. So if you see Route Mobile, Telesign and BICS are going to be combined group as a Proximus Global now. And combined, all the three companies' revenue is about $2 billion as a collective revenue. And I think as a group, I think we have now presence over in 40 countries. We are going to operate in 40 countries. We are now having a solid presence in a developed country as well as emerging market as well. So I think that's the kind of size we are as one group right now. Gautam, if you want to add anything to this.
No, so thank you for having us on the show. So as Rajdeep highlighted, with this integration, we become among the largest players, in terms of the digital communication space. And that's where, we believe, a lot of opportunities can unravel. And hence this integration can really kind of work wonders if we can execute our strategies appropriately.
All right, let's talk about these numbers. Gautam, if you could give us some sense on what exactly happens to the listed entity. So there's Route Mobile, and Proximus obviously is the parent, and this integration has happened at the parent level. So if I own one Route Mobile share today, how does this deal change things for me in terms of the value that I'm getting in that share?
Sure. So the way to look at it is, the landscape of CPaaS, warrants a global kind of play, right? Where you have a play across, various continents and a very deep rooted kind of a product stack. And with this integration, what it entails essentially is we have a global footprint, which can be a big differentiator. When you're chasing large scale strategic opportunities. And on top of that, we have a very comprehensive, in terms of the product stack, a very deep rooted, product stack. The length and the breadth of the product stack now kind of encompasses the entire value chain. So that will essentially help us chase a lot of large scale opportunities. Some of the opportunities I think we've already kind of won in the past. And now with this BICS integration, I think the opportunity landscape, increases multiple times. And that's where it warranted a dedicated kind of an approach in terms of a leadership team. And hence, with Rajdeep, with his deep domain expertise, of over 2 decades, he'll be able to chase a lot of those opportunities. Now, from a CPaaS standpoint, a lot of those opportunities will percolate to Route Mobile, where from a Route Mobile shareholders standpoint, this will be significantly accretive from a return ratio standpoint because, this would lead to incremental revenues, margins, and even from a cash flow standpoint, it will be generate a decent amount of free cash as well. So from an overall landscape standpoint, considering if you look at the CPaaS landscape about till 2022, I think we were in a high growth kind of a runway, and since then I think the roads have kind of become a little bumpy. So we need to navigate some of these, and in terms of that navigation, Rajdeep's role, to drive a lot of these large-scale strategic initiatives, which can percolate in terms of adding to our growth rate, and from driving the operational efficiency,
Right.
and that's where my role kind of will become to drive the operational efficiency within the company.
Rajdeep, if possible, if you could give us some numbers, like Gautam pointed out, there could be large-scale opportunities that you would pursue because of that. There would be operational efficiencies as well. The one number that we have is global EBITDA synergies of almost 100 million euros. My question is, how much incremental revenue do you get because of this deal? How much of this 100 million euro comes to Route Mobile, and by when?
I think, Mangala, we are very much working on the strategy right now, and definitely if you see the size of BICS and Telesign combined, the kind of customer base they have, end of the day, they're mainly customers are terminating messages in the emerging markets, and where we have the big strength in terms of our connectivity. So I think things are panning out well right now, and definitely we are looking out at the kind of guidance which we have given in the past. I think we are working on those strategy, and very soon we will try to get those maximum value out of this.
2 questions into one, Rajdeep. What is going to be the shareholding pattern of this integrated entity? What will be shareholders of Route Mobile and the promoters holding in the consolidated entity? And how does this impact your financials as well? Because you had earlier given a revenue guidance of 18 to 22% and margin guidance of 13% for this year. Do you stick to that?
Yeah, definitely we stick to that. There's no change as such as a Route Mobile as an entity. I think everything remains as same. Like the reason Gautam took over as a CEO role because I have been assigned a new role at Proximus Global. Now I'm responsible for product sales and operations at Proximus Global. And I think to deliver most value to our shareholders, it is good if you see for the Route Mobile shareholder. And I think the idea is very simple. We want to make sure how we can create value to Route Mobile shareholder, being part of Proximus Global.
All right, we take that point. Thank you so much for joining in. Congratulations once again on this deal. What we'll try and get out of you, once you've formulated the strategy and maybe some of those synergies start showing up in your numbers as well, we'll get chatting a lot more about that. But as we speak, don't lose your sight of the market right now. 170 points lower for the Nifty, 24,165. Why is this mark important? Because it has broken the Friday low of 24,180 on the Nifty as well. At that point, the 20-day moving average was 24,115. Now we're below the 20-day moving average by 150 odd points. What is leading the index lower? It is more of the same, and the Nifty Bank, which is down almost 700 points right now. And with this cut that we've seen on the Nifty Bank itself, it is very, very close to the 20-day moving average as well. The Nifty Bank, or rather 50-day moving average is close to around 51,900. And we're at around 52,150 itself. So a couple of 100 points after the 600-700 point decline that we've seen, and the Nifty Bank fails to hold on to crucial levels and breaks below that as well. So we'll keep an eye out on this as it pans out. On the other side, we get you how the F&O setup is playing out for our indices as well.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC-TV18, Mumbai. Hello, I'm Surabhi Upadhyay and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
Markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7.
You're watching us here on Halftime Report, and as promised, let's get you the F&O update coming in at midday as well, because as you see, a big gash we've seen on the index itself. At the low point of trade, the Nifty now down almost 175 odd points, and it's been dragged lower by the Nifty Bank. As the key indices come up for you on the screen, you'll realize that the Nifty Bank is the one which is down almost 700 points, down 1.3%. Midcap index slightly, a bigger underperformer than the Nifty itself, but not as much as the Nifty Bank. What are the key drags that we're seeing? The Nifty Bank is below the 20-day moving average. That's what it fell below today. And the 50-day moving average is the next important level to watch out for, just below that 52,000 mark on the Nifty Bank. We'll watch out for it because the key draggers are all the index heavyweights. HDFC Bank down about 1.5%, ICICI Bank lower as well. Then you pull up something like an SBI or, Axis Bank, both of them down by about 1.5% each as well. On the Nifty, the 24,300 call is fairly active, telling you tomorrow's expiry, 24,350 thereabouts, could be a bit of a resistance zone. We're also seeing some writing at higher levels from there on. But at the lower levels, 24,250 put writers are fairly active in trade, hoping for support at 24,150. If the Nifty does not hold that support, then maybe these writers will have to cover their positions and we'll have a bigger gash on the index itself. 24,200 put writers too, fairly active for expiry tomorrow, telling you that the zone that the market is in right now, that 24,135 to 24,150 zone, is an important support zone for the index itself. The put call ratio has fallen to sub 0.6 as well. It's 0.56 versus 0.6. What this means is that a lot more calls are written versus put, and that's telling you that the market could be perhaps in a bit of an oversold zone as well. Friday's low of 24,180 has been breached. The 20-day moving average on the way up, which was earlier a support, will now be a resistance. So that's something we'll keep an eye out on. Also watch out for a bunch of stocks. NMDC, seeing a lot of short positions being added after Sudarshan spoke about the possibility of a duty hike in Karnataka. And Nalco is the other one, which might exit F&O ban. So just keep an eye out on this one. For the markets, we're at crucial levels. If we break below that, 24,150 sort of mark, then there would be some more selling because of the put writing that is visible. And if we hold on to that and bounce back, maybe there is case for a bounce back all the way up to 24,300, 24,350.
Almost at the lowest point of the day now, fighting to hold that 24,150 mark are the bulls for the Nifty. By the way, the broader markets too are extending their losses now. 81 stocks on the Midcap index are in the red, 78 on the small cap index, both of them down 1% each. And mind you, NMDC, as Mangalam just mentioned, has further extended its losses. 6.75% down now, has almost turned negative for the year. 212 is that level to track. Time for a short break here on Halftime Report. On the other side, Manisha Gupta joins in with Sandeep Bhan, the CEO of SD Guthrie International. Stay tuned. We'll be right back.
How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
GDP growth rate was lower than 5.4% in 2 quarters, quarter 4 of 21-22 and quarter 3 of 22-23. So it's important to understand that this drop happened just 2 quarters in the last 12 quarters that we're talking about. So let us not sort of pick on that one and predict future. This has been a steady growth and a steady sustained growth. So I'd like to place that perspective with the numbers before me. The regular union budget was passed by the newly constituted Lok Sabha post-parliamentary elections in middle of August 2024. Effectively, the implementation of new announcements of this government commenced after the Appropriation Act was passed by the Parliament in August 2024. Effectively, it is from August that we are starting to give emphasis to many of the things, inclusive of capital expenditure, and therefore we are now talking within 4 months after the full regular budget was presented in August. So the situation is no different from one seen in earlier years when Parliament elections were conducted. So that's a very important consideration which I would like the honourable members to take on board. When annual Lok Sabha elections happen, those years do have a certain flow of resources, do have a certain ground-related expenditure happening, and when it picks up, the growth rate also picks up. But the blip is got to be understood in the broader context. Headline inflation was controlled at 3.9% between 99.
Welcome back. Even as the markets are lower right now, just keep an eye out on ITC. Remember, yesterday we had pointed out around this time itself that the NCLT has gone ahead and given the effective date of demerger as Jan 1. Now the company has gone ahead and spoke about the record date, and the record date is Jan 6th for the demerger of their hotel business. So obviously the previous trading session, which I would be closer to, I think, Jan 3rd or Jan 4th, the Friday that is, will be the X date where the hotel business would get out of ITC shares that are trading, and for every 10 shares that you hold of ITC, you would get a share of the ITC hotels business. So the next thing to watch out for thereafter would be how that business and when that business lists. For now, the important part is Jan 6th is the record date for all those shareholders to be eligible to get the ITC hotel shares. But that's about the equity markets. Let's go across to Manisha Gupta, who joins in with all things commodities. Manisha.
Thank you so much for that, Mangalam. We're looking at the palm oil prices right now, because when you look at the international markets and when you look at the edible oil prices as a whole, palm clearly seems to have outperformed. While the last month has seen prices decline by 7%, but if you look at the current year, 23% of gains in palm is what we are dealing with. Let's put all of that into perspective then, and joining us then is Sandeep Bhan from SD Guthrie. Sandeep, hi, thank you so much for joining us. Well, I do understand Sandeep is on vacation in Mumbai and is the reason we got hold of him here in Mumbai and in our studios here. But Sandeep, palm has had a very, very interesting year, this one. How would you look back at 2024 and look at all things that palm has done?
Thanks for having me. The biggest thing of 2024 is the palm oil is making a record premium over soybean oil, maintaining its continuously for the last couple of months. And I was told that 40 years back we had seen this kind of spread between palm oil and soft oils, and I think that was the biggest take of 2024. And it's still maintaining that huge premium of more than $100.
So with palm at premium at all other edible oils, as you said, this has happened first time in 40 years. Do you see it sustaining, and has it impacted the demand at all?
Demand definitely has been impacted. There's no doubt in that. But we are expecting to get the palm sustaining it for next couple of months because of seasonal lower production of palm oil. And another big thing is now, because there's a big crop of soybean oil is also coming down. So that continues to maintain this premium between the palm oil and soybean oil, and that can last for some more months.
Sandeep, palm is used in almost all, various industries there, starting right from pharma to food products, detergents, cosmetics, biofuels, ice cream, packaged foods, and the list can just about continue. Have you seen demand from many of these sectors kind of get dampened across the world?
Yeah, no doubt in that. Yes, we are seeing the drawdown in demand, and that we can see from the numbers also that are coming from the month of December in terms of exports from Malaysia. It is definitely seeing a drop in the numbers. And that is mainly because of the huge spread between palm oil and soft oils. Demand is there, buyers are there, but not willing to pay the price of palm oil at that $200, $150 above soybean. It's a matter of whether buyer blinks or seller blinks.
All right, who does that first? But I also want to understand about the biofuel industry. Now, with the crude oil prices where they are and the kind of mandates that Indonesia has been pushing out, how do you look at that part of the story?
Biofuel is there to stay, and Indonesia is going to grow in biofuels, no doubts in that. B40 is being implemented, although recently we have been hearing that there might be some delay, but that delay is not going to last long. B40 is in pipeline. B40 will happen in 2025, and in fact, what we hear, Indonesia might step into B28 also, B50 also in coming years. So biofuel story is there. It's not going to disappear.
So how do you look at the production consumption match or mismatch as we step into 2025?
Production in terms of, as of now, because of seasonally, we are into the dropping months of till March, April, and after that we'll see a pickup. But there's not going to be a big pickup in totality from the global palm oil producing countries, which at this moment is close to 80 million tons. This 80 million tons is not expected to go anywhere between to 90 million tons. It will remain stagnant around 80 to 82 million tons. And in terms of consumption, a lot depends upon how this spread will go.
All right. Sandeep, what also is your sense of prices now? I mean, we've seen an outperformance from palm. As you say, it's at a premium. Sustaining it is going to be a big question mark there. But if there was a range that you would put out for next year, what would be?
It's honestly a very tough call now to take that call of how the prices will go next year. What the big factor today is, earlier, palm oil was jumping, going all the way, and it was supporting all other oils. But now we have soft oils dropping, and palm has to drop in tandem with it to maintain the affordability. So we will see a bit of a drop in the prices. That is more to get back the demand, which is missing now.
A final question on taxes then, and that impacted the prices a lot. And soon enough, as we step into the new year, Sandeep, we'll start looking at the budget as well. So when it comes to global taxes, India markets, budgets, how would you look at that?
Taxes are there to stay. Malaysia, in fact, in January, their taxes has gone up by 75 ringgits. Indonesian taxes also expected in January to maintain what it was in December, that is close to $200+. So that tax structure is there, and there will stay. We're not expecting any big changes in the tax structures.
Anytime you can expect a decline in palm oil prices, because that's where all the FMCG companies are worried about.
We have seen last few days a big correction in palm oil from a 53 ringgit in futures market down to today 4,700 ringgit. So correction has already happened. It's still, because there's a huge gap between palm oil and soft oils, that is putting a bit of a pressure on the palm oil too. If we have to get back the demand, we have to ease off a bit.
All right, take that point. Thank you so much for joining us and giving us an outlook into the palm oil prices, and have a good holiday as you do. Wish you a very good happy new year and festive season as well. With that, we'll wrap up on this edition of Halftime Report. Thank you so much for watching. Business Lunch takes all the market action ahead.
Between 2004 and 2009, inflation surged to 5.6%. And again, you can compare it with the previous 99 to 2004, which I'm talking about. But when you came to 2009 to 14, it spiraled to 10.2%, representing a catastrophic failure to control rising prices. Come again to 2014 to 24, inflation was brought back to 5.1%. The pattern that is emerging, if you look at it for the last 25 years nearly, is NDA period times, inflation is well under control, whereas non-NDA, particularly UPA, it touches double digit. So let us not forget this pattern when we want to criticize one another about inflation and inflation control. Number of taxpayers disclosing, this is a very interesting information, sir. Number of taxpayers disclosing foreign assets were 60,467 in the year 21-22. Now it is 2 lakh taxpayers in 24-25. The Black Money Act is actually having a deterrent effect on a lot of taxpayers that today they come forward on their own to disclose their foreign assets. Sir, very important data is 82 cases till 30 June have been referred to the ED under the PMLA Act. 82 cases. Sir, specific numbers were asked. Total tax collected under the BMA, Black Money Act, in crores of rupees is 2,655 crores as of June 2024. Total money raised under the Black Money Act. Number of cases in which assessments have been passed are 697. Demand raised 17,520 crores. Number of cases in which penalty has been levied, 341 cases. Penalty levied in crores, 9,971.47 crores. Prosecution launched, 163. Number of cases where assessment is pending, 531. Number of cases where penalty initiated and pending, 532. So these are the actual figures to show that the PMLA and the Black Money Act are actually giving their due returns of the taxpayer money, which is got to be obtained for the sake of the country.
Market tips to the day's low after a firm open. Nifty Sensex down over 0.5% each. Utilities, PSU banks and metals are the key drags, even as healthcare and telecom not some gains. Vishal Mega Mart lists at a near 40% premium to its offer price. Sai Life Sciences debuts with a gain of over 20%, and One MobiKwik shines with a near 60% listing gain before rallying further. Adani Group's Ambuja Cement is set to merge recent acquisition Sanghi Industries and Penna Cement with itself. The move is aimed at a streamlining of the operations and simplifying compliances. The proposed swap ratio weighs on the Sanghi stock. Retail sales of automobiles slide 19% in December, led by a sharp 24% YOY decline in the offtake of two-wheelers, even as passenger vehicles fare better with a moderate dip of 3%. The Board of Market Regulator Sebi is set to meet today to review the norms of SME IPOs, deliberate on the insider trading rules and evaluate the role of digital platforms. Hello, good afternoon. You have tuned into Business Lunch on CNBC-TV18 and I'm Vinny Motiwala. A subdued day is coming in for the markets, so not much of an excitement there. We've seen a bit of a decline there. But, let's actually start by talking about some of these important listings that we've seen in trade today. So we have Sai Life Sciences, Vishal Mega Mart, as well as One MobiKwik, all of them listed at a premium today. And starting the show and focusing on this new listing, retailer Vishal Mega Mart listed at a 34% premium to its issue price of 78 rupees. Earlier on in the day, we also managed to speak to the MD and CEO of the company, Mr. Kapoor, who said and discussed the possible risks that one is there in the retail segment. And despite the demand sentiment, they're quite optimistic on the future of the company. So let's listen in to his outlook and what we are expecting there from the company going forward.
About 50% of our growth is coming from same-store sales growth, and the balance is coming from new store openings. And if you were to specifically focus on the risks, of course, we would face the challenges if there are any on the macro front. We've done that in the past also, and that would always be something which is on the agenda. Equally, I would say that to ensure that we are the best offering for our customers and consumers in a very dynamic and fast evolving retail scenario in India would always continue to be a challenge. So yes, the challenges are there as much as any other consumer businesses, but we remain optimistic about the future.
In addition to that, given that we have a full KYC base on a large user base of 160 million users, roughly 60 to 70 million of our consumers are full KYC'd. And on the merchant side also, we have 4.3 million KYC'd merchants. So our distribution of financial products, be it insurance products, be it saving or investment products, or be it credit products, they will be the cream on top of the core payments business. And that is sort of how we expect to continue growing in the manner we have been demonstrating in the last few years.
Okay. That was the management of Vishal Mega Mart, and then we also heard Upasana Thakur, who's the CFO and Executive Director at One MobiKwik, which also listed a very good premium in today's trade, talking about the products that they may look to foray into. So that was an interesting chat also we managed to have with one other listing. Now let's move on and also talk about what are the growth plans that one has from Sai Life Sciences. What are they looking at in terms of the outlook going forward? We managed to speak to the MD and CEO of the company in terms of the strategy going forward. Listen in.
We actually do have significant capex plans going forward. We are working on those capex plans along with our customers to figure out what is important for them in terms of technology platform scale. So we are actually working very closely with our teams to outline a capex plan, which we will finalize in the next few weeks. So I think what you will see is double-digit growths should not be a challenge mostly going forward, but I think the opportunity is much more significant than that as we look at it.
Okay, let's move on and now talk about the December Vahan data and how is that looking like. Sudarshan is joining in with us to give us more details on this. Sudarshan, what are we looking at in terms of the Vahan data for the month of December?
So we have tried analyzing the Vahan data for the first 2 weeks of December, and it has thrown a different picture than what we have been hearing till now. So till now we are hearing that two-wheeler segment has been doing relatively better than other segments. But as per Vahan data for the first half of December, the one segment which has underperformed other segments is two-wheeler. If you look at the registration data in the first 2 weeks of December, overall registration has fallen 19%, while registration for two-wheelers has fallen 25%, and it's been the worst amongst all these segments. For the December 1 to 17, total registration was 9.78 lakhs in comparison to 12.10 lakh that we saw in December 1 to 17, 2023. Now, as per the fuel category, the segment which has done better is electric segment, where I've seen registration increasing by almost 7%, while petrol, registration for petrol vehicles has fallen 25%. Even UBS has come out with a note indicating the same trend that we have been highlighting. It says December industry details are on track to post decline, and that would be led by Hero Motors and Bajaj Auto, while TVS and Honda are likely to gain both year-on-year and MOM, and Hero Motor is expected to lose the most. And it expects industry to post 7 to 9% year-on-year decline in retails in the month of December, with Hero Motor Corp and Bajaj Auto are expected to record 15% decline in the retail, with TVS Motor and Asher Motors are on track to post growth for December, and while electric vehicles are continuing to gain the traction amongst all the segments.
Thank you so much for that, Sudarshan. Let's move on. And the board of the market regulator, that's Sebi, will meet today to discuss a tightening of the listing regulations of small businesses. A review of some of the insider trading regulations is also on the cards. What more is there? Yash is joining in with us with all those details. Yash, good afternoon.
Good afternoon, Vinny. So, of course, as far as the market regulators board meeting today is concerned, there would be three important points on the table for the regulator to discuss. The first one is with respect to SME listing and tightening the regulations there. The second one is with respect to insider trading, and third one around specified digital platforms. To speak about the most important of these three, that would be the SME listing regulations. Here there are various suggestions which Sebi had put forth through its consultation paper. Things like, minimum application size to be increased to 2 lakhs or 4 lakhs from the current 1 lakh, introduction of draw of lot methodology for the HNI or the NII lot, breaking up the NII category into small and large NIIs, OFS portion to be restricted to 20 to 25% of the total issue, and various other suggestions which were a part of SEBI's consultation paper that came out in the month of November 2024 will be up for discussion. The second one is with respect to the insider trading regulations. Here, SEBI wants to widen the definition of unpublished price-sensitive information. They could consider various things like change in ratings, proposed fundraising, agreements that impact the management and control of the company, fraud defaulted or committed by the company promoter or KMPs to be included in the definition of unpublished price-sensitive information. The third one, as I said, specified digital platforms. SEBI could discuss the framework when it comes to specified digital platforms. This will be, of course, regulations, if they come through, will be positive for various influencers, financial influencers, as well as various digital platforms talking on financial news.
Okay, Yash, thank you so much for that update coming in there. But a quick look at what the market is doing, because Nifty 24,200 is just holding on to that, because at one point in time did slip below that mark, now tried to make a comeback. So just a few points about the 24,200 mark. We're seeing a sharp fall coming in for the markets despite it opening in the green. Then it saw a fall and continued. What's not doing well also is the Nifty Bank. Pull that up as well. That's down more than 1% in trade today. And those drags for the Nifty also coming in from the Nifty Bank side, because you have HDFC Bank, ICICI Bank, SBI, all of them are among the top losers, and drags coming in for the Nifty 50. We have Tata Motors, Bharti Airtel, L&T also among the top drags for the Nifty. So surely keeping an eye out on all these stocks also and how they're moving in trade. Let's look at, the mid and small cap today. What's the story panning out in this place? So the Nifty mid and small cap are also seeing a decline, but almost in line, you could say, with the benchmark indices as of now. Slightly bit more on that front, but yes, that's something to watch out for. Pharma is some bit of a green that we're seeing coming in, as well as IT, where we're seeing some positive signs today in trade, despite this weak market. But on that note, we're going to step into a very short break. 2024 has been a record-breaking year for India's luxury real estate market. We get you more on this after the break. Welcome back to Business Lunch on CNBC-TV18. Now let's move on. And the Supreme Court has finally ended a 15-year debate on whether coconut oil, a small package, should be classified as hair oil or edible oil. Ashmit is joining in with us to give us details on this one. Ashmit, good afternoon.
Well, it's an interesting dispute which stretches back 15 years if you count from the date of the Sestat verdict, goes back even further to the 90s. The issue at hand essentially is that the coconut oil, which many users apply on their hair, is that hair oil or is that edible oil? This question seems interesting, but it's even more interesting when you look at it from a taxation perspective. The GST that is levied on hair oil is 18%. The GST levied on edible oil is 5%. That's what the genesis of the dispute is all about. This issue traveled from the Sestat all the way to the Supreme Court. We had a split verdict coming in, then we had a 3-judge bench, and today finally clarity being given by the Apex Court that Supreme Court's view is that it indeed, even coming in small packages, it indeed is edible oil. Now, with that classification, what the Apex Court has done is that it has made the FMCG makers, the likes of Marico, the likes of Godrej, who produce coconut oil and sell in small packages, they are now all eligible for a levy of 5% GST. So a huge tax relief coming in, especially as far as the industry is concerned, and a setback of sorts as far as the tax department, which has been litigating for a very long time, in finally getting an answer to that question, is coconut oil a hair oil or an edible oil? The Supreme Court having the final word, the last word, saying that in fact it is qualified as edible oil. Back to you.
Okay. Coconut oil dispute finally getting some resolution there, qualified as edible oil. But on that note, let's move on. In 2024, that has been a groundbreaking year for India's luxury real estate market, from jaw-dropping deals in Gurgaon to blockbuster sales in Mumbai. The resurgence in the sector has been driven by the rise of super luxury living. CNBC-TV18's Shivani Bajaj is here and reporting to us that Gurgaon is now giving Mumbai and Bangalore some stiff competition when it comes to this category. And the trend may just be getting started.
This is DLF's Camellia project in Gurugram. And as of mid-December, it's leading the race when it comes to the sheer size of property deals. Rishi Parthi of InfoX Software Technology set the record books buzzing when he paid 190 crore rupees for a 16,000 square feet penthouse apartment in this project, which works out to a whopping 1,80,000 rupees per square foot. This has put Gurugram ahead of traditionally super luxury markets like Mumbai, because the deal dwarfs the other largest super luxury real estate deals of the year, which include Great White Global's purchase of two 8,000 square foot apartments in the Oberoi 360 West in Worli for 225 crore rupees. RR Cable's promoter Sri Gopal Kabra's purchase of two apartments totaling 13,000 square foot on the 62nd floor of the same building for 198 crore rupees. And Param Capital's Asha Mukul Agarwal buying 3 luxury flats at Lodha, Malabar for a whopping 263 crore rupees.
Gurgaon has become a parallel city to Mumbai and Delhi, and has now overtaken Mumbai and Delhi and become the luxury capital of the country. And there are many reasons behind that. One is that all the successful startup entrepreneurs who are working out of Gurgaon prefer to live in Gurgaon. All the industrialists of NCR who have their places of work in Gurgaon want to be in Gurgaon and don't want to travel that 1.5 hours each way coming from Delhi. Aralias, which was launched 25 years ago at 1,800 rupees a square feet, and now today Camellia stands at roughly 1,80,000 rupees a square feet. That is a price increase of roughly 100 times in the last 25 years.
The DLF Camellia's deal is not just the most expensive one in Gurugram's property market to date. It also makes the project the most expensive high-rise condo in India, followed by Namanzana project in Mumbai's Worli and Lodha Malabar in Mumbai's Walkeshwar. Interestingly, Oberoi 360 West, which boasts 3 of the largest deals in the list this year, comes in at the 6th place in terms of costliest properties. Data suggests that this boom in super luxury and luxury real estate market is here to stay. According to Anarock, 2024 saw 25 ultra-luxury residential deals, each priced above 40 crore rupees, close across Mumbai, Hyderabad, Gurugram and Bangalore. That's a combined value of 2,443 crore rupees. In terms of sheer number of deals, Mumbai still has the lead.
Camellia is one in Gurgaon, entire Gurgaon. But many of the projects in Worli area in the central Bombay, these are all luxury, which provides various amenities to the end consumer. So we had seen a lot of, if you look at the amount of luxury on the volume side. If you compare it with Delhi, I think Mumbai still has got the highest amount of demand coming from the celebrities or the younger entrepreneurs.
Experts add that this rise in demand for super luxury residential properties is being driven by a mix of growing wealth, the desire for opulent lifestyle, and the marquee projects that redefine luxury, and indicate that this trend is set not just to continue but grow in numbers and value in New Delhi. This is Shivani Bajaj for CNBC-TV18.
Okay, on that note, we're going to slip into a very short break. Don't go anywhere. More news and updates on the other side.
Le conseil est très clair, l'île est totalement dévastée, vraiment dévastée. L'habitat qui est un habitat précaire, les bangas, pour ceux qui ne connaissent pas, les bidonvilles, il n'y a plus rien, c'est très clair.
Shankarji, I know you've been watching Zakir Bhai as a child, and thereafter you idolized Shakti and all the concerts that you went for. From that period to the time when you actually met him, played with him, was a part of Shakti. All of this over a period of almost 3 decades. What was the one everlasting, overarching quality of Zakir Hussain? We know of him as a great musician, but very few know of him as the kind of person that he was. If you could throw some light on that.
Well, we've been playing and touring for the last 25 years. And if you ask me, one quality that he had is every night he never failed to surprise me.
Wow.
And every night,
Welcome back. You're tuned into Business Lunch on CNBC-TV18. But let's move on and talk about what's happening in the world of cricket. Now, legendary spinner R. Ashwin has announced his retirement from the international cricket with immediate effect. Ashwin's retirement announcement came minutes after India drew Brisbane Test against Australia. The Tamil Nadu bowler played 106 tests, taking 537 wickets at an average of 24. His tally is the second highest for any Indian bowler after Anil Kumble, and he was also a handy lower middle order batsman with 3,503 runs, scoring 6 centuries and 14 half-centuries. Okay, and with that, it's a wrap on this edition of Business Lunch on CNBC-TV18. Thank you so much for tuning in. Up next, you have Midcap Radar.
feeling of awe, what an artist. That was there every night, even though we played like 30 concerts in 40 days. Second quality is his humble nature, his compassion towards other musicians. You know, sometimes he used to just take a step back and just be an accompanist, providing you the platform to showcase your art form, you know. So that shows the maturity of a musician. And just the sound of his tabla, it's never ever going to come back again. So really, really sad. I mean, I don't have any words to speak.
We can totally echo that sentiment. Just the sound of that tabla. I personally remember, you know, there was a concert that you had done with him at Shanmukhanand, and you just asked the audience, hey, Lavani, should we play that? And the audience was enthusiastic. Zakir Bhai just strung one beat on the tabla, and everyone was suddenly transported to the Lavani. But you know what's also interesting is that the personal connection that you had with him, you had the joy of playing cricket with him, a lot of meals that you would share, you all would share as well. Salim, I'd like you to come in on you know, some of those memories that you've had with Zakir Hussain.
Well, yeah, there are so many of them. I mean, you know, one thing I definitely echo this thing about Zakir Bhai, that he made everyone feel like a friend. I mean, this father figure, the guru that he is, he'd make you feel like, you know, that you were just very, very special. And not just you, I mean, anyone and everyone. He may be, he or she may be just an intern or somebody working at the studio or something. He'd make everyone feel so special and so loved. That was a very incredible quality about him. And, you know, when it came to food, he was, you know, he always had the best places to go to. He always had the best cuisine that he'd recommend. And I mean, you know, there's one memory of him while I was touring with him during Tabla Beat Science, which was this band, very special band,
yes,
with Bill Laswell and Karsh Kale. I remember we went go-karting, and he beat everybody. I mean, he was just an amazing rider, you know. And after that, I remember asking him that, Zakir Bhai, how do you manage so many concerts living in America? And then each time he has to travel anywhere, he has to secure a visa, because you know, it's difficult to you have to get a visa. But then he said, and I asked him, like, you know, at that time the Indian card had just come out, you know, that one could get a card, just a Indian origin living, somebody who lives outside of India but of Indian origin. And I asked him, like, why don't you opt for that? And he just told me something that I'll never, ever forget. He said that I can't give away my Indian passport. It's too difficult for him to to submit his Indian passport back to the government.
Wow.
And that really shook me. I mean, imagine each time he has to go to Europe, each time he has to go to the UK, he has to travel to LA, go to the embassy, secure a visa. And he's willing to do that all his life, but he never ever give up his Indian passport.
One of India's greatest sons.
I have so many episodes like that, so many memories of him, telling me so many amazing things. His knowledge about music, in general, about classical music.
Right.
Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Vivek Iyer. Another down day for the markets. It's a 124-point cut on the Nifty. Defensives are doing well, but the Bank Nifty continues to put pressure. So does the broader markets today. That is the theme that continues. 3 continuous days of red on in our stock markets.
Absolutely right. Ahead of the all-important Fed meet today, what we're actually seeing is quite a bit of a sell-off. Dow yesterday was down for the 9 straight sessions, and Indian markets too seeing quite a bit of a sell-off, largely driven lower by the PSU pack. But we have quite a lot lined up on the show. Let's start off with the top headlines. Markets slipped after a firm open. Nifty Sensex down over 0.5% each. Utilities, PSU banks and metals are the key drags, even as healthcare and pharma notch up some gains. Mid-caps lag.
NMDC is under pressure after sources tell CNBC-TV18 that the Karnataka government may be looking to increase duty on iron ore. The state contributes nearly 35% to the total mix of the company.
Wabag under pressure after a 2,700 crore order from the Saudi Water Authority gets cancelled. Stock recovers from the day's low after the management tells CNBC-TV18 that Saudi Water Authority wants to recalibrate the order size and scope, and the company will participate in the reverse tender.
Shoppers Stop climbs in trade after a 3.4% equity worth 236 crore rupees changes hands at 628 rupees a piece in a block deal window. Sources tell CNBC-TV18 that Amazon.com NV Investment Holdings LLC is the likely seller.
GE Shipping under pressure after the management tells CNBC-TV18 that tanker freight rates have been weak due to market fundamentals. Stock down nearly 3%.
Okay, all right. Let's quickly take a look at the markets. The low for the day today was 24,149. We've recovered around 50 points from those levels, but still very close to breaking that 24,200 mark yet again. As Vivek was pointing out, the all-important Fed meet, that is something that we'll be watching out for. The mid-caps continue to be under pressure. Bank Nifty, second day continuously, we are seeing some pressure come by from the PSU space. Yes, there is recovery all across, but it is not as sharp as the fall has been since morning. Defensives continue to do well. We have the Pharma and the IT index in the green right now. Pharma in the Nifty pack and the broader markets continue to do well. So that is a sector to watch out for sure. FMCG did make a recovery, but again, that index is absolutely flat, but with some negative bias, Vivek.
You're right. The only pocket, in fact, I think a bit of strength is actually the Pharma pack. Like you mentioned, Pharma index up over 1%. Names like Dr. Reddy Sibla are holding that particular pocket of the market quite strong. But we will now have Pharma standing at the wall. This is our special segment, Midcap Movers. Pharma will take us to the midcaps that are buzzing in today's trading session.
Well, the markets may be choppy, but today is a session that belongs to the new listings. All three of them have had a very, very good debut on Dalal Street, regardless of how the market has been. Take a look at this. MobiKwik had a 60% premium to its IPO price, is now up 80%. Vishal Megamart, a 30% premium, now up 40%. And Sai Life Sciences takes the cake because it listed around 18% higher from its issue price, is now well up almost 40% from the IPO price. Some of the stocks that are not doing well, though, in today's trading session are the PSUs, and NMDC, after CNBC-TV18's news break, is down 6.5%, almost about to turn negative for 2024. REC, HUDCO, HAL, almost every stock in the PSE index currently trading with losses. Pharma is a segment that is bucking the trend, as you guys just mentioned. Concord Biotech is up 5%. Mankind Pharma 2, best day in around 3 months. Aurobindo 2 building on the gains from the morning, 3% higher there as well. Stocks that are doing well on the back of strong volumes in today's session, and EID, Parry, KPR Mills, Bharti Hexagon Hexacom makes an appearance here, 7% higher, and Radico Khaitan too trading with healthy gains on the back of strong volumes. And lastly, some other stocks that are bucking the trend in today's session include the likes of Action Construction and as well as Supreme Industries, both at the highest point of the day, gains of 3% each. Back to you guys.
Okay, some interesting names there. So there are some gainers in a market which is otherwise looking very weak. But it's a good time to get Sudeep Shah for a technical check on the markets. He's joining us from SBI Securities. Sudeep, third day running, we are seeing some cuts. Do you think we could see some recovery, consolidation, or this could be the trend for this week?
Good afternoon, Sonal. Good afternoon, Vivek. Sonal, what we are eyeing, Sonal, what we are seeing in the last few days is that Nifty, despite that Friday's move of 400, 500 points from the lower levels and closing around 24,750, 24,780, the index has not been able to cross or sustain about 24,800. And last 3 days, we've seen formation of lower top, lower bottoms, and it has been an all-round selling pressure. The pockets, specifically banking and IT, which were leading the rally in the last 15 days in the recovery course, they also have faltered somewhere. So here we feel that now the markets could enter into a period of consolidation, maybe between 24,000, 23,950 on the downside and 24,500 on the upside. This is a wider range, but this could be that consolidation band. And from an extreme short-term perspective, now 24,350, 24,400 will now become an important resistance, being the 20-day exponential moving average. And on the downside, we are eyeing supports closer to 24,050, 24,000 zone. Now here 24,200 as well as 24,000 strike prices puts both have the highest open interest. So maybe a retest of 24,050, 24,030 followed by a rebound is what we are expecting right now.
Right, Sudeep. So what are your individual picks for the day? Any long or short calls you're giving?
There are a couple of them. The first one is from the pharma space, which has broken out today. That is Mankind Pharma. Now, Mankind Pharma has been in a longer-term uptrend. In the short term, if you see in the last 15-20 days, the stock was consolidating between 2,550 and 2,700. And today there has been a breakout packed with volumes. So we expect the stock to head up to 2,850, 2,900 in the next couple of weeks. The stop losses for the same can be kept at 2,700 on the downside. The second stock that we like is United Spirits. Now here too, there has been a breakout after say a 40-45 day consolidation period. The overall trend of looking at the weekly and the monthly charts is quite strong. From the short-term perspective, there was a consolidation and now we are witnessing a breakout. So we feel that from the current levels, United Spirits can be bought with a stop loss of 1,550 on the downside and a target of 1,630, 1,650 on the upside.
Okay, all right, Sudeep, thank you so much for joining as always and giving us your technical picks. But as we slip into a break, here's some good news for you viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store.
Music, I mean, so much to talk about. He has such an incredible, so much knowledge about Western classical music and, about orchestras and about musicians. It was incredible to just be around him.
Right. The thing that you spoke about him not wanting to give up his Indian passport tells you how great a son he was to the nation. Shankarji, I have to ask you this. Which of your songs did he like the most, he enjoyed the most? And if you were to, give him that vocal tribute, if you would.
Oh my God. I used to, we used to travel a lot by bus because we used to have long bus journeys, 8 hours, 10 hours, 12 hours. So that was one opportunity where I used to play my mixes or, something that is recently released. some film song or some, non-film song, some piece of music, and he used to listen to it and, appreciate every single, thing that piece of music that I played for him, and give me his blessings. See, I don't want to sing something from what I've composed for him or anything like that. All I would like to sing is Guru Brahma, Guru Vishnu, Guru Devo Maheshwara, Guru Sakshat Parabrahma, Tasmai Shri Gurave Namaha.
Om Shanti is what we can say to Zakir Hussain. We celebrate his life on that, and one of the most amazing anecdotes that he speaks about his life is he, got up early in the morning, heard, the namaz being recited. Thereafter, he went to a school which was a Christian school where he learnt all the carols, etc. And then thereafter, he prayed to Saraswati as well. He was what India was. Salim, we've done Guru Brahma, Guru Vishnu. I would like for Zakir Hussain to be present on this earth. I would like you to, thank Lord. If you could, hum a line of Shukran Allah, because that's exactly what one has to say when they think of Zakir Hussain.
Sure, it's a difficult time right now. And speaking of Shukran Allah, I must say, this song had just released, and I walked in late at Shanmukhananda Hall at one of his concerts, and he was playing a solo, and he just jumped into playing Shukran Allah on his baya, which was, which was just,
yes.
But we thank the Almighty that we have learned. Every single person on this panel and in the music world has a little bit of Ustad Zakir Hussain, because we've learned so much from him. And on that note, Shukran Allah walhamdulillah, Shukran Allah walhamdulillah, Shukran Allah walhamdulillah, Shukran Allah.
Welcome back to Midcap Radar. Well, the sell-off as far as the broader end of the market is now intensifying. A couple of stocks that are now trading near the day's lowest point. First up is Pyramid Enterprises. Some cautious commentary coming in from the management at the latest City conference. On the back of that, stock down almost 5%. And the other stock, one stock that was doing quite well in yesterday's trading session is PVR. But today, down almost 5%. Again, this particular stock now trading at the day's lowest point. But moving on, Shoppers Stop is in focus on the back of a block deal. Nimesh is here with more details.
Hi Vivek, so there was a large block in pre-open in Shoppers Stop. I understand from sources that Amazon was a seller in today's block. They own close to 4% and they've sold their entire 4% stake. So it's a clean out trade as far as Amazon is concerned. In terms of buyers, the large part of the book was built by the domestic mutual funds and some FIs as well. But it's largely dominated by the domestic mutual funds. If you look at the shareholding pattern, the promoters own 65%. It's largely owned by the mutual funds. The MF put together own close to 22%. So that stake will further go up. And FIs own close to 7%. For records, Amazon had bought this 5% stake in Shoppers Stop way back in 2017, and at that point in time they played close to 180 crores. So now for this 4%, they've raised close to 280 crores. So they've not made a lot of money in this, but for records, Amazon has completely cleaned out now. They've sold their entire 4% stake in Shoppers Stop via block deal today.
Okay, all right. That explains the move on the stock as well. Thank you so much for joining us with all those details, Nimesh. Let's move on to our segment, Midcap Spotlight. Yash is joining us, focusing on Viatech Wabag. The stock has been under pressure, but there is some update here as well, Yash.
Well, that's correct. The stock has been under pressure since market opening, but let's just understand why has that happened. Overnight, of course, the company informed the exchanges that Saudi Water Authority has cancelled a tender for a 300 MLD mega seawater distillation plant. Watek in September 2024 had won this order for the sea distillation plant, as I just mentioned. And it's a large order. As I said, 300 MLD. The order size itself was about 2,700 crore rupees. Watek, as far as its exchange information is concerned, they've added a few points to it. They've said that the Saudi Water Authority has notified all tender participants on cancellation of the tender. So, one thing to understand is that it's not like the order has been cancelled for Watek and is being given to someone else, but the tender itself in the first place has been cancelled. The second thing that the company said is that they are in touch with Saudi Water Authority to understand and comprehend the reasons for the cancellation. We spoke to the management at Watek Wabag, and they've also issued some clarification as far as the cancellation itself is concerned. They say that the tender, that is about 2,700 crore rupees from Saudi Water Authority, has been cancelled as Saudi Water Authority wants to recalibrate the order size and scope itself. What the company is saying is that they've been informed that Saudi Water Authority is likely to float the tender for the same contract in its recalibrated fashion and invite bids again in the next couple of weeks. Also, Watek Wabag said that it will participate when the revised bids come in, as far as the time period of 2 to 3 weeks is concerned. And also adjoining, the management has said that they are confident of booking orders worth about 3,500 crore rupees in the third quarter of FY25 itself.
Thank you so much for that. Yash, just to give some perspective, remember the order book at the end of Q2 was close to 14,600 crores. So this was a pretty significant order. And it'll be important to see whether, once the retrending happens and if the company wins, whether the management can go ahead and get the order inflow target of close to 16,000 to 70,000 crore that they had guided the street for. But some important clarification there. Thank you so much for joining us and giving us to that, Yash. Let's now slip into a short break. We'll get you on the markets and stock-specific action on the other side. Stay tuned.
Thank you so much. The heavens are blessed with a new, with a star. You've had, a lot of experience with him as well, playing on the stage with him. One thing I remember, people would say when they were bowling to Sachin Tendulkar that you're not only bowling to get him out, but you're also bowling to impress him. That's exactly what happens when you played with Zakir Hussain as well. You're not only, playing the music to present to the audience, but you're also playing to impress Zakir Hussain. How did he, change the way you played on stage? Playing with Zakir Hussain versus playing with others. If you could talk about that and maybe, speak about some of the things that celebrated, that Zakir Hussain celebrated the most.
Well, I go back to a memory from the year 2007. And that was my first time on stage with him in Kolkata back in the day when I used to live there. And I was just in the wings and facing the usual jitters. I mean, I kind of telling myself that, in a few minutes I will be on stage with this larger than life, this person who we have looked up to and idolized so much. And he comes quietly from behind, gives my kurta sleeve a little tug, pulls me aside, whispers into my ear, says, look, my kurtas are a little more expensive and a little better ironed, but at the end of the day, I'm just a tabla player. And, just little moments like this, there's humor in it. But there is also, I have seen him as such a spiritual guide and of course, the great artist that he is. I don't think I'm even qualified to talk about that in the presence of all these great masters of music. But just how deep he was. And he was one of those people, look, there are great artists and then there are leaders. There are people who believe in things. There are people who can carry you forward into the next century or the next millennium or whatever. And I feel Zakir Bhai was one of them. So for me personally, and I think for a lot of us, it's a deep sense of personal loss, like losing a father or a spiritual guru. It's somebody who gave you a sense of tethering, a sense of belonging, a sense of belief, a sense of faith even. I mean, he told me, I remember one of the instances which were a little deep, and it took me a little while to comprehend what he was saying, is he just asked me once, just off the cuff, he said, why do you think Ustad Vilayat Khan Sahab or Pandit Ravi Shankar ji or Ustad Ali Akbar Khan Sahab or Pandit Nikhil Banerjee are what they are? Why do you think? And of course, I knew better, than to give a reply, kept quiet. And I let him answer, and he said, it's not because of what they play, it's not because of how they play, it's just because of how much conviction they have in whatever statement they're trying to make. And that takes me to what Shankarji said, is that, this one thing that Zakir Bhai taught the world of music, it was to be in the moment. It was to live the moment, in the words of Steve Jobs, as if it were your last. And when then he could move on to the next moment and live that moment as if, that was a complete separate, entity unto itself. There's so many little things. There was humor. Right. I have not seen a more well-rounded individual.
Welcome back. You're still tuned into Midcap Radar. The pressure on the markets, that has increased actually. The Nifty is now down 160 points and the Midcaps are down 0.8%. When we started the show, it was down around 0.7%. So some more fall from the highs, though still we are not at the lows of the day yet, but Nifty is below that 24,200 mark for now. Let's move on and address some specific stock moves. Ambuja Cement has announced the amalgamation of its subsidiaries Sanghi Industries and Penna Cement with itself. Street sees the merger in favor of Ambuja. Nigel is here to explain to us about this new change. Nigel.
Well, that's right. Ambuja Cements has two subsidiaries. One is a listed, one is an unlisted company, among others. And they've announced that they're going to be merging both these two into Ambuja Cements. So the listed one is Sanghi Industries, the unlisted one is Penna Cement. Before we get into further details, let's tell you the rationale. They're looking at simplifying the group structure. And that's the core purpose of this. And that's more or less read positively by the state. So the timeline that they've given is around 1 year odd. That's provided all the regulators give the go-ahead. Now, the ratio is most important for this, right? So, for the listed entity, you have Sanghi Industries as well as Ambuja Cements. Now, those who hold close to around 100 shares of Sanghi Industries will get 12 shares of Ambuja Cements. You put in the math, and as of yesterday's close, well, it was at a discount of close to around 11% for Sanghi shareholders, and they'll be getting the Ambuja Cements shares. So, in that case, it's negative for Sanghi Industries shareholders, while for Ambuja Cements, it's seen at a longer-term positive. So, both these two are in focus. But the other one that we highlighted earlier this morning as well was, since ACC is the other subsidiary of Ambuja Cements, you should keep an eye out on this one. Why is that? Because at some point of time, they look to simplify the structure, right? And maybe fold up ACC as well as into Ambuja Cements. However, going by this ratio that they have given, it appears the ratio will be in favor of Ambuja. And that's why even ACC is down 2.5%. So, the merger could be underway. But if the merger takes place, then still you'll be tilting to Ambuja Cements. So among all of them, the street prefers to play it via Ambuja Cements because it's a longer-term positive. Back to you guys.
Thank you so much for that, Nigel, and giving us all of those details as far as that particular merger is concerned. Well, moving on, let's now get you an CNBC-TV18 exclusive. We learned from sources that Karnataka government may be looking to increase duty on iron ore. Sudarshan joins in with more details.
What we understand from sources that Karnataka government is likely to increase the iron duty, and that announcement is expected very soon because draft has already been circulated. What I understand, that draft was circulated a few days ago. One stock that has been in focus, obviously you are seeing that in the last 30 to 40 minutes the stock has fallen. The stock was flat before our exclusive. Now it's down almost 6%. So the reason of this fall is because of total mix for NMDC. Karnataka forms nearly 35%. That's the reason that stock is under pressure. Another stock that might be under pressure is JSW Steel, because these are the two stocks that are likely to be impacted the most because of this if government goes ahead and increases the duty further. Now, recently in the latest order, as per the latest order, Supreme Court on the current royalty had already announced that government can tax it retrospectively, and the date was given 2005. So from 2005, the taxes can be done retrospectively. So because of all these reasons, but major reason is increase in duty that government can announce very soon. That is Karnataka government.
Thank you so much for that suggestion. You know, it's an important development that you're picking up from your sources, both NMDC, JSW Steel, and the other guys who are using iron ore as input are seeing selling pressure. So, whole host of steel stocks are names like JSPL, Tata Steel, SAIL, all of them are seeing selling pressure today. Well, a couple of other stocks to keep on the radar. Have a look at some of the private as well as PSU banks. Have a look at Federal Bank. That particular stock has seen significant selling pressure in the session today. The Nifty Bank down 1.3%, Federal Bank down over 4%. Have a look at names like PNB, have a look at names like Bank of Baroda. All of them are seeing significant selling pressure. Vatek Wabag, you know, the one stock that Yash just told us about, seen a bit of a recovery from the day's lowest point after that important clarification that Yash explained to us about. But, you know, again, it's still down 10% on the back of that significant order win cut. Some of the other stocks that are seeing selling pressure, look at the auto pack, very weak Vahan data, so names like Tata Motors, even some of the auto ancillary names like Bharat Forge, also names like Hero Moto, Bajaj Auto, all of these stocks are now at the day's lowest point. But with that, it's all the time we have on this edition of Midcap Radar. Your stocks when we return.
We say that, and there is. It is incredible how many of us feel like he was a guru or a mentor. You may be a musician, you may even not be a musician, you may be from some other walk of life, but he was still a guru for you.
He was. Shankarji, if you could tell us a little about how Zakir Bhai prepared, because you've spent so much time with him, could you give us a sense into the brain of that genius? Because we know, you know, what was on stage, but before that, how his preparation was and what his thoughts were there. If you could take us through that journey.
Okay, now, here is a man who has been playing for years and years and years. And, you know, he need not prepare actually, because it's all there. But before every concert, you know, so that he doesn't disturb the other artists, he used to put a piece of cloth on his baya and chati. And he used to be, we are all doing our sound checks and we're creating a ruckus over there on stage. This wire is not working, that in here. He used to be just sitting there and he used to be doing his riyaz, you know, continuously. Now you asked me about his brain. You know what differentiates a Zakir Hussain from any tabla player in the world? I'll tell you what it is. I've analyzed this. See, there's a lot of learning that you do, you know, Talim, as you say. Every tabla player, every instrumentalist, he learns a lot, and there's a lot of information in one's database. Okay, so Gyani, bahut log hain. You know, you got a lot of information, lot of education as far as your core instrument is concerned. The difference between other players and Ustad Ji was, at that spur of the moment, from that database, which is that information that he needs to draw and present it. And it happens in a split second. So that was his mastery. The spur of the moment, that improvisation, that analysis of what you're singing and removing that information from his database and putting it out there, that nobody can do. That's why I'm saying tabla will never sound the same again on this planet.
For our audience, would you be able to give us a more relatable example out here? Like, you know, you were doing a certain thing in the concert and this is exactly what Zakir Bhai did, and that floored you on the stage itself.
No, I mean, you tend to take some, you know, complicated variation in your rhythmic improvisation. He catches on to it after the first beat. He knows and he's in sync with you. And you always wonder, how is this man reading you like this? You know? It's almost like mind reading.
Well,
I'm sure that when Rahul also plays, some of the times while he's playing and suddenly he pauses, you see that Guruji has also paused in the same place as if they've been rehearsing for 10 years. I'm so sure, Purban, you agree with me. And you just wonder, how is he radio like this? So he had a different kind of brain and interpretation of what he's playing. And one thing that I've learned from him is that moment, he's there with you 100%. 1 hour concert, 2 hour concert, he's there with me, or he's there with Salim, or with Rahul, or Purban, or Aditya. He's there 100%. After that concert is over, maybe he's completely erases it and goes forward to the next one. But that minute, he's with you, whether he's conversing with you, whether he's playing with you, or whether he's just eating with you or just being with you, he's there 100% with you.
100% present for his co-artists and more importantly for his audience as well. I remember there would be a lot of technical difficulties when a concert is happening, say the mic falls or anything. He would just make a joke of it and continue because he was there with the audience. A lot of time feedback sounds would come, etc. He would just converse with 10,000.
Hello, good afternoon. You've tuned into your stocks on CNBC-TV18 and I'm Vinny Motiwala in the Mumbai News Studio. Let's look at what the market is doing. Nothing exciting happening there. Like last time we checked it, also 24,200. Right now also just trading around that mark, and 0.5% of decline is what we're seeing, but not much in terms of a recovery or any move on the upside that we're seeing for the markets. Nifty Bank, that too is under pressure, trading near the day's lowest point, and that's the top drag coming in today. So, pull up the Nifty Bank and the top contributors also that you talk about it in terms for the market. We have ICICI Bank, HDFC Bank, SBI, all of them are in the top drags for the contributors coming in for the Nifty 50. And that is why Nifty Bank is the top sectoral gainer. Banks not doing anything exciting other than that. L&T also among the top drags coming in. Some respite and green coming in for Reliance, but not much of an action happening there. Mid and small cap too is today under pressure, slightly bit lower than what the benchmark indices are seeing. Both of them are down almost 0.6% to 0.8% in trade. The Nifty mid cap as well as the small cap. So keep an eye out on that. That's how the market is shaping up right now. Nothing exciting there. Near the day's lowest point, trading around that mark. But let's get started because this is a show where we solve all your stock-related queries. And to solve all those doubts, today we have our experts joining in with us. We have Shaina Mukadam, independent market expert, as well as Soni Patnaik, Assistant VP, Derivative Research at JM Financial Services, joining in with us this afternoon. Good afternoon, ladies. Thank you so much for joining in with us on the show. And Soni, I have to come to you. Markets, nothing exciting, right? Nothing exciting yesterday, nothing exciting today. What is it that we're seeing coming in terms for the market? What are the levels that we're watching out for? Today, it broke even the 24,200 mark. It was below that level at one point of time.
Hi, good afternoon, Vinny. Thank you for having me on your show. I think Nifty is below its 20 and 50 exponential moving average, and the important level that it had broke was around 24,400. So now the next level of support can be seen towards 24,000. Any move below that, and you can see it heading towards 23,800 as well. So I think it's gone into that selling territory as of now, and any rise can continue with the selling pressure. As long as Nifty is not crossing above its 24,400 mark, the sell on rise may continue. Stock specific wise, we can see a lot of stocks are getting hammered today, and that selling is just intensifying. So 24,400 is a crucial mark for any short covering move that should be seen in a recent move. Otherwise, we're heading towards 24,000 on immediate basis, where lies the next crucial support. I think similarly for Bank Nifty, which was holding on to its 20 exponential moving average, level of support yesterday, but today it broke. I think Bank Nifty is also may drag the index lower towards 51,500. So that could be a crucial point to decide whether it bounces from there. But both the indices, as of now, have entered the selling territory, and any rise can, make it into a sell on rise structure.
Okay, sell on rise structure that is coming in for the markets right now. Thank you so much for that update there on the market, Soni. But on that note, we'll start with the stock-related queries. Let's move on to the first query for the day. We have this one coming in from Kalyani, who's writing to us from Mumbai, holding 5,000 shares of CG Power at a price of 225 rupees per share. So currently, obviously, the viewer is making a good amount of profit on this one. For them or for a long term, what is the view that you have on this one? Shaina, let me start with you. Should the viewer continue to hold this or maybe book some partial profit in CG Power?
See, I would suggest the valuations have become so expensive and the investor has made good amount of money. So he can take part profits. So take some profits home, but at the same time, the rest he can continue to hold for the longer term. See, valuations, if you look at it, if you see in terms of at the current levels, it is now turnover is like the market cap is 9 times the turnover, which is pretty expensive for a capital goods sector. Also, you have the overall P. In fact, all the other financial parameters are expensive, and on the terms of current pricing. So take some profits home. But in the longer term, the opportunity is huge. They are putting in investments in expanding capacity, and all this will come into fruition next year. So I think over the next 3 years, you'll see a good growth in revenues, and then the valuations will start looking more attractive. So to that extent, I expect some consolidation. Hence my recommendation.
Okay. So partial profit booking, the long-term story is good because of the expansion plans they have. Sonia, on the charts and technicals, right? Like Shaina was also mentioning, valuations are expensive. The stock also, when you look at it, YTD last 1 year has seen a very sharp jump up and a rally that has come in for CG Power. So what should the viewer do on the technical front as well? Similar to what Shaina was saying?
So Vinny, on technical front, I think, since, she's holding out from a very low levels, it is wise to take some partial profits, trail the stop loss towards 650. However, the stock is a new entrant in F&O space. It has been building up good position. So there's a possibility that in the next 3 months or so, the stock can head towards 900. I think that's the range again where one can look to book more profits. But as of now, if 650 can be the trailing stop loss, then hold on for the targets towards 900, where you can actually make better and more profits to book.
Okay, that's the word coming in for CG Power. Let's move on to the next query, and this one is on a private bank. ICICI Bank is the next stock that we'll talk about. Priyanka Khanna, who's writing to us from New Delhi, 2,500 shares of ICICI Bank is what she's holding at a price of 955 rupees per share. Currently, the stock is trading at 1,311. Wants to know, for the long-term investment perspective, does ICICI Bank merit, to continue hold the stock, or maybe look to sell this one? What is your view on this, Shaina? ICICI Bank in the private banking side, is that a good bet to continue to hold on, given that she's already making a profit? So, if she looks to sell this, can she buy some other bank?
Well, ICICI Bank is part of my core portfolio, has been for quite some years. And I believe that even at current levels, it looked pretty attractive. If you see price to book, it's about 3 times. So I would put it on the fairly valued side for the shorter term. But for the longer term, of course, there's opportunity, because if you look at it in terms of growth, you see the first quarter itself, they've done pretty good growth. And they're likely to sustain over the rest of the year. In fact, even next couple of quarters. In terms of the PCR, the provision coverage is pretty high. They've got 79% coverage, which is good. Net NPA 0.4%. So basically, balance sheet is strong, growth is good. Private sector bank, it's got most of its its businesses in line and doing well. So I would say hold for the long term.
Okay, hold for the long term. And on the technicals, Sony, ICICI Bank, how is that looking?
So when it continues to look strong on technical charts for a longer term perspective, 1200 seems to be a good support. So one can continue to hold with that support. I think on a monthly basis, we can see it heading towards the 1450 odd mark. So I think hold on, 1200 good support, towards 1450 to 1500, that range one can look forward to book profits.
Out on those levels over there. But now moving on from a private bank, we have a query coming in for the public banking side, and we have it on SBI. Meera Vasudev, who's writing to us from Tamil Nadu, holding 3,000 shares of SBI at a price of 600 rupees per share, wants to know for the long term the outlook of the stock, and if she could continue to hold this or look to exit and get out of the stock and book their profit. Shaina, SBI, what is the view?
It's a hold. Valuations are extremely attractive. It's just about 1.2 times price to book currently. Also, if you see in terms of growth, they're doing pretty reasonably well. In terms of loan growth, they have grown by about 15%, deposit growth 9%. If you look at their return on assets, it's about 1%. I think that is factored into the low valuation that we're seeing as of now. So I would say it's a hold for the long term.
Hold for the long term. That's the view coming in for SBI. And Sony, on the charts, obviously today the banking names are not doing anything great, but SBI in the last 6 months also has been very muted. So what does it merit in terms for the viewer to do? Hold, exit, maybe look to add some more. Is that also a strategy that would work out for SBI, Sony, on the charts?
So, Vinay, certainly I think it looks fine on monthly charts. 750 is a good support. It has been holding above that level, although in the past 6 months it has not outperformed its peers, but it has come out of its consolidation zone, which is above a 800 mark. So anyway, between 800 level on declines, one can actually add some more. It looks good. It's poised to take out its previous all-time highs towards 910 plus on a positional basis, of course. Maybe in the next 3 months, one can see it crossing those all-time highs. Any move above that, it can head towards 1,000 odd levels. I think it's wise to continue holding it. 750 is a good support. You can add some more quantity on declines and look for a 950 to 1,000 odd target to book the profits.
Okay, thanks for that view coming in on SBI. But on that note, viewers, we're going to slip into a very short break. But today is Wednesday, so after the break, we'll bring in our special segment, The Growth Code, an initiative by Grow and CNBC-TV18. We'll address viewer questions on how to develop smarter trading habits, so stay tuned in for that.
All of them feeling like he's speaking only to them. There is a circle of life. Zakir ji's first, major concert was with Pandit Shiv Kumar Sharma, and as fate would have it, his last concert tour was with you in the US as well. That circle of life, what you saw Zakir Hussain as while he played with your father, to the time when you played with him and till the last concert that you played with him. If you could give us that experience, what you learned from him, and just celebrate the life of the maestro.
Apart from, of course, having my own father as my guru, there are so many other great artists one learns from. And, Zakir Bhai was one of them. And each performance, I think, playing on stage with him was something you'd take back. You'd wonder how this person, who is so talented, who has seen everything in life, has seen all the success, would be so attentive when he is accompanying an artist on stage. It's not about him, it's about the artist. And the little detail, he may have done it millions of times accompanying various different musicians, but he was so attentive. He was not all over the hall. His mind was not anywhere else, although he has a million things on his mind. But each, if you're playing a particular tal, what we are playing, he's listening to the alap when the tabla is not being played. These were qualities which were completely, of a different level altogether. And his observation level, anything and everything was observed so well. In fact, I remember in concerts, after concerts, there was no talk about music. It was just about everything else under the sun except music. An amazing conversationalist and amazing person to just sit and imbibe from, So many memories, right, from my childhood when he used to come to my house. He used to host some amazing home parties on my father's birthday, which was 13 January. So I remember Nusrat Fateh Ali Khan Sahab, and so many other great artists coming, and Zakir Bhai would host the entire evening. From that time, when I was about 7 or 8, to this time now, having seen my father on stage with him, and recently, just a month ago, performing with him, it's just a cycle, which is kind of, I have no words. It's pretty amazing to see this, an artist of his qualities. It's very hard to come by.
Purbayanji, if you could give us a musical tribute of a rag that you could just give some notes of.
Well, I would like to mention that I was incredibly lucky, and even now, Shankarji is also one of my mentors and gurus, and I was incredibly lucky to be able to do this one song during the times of the pandemic, which was called Shiva Shankara. And I remember I had, asked Shankarji, and of course, he very kindly agreed, and he said, yes, I will, do this. And then we were kind of talking about, who else we could have on it. And just on a whim, I thought, I would, talk to Zakir Bhai and ask him if he would. So I texted him and he called me back.
Welcome back, and moving on to our special segment, the Growth Code, an initiative by Grow and CNBC-TV18. Whether you are new to investing or a seasoned professional, our goal is to provide you with insights and strategies you need to navigate the market and make informed decisions. Today, we'll address the viewers' questions and explore how traders can avoid common pitfalls and develop smarter trading habits. And obviously, we have our experts here today as well. Shaina Mukaddam, independent market expert, as well as Soni Patnaik, JM Financials Services from the VP there as well. So yes, both of them are still with us to solve all those doubts. Thank you so much, and let's move on to this segment now. And we have Rahul Singh, who's writing to us from Bihar, and his query, and he says that he was invested in the market but finds himself overtrading due to the volatile phases. He's asking how traders are like him should recognize and control the behavior. What is it that they should be watching out for? Soni, let me take it to you first.
So, Vinny, I think this is a very live, real example that we're witnessing right now, the volatility in the market and how we can see the movement is happening. So in this case or this scenario, what one best can do is learn how to hedge the positions. Maybe, if you're doing it from a trading perspective or from a portfolio perspective, hedging works from both ways. And I think that's sort of a strategy works out best. So I think maybe, when it comes to the volatility or any sort of choppy markets or even event-based volatility that can be seen, hedging can help you to risk that volatility risk, and it can give you better confidence in holding out your positions. Of course, discipline holds out a key that when your stop losses get hit, one must exit from the trades. But of course, when you're hedging the position, it limits your downside risk, and you will have better confidence into holding the positions when it comes to choppy market.
Okay. And China, what is it that you would advise our viewer Rahul to do? Because he's also asking in terms of how can one actually identify, in terms of volatility, so that he can maybe take a cautious step before as well.
See, the definition for volatility is if there's a huge fluctuation. So this is a huge fluctuation in stock prices, which actually you can have a couple of parameters that throw this up. Like, for example, you have the VIX. So if the VIX is higher, there is more volatility. You have also something like the Bollinger Bands, which you can look if you're doing technicals. So the broader the band, you can assume that, it's a bit more volatile. You have trading volumes actually which go up. You have beta, higher beta stocks. When there is a huge volatility, the stock movement is much higher than the overall market. So in times of high volatility, these are the stocks that you would probably need to avoid. In fact, when you feel that the market is becoming volatile, it's better not to, to reduce your trading. Also, do not be leveraged at such a time. There are some instances when you can expect volatility. For example, there is a huge global event, local event. So event-driven volatility is also there. So if you're trading, it is better to protect your capital by avoiding doing major trades in such a time.
Okay. Wise advice coming in there on that volatility and how one should be navigating that, what you should be doing. Let's move on to the next query. We have Shweta Tiwari, who's writing to us from Mumbai. This is a very common one because what she's saying is that she makes a lot of impulsive decisions during the market sell-off. I mean, more like I think it's a panic kind of a situation that is created for her. So she is asking that some strategy that one should follow to stay disciplined during this time instead of just panicking, making those emotional market moves. Soni, what's your view on this one, and what is it that you would advise the viewer?
So when you see any sort of a market sell-off that we see always comes in temporary phases. The only sort of help that one can have is to be disciplined, religiously disciplined, and exit the trades when it's going against the view or it has hit your stop loss. The other kind of strategy, like I've just explained, would be to hedge the positions to understand how longer can you hold on to your trading perspectives, or that horizon will just broaden for you when you're hedging the positions. I think these are some of the strategies. It could be from the derivative point of view that one can actually buy a put option, sell a deep out of the money call option against the stocks that you're holding. There are multiple such derivative strategies and options platforms that one can actually adopt to hedge the positions. Otherwise, be disciplined, and when your stop losses get triggered, it's wise to exit from the position, wait for the market sell-off to happen. Even if a rebound happens, you may re-enter the position, but stick to the discipline of exiting the trades when the stop losses get triggered.
Okay, and Shaina, what is your view on this one? What should the viewer do? What should Sweta be following in terms of a decision to discipline herself at such a time?
Before making any investments, you need to have a clear plan in mind. You need to know what you're investing for. You need to know what is your risk appetite. For example, if you're looking to make, this money is only to be invested for a short time, medium time, or you want to have a long-term investment. So basically, once you have decided that, then I believe you can actually fix targets. For example, look at fundamentals of the particular stocks that you're doing, or even you can also have a systematic plan for mutual funds. So basically, systematically plan your investments based on parameters which you have pre-decided. And then I would say that unless there's a major change that has happened in that particular stock or fund, then you keep to your targets of the targeted price that you're looking at based on fundamentals, technicals, or the stop losses. So be disciplined.
Okay, be disciplined. Let's move on and to the next query. We have Ramesh Jain, who's writing to us from New Delhi. He says that he risks too much of his capital on a single trade and has faced significant losses because of that. Now wants to know how he can determine the right position size to minimize his risk. Shaina, what would your view be on this one?
I would say, however small your portfolio, you need to have, in my view, at least 5 to 10 stocks if it's a very small portfolio. Also, in terms of sectors, it's better to have a percentage maximum allocated to a particular sector. Also, you do need to look at various other parameters, but I think in these, if you stick to this, at least you're minimizing your over dependence on one particular stock or sector, and to that extent, you will for the medium to longer term, you will minimize your risk.
Okay. And Soni, what is your view on this one?
So first, I think, Vinny, one must understand the risk-reward ratio in any sort of a trade that the person is getting into. And, technically also one can understand where the support and resistance lies for the stock. So that will help you understand how much potential of an upside you have when you're entering the risk, and how much of a downside risk are you letting lose your capital out on. So I think that these are some of the important measures. As already discussed, stop losses work as a very good way of exiting or helping you exit the trade whenever it goes wrong. I think these are the key disciplines to follow.
Okay. Let's move on to the next query. We have Rupinder Singh, who's writing to us from Chandigarh. Now, he says that he has the tendency to chase hot stocks or sector-specific stocks and asks how he can distinguish between sustainable opportunities and mere the market hype. Shaina, what would your view and advice be for Rupinder?
Yeah, the biggest problem in our market is FOMO and, greed and fear. These are the important factors that you have to be mindful of when you are investing in the equity markets. So what I believe is that, a lot of hype is sometimes created over stocks which do not have much fundamentals backing them, where the managements are actually maybe interested parties. So to that extent, it is better to actually look at the fundamentals. Do not be carried away by the hype if there is not much fundamentals to a particular story. If you're a new investor, it's better to stick to the mid and large cap stocks, which are more widely covered, so you get an hang of the fundamentals. So I would prefer that if you're just starting off, it is better to play safe, invest for the medium to longer term. Mutual funds is another aspect which you could look at if you're starting off.
Okay, let's move on to the next query. This one is from Priyanka Mehra, who's writing to us from Mumbai. She wants to know the tools or methods that can be used to test the trading strategies before implementing them live. Soni, what is your advice for this?
So Vinay, I suppose that there are tools and live softwares which can help you understand how to trade or do some sort of a paper testing. I'm not aware of such tools, to be honest, but perhaps the simplest way and non costly way could be that you try it out on paper testing. However, it is also important to understand and realize that when you're doing something as a virtual or a paper trading, and when you are doing it in the real scenario and seeing the live prices move or due to volatility or any sort of a scenario comes in, that's going to be very different game of play, and it's a new day brings in a new opportunity, and every day is different. So regardless of how much practice you may do it in virtual or paper testing, when you come it out on real life, I think that's going to be very difficult, because days like today, especially when volatility is so high, it gets difficult. So I think it's get out on there, and you can play it out and understand how to go about it.
Okay, that was the last query for today. So thank you so much, Shaina, as well as Sony, for joining in with us and solving all our viewer doubts. But with that, we are absolutely out of time on this edition of Your Stocks on CNBC TV18. Thank you so much for tuning in.
Said Zakir Bhai has this song that Shankar ji very kindly agreed to do with me. So can we have you do something on it? And in his characteristic, fashion, he asked me, what is the something that you would like me to do? And I think I kind of bumbled and I said, well, play some tabla on it. And it's a song that we did, and it's been a very, very much cherished memory. I still have, some of the video rushes of, when we shot his video or on Zoom, actually, when he was in his studio in California. And it's a little composition which if I may, I'll just hum the first line, but it's sung by Shankar ji, who, the man himself is here. So it goes like this: Shiva Shankara Mahadeva, Shiva Shankara Mahadeva, Parameshwara Amrita Rupa Karunakara Jnana Priya Shiva Shankara Mahadeva. It was something that we did during the pandemic.
Our collective prayer will give him a lot of peace.
Our Taiwan index holding on to gains of 0.1%. We have Hang Seng that's holding on to gains of almost 1% as well.
Doubts are there. Yeah, we'll sort it out. I would say frontline, the Nifty, Bank Nifty, the indices are a little oversold here.
So it'll be positive for Ambuja Cement, both because they're simplifying it, and it'll be negative actually for Zakir Industries.
Nifty 24,300, still trading about 15 odd points Okay, back to the 20-day.
We expect government spending to resume for the latter part of this financial year.
This is just simply change of nomenclature with a lot of conditions.
It's absolutely a pleasure to see the way investors have come into this IPO.
Yes, we are very optimistic about our growth in the future.
Half a percentage point gone now on the Nifty and the Sensex. The Nifty is down more than 100 points. Sensex down close to about 400 points.
I just don't want to get into the exact numbers yet, but essentially our growth plans remain pretty aggressive going forward.
We are hearing from sources that Karnataka government is likely to increase the duty on iron ore mining.
Here, another down day for the markets. It's a 124-point cut on the Nifty.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal Studios in Mumbai.
Well, that's a day so far, and it has been once again a down day. Actually, it's a replica of what we saw yesterday. Everything is down, and mid-caps, broader markets is essentially 1/3%, about 0.5% cut. This is Closing Bell. We're coming to you from the CNBC-TV18 Motilal Oswal Studios. I'm Prashant. With me, my colleagues Reema and Nigel. Guys, hi, good afternoon.
Hi, down for the third day in a row now. And today it's banks taking the biggest knock.
Well, that's right. The banking space has been a bit of a worry, right? And HDFC Bank as well has moved back to around the 1,800 rupee odd mark. But the one that's holding one end up at least is Reliance Industries. Prashant, as you said, it looks like a replica of yesterday. I don't know whether there's a twist in the tail, though. 60 minutes, we'll know whether or not the bulls want to fight back.
Well, let's hope they do, or maybe they can come back tomorrow as well after the Fed
for the clarity,
because that is the big one. Maybe who knows? I mean, after the Fed thing gets done and it's all in line, and they don't change too much about all the rate cut expectations for 25. Tomorrow's a new day. But 3 days now, I mean, the market's been gotten hammered on, and we are down to 24,178, which is a clean break below the 20-day. And if there's no recovery, I mean, you get a firm close under the 20-day moving average as well, and that's an important, at least for the near term, it kind of has acted as a bit of a sort of hurdle, or whatever you want to call it, change of direction, but near term. So keep that in mind. And also, this is the end of the year, so all those factors, it's never one thing, it's always a bunch of things. So that's what you have going. Up on your screen, I mean, actually, even the picture on your screen has not changed from when we looked at this at 10 o'clock. Reliance was pulling on the upside, and the banks were pulling on the downside, and it's up on your screen. ICICI Bank, HDFC Bank, between them adding about 80 index points pressure, and Reliance about 15 index points on the upside. So that's the long and short of it. Reema.
Well, metals are down for the fourth day in a row now. Metal index is down 1.6%. Banks, as we've been highlighting, the Nifty Bank down 1.5%, and autos too a bit on the back foot. The auto index is down close to about 0.6%. The Vahan data for the first half of fortnight of December is a bit disappointing. Total registrations are down close to about 20%, and PSUs too are under pressure in trade. On the way up, though, Pharma is holding up. Dr. Reddy's Cipla, Sun Pharma amongst the gainers. Trend has moved up right on top of the list. Trend is the top Nifty gainer, 2.5% higher. Reliance Industries is providing support, but the day belongs to the new listings. All three of them are off to a great start. MobiKwik, 85% higher. Vishal Mega Mart is up 41%, and Sai Life Sciences, 36% higher.
Okay, all right. Well, and they're from the broader markets, but if you pick and choose, still there are winners. KPR Mills is the stock that we had pointed out a couple of sessions ago. We're seeing big delivery-based buying, and you want to be with winners. So the stock went through 1 or 2 days of consolidation, and KPR Mills, yet again, it's up and about, up close to around 7% as we speak. So yes, the headline index is seeing some profit taking, but you pick and choose. There are a lot of stocks out there that are actually doing quite well. But let's get in Mitesh to help us out with what's the trade on the index. Hi, Mitesh. Good afternoon and good to see you win. Well, we have broken the recent low, which was at around 24,180. What's your view? Do you think we'll get second time lucky and we bounce off these levels, or do you believe the market's going to go back and retest lower levels?
Good afternoon, Ajay. So two things, one, since yesterday when I talked about index breaking 24,400, I think the next logical targets were 24,200, which has been broken, 24,200, 180 zone, and the other one is 23,950, 925 zone. So, the structure remains negative. We are oversold, but yet I think, there's a good chance that we'll head towards 23,950. I think pullbacks closer to about 24,350, 400 zone, I think, would be good selling opportunities. But till 24,400, 420 is captured on the upside, I think I'll maintain a negative stance. So in that sense, taking, we have some put option spreads on the Nifty, not trading via futures because with oversold levels, there could always be a chance of a pullback. Would want to short futures in case we get closer to about 24,350, 375 zones. But the view and the stance is negative, and targets would be now around 23,950, 925 to begin with.
Mitesh, any particular thoughts on Shriram Finance before we get to your stock picks? Now, Shriram has been under pressure for the last couple of days, but today it opened up in the green. So you thought that maybe there will be that rebound, but it's been sold into, and again, the stock is down close to about 2%.
Even the stock is corrected from 30 to 50 odd levels, and now it's getting very oversold, and there's good support around this 2860 zones. Maybe another 50 odd rupees down, but I think around those levels, I would expect the decline to be arrested, and this stock can give a good bounce.
What about your own recommendations for the last hour?
Yeah, so I have a sell on ICICI Bank. I think, that's a stock which has started correcting after hitting the earlier highs of 1350. Keep a stop at about 1320 now, sorry, 1322 now, and look for a target of around 1280 to about 1275 on the downside. And I'll go with the buy as well because the pharma pack looks very interesting to me. A lot of these pharma stocks have had a correction and now are trying to recover. Aravinda Pharma is something on the list, so buy here with a stop at about 1224 for targets of 13.
Okay, thank you very much for that. Let's talk about Viatech Wabag. Now, that is the big casualty in today's trade. The stock is down close to about 11.5%. Remember, we told you the company's, an order worth 2,700 crore rupees has been cancelled, and it's a sizable order. It amounts to about 18.5% of the company's order book. So that's put pressure on the stock, though it's recovered from the day's low. But Yash joins in with the details. Yash.
Well, Rima, as you rightly pointed out, the stock is under pressure. It was down 18% at one point of time. It's recovered some amount of those losses, down about 11.5% at this point of time. And that came on the back of what the company informed the exchanges just overnight. The company said that Saudi Water Authority has cancelled a 300 MLD mega sea water distillation plant order, which Viatech Wabag had informed the exchanges it won in September 2024. It's a sizable order, as you rightly pointed out, about 300 MLD worth 2,700 crore rupees. As far as what the company additionally informed the exchanges is that Saudi Water Authority has notified all tender participants on cancellation of the tender itself. It's important to note that it's not like, Saudi Water Authority transferred the order from one participant, one company to the other, but the tender itself has been cancelled. The company informed the tender stands cancelled pursuant to internal administrative procedures of Saudi Water Authority, and they are in touch with the company. Now, we reached out to Viatech Wabag, and there is certain amount of clarification which came from the management as well. They've said that the tender, that is about 2,700 crore rupees from Saudi Water Authority, cancelled because Saudi Water Authority wants to recalibrate the size as well as the scope of this order. They've also said that Saudi Water Authority will float a tender for the same order in its revised format in the next couple of weeks, and Viatech Wabag will participate and put its bid as far as this particular order again is concerned. Importantly, the management told CNBC-TV18 that they stick to their guidance of order booking of 3,500 crore rupees for the third quarter of FY25.
All right. Thanks very much, Yash, for that. So that is Viatech in focus. Stock did recover quite a bit. I mean, actually, it was down 14%. Recovered 7% from there, but then there's another round of selling which has come through and is down again. There's some flashes at the bottom of the screen, and this is maybe important. Free healthcare for citizens above 60 years of age in both government and private hospitals. That is what is coming through. Hospitals, of course, will get refunds by the state. So for the patients, what Mr. Kejriwal is saying is for the patients it's going to be free. For patients above 60 years of age, will provide free healthcare to senior citizens in all hospitals once elected. These are, of course, there's election due in Delhi, I think, next year, and this is all coming ahead of that. you can call it competitive populism, whatever you want to call it. But those are some statements which are coming in. So more on that story as we kind of go along. But let's talk about NMDC, and I think this is the other one. So the Karnataka sort of state government, and this is of course from sources, is looking to increase royalty rates that it charges on iron ore produced from the state. Sudarshan is joining in with details on this one. Stock actually was flattish when the news came. It's down 7%, so some real damage here. So over to you.
So NMDC is under pressure after, as reports suggest, that Karnataka government is looking to increase the duty on iron ore, and that announcement is expected very soon. In the next few days, we might see that government announcing that, because draft related to this has already been circulated few days ago. Remember why NMDC is in focus? Because of total mix, Karnataka forms nearly 30%. Another stock that can be in focus is JSW Steel. Also, if you remember the latest order of Supreme Court had already announced that the royalty that government charges from these companies, Supreme Court allowed government to charge them retrospectively, and that is from 2005. Now we are awaiting for the order of Karnataka government that is expected very soon, and that's the reason NMDC is under pressure, currently down almost 7%, and it might turn negative for 2024.
Okay, all right. Thanks a lot for that, Sudarshan. Well, it'll be interesting to see NMDC may challenge this particular order. So, ballpark number that I have is every 100 rupees of sales that they do in Karnataka, they pay roughly around 53 rupees as, taxation. That's what the government gains. Every 100 rupees of sales, 53 rupees the government gets. So that's why it's a big revenue spinner for them. And now they want to go ahead and squeeze it a little bit more and hike rates. So we'll have to see how much of that, particularly if it's retrospectively, then is it legally tenable? That's going to be important. Let's get in Prakash Diwan. Prakash, NMDC falling off a cliff today. I've got a couple of sales notes here, but we don't like to quote them because, it's still unofficial till we get the PDF. But some believe that maybe this reaction is exaggerated because there'll be a legal proceeding that will follow this. And they believe that the impact on the EBITDA may not be as much. Well, another part of the street says it's going to be a big damage. Which side of the fence are you?
Good afternoon, Nigel. So it does seem like a bit precipitous in terms of the fall, yeah. And if you really understand from a very macro, and even I have not had time to kind of go through details in terms of the ramifications of this, it seems to be overdone, if you really ask me. You know why? Because this is not, logically doesn't seem very tenable, and the legal course could probably defer things, if not take them out of the picture completely. So if that deferment is of any help, the market will sense that opportunity and respond positively to it. So from that perspective, it could kind of bounce back. But these are days where, or events where, you really don't want to kind of do bottom fishing on the hope that things will improve. So it's best to let the price settle, let all the concerns get addressed, and then kind of look at it. But at lower levels, at 210, 11, it definitely makes for a lot of value buy in that sense, because the run rate is much more positive if this impact gets diluted. So you kind of look at this as an opportunity.
Prakash, would you buy the dip on VA-Tech Wabag today?
Yeah, I mean, I personally have been very positive on this space. It's just valuations that have been concerning, and these kind of opportunities again give you that thing. So this is like the Maggie moment in some of these stocks where it could have an impact which is short term, not long lasting or permanent, and then you move on. So from that, yes, but there are lots of opportunities available in that space. A lot of the new listed names are looking quite bright as well. But yeah, VA-Tech Wabag, if you're convinced of the business model, the annuity kind of a thing, transition that they're making at 1600 or whatever, 1680, it does make sense to take some exposure at least, instead of, worrying about the high valuation that you had earlier.
I like it, how you called it, Maggie moment. I think
No, I think that's because, Prashant, that was the first time where that impact happened, and it was so significant for a large company like Nestle, and things changed after that. You see how dramatically it moved. So just came to my mind.
No, it's very, very well put. I think we can use it more often. Maggie moment to describe these situations without having to go, and make all the effort of explaining. I think that captures it. Or if you ask Ramdevji, maybe he'll call them bruised blue chips. That's his latest wealth creation study. By the way, Prakash, as we sort of head into 25, anything interesting in single stocks that has caught your attention? You're the one for bottom-up investing, and in some of the newer sectors is where all the buzz and action has been. The bigger, slow-moving giant sectors are just that. And maybe there are ideas there as well, but you are one for small and mid caps.
No, so certainly, I mean, I told you last time that I carried out a study of names that IPO'd in the last 12 months and which haven't been kind of, doing, enormously well post the listing, and there's still a lot of. So one of the names that stands out in that is a company called Indegene. I think I must have spoken about it in the past as well. But Indegene is a very specialized company that focuses on giving digital support, research inputs, in a very systematic, structured way to a lot of the large pharma companies. And remember, what's happening is the global market for pharma is rapidly evolving into a winner-takes-it-all kind of a thing. So if you actually get some of the processes right, and everybody's been talking about the CDMO opportunity that we are sitting on, which is true. But what molecules to back, what kind of money you would need to, budgets you would need to allocate, prioritize, those are things that a lot of companies miss out on. Indegene pools all that collective knowledge to bring that out and make sure that the efficiencies are up there. It's a very lean balance sheet. There's absolutely no need for too much of money to be put into this business. It's more intellectual property driven. So I think if you understand that business, if pharma were to grow, CDMO were to grow, we were to globalize, there's no reason why this company won't get the right kind of. It's worth studying further, and very good management as well, as I could sense from my interactions. So it's right up there, unique in its own way. And not yet very long history, as I said earlier. So that's where a lot of money could be allocated to it in the years to come.
Vishal Mega Mart, it's had a bumper day one. The market cap has already crossed 50,000 crore rupees. With the kind of up move we've seen, the valuations is 75 times forward multiple. What happens to the stock from here on?
I hope, Rima, it doesn't disappoint people who have placed their conviction into this. From a retail perspective, if I remember correctly, it was just under 3 times that it got oversubscribed, whereas it was more largely the institutional money that was kind of chasing it. And from the overall perspective, it seems like, I remember, funnily, Mangalam was describing it, saying it got oversubscribed only 27 times. So it was like only 27 has become like a letdown in terms of, what's happening to other businesses. But I think it is a bit overdone. These are businesses that take much longer to make money. The return on equity is not as comfortable as you would think. The margins are, always under pressure. And look at what some of the more established names are also struggling. So it's just that the geography and price point segments that Vishal Mega Mart is into is decent enough for them to get this kind of a thing, attractiveness, but I would not buy it at this level. So what happens to the stock? I hope it stays where it is or moves up, but otherwise it's going to be a very uphill task to create value out of this at this level.
Okay, all right. Prakash, I wanted to ask you about these CGD companies, the gas distribution companies. They saw a sharp reaction because some negative news flow came in there with regard to availability of their raw material, with regard to the pricing of their raw material moving up as well. And the amount that they could pass on was rather limited. But from the recent lows, actually, these stocks have bounced back strong. IGL currently at the high point of the day. Your view on the stock?
So, Nigel, I remember when one of the morning shows when this news had come on the overnight and we were talking about the impact, and I'd said any opportunity in the gas value chain on the back of bad news flow is an opportunity to add these stocks into your portfolio. Let me tell you, in the next 1 year, the way the LPG market, the LNG market rather is going to explode in terms of supply, availability, and all that. Anybody who can put that to use in an effective way, cost-efficient way, is going to actually be laughing the way to the banks. Now, whether it's Gas Authority of India, whether it's the CGD guys, whether it's equipment manufacturers who supply to CGD, which goes right from pipes and compressors and everything. You remember we spoke about Wellcorp being such a promising buy because of what's happening in the US. A similar thing is going to be replicated in the Indian market as well in terms of explosive growth. So I'm very positive on it. I would believe some of the franchises like Petronet, LNG, even IGL for that, or Gujarat Gas. Gujarat Gas is definitely an asset which wouldn't let you down given where they are, and they'll probably be able to leverage on this growth very, very effectively.
Prakash, thank you very much for joining in. We have a story coming in from CNBC Awaaz. Now, Lakshman joins in with an update from the oil marketing companies. Lakshman.
हाँ, बेसिकली यहाँ पे दो न्यूज़ है, वो ऑयल मार्केटिंग कंपनी और शुगर कंपनियों के लिए इम्पोर्टेंट है। पहला तो ये कि शुगर कंपनियों से ऑयल मार्केटिंग कंपनियां जो एथनॉल परचेज करती हैं उसका जो टेंडर डॉक्यूमेंट इशू किया गया है उसमें सबसे इम्पोर्टेंट चेंज ये किया गया है कि अब ऑयल मार्केटिंग कंपनियां पहला प्रेफरेंस कोऑपरेटिव शुगर मिलों को देंगी। ये जो प्राइवेट शुगर मिल है उनके लिए थोड़ा सा निगेटिव है, क्योंकि पहले क्या होता था कि जिन प्राइवेट शुगर मिल के साथ लॉन्ग टर्म कॉन्ट्रैक्ट होता था, सप्लाई कॉन्ट्रैक्ट, उनको प्रेफरेंस दिया जाता था एथनॉल खरीदने में। अब वो प्रेफरेंस की कंडीशन को हटा दिया गया है, उसकी जगह नया कंडीशन जोड़ा गया है, कोऑपरेटिव शुगर मिल को हम प्रेफरेंस देंगे। और ये 88 करोड़ लीटर का टेंडर जारी किया गया एथनॉल के लिए। इसमें इंडियन ऑयल कॉर्पोरेशन, बीपीसीएल, एचपीसीएल, एमआरपीएल, ये 4 कंपनियों ने टेंडर जारी किया है। तो एथनॉल अपना बेचने का जो एक स्कोप होता था वो प्राइवेट शुगर कंपनियों के लिए थोड़ा सा लिमिटेड हो जाएगा इस कंडीशन की वजह से। दूसरी जो एक बड़ी खबर निकल कर आ रही है वो ये है कि एथनॉल की प्राइसेस बढ़ाने की डिमांड कर रहे थे चीनी कंपनियां। तो शुरू में इन लोगों की डिमांड ये थी कि 2 रुपए से लेकर 2.5 रुपए लीटर प्रति लीटर एथनॉल की प्राइसेस बढ़ाई जाए। प्राइसेस बढ़ाने का मतलब कि उस बढ़ी हुई कीमत पर ऑयल मार्केटिंग कंपनियां इनसे एथनॉल खरीदेंगी। अब जो मुझे सोर्सेस से जानकारी मिल रही है उसके मुताबिक 2 से 2.5 रुपए लीटर शायद ना बढ़े, इससे कम बढ़े, मुश्किल से 1 से 1.5 रुपए लीटर प्रति लीटर बढ़े एथनॉल की प्राइसेस। और एथनॉल चीनी कंपनियों की इस मांग को कि 2 से 2.5 बढ़े, इसको शायद सरकार में सहमति नहीं बन रही। तो 2 ऐसी खबरें हैं जो शायद चीनी कंपनियां, प्राइवेट चीनी कंपनियां, उनके लिए अच्छी नहीं है।
Okay, all right. Thank you, Lakshman ji, हमारे साथ जुड़ने के लिए, and to sort of give our viewers that sort of information, and we'll actually speak with companies and try and better understand what this would mean, but that's in a bit from now. We'll take a quick commercial break here. I think market's still down. Sensex is down about 500 points or so. We've got a very interesting conversation lined up on the other side, and that's coming up in just a bit from now.
Okay, and here's also some good news for all you viewers. India's business news leader is now just a click away. So introducing CNBC-TV18's all-new app, you can get instant access to breaking news, in-depth articles, financial world updates, all on your fingertips. So download the app now from the Google Play Store or the Apple Store.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC-TV18, Mumbai. Hello, I'm Surabhi Upadhyay and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
Markets are betting big on affordable housing. You look at the kind of stocks that have risen. we are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21.
Well, 150 points down, 24,188 is where we are now trading at this point in time. Okay, that's the camera. Well, our next conversation is a very interesting one. The big listing of the day, of course, is Vishal Mega Mart. We were joking earlier that it's a Vishal guy listing in that sense, right? Interest in the name was huge, and the stock is up some 40% as we speak. We have with us 2 early investors in Vishal Mega Mart. Manas Tandon is partner, head of a private equity group, goods and products partners group. Nishant Sharma is founder and managing partner at Kedara Capital. Both are with us here in our studios. Gentlemen, Manas and Nishant, thank you very much for being here. For our viewers, let me start. Let me do a bit of shock and awe, as they call it. For both of them, the Vishal Mega Mart deal is a total of realized and unrealized capital gains, I mean, combined of $5 billion US. Am I correct? Between the both of you?
In the ballpark.
In the ballpark.
Thank you.
And for you, it's about $3 billion yes, total?
Slightly over 3, right? Yes.
And $1.6 odd billion. So yeah. I think this is also one of the largest sort of capital gain events on listing from a private equity space perspective. So let's just start there. And I want to start with you, Manas. We see the glory, but there's a lot which sort of happened behind. And today is payday.
Yeah.
But you guys have stuck with this investment since 2018. Yeah. For our viewers, right, they're investors and they're smaller investors. And what are some of the lessons one can sort of learn from the Vishal story? And really, what's to take away?
Sure. So actually, let me first start by saying something. Yes, you say it's the payday. We've just sold 23% of our stake. We've taken on hundreds of thousands of new partners in this journey. And so for us, it's just the beginning of the rest of the journey, right? Because obviously there's a lot of trust that has been reposed in us as a part of just the last few months when we've been able to tell our story. And so the journey is just getting started, right? And in terms of the lessons learned, ultimately it boils down to having a super end market, a market that you really believe in, and where you're able to add real value. And if you think about it, and Nishant said this earlier today at NSE, ultimately our customers are not the super privileged customers, right? So giving them a high quality product at the most reasonable price, with respect, with you know, just the kind of customer care that we sometimes take for granted is super important. And frankly, that's the big obligation of Vishal and our 17,000 colleagues on the ground. I would say the second is sometimes you realize through adversity what kind of a magical team you're surrounded by, right? So if I look at GK and the whole Vishal team, right? I mean, we went through a year and a half of a very tough COVID period, right? It was really, really tough, right? And we could even in that period, the team said, we are gonna do whatever we can to make sure essential goods flow through to our customers, right? And so all of that those are all lessons, you know, because you see the team really come together, right? And that's when you see the magic happen.
Nishant, for all the new shareholders who've now onboarded Vishal Mega Mart, as a promoter, what are you going to tell them? Because people always have this fear that PE investors, they have a shelf life. I mean, they have a fund life. And therefore, there is bound to be supply coming in every few years, right? So how do you feel about consumption in India, and particularly staying on in Vishal Mega Mart?
No, I think it's an important question. I think we're obviously people who've been around for 12 years as a firm, and I think the reputation that we've built as a firm is to really be patient and very long-term, investors. So I think for us, I mean, if you look at our track record of having invested in other businesses, we've held businesses for as long as 10 years and still holding, right? We're ultimately believers in long-term secular growth and compounding. Vishal is a perfect example of compounding. From the time we invested 200 odd stores to now 650 plus stores, FY24 was at about 8,900 crores in revenue. And we believe there's a lot of opportunity. The one thing which Manas mentioned was a large TAM, a great management team, but also a great box model, right? The box model is relevant for Bharat.
What's a box model?
The retail box that Vishal has, which is essentially the store, it has assortment of apparel, which makes aspirations affordable. It's, a lot of people can't afford Zara, right? But you want to wear a skinny jeans, where can you get a skinny jeans at 1/5 the price with the same styling? It's at Vishal. Right. Similarly, on general merchandise, on FMCG, you're giving compelling value to people who have limited budgets and are fighting inflation. So to be able to dream, on the same Instagram handle and wear pretty much the same thing is really, really important and big.
So you're committed to the long term, for
Absolutely.
the long term. 10 years plus from here on?
I think time obviously we'll see how it plays out. But from our standpoint, I think we're here for the long term. As we have, it's already been 6 years, right? 2018, as Prashant mentioned earlier. So we will do what it takes, from our standpoint, as we've done in the past, to make sure the business continues to be run professionally as it is today, with a professionally managed, board. That we'll continue to ensure.
And I think that's also, in some ways, Nishant and I talk about this all the time. It's a little bit of a obligation of people like us in the private equity community in India to leave behind businesses which are truly board governed, professionally run. It's a real opportunity and something that frankly needs to happen more and more in our country.
Okay, and so that's the Vishal story, and it's incredible that this is at the lower end of the consumption, right? I mean, since COVID, the sugar rush which happened, and we were all talking about premium this, premium that, and here is a company which is actually, as Nishant pointed out, at the bottom end in terms of.
I asked Guninder Kapoor, the CEO, the average price of apparel is just 200 rupees at Vishal Mega Mart.
And the opening price point is 99 rupees.
Opening price point, but the average, he said,
average is about
200 rupees. It's lower in summer and spring and a little higher in winter.
Is it true? Someone said that the price has not changed. The T-shirt still
is
99 rupees
because
for the
we can't pass on inflation to our consumer, right? That's the reason why we are able to have such a loyal customer base, because you want to make sure that you're delivering value to your consumers every day. If you're going to pass things on, as most brands end up doing, then in some ways it's not a partnership, right? It's just a one-way street, and you're using brand power to pass pricing on to consumers.
So let's look ahead, right, in terms of consumption and not consumption, but ideas, themes that our viewers can benefit from. Everything in India, in a way, is underpenetrated, right? I mean, infrastructure is getting built out, consumption, financial services. I mean, those are the big in that sense, talking points. But there are so many newer niche segments which have emerged and on the radar of investors, both private and public. So, Manas, why don't you take us through 2-3 themes which you think have got long runways, and these are areas where people should look for ideas to invest in.
Yeah.
And if you want to take specific examples from your own experience, please feel free.
Yeah, I mean, for us, financial inclusion continues to be a very big theme, right? And every year we keep talking about, and frankly, that's probably been the largest value driver for people like us in India, right? Because there is so much to do on the ground. We were fortunate enough to do an affordable housing finance business called Aavas together. I mean, Nishant and I go back 20 years, so we've a lot of history and we've been fortunate to work together. And if you look at the Aavas journey, right, $10,000, $15,000 loans, right? Our typical loan size is 9.5, 10 lakh rupees. And those people are so grateful that somebody is able to recognize their unique business model and financial situation and be able to respectfully deal with them and give them those loans, right? And I genuinely feel like there is such under-penetration, financial inclusion. So I would say that's truly continues to be an area of interest for us. On the other end of the spectrum, if you look at increasing prosperity in India, right? And it's not just about the top of the pyramid, but the middle of the pyramid often tends to not have enough ideas on what to do with whatever savings they have, right? So we've also found interesting companies doing space in the middle of the pyramid where there are real savings and people are trying to figure out कि आगे जाके क्या करना है, right? And what should we do with this to secure our family's futures? I'll let Nishant add on a few things, but those are 2 or 3 areas where we feel very excited.
What kind of
about.
businesses there? In that, just to...
So I would say like wealth management for the masses, and I hate to say the term wealth management because it's not really wealth, right? But it's really sort of savings management in the middle of the pyramid, right? Because those are the people who are now saying our kids are growing up, like there is enough to save. How can we provide some of that prosperity to our, or leave, do something interesting with that?
First of all, congratulations, gentlemen, and where's the party?
Nigel came from one and we're going to another.
But you'll be surprised, the whole management team's flying back because they said now it's time to get back to work.
And kudos to you all because, when GK was here in the studio, I was just doing some research, I was going through the prospectus that you all put out as well. You all would have invested at a time where you all were getting cases about salaries not being paid and, the company was in trouble and various allegations as well. So kudos to you all, back to yourself, and in fact, it's made all the big money. But let's get to the way forward since you're going to be getting back to work. And Nishant, let me come across to you first, actually, because you all have raised quite a lot of money, right? You had a couple of investments that you all have exited, I think, in the recent past.
Yeah.
Where do you put all that money now? What's the top bet?
Sure. I think a few areas, what Manas alluded to, financial inclusion, financialization of savings, which is wealth management, asset management. I would say health and wellness is an area which we find very attractive. We've invested in a nutraceuticals business, around just before COVID actually. So it was, I would say, luck more than, any timing or anything which we knew before. But that is one area. We're looking at organized healthcare services. So we have
name the company.
Universal Nutriscience.
Okay.
So it was a portfolio of brands from Sanofi which we acquired, and again put together a management team. And they've scaled the business already. From the time we invested, it's doubled.
Okay.
Then we have a fertility business, which is again the 3rd largest fertility chain in India, based out of Hyderabad. One of the largest dermatology chains called Oliva. One of the largest eye hospitals called ASG. And these are all essentially a lot of unorganized healthcare services, especially post-COVID, moving to organized, right? So that's one theme which we continue to be very excited about. The other piece, which is I think very exciting, is digitization across a variety of sectors. So financial services being one, we invested in a business called Perfios, which has this product called Bank Statement Analyzer. It's literally the backbone of every bank and NBFC. They have 80-90% share in their core product, and using that to build new products, which eventually helps banks underwrite better, collect better, manage their liabilities better, and so on. Similarly, on payments, again, looking at some opportunities in payments, which could be very interesting.
So not lending companies per se, but companies which are working with lenders in that sense.
So lenders, we've done,
of course,
like
you've done Aavas.
We've done Aavas, we've done AU, we've done Spandana, we've done Veritas.
You're out of all these?
No, some we're out of, some we're still in.
Okay.
But we picked literally a specialist in each domain and backed them. And then lending obviously continues to be a theme, but beyond lending, obviously financial services is a large profit pool. So looking at asset management, wealth management, payments, the banking tech, in some ways, which is, again, a big area. There's disruptions happening there. SaaS businesses, omnichannel retail again in certain categories. So lots and lots of exciting stuff. I think it's hard for us, when you ask us on themes, it feels like a kid in a candy shop to some extent, because we really think there are lots and lots of interesting opportunities.
What are the investments you'll have from the listed space as of now? If you could
so we have Avas.
But you'll already have got into a deal with that, right?
Yeah, so but we still own it until it gets right now. So Avas is there, Vishal's there, Spandana is there. We had Vijaya, which we exited. We had AU, which again we exited. And I think those are on the unlisted side where we again just did strategic sales. We sold Manjushri, we sold Billforge, we sold Parkinson's. All of those were strategic sales to either a sponsor or...
You said a kid in a candy shop. Has the candy gotten expensive? I mean, because I think so many public market investors that we speak with, they're all in a way backward integrating, because by the time things hit the market, it's already so expensive. So they're all trying to find... The public market investors are becoming venture investors and private equity investors and things like that. So where are valuations broadly? That's the question. Are they at the top end? Is this a good time to look? If you're already in, that's great and you're riding the boom. But what about now, here and now?
Prashant, I've been doing this for 18 years.
Yeah.
It's always been expensive. It always feels expensive, right? I think the trick for, at least the way we think about it at Partners Group, is it's about who's willing to really roll up their sleeves and do the hard work, right? Because I don't think, frankly, even 10, 15 years ago, I think the days when you could just write a check and watch the business compound have been long gone for a long time now, right? So it's really about finding, we talk about themes, it's ultimately about finding that one business, that one great, amazing management team, that great, amazing market opportunity, and then working very hard on it to try and make it even better.
I couldn't agree more. I think it's been always super expensive. What has happened though, the industry has matured a bit like how it's sort of matured in the West. You've figured out your circle of competence and you're not trying to sort of, get too enamored by fear of missing out, FOMO as we call it, because that's classical, fallacy amongst most investors. You say, look, this is what we know really well. This is what we understand. So even if we end up paying up, we have the ability to extract value in some form or shape because of how well we understand a given space. So that's what's happened. I think people are picking their spots. We may not like QSRs as much or restaurants and fine dining as much because we believe the risk reward is different. Someone else may have a different point of view, right? So it's just about picking those spots.
I'll tell you where we're coming from, because this year, in all the IPOs that we've seen, there have been so many promoters, either PE or non-PEs, who've cashed out. Which makes, shareholders, retail shareholders think that do the promoters know something that we don't? Do they think the valuations of their own company are on the higher side? Which is why this year, compared to all the prior years, we've seen more of promoters offloading via offer for sales in IPOs. So that's where we're coming from.
They know more, but you would not agree with the conclusion, right? Obviously, I mean, you've been with the journey for so long, but it's go on, please.
Yeah, but I think, Prashant, the thing is, and we had this discussion even on this particular situation, right? Here's a business where, like Nishant was alluding to the box economics, right? Here's a business where in the last 6 years, except for, a little bit of help when COVID was really at its peak, right? This is a business that's been fully funded by internal accruals, right? With the growth that all of you have seen, right? So at some point you say, should I be raising primary capital just to allay this concern, right? Because ultimately you want a capital efficient business. You want a business to perform at the peak of its ability, right? And frankly, the last thing, we are not one-time business owners, right? Ours is a repeat business. We will hopefully bring many things to the market, right? And the most important thing for us in general is credibility, right?
Everyone makes money along the way. I mean, that's
absolutely.
It's an obligation on us.
Yeah, absolutely. I think we've sold only a fraction of what we owned, right? At some level. And I think whoever has come into the IPO has obviously benefited. And it's our responsibility to make sure that, the business continues to compound as it has in the past.
Nishant and Manas, thank you very much for dropping by. Very special chat and we loved it. Thank you very much. And enjoy the party and the after party and the after party.
Have a good one, guys. Have a good one.
See you guys. Thank you very much. Nigel, there is some news on the steel sector. Maybe right up your alley. I'm not sure this is significant. Steel industry submitted a okay, I think this is a proposal which has come through. DGTR to DGR. Okay, this is a clarification. They're yet to make a recommendation to the Finance Ministry, and they will soon seek responses and then make a recommendation to the Finance Minister. So that's what's coming through. No real.
So now all the the requests have been made. Now we have to see action. So that's why I think we wait for action. Right. So they're looking into it. Mr. Sajan Jindal, Mr. Naveen Jindal. You have the Steel Ministry. Everyone says we want protection. The Chinese are, producing a lot. They're not consuming enough. They're exporting to various parts of the world. So we want some protection from those imports. But the smaller guys are saying, hey, our cost of production is going to go up. So we are not in that camp. So we'll have to see which way this goes. But it's a recommendation that's been made. Parikshit has got the latest of that. So he'll join in to give us this factual update in terms of what's going on.
Absolutely. And stocks are not reacting. I think this is, and precisely for that reason, because this is
now they want to see action.
Recommendations which are going through. All right, well, time for our special segment, D Street Chatter. Nimesh is going to join us with some dealing room chatter, what he's picking up. Nimesh, interesting chat earlier there, slightly longer term, but here and now, what are you picking up?
Hi, Prashant, so for second day running, the markets are under pressure, and the large pocket which is dragging the market down are the financial stocks. Across financials, you're seeing selling pressure. And I guess it's largely to do with the management commentaries, which you are hearing from a lot of the brokerage notes, right? That most of them seems to be sounding either negative or very cautious. So I think that's the reason why you're seeing the entire financial basket under pressure today. From a flow perspective, we saw a big sell number yesterday. It looks like it won't be that large. But again, the buy-sell ratio seems to be more on the sell side, even in today's market. I guess the big focus is shifting towards the new listings. Look at the volumes in all the three listings today, and all the stocks are up between 50 to 90%. So kind of massive move we've seen in the new listings today, and looks like that's going to be the trend, at least in the near term. So that's where the whole focus seems to be, even from a flow perspective. From a sector standpoint, I guess Pharma has stood out today, and I've seen some bit of buying interest as well. Selective news based on some Pharma names, but largely that basket has done well today. But broadly, the feedback is, the selling pressure seems to be not that large today. But also watch out for the PCR. It looks little oversold now, and generally we've seen around 0.6, 0.56, 0.6 levels. Market tends to have a pullback. So I guess that's what to watch out for. But I guess the whole action seems to be in broader markets and in the new listings in the last couple of days.
Okay, so let's get to the stock buzz that you've picked up, Nimesh. What do you have for us?
Well, in terms of individual names, the first stock is Lloyd Metals. Again, the stock is at 52-week high, been buzzing in the last many days. Even today, the stock is up 2%. I guess tomorrow there is an analyst meet and investor meet, so that's something to watch out for. Some announcements are likely there. And in terms of flows, I understand a domestic mutual fund and a couple of domestic PMS have been active buyers in the last couple of days in Lloyd Metals. So that's the first name. The second stock is 361, erstwhile IFL Wealth. The stock is again at 52-week high, been buzzing in the last many weeks now. For 361, apart from buying flows, the feedback is there could be some corporate development in 361 to watch out for. So that's the buzz there. The third stock is Ipca Labs. The stock is under pressure today, largely in back of a large block. Nearly 2% equity got changed hands. It was a block worth almost 800 crores. The deal happened at almost 60 rupees lower. While the stock is recovered from there, but still it's been under pressure today on the back of that large block deal. So disclosures could be quite interesting in Ipca Labs. And the last is Star Healthcare. Again, stock almost at 52-week lows, hasn't done much in the last many months now. But at these levels, the sense I'm picking up is that a very large influential investor has started buying Star Health at these levels. So again, something to watch out for from a flow perspective.
All right, there's already one very big influential investor in Star Health, right? There is RJ, Rakesh Jinwala, and the sort of firm there, Rare, which I think still is a large investor in Star. Another one coming in as well, Nimesh tells us. But interesting list as always. Steel stocks is what we were talking about. They're seeing some recovery. Sources say that the DGTR is going to initiate action on steel industry request seeking 25% safeguard duty. Parikshit is here with details. Parikshit, afternoon.
Well, this has been under discussion for a very long time. There have been a lot of representations from the steel industry to protect them from Chinese steel, and they have requested for a 25% safeguard duty. Now, what we've been told by our sources in the government, that the industry has submitted a letter to the Directorate General of Trade Remedies. And how this works is this, that the DGTR will have to take responses, give notices to all stakeholders involved, take a decision and make a recommendation to the Finance Ministry. The Finance Ministry will finally take a call on imposing the safeguard duty of 25%. So the process has been initiated. There is a letter to the DGTR has already gone. They will now seek responses, but any final decision is still awaited. The government has been examining this, but a decision is still awaited on this matter. The industry, of course, very hopeful that this 25% duty will be implemented, but as far as things are concerned, as of now, it is still work in progress.
Thank you, Parikshit, for that update. Get into a break. We'll come back with a few BTST calls from our technical experts.
Years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
GDP growth rate was lower than 5.4% in 2 quarters, quarter 4 of 21-22 and quarter 3 of 22-23. So it's important to understand that this drop happened just 2 quarters in the last 12 quarters that we're talking about. So let us not sort of pick on that one and predict future. This has been a steady growth and a steady sustained growth. So I'd like to place that perspective with the numbers before me. The regular union budget was passed by the newly constituted Lok Sabha post-parliamentary elections in middle of August 2024. Effectively, the implementation of new announcements of this government commenced after the Appropriation Act was passed by the Parliament in August 2024. Effectively, it is from August that we are starting to give emphasis to many of the things, inclusive of capital expenditure, and therefore we are now talking within 4 months after the full regular budget was presented in August. So the situation is no different from one seen in earlier years when Parliament elections were conducted. So that's a very important consideration which I would like the honourable members to take on board. When annual Lok Sabha elections happen, those years do have a certain flow of resources, do have a certain ground-related expenditure happening, and when it picks up, the growth rate also picks up. But the blip is got to be understood in the broader context. Headline inflation was controlled at 3.9% between 1999 and 2004. Between 2004 and 2009, inflation surged to 5.6%, and again, you can compare it with the previous 99 to 2004, which I'm talking about. But when you came to 2009 to 14, it spiraled to 10.2%, representing a catastrophic failure to control rising prices. Come again to 2014 to 24, inflation was brought back to 5.1%. The pattern that is emerging, if you look at it for the last 25 years nearly, is end.
Well, a little bit of buying ahead of the big event that we'll hear later tonight with regard to the Fed. BELS come off the low point of the day. ICICI Bank is fighting back as well. So some kind of cutting of losses is what we're seeing. The Nifty Bank from being down 800 points is now down 600 points or thereabouts. Mitesh Thakur is back with us. Mitesh, what do you do? The Fed should have some good news, hopefully with a cut, and hopefully they don't sound too hawkish. But trade on the index as well as a couple of fresh trading calls on stocks.
So, Nigel, on the index, we maintained our put spreads. On the stock side, I estimate on Tata Motors with a stop at 763, 764, and look for 740 as the target area. While IT names still look better to me, so we'll pick one of the IT names, and that's Tech Mahindra, which is a BTST with a stop at 1764 for targets of 1800.
Got that. Get into a short break on that note. By the way, the Midcap index is down more than the frontliners now, down close to about 400 points on the Midcap index. Get into a break. We'll come back with more market talk.
Times inflation is well under control, whereas non-NDA, particularly UPA, it touches double digit. So let us not forget this pattern when we want to criticize one another about inflation and inflation control. Number of taxpayers disclosing, this is a very interesting information, sir. Number of taxpayers disclosing foreign assets were 60,467 in the year 21-22. Now it is 2 lakh taxpayers in 24-25. The Black Money Act is actually having a deterrent effect on a lot of taxpayers that today they come forward on their own to disclose their foreign assets. Sir, very important data is 82 cases till 30 June have been referred to the ED under the PMLA Act. 82 cases. Sir, specific numbers were asked. Total tax collected under the BMA, Black Money Act, in crores of rupees is 2,655 crores as of June 2024. Total money raised under the Black Money Act. Number of cases in which assessments have been passed are 697. Demand raised 17,520 crores. Number of cases in which penalty has been levied, 341 cases. Penalty levied in crores, 9,971.47 crores. Prosecution launched, 163. Number of cases where assessment is pending, 531. Number of cases where penalty initiated and pending, 532. So these are the actual figures to show that the PMLA and the Black Money Act are actually giving their due returns of the taxpayer money, which is got to be obtained for the sake of the country.
Counting down to the close, it's a disappointing session. Markets down for the third day in a row, and the Nifty is ending around 24,200, a cut of 120 points. The only good part, perhaps, is that we've not breached that Friday's low of 24,180 convincingly. We're managing to close above it. Banks took the biggest knock in trade. The Nifty banking index was down close to about 1.2%. Other sectoral indices where there was pressure, PSUs, the Nifty PSC index down more than 2%. Metals declining for the fourth consecutive day, and today down nearly 1.3%. We spoke about banks, and you had softness coming through in the auto pack. So the Nifty auto index was down nearly 0.7%. Tata Motors was the biggest drag today in the frontline indices. Tata Motors down nearly 3%. But even other than that, you had cuts coming through on a couple of these two-wheeler names. In terms of the large cap banking action, you had ICICI Bank, Axis Bank and HDFC Bank. All three of them selling off close to about 1.5%. Power Grid, BEL, JSW Steel almost down close to about 2%. On the way up, Trent, top gainer. Pharma names saw buying. Dr. Reddy's Cipla. Wipro looks smart today. Reliance Industries provided support. Tata Consumer, TCS, Tech Mahindra, ITC with some of the other notable gainers.
Well, that's right, Rima. In fact, some of the stocks that moved big time in today's trading session on fairly large volumes. If I look at some of those names that should come up for you on the screen today, you had Enviro Infra, the one that's recently listed. Well, that one came in for profit taking. Remember, it listed, I think the IPO price was 160 rupees odd. It's moved one way. Today, the law of gravity seems to have got caught up. So that's why, in fact, that stock did end lower in trade. You had Federal Bank that was lower. Sambadana Madison, actually, the stock was moving quite well today. That as well came in for some profit taking. And NTPC Green has corrected more than 10% from its recent peak. IPO price at 105, went up on limited float. Well, that's come back down again. Some news at the bottom of your screen. Appears there's a favorable verdict that's come in for VIP. So that's another stock towards the end of trade that ended higher. We'll wrap up this edition of Closing Bell. You don't go anywhere though. We have Markets Forward that comes up next. Well, weakness continues on Dalal Street for the third day this week. The Nifty and the Sensex end near the day's low. Broader markets fall in line with key indices. The big sectoral drags were financials and metals yet again.
Vishal Mega Mart lists with a near 40% premium to its offer price. Sai Life Sciences debuts with gains of over 20%. And MobiKwik shines with a 60% listing gain before rallying even more.
NMDC is under pressure after sources tell CNBC-TV18 the Karnataka government may look to increase the duty on iron ore, while Viatech Wabag was in focus after 2,700 crores of orders from the Saudi water authorities got cancelled. Separately, Ambuja Cement is set to merge the recent acquisitions of Sanghi and Penna with itself. That's what resulted in Sanghi Industries falling off the cliff. Hello and welcome to Markets Forward, your go-to show where we aim to get you up to speed with today's trading session and gear you up for tomorrow's session as well. I'm Nigel, with me is Rima. Well, Rima, markets going dull into the big event, which is the Fed, but I don't think it's still so bad. I still believe that, sometime in the next couple of days, we should see a bit of a bounce.
Maybe just some jitters, right?
Before
the big FOMC decision we've been talking about and what the Fed signals about future rate cuts for, the next year. But, markets still disappointing, right? Third day in a row that we sold off. And today, broader markets also under pressure.
Well, that's right, Rima. That was a bit of a worry because last few sessions, we've seen that the Nifty is under pressure, but the broader markets, in fact, did well. Today, there were select pockets of strength, but otherwise, the broader markets, they fell in line. You're looking at the breadth of the market as well. You had 3 stocks that were declining for 1 stock that was advancing in trade. The outperforming index, though, and from the Nifty pack itself, we had a few of those frontline names that did well. Dr. Reddy, Cipla, both of them were higher in trade. And this Pharma index actually did manage to go home with a gain of close to 100% on the day that the Nifty was down more than 100 points. Metals, though, continues to drag. Softer data points, stock-specific action. China continues to struggle. That index is down close to around 4% just in the last 3 sessions or so. The Nifty PCR, though, is moved to the lower end of the band, which is at around 0.65 odd. Normally, from these levels, you get a bit of a bounce, but the big cue is going to be later tonight. The Fed will be taking a decision. Most on the street, or you have the Fed futures that are factoring in a 95% probability that they'll go ahead and cut rates by around 25 basis points. Commentary of Mr. Powell will be a track, though. Unless he surprises very negatively, I think the markets are due for a bounce, but we'll have to see how that goes. Today, we ended at around 24,200.
Indeed, Pharma did well. There was one pocket where there was a little bit of green. The top gainer on the Nifty today was strength, but other than that, metals, banks, PSUs, all of them quite weak in trade. Here's a lineup for what we have for you on our show today. The top movers and shakers with Hormis, Viatech, Wabag, NMDC, Ambuja Cement, buzzing in trade. We'll get you the reasons behind that and some bumper listings. In fact, all 3 of them, and we'll discuss. And last but not the least, we'll delve into the key market events to watch tomorrow. But first up, as promised, it's over to Hormis. He's at the big wall with the top stock movers of the day.
The market's in the red, but the day certainly belonged to the new listings, didn't it? But we start off with the top stocks that managed to drag the Nifty down for yet another day, managing to hold on to Friday's lows, but ending in the red nonetheless. ICICI Bank, HDFC Bank, of course, the usual suspects there. Tata Motors also ending at the lowest point of the day, extending its losses after already correcting over 35% from its peak already. A sector that bucked the trend today was Pharma, but before that, we get to PSU banks because they were the top sectoral loser for the second day running, and every single constituent of the index ending in the red and ending at or below or just at the lowest point of the day. A sector that bucked the trend, as I just mentioned, was Pharma, and it was these Pharma names that managed to close in the green. With Concord Biotech is the stock that I was referring to. Mankind Pharma, Aurobindo, Lupin, Dr. Reddy's, most of them ending with gains of anywhere between 2 to 5%. A lot of stocks reacted to news flow, and it was Viatech, Wabag that was in the news, but recovered slightly from that earlier 16-17% fall that we had. NMDC, of course, reacting to the CNBC-TV18 news break, almost turning negative for the year. Sanghi Industries ending 12% lower. Sugar stocks didn't do well, and KFintech, after that positive brokerage commentary that came in, saw a good day at the office. And lastly, some stocks that did well on the back of strong volumes in today's session was Bharti Hexacom making an entry there, 6.5% higher today. Craftsman Automation saw a very sharp surge, not a lot of volumes, but still 12.5% higher. And Radico Khaitan, EID Parry too, having a good day on strong volumes.
Thank you very much for that. Let's get in our guest, Sudeep Bandopadhyay, Group Chairman at IndiTrade Capital, and Shrikant Chauhan, EVP at Kotak Securities. Shrikant, do we head lower from here on tomorrow, or do you think we're in for a bounce?
Good evening, everyone. I think, we believe that the markets are correcting from the highs, but the overall pace of the fall is gradual, and it is heading gradually towards the important supports levels like 24,000, 24,050, where the market has taken support multiple times in the past. In fact, around these levels, as the Nifty is approaching, if we go through with the option chain, then there also we are seeing good amount of oversold sort of activity. The put call ratio for the month of December is close to now 0.80, which clearly indicates that the markets are falling, but at the same time they are turning oversold. So maybe after hitting the levels of 24,000 or 24,050, I'm expecting market to rebound in next 1 or 2 days of time. So in case if there is any further more fall because of any reason tomorrow, and today we have to face the event of Fed meeting. So in case if we see any lower opening tomorrow, then I think we should look for taking some contra bets in this market, because I am expecting market to remain in a range of 24,000 and 24,700 for next couple of weeks. So till the markets are in between this range, I think we should look for taking some contra bets of going long and going short at resistance levels.
Okay, all right. Let's get in Sudeep as well into the discussion. Well, Sudeep, today there was some negative news flow on Viatech Wabag. We'll get to that in just a bit. But any view on the stock? That order cancellation clearly spooked the street.
Well, Nigel, this has been one of our favorite stocks and favorite sectors as well. Some of these events are probably a good opportunity for long-term investor to look at picking up these kind of good quality stocks in the favorable sectors. So yes, the Saudi order cancellation is a blow to the company, but I don't think there is anything specific to the company which led to the order cancellation. I think it's a general order cancellation by the Saudi authorities. And of course, it does impact Wabag as far as their order book is concerned. And 2,700 crore worth of order getting cancelled is big. But I would think that from a long-term investor's point of view, the price correction which we did see today is an opportunity. The stock may languish for some more time because of this order cancellation. But again, I would say for long term, I think it's a great stock and worth buying post this correction.
Thank you very much for that. Let's get to NMDC under severe pressure today, and we learned from sources that the Karnataka government may be looking to increase the duty on iron ore. Sudarshan is here with the details. Sudarshan.
So first, talking about the news, reports suggest that Karnataka government is looking to increase the duty on iron ore mining, and that announcement is expected to happen very soon because the draft related to this has already been circulated. Now, why NMDC were under pressure? Because of total NMDC's mix, Karnataka forms nearly 30%. That's the reason you saw a sharp fall in the stock and had closed with a cut of almost 6%. And Karnataka government from the duty is looking to raise almost 10,000 crore for this fiscal. Now, related to this, Supreme Court in its last order had announced that government on the royalty that it receives from companies may charge retrospectively, and that retrospectively would be from 2005. And that's the considering all these things, NMDC and even JSW Steel were under pressure because Karnataka government's announcement can come anytime soon.
Okay. All right. Thanks a lot for that, Sudarshan. Sudeep, your view. NMDC was under pressure today. I think the rough estimate that I've got is, as of now, every 100 rupees of sales that they do in Karnataka, 53 rupees goes to the Karnataka government. Karnataka government is saying, let's milk it more. Let's go ahead and increase duties even more. The problem is that mining may become unviable itself. So they have to find some middle ground. And in all probability, it could go to the court of law as well. But your view of the stock, do you think 7% cut is an over-exaggeration?
Well, Nigel, I think what you mentioned just now is my view. It will get into litigation. If it becomes unrealistic, at some level, it will get thrown out. So we have to wait and watch. Uncertain time, definitely. But if you are, trying to have a long-term view, NMDC is a great stock to own. And this correction, 6% correction, which we did see today, and maybe some more correction coming going forward, will be an opportunity to pick up the stock. But if you are picking up the stock, taking this opportunity, be prepared for some volatility for some time. These things don't go away very, very quickly. It has a tendency of lingering for some time, and you have to be prepared to stomach that volatility.
Okay, got it. All right, Sudeep, thanks a lot for that. Well, gentlemen, I wanted your view on Ambuja Cements next. So let's first run you through the news print. Ambuja Cements, they have two subsidiaries. One is Sanghi Industries that they acquired, and that's the listed one. The unlisted one is Pennar Cement that they acquired in this year itself. Now, what they've gone ahead and said, let's merge all these three. So Sanghi as well as Penna will get into Ambuja Cement. And this was on expected lines. It had to happen at some point of time. The rationale that they've given is it simplifies the group structure, makes things easy as well. And the timeline is around a year, provided all the regulators give their go-ahead, which I don't think should be much of an issue on that front. Now, the ratio is most important, particularly for the listed entities. And the ratio that they gave, 100 shares of Sanghi Industries you'll get close to around 12 shares of Ambuja Cement, which was in favor of Ambuja, and that's why Sanghi Industries was clunked back in today's trading session. For Ambuja, in the longer term, it's a positive, but for Sanghi Industries, it was a negative. That's why both those two stocks went in opposite directions. Now, ACC is the other one that is in focus, because if they're going to be looking at some consolidation, bringing all the entities under one, well, ACC at some point of time could probably get merged into Ambuja Cements as well. But will it be in favor of Ambuja Cements? That was the worry. That's why if you pull up the intraday chart of ACC, you'll see that stock was under pressure as well. Well, let's get in Shrikant into the discussion. Shrikant, where's support for both these two, Ambuja as well as ACC? Anything you like on the charts?
See, Nigel, both these stocks are in a range, and most of the time, whenever the stock is like approaching to the levels of 580, 590, especially Ambuja, it corrects back to the levels of 530, 540. So this time also, after hitting the levels of 580, 590, I'm expecting stock to correct back to the levels of maybe 540 sort of levels. So yes, from here the stock can correct back to the levels of 540 or 530. So at these levels, one should look for taking some profit if there is any trading position. And for ACC, I think it is correcting from the highs and it is consistently forming lower top, lower bottom sort of series. So from here, the stock can fall to the levels of maybe 2050 or maybe 2040. So at these levels, both the stocks are not attractive with a trading point of view. And if there is any further more correction, then I think we should look for taking some contra bets at important support levels.
Let's move on now to Viatech Wabag that was under pressure today, more than a double-digit fall after losing an order worth 2,700 crore rupees from the Saudi Water Authority. Significant order. Yash joins in with the details. Yash.
Well, Rima, the stock did recover a bit intraday, but still it was down about 11-12%, and that was on the back of the information which came from the company on the exchanges overnight. The company informed the exchanges that Saudi Water Authority has cancelled a 300 MLD mega seawater distillation plant. The order, which was awarded to Viatech Wabag in September 2024. It was a large order, 300 MLD, as I said, worth 2,700 crore rupees. The company also informed the exchanges that Saudi Water Authority has notified all tender participants on cancellation of this tender. So it wasn't like the order was awarded to some other entity, taking it away from Viatech Wabag. The tender itself was cancelled by Saudi Water Authority. We reached out to the management of Viatech Wabag, and there was some important clarification which came from the company as well. The tender, which was, as I said, 2,700 crore rupees from Saudi Water Authority, was cancelled as Saudi Water Authority wants to recalibrate the order size and scope itself. The company also said that they expect Saudi Water Authority to float the tender and invite bids again in the next couple of weeks, and Viatech Wabag would participate again as far as that bidding process is concerned to bag the same order in whichever size and form it comes through in the second round. Also, importantly, the management told CNBC-TV18 that they are confident of booking orders worth about 3,500 crore rupees, which has been their guidance in the third quarter of FY25.
Thank you very much for that. Shrikant, quick word on the charts of chart of Viatech Wabag. It's been so strong for the last 2 years. Does the fall today break this upward trend that the stock has been, or do you think it's a buying opportunity technically? Shrikant, you're on mute.
So technically, if we consider the technical pattern of Wabag, then it has been consolidating. And now, like after hitting the lowest levels of 1550, 1560, if we see the volumes, then they are like abnormal. So while looking at the entire technical pattern, I think the stock has reached to its extreme level. And from here, again, the stock can move towards its upward boundary, which is close to 1850 or 1860 sort of level. So at this level, I think it will be an opportunity for traders as well as investors to create some long position.
Okay, all right. Well, let's focus on some of the new listings then. Retailer Vishal Mega Mart listed at around 104 rupees per share. That was a 34% premium in comparison to its issue price. Earlier today, we spoke to the MD and CEO, Mr. Kapoor, and he discussed the possible risk in the retail segment. And despite the demand sentiment, they are optimistic about the future. Let's listen in.
About 50% of our growth is coming from same-store sales growth, and the balance is coming from new store openings. And if you were to specifically focus on the risks, of course, we would face the challenges if there are any on the macro front. We've done that in the past also, and that would always be something which is on the agenda. Equally, I would say that to ensure that we are the best offering for our customers and consumers in a very dynamic and fast evolving retail scenario in India would always continue to be a challenge. So yes, the challenges are there as much as any other consumer businesses, but we remain optimistic about the future.
That's Vishal Mega Mart. Moving on, payment platform OneMobiKwik also saw a stellar debut on the bourses. In fact, even the subscription was super strong at 120 times. Upasana Thakur, the CFO and Executive Director, discussed the possible products the company may foray into the future. Listen in.
In addition to that, given that we have a full KYC base on a large user base of 160 million users, roughly 60 to 70 million of our consumers are full KYC'd. And on the merchant side also, we have 4.3 million KYC'd merchants. So our distribution of financial products, be it insurance products, be it saving or investment products, or be it credit products, they will be the cream on top of the core payments business. And that is sort of how we expect to continue growing in the manner we have been demonstrating in the last few years.
Well, and Sai Life Sciences also made their D-Street debut today. They listed at around 650 rupees a share, which was a 20% premium in comparison to its IPO price. We spoke to the management earlier. They detailed their capex and growth plans. Let's listen in.
We actually do have significant capex plans going forward. We are working on those capex plans along with our customers to figure out what is important for them in terms of technology platform, scale. So we are actually working very closely with our teams to outline a capex plan, which we will finalize in the next few weeks. So I think what you will see is double-digit growths should not be a challenge mostly going forward, but I think the opportunity is much more significant than that as we look at it.
Okay, all right. Well, I think on that note, though, we'll slip into a short break, but I think we'll thank both our guests, Sudeep as well as Shrikant, for joining in and filling us in with your view on the markets, as well as all the stocks that we did discuss. Slip into that break, come back, we'll get you all the top market voices that joined in earlier today, and also we'll tell you all the top events you need to track.
Le conseil est très clair, l'île est totalement dévastée, vraiment dévastée. L'habitat qui est un habitat précaire, les bangas, pour ceux qui ne connaissent pas, les bidonvilles, il n'y a plus rien, c'est très clair.
Welcome back. Let's get to the corporate conversations that we had on CNBC-TV18. First up, GE Shipping. The management says that freight tanker rates have been weak, leading to poor refining margins. Small tanker rates are down $10,000 to $15,000 for a day, while crude tanker rates have declined by $10,000 per day. They added that oil demand has also been poor, especially for transportation of fuel.
Well, next up is Narayana Health. The management says that they're looking at inorganic growth, but nothing is finalized as of now. They add that they'll take a price hike of mid-single digits in early 2025. While Zydus Wellness management says that they're well prepared for double-digit growth across the portfolio. The company is targeting 4 million outlets reach versus the 3 million right now in the next 2 to around 3 years. They expect the EBITDA margins to be in that vicinity of around 17 to around 18% in the next 2 to 3 years, with revenue growth in the teens.
And as we wrap the show, we leave you with the big market events to watch tomorrow. Upasana is here for that.
Well, first up, let me start with the global economic cues that we'll be watching out for. Coming to US first, the FOMC press conference will take place today late in the night, and Fed will give out its final interest rate decision. US will also report its initial jobless claims data. Now, UK and Japan, both of these countries will also report their final interest rate decision tomorrow. Now, back home on the IPO front, companies like Transrail Lighting, Sanathan Textiles, Dam Capital Advisors, Concord Enviro Systems and Mamta Machinery, all these companies, IPO issue opens tomorrow. So all in all, looks like quite an eventful day tomorrow.
Okay, all right. Thanks a lot for that, Upasana. Well, on that note, we'll wrap up on this edition of Markets Forward. We'll be back, though, with more news and updates. Don't go anywhere.
Shankarji, I know you've been watching Zakir Bhai as a child, and thereafter you idolized Shakti and all the concerts that you went for. From that period to the time when you actually met him, played with him, was a part of Shakti. All of this over a period of almost 3 decades. What was the one everlasting, overarching quality of Zakir Hussain? We know of him as a great musician, but very few know of him as the kind of person that he was. If you could throw some light on that.
Well, we've been playing and touring for the last 25 years. And if you ask me, one quality that he had is every night he never failed to surprise me.
Wow.
And every night that the feeling of, oh, what an artist. That was there every night, even though we played like 30 concerts in 40 days. Second quality is his humble nature, his compassion towards other musicians. You know, sometimes he used to just take a step back and just be an accompanist, providing you the platform to showcase your art form, you know. So that shows the maturity of a musician. And just the sound of his tabla, it's never ever going to come back again. So really.
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. The Nifty drops to a 3-week low as selling pressure continues. The Sensex ends over 500 points lower as financial stocks drag. The rupee closes in on 85 to the dollar as it weakens to a new record low.
3, 2, and 1!
3 companies make a blockbuster debut on the Lal Street. Vishal Megamart, MobiKwik, Sai Life Sciences all gain between 40 to 90% from their IPO price on trading debut. MobiKwik nearly doubles from its IPO price, becoming the 6th best listing of the year. The 3 companies together have a market cap of 70,000 crore rupees. Vehicle registrations slide 19% year-on-year in the first half of December as per data available on the government's Vahan portal. Two-wheelers with a 24% slump in registrations are the worst hit. Electric and CNG categories provide some silver lining. 2 of Japan's biggest car makers and long-time rivals, Honda and Nissan, explore a merger. Talks are underway over a potential deal. Both companies are struggling with the shift to electric vehicles, and a bigger entity can compete with larger rivals. The government considers steel industry's request to raise import duty to as much as 25%. Sources say the Director General of Trade Remedies is yet to drop a plan for the Finance Ministry's approval, but assure that interests of steel producers and consumers will be balanced. Supreme Court settles a 15-year-old dispute. Rules that coconut oil sold in small packages will be classified as edible oil and subjected to 5% GST. Gives relief to coconut hair oil sellers like Marico and Bajaj Consumer. The Excise Department was batting for coconut oil in small packages to be classified as hair oil, which attracts an 18% GST. Russia claims to have arrested an Uzbek national suspected to be involved in the killing of a top general in Moscow yesterday. Russia alleges Ukrainian security forces recruited the 29-year-old to carry out the bomb attack. Uproar in Parliament as opposition protests Home Minister Amit Shah's remarks on Ambedkar. Prime Minister Modi hits back, accusing the Congress party of disrespecting Ambedkar. Indian spinner Ravichandra Ashwin retires from international cricket with immediate effect after the 3rd test against Australia ends in a draw. With 537 test wickets, Ashwin is India's 2nd highest wicket taker after Anil Kumble. Well, straight to today's market action. The Lal Street extended its losses with the Nifty ending at a 3-week low. However, it did manage to hold on to levels above Friday's low of 24,181. So 137 points low on the Nifty. The Sensex down by 500 points. The Midcaps also down today, down by about 400 odd points. And the Nifty Bank lost 700 points, down by about 1.3%. So clearly across the board pressure coming in. Prashant standing by with the day's trading action. Prashant continues to be weak as far as our markets go.
Well, down and down we go. That's been the story actually pretty much all of this week, and no different this Wednesday as well. I mean, you know, the silver lining initially when the market started coming off on the Nifty was that the broader market was still looking good. But that I think also turned yesterday, and I think today was a repeat of what we saw in trade yesterday. The Nifty ending 0.5% lower. Banks much larger pressure, about 1.25% cut in the Nifty Bank. The small cap index losing just under 1%. The mid cap index down about 0.6. The change all come up on your screens. Market breadth was sort of, you know, one way. About 2:1 declines outnumber advances. I'll get to stocks there in the broader space in a bit. But let me just start with the Nifty. Here, the large cuts came through in names like Tata Motors, which was down 3%. Power Grid was down 2.5%. JSW Steel lost about 2%. And names like BEL and NTPC were in the 2% sort of loss vicinity. So these are sort of pressure points here. On the upside on the Nifty, Trent stood out with about a 2.5% gain. Dr. Reddy's 2.5% there. And there was a Cipla. Actually, only 3 names volumes in the Nifty pack ended with gains of over 1%. So it was pretty thin and slim pickings, really. In the broader space, I'll start with what was down. So Viatech Wabag, there was that tender cancellation, 11% cut there. The biggest volume-led loser today. NMDC, there was sort of negative source-based news flow, but 6% damage on NMDC. PVR Inox was down 6%. Deepak Fertilizer, Piramal Enterprises. There was Sanghi Industries, Bayer Crop Sciences. Some of the biggest volume-led gainers, losers really in this particular pack. On the upside, actually, there were names, numerically, of course, much shorter list here, but Bharti Hexacom was a big gainer, 6% gain, number one volume-led gainer across the board. Mankind Pharma, you don't see these stocks very much on the top volume board, but they were there today. EID Parry 5%, K Fintech another 6%. There was Bajaj Care, which was up about 20%. Cosmo First has been recovering. It's finally in the 4 digits now. Gravita India was up from the morning, 7% gain. And a Craftsman Auto ended about 12% higher as well. There were many more and decent-sized volumes. And I think this is a point I made yesterday as well. It's down and out and pretty much it's everywhere. But if you just run through the big volume-led movers, it still favors what was up and what was and not what was really down and out today. The big macro talking point, of course, is going to be the Fed decision, a 25 basis point cut in the price. Lately, US data has been strong and some nerves out there that maybe the Fed may gently guide the market away from future cuts, that is in 2025. Back to you.
Prashant, many thanks. Now, staying with the markets, the Board of Market Regulators, Sebi, meets today to discuss tightening the listing regulations for small businesses, SMEs essentially. A review of some insider trading regulations also on the agenda. Sebi is considering enhancing transparency and investor protection in the SME listings. It could potentially double or even quadruple the minimum application size, which currently stands at 1 lakh rupees. There is also a slew of other changes on the agenda to tighten the listing rules. Sebi is also considering expanding the definition of unpublished price-sensitive information to crack down on insider trading. The regulator could force companies to mandatorily disclose any change in ratings, change in key management personnel, fundraise, fraud, default, among other parameters. Now, the U.S. Federal Reserve's rate-setting committee will announce its policy decision later tonight. The street expects the Fed to lower borrowing costs by 25 basis points, delivering a hat-trick of rate cuts. However, the market will be keeping a close watch on Fed's commentary on the frequency of future rate cuts. This would be the last Fed policy decision before Donald Trump is sworn in as the president next month. Now let's talk about the rupee. It has declined further against the dollar, hitting another record low today. Now the rupee is just 5 paise short of the 85 mark against the greenback. Meanwhile, bond prices also declining in trade today ahead of the U.S. decision. So that's the money market snapshot for you. Lata standing by now with more on the rupee, where it's headed and the implications for the larger economy. Lata.
Yes, slipped 5 pies from 84.90 where it closed on Tuesday to 84.95.96. Of course, relentless buying of dollars by FPIs who are selling shares and repatriating the money back. Actually, the flow, according to dealers, was perhaps even more yesterday. But yesterday, the RBI allowed the rupee to go up to 84.94 and then made it end at 84.90. So today, till the end at 3:30, it was a guessing game. Will they pull it back? But no, they allowed it to end at 84.95.96. But really, left to itself, it would have crossed the 85 mark quite a few days back. The Reserve Bank has been intervening heavily. The sentiment on the rupee has also worsened because of the higher than expected trade deficit that we got for the month of November. Goods deficit alone is, unexpected, an all-time high of nearly $38 billion. And if you add the services surplus, it is still a massive $20 billion of monthly deficit. That gives the feeling that, this won't go away. Of course, there's a one-off big gold purchase. It may be one-off. It may be something which, investors are going to regularly do because of asset allocation, asset diversification. But if the deficit were to be, continue to remain high, then there is going to be further pressure on the rupee. So that has also hurt sentiment. That could have explained why the Reserve Bank let go. The other big event, of course, the FOMC event. And if they were to signal fewer rate hikes next year, that will mean further strengthening of the dollar. And that can have impact on the rupee. Most people are expecting 85, tomorrow. It should have come a few days back. It's expected round the corner, and probably 85.50 by the time we get to next quarter.
All right, Lata, many thanks. That's the action as far as rupee is concerned. But let's talk about that big headline coming in on gold imports. There's been a big surge in gold imports in November, which pushed India's overall imports and trade deficit to a record high. In fact, gold prices actually fell on a monthly basis in November, which means that the increase in imports was due to higher volumes. Manisha is standing by now with more on the yellow fever. Manisha, this is fast likely to become a problem for the government, is it not?
Well, it really could with the kind of numbers that we are working with, the record imports for the month of November. Also, when you look at the current financial year from April to November, it has been a 49% of a jump as compared to previous year. So, well, yes, there's a problem with trade deficit and that also has impacted Indian rupee and that would make imports costlier going forward. So it really seems to be turning into a cycle here. But I want to take you through on what really we do in sense of November when it comes to imports. And well, yes, it is a record. When you look at all of those previous years, it has been a double-digit tons in sense of gold import, but for the month of November in 2024, we've seen 173 tons, and this is the Ministry of Commerce data there. I also want to take you through last many years on the kind of imports that we've done. Let me remind you that 2020 was a COVID year, is the reason you're looking at a smaller number. 21 was a vengeance buying, and then the 2 years after that, we've seen in the tune of 700s there, and this year 800 ton plus kind of imports is what we are looking at. I also want to take you through on the reasons why we've seen such strong gold imports. Well, one, it is festival season. Always the last quarter of calendar year does see higher imports. And then also there are 48 lakh weddings this time around until mid of Jan. That import seems to be happening. There's strong investment demand also. Remember, gold has given you 30% of returns in this year itself. So portfolio diversification has been on the higher side. Markets also have reacted to import duty cut from 15 to 6%. And that led to a lot of buying into gold. Also, remember, a lot of unofficial and smuggled gold used to come into India to the tune of 150 to 200 tons. That also has found its way via the white channel. So those numbers also are now reflecting within this number. The other thing is about hallmark jewelry. Remember, you have many IPOs coming in. More corporates are now getting into jewelry. There's more credibility, transparency here. So that also has led to more jewelry buying into the markets there. But when you look at the overall numbers right now, there's a bit of a descent when it comes from the industry. So while the Ministry of Commerce has put out a number at 173 tons for the month of November, Metal Focus, which is an agency which provides data and collects data from 9 countries, also is a source of data for World Gold Council, has put that number to 136. So these are the numbers that the industry still is debating on. But even with 136, we are pretty much on the higher side.
Yes, we certainly are. But of course, we need to get that number discrepancy clarified by the government as well. Manisha, many thanks for joining us. It was a day of blockbuster listings on the Lal Street. All 3 companies gained between 40 to 90% on their trading debut. MobiKwik was the star of the day. The fintech company shares listing at a 57% premium, ending the day with gains of 89%. This makes it the 6th best listing of the year. Vishal Megamart debuted at a 33% premium. It ended the day with gains of 44%. The public issue was entirely an offer for sale, was subscribed over 27 times during the bidding process. And the third company, Sai Life Sciences, listed at an 18% premium on the Lal Street. It ended the day with gains of 39%. The 3 new listings now command a market cap of 70,000 crore rupees. Well, the 3 listings today are a testament to what has been a record-breaking month for the IPO market. 15 companies raised close to 25,000 crore rupees just in December so far, with at least 6 IPOs in the pipeline still. When it comes to the number of IPOs, December has seen the highest new issuances since February of 2007, when 18 companies launched their IPOs. However, the amount raised then was far lower at 4,500 crore rupees. Well, moving from IPOs to vehicle registrations, they are down 19% in December so far, according to data available on the government's Vahan portal. 2-wheelers are the worst hit, but electric and CNG vehicles are seeing an increase in registrations. To be fair, we've also seen a change in the Diwali dates this year, which could have impacted numbers. Sudarshan is standing by now with the details. Sud.
We have analyzed Vahan data for first 2 weeks of December, and the picture that we are getting is different from the trend that we had seen as of now. As of now, one sector that was outperforming was 2-wheeler, but now Vahan data for first 2 weeks of December indicates that two-wheeler has underperformed in the registration. overall registration from December 1 to 17 is down 19%. And in comparison, registration of two-wheeler segment has fallen almost 25%. Now, talking about the category-wise, one segment which has done better than other segments was electric segment, where we have seen registrations increasing by almost 7%. But in comparison, petrol segment has fallen by almost 25%. UBS has also come out with a note, and it says, in December, industry retails are on track to post decline, and that would be led by Hero MotoCorp and Bajaj Auto. In comparison, TVS and Honda are likely to gain big both year-on-year and month-on-month, where Hero loses the most, and it expects industry to post 7 to 9% year-on-year decline in retails in the month of December, whereas Hero MotoCorp and Bajaj Auto are seen recording a fall of almost 15%, and in comparison, TVS Motor and Bajaj Auto may see a growth. One segment, as per UBS also, which has done better is the electric vehicle. Now, after in the first 2 weeks, underperformance by two-wheeler, will have to see how the auto sector performs in the remaining part of December.
Sud, many thanks for joining us. And the big global story, two of Japan's biggest car makers and longtime rivals, Honda and Nissan, explore a merger. Both companies have confirmed that talks are underway over a potential deal. Nissan and Honda are struggling with the shift to electric vehicles, and they hope a bigger entity can compete with their larger rivals. Take a look.
Nissan and Honda are planning an alliance. A Reuters source says the two firms are in talks to establish a joint holding company. That would allow them to share more resources as competition heats up in the auto industry. Nissan shares surged on the news, jumping more than 20% in early trade on Wednesday. Honda didn't fare so well, however, sliding around 3%. The talks were first reported by the Nikkei newspaper. An alliance would allow two of Japan's biggest automakers to cooperate over technology as the shift to electric vehicles reshapes the industry. It wasn't immediately clear whether a full union was the ultimate plan, though the Nikkei reports that merger talks were underway. On Tuesday, the two firms released identical statements saying that no merger had been announced, but they admitted to exploring various possibilities for future collaboration. Over the past year, an EV price war launched by Tesla and Chinese rival BYD has made it harder for other firms to make money on the zero-emission vehicles. The industry has also faced stalling demand for electric cars in the US and Europe, and Japan's big exporters all now face the looming prospect of sweeping tariffs under a new Trump administration. Any deal would be the industry's biggest since the $52 billion merger of Fiat Chrysler and PSA in 2021. Honda and Nissan have already deepened ties, agreeing earlier to work together on batteries and other technology. Nissan may be more in need of a helping hand, after saying last month that half-year earnings were down over 90%. Its market capitalization is about $10 billion after Wednesday's surge, or less than a quarter of Honda's.
Well, back home shares of Vietech Wabag were down 19% in early trade after its 2,700 crore rupee desalination order from the Saudi Arabian government was cancelled. The Saudi government order was about 18.5% of the total order book of 14,600 crore rupees at the end of September 2024, the highest ever in the Chennai-based company's history. The stock recouped a third of its losses by midday close 11% lower. Despite this fall, it may still be the best year for the stock since 2014. The share price has gone up by more than threefold since the start of the year. Government-run helicopter operator Pavan Hans has received an order from ONGC to supply 4 Dhruva NG helicopters. The 4 new helicopters made by Hindustan Aeronautics will be deployed at ONGC's offshore operations. The contract is valued at over 2,000 crore rupees for a period of 10 years. Remember, ONGC owns 49% stake in Pavan Hans, while the remaining is held by the government. The government is considering steel industry's request to raise import duty to as much as 25%. Sources say the Director General of Trade Remedies is yet to draw up a plan for the Finance Ministry's approval, but also assure that interests of both the steel producers and consumers will be balanced. Parikshit is standing by now with details. Parikshit, we've been speaking with the steel industry, and whether it's Sajjan Jindal or Naveen Jindal and others, they have gone on record to say that there is a need to impose higher duties on Chinese imports. What's the situation at this point in time in terms of government action?
Well, there are a number of actors involved in this exercise. One is the nodal ministry, which is the steel ministry, which can make a recommendation. But when it comes to any kind of duties, finally, it will be the finance ministry which has to take a final call. And in this case, the steel industry has to first go to the Directorate General of Trade Remedies. Now, this is what sources are telling us, that the industry body, that is the steel industry body, has submitted a representation to the DGTR. The DGTR will now have to deliberate on this. This is a quasi-judicial body. They will have to seek responses from everyone involved and then make a recommendation to the Finance Ministry. So currently, the industry request for a 25% safeguard duty on steel imports, that is under active examination. That's what sources are telling us. But the exercise has been initiated in terms of taking a call on it, but no decision just yet. So whether we can go ahead and say that this duty is going to be imposed, that would be too premature, because the ball has just started rolling into action. The entire quasi-judicial process has to be completed before the matter goes to the Finance Ministry, and the Finance Ministry takes a final call. So as of now, no decision yet, but the government actively examining the request.
All right. Well, we'll have to wait to see whether there is likely to be an imposition of a safeguard duty ahead of the budget or perhaps even in the budget. Many thanks, Parikshit, for joining us. Speaking of metal, sources tell us that the Karnataka government may be looking at increasing the duty on iron ore. The draft to increase duty on iron ore has likely been circulated. The Karnataka government is seeking to collect over 10,000 crore rupees in iron ore duty this year. Remember, the apex court had approved that states be allowed to collect mining tax retrospectively from 2005. Shares of NMDC declined 35% of its iron ore comes from the state of Karnataka. We'll head into a break, but up next, the Supreme Court settles a 15-year-old dispute, rules that coconut oil sold in small packages will be classified as edible oil and subject to 5% GST. More when we return.
I don't have any words to speak.
We can totally echo that sentiment. Just the sound of that tabla. I personally remember, there was a concert that you had done with him at Shanmukhanand, and you just asked the audience, hey, Lavani, should we play that? And the audience was enthusiastic. Zakir bhai just strung one beat on the tabla, and everyone was suddenly transported to the Lavani. But what's also interesting is that the personal connection that you had with him, you had the joy of playing cricket with him, a lot of meals that you would share, y'all would share as well. Salim, I'd like you to come in on some of those memories that you've had with Zakir Hussain.
Well, yeah, there are so many of them. I mean, one thing I definitely echo this thing about Zakir bhai, that he made everyone feel like a friend. I mean, this father figure, the guru that he is, he'd make you feel like, that you were just very, very special. And not just you, I mean, anyone and everyone. He may be, he or she may be just an intern or somebody working at the studio or something. He'd make everyone feel so special and so loved. That was a very incredible quality about him. And, when it came to food, he was, he always had the best places to go to. He always had the best cuisine that he'd recommend. And there's one memory of him while I was touring with him during Tabla Beat Science, which was this band, very special band with Bill Laswell and Karsh Kale. I remember we went go-karting and he beat everybody. I mean, he was just an amazing rider, and after that, I remember asking him that, Zakir bhai, how do you manage so many concerts living in America? And then each time he has to travel anywhere, he has to secure a visa because, it's difficult to, you have to get a visa. But then he said, and I asked him, like, at that time, the Indian card had just come out, that one could get a card, just Indian origin living, somebody who lives outside of India, but of Indian origin. And I asked him, like, why don't you opt for that? And he just told me something that I'll never, ever forget. He said that I can't give away my Indian passport. It's too difficult for him to submit his Indian passport back to the government.
Wow.
And that really shook me. I mean, imagine each time he has to go to Europe, each time he has to go to the UK, he has to travel to LA, go to the embassy, secure a visa, and he's willing to do that all his life, but he never ever give up his Indian passport.
One of India's greatest sons.
I have so many episodes like that, so many memories of him, telling me so many amazing things. His knowledge about music, in general, about classical music, about Western classical music. I mean, so much to talk about. He has such an incredible, so much knowledge about Western classical music and, about orchestras and about musicians. It was incredible to just be around him.
Right. The thing that you spoke about him not wanting to give up his Indian passport tells you how great a son he was to the nation. Shankarji, I have to ask you this. Which of your songs did he like the most, he enjoyed the most? And if you were to, give him that vocal tribute,
Amazon.com NV Investment Holdings is likely to have sold its entire 4% stake in Shoppers Stop in a big block deal. The deal was worth around 280 crore rupees. A clutch of FIIs and DIIs were the likely sellers. But the likely buyers, the stock ended the day 1.5% higher. That's Shoppers Stop for you. Zing, a 10-minute food delivery app, has launched in Gurugram. The app is backed by marquee investors like Azhar Iqbal, the founder of InShots and one of the judges of popular TV series Shark Tank India. It aims to redefine convenience for urban dwellers by delivering meals at their doorstep in 10 minutes. Remember, Zepto and Blinkit currently dominate the 10-minute food delivery market. They have, of course, also just gotten into the 10-minute food delivery market. The Supreme Court has settled a 15-year-old dispute on taxation of coconut oil. The court has ruled that coconut oil sold in small packages will be classified as edible oil and be subjected to 5% GST. Ashma joins us now. Ashma, the Supreme Court finally settling what has been a sticky issue for decades.
Well, it's an interesting dispute which stretches back 15 years if you count from the date of the Sestat verdict. Goes back even further to the 90s. The issue at hand essentially is that the coconut oil, which many users apply on their hair, is that hair oil or is that edible oil? This question seems interesting, but it's even more interesting when you look at it from a taxation perspective. The GST that is levied on hair oil is 18%. The GST levied on edible oil is 5%. That's what the genesis of the dispute is all about. This issue traveled from the Sestat all the way to the Supreme Court. We had a split verdict coming in, then we had a 3-judge bench, and today finally clarity being given by the Apex Court that Supreme Court's view is that it indeed, even coming in small packages, it indeed is edible oil. Now, with that classification, what the Apex Court has done is that it has made the FMCG makers, the likes of Marico, the likes of Godrej, who produce coconut oil and sell in small packages, they are now all eligible for a levy of 5% GST. So a huge tax relief coming in, especially as far as the industry is concerned, and a setback of sorts as far as the tax department, which has been litigating for a very long time, in finally getting an answer to that question, is coconut oil a hair oil or an edible oil? The Supreme Court having the final word, the last word, saying that in fact it is qualified as edible oil. Back to you.
All right, Ashmit, many thanks indeed. A very sticky issue. With that, it is time for us to wrap up this edition of Business 360. More news and updates will continue right here on CNBC-TV18. But do remember to stay tuned. We've got our big CNBC-TV18 town hall starting 5 p.m. where we will be speaking with the fund managers of the year on the funds that have been the outperformers of 2024. And also, we'll tell you where the smart money is headed in 2025. So stay tuned to the CNBC-TV18 Town Hall. That's coming up.
Oh my God. I used to, we used to travel a lot by bus because we used to have long bus journeys, 8 hours, 10 hours, 12 hours. So that was one opportunity where I used to play my mixes or, something that is recently released, some film song or some, non-film song, some piece of music. And he used to listen to it and, appreciate every single, thing that, piece of music that I played for him and give me his blessings. I don't want to I don't want to sing something from what I've composed for him or anything like that. All I would like to sing is Guru Brahma, Guru Vishnu, Guru Devo Maheshwara, Guru Sakshat Parabrahma, Tasmai Shri Gurave Namaha.
Om Shanti is what we can say to Zakir Hussain. We celebrate his life on that. And one of the most amazing anecdotes that he speaks about his life is he, got up early in the morning, heard, the namaz being recited. Thereafter, he went to a school which was a Christian school where he learnt all the carols, etc. And then thereafter, he prayed to Saraswati as well. He was what India was. Salim, we've done Guru Brahma, Guru Vishnu. I would like for Zakir Hussain to be present on this earth. I would like you to, thank Lord. If you could, hum a line of Shukran Allah, because that's exactly what one has to say when they think of Zakir Hussain.
Sure, it's a difficult time right now. And speaking of Shukran Allah, I must say, this song had just released, and I walked in late at Shanmukhananda Hall at one of his concerts, and he was playing a solo, and he just jumped into playing Shukran Allah on his baya, which was, which was just,
yes.
But we thank the Almighty that we have learned. Every single person on this panel and in the music world has a little bit of Ustad Zakir Hussain, because we've learned so much from him. And on that note, Shukran Allah walhamdulillah, Shukran Allah walhamdulillah, Shukran Allah walhamdulillah, Shukran Allah walhamdulillah.
Thank you so much. The heavens are blessed with a new, with a star. You've had, a lot of experience with him as well, playing on the stage with him. One thing I remember, people would say when they were bowling to Sachin Tendulkar that you're not only bowling to get him out, but you're also bowling to impress him. That's exactly what happens when you played with Zakir Hussain as well. You're not only, playing the music to present to the audience, but you're also playing to impress Zakir Hussain. How did he, change the way you played on stage, playing with Zakir Hussain versus playing with others? If you could talk about that and maybe, speak about some of the things that celebrated, that Zakir Hussain celebrated the most.
Well, I go back to
Let's Talk Money.
Hello and welcome to Let's Talk Money. I'm your host, Surabhi Upadhyay. It's the middle of December, which means it's holiday season. Now, many of you would have already planned your travel and vacations, and those who haven't are probably looking forward to booking their first trip of 2025 early in the new year. Yes, the travel bug has bitten us all, and it's perhaps here to stay. So how can we plan smarter for our travels and our holidays? What are the hottest destinations of 2025? And while we research enough on the hotels and the experiences that we want on that dream trip, do we pay enough attention to travel insurance? Yes, you got it. It is the travel special edition of Let's Talk Money. And helping us plan our 2025 Wanderlust better are Mohit Joshi of Skyscanner and Priya Deshmukh of ICICI Lombard. Ladies and gentlemen, great to have both of you on the show. Thank you very much for joining in. And I don't know if both of you have booked your trips or if you're big travel enthusiast yourself. Mohit's joining us all the way from London this morning, right?
Yes, hi, good morning. Good morning. Lovely to see you all.
Priya, what about you? Are you a big avid traveler yourself?
Well, I do travel, and thank you for having me on the show, and, good morning to everybody.
All right. So, we want to start with some broad brush trends of, what the qualitative and quantitative aspects tell us. Yes, we know our friends, our family, everyone's traveling more. But Mohit, you tell us, I mean, you guys on Skyscanner, you're looking at all of these searches, all of these bookings day in and day out. So what has 2024 brought forward when it comes to Indians traveling?
Yeah, it's an exciting time for travel at the moment. 2024 was all about cultural exploration. So we saw a shift in the Indian traveler mindset, moving from just going to a new country to escape to actually going there to immerse themselves in the culture, right from gig tripping, which is going to see your favorite artist perform somewhere, to actually going to some iconic landmarks that they've seen on a TV show. So we've seen that shift in 2024. And moving on to 2025, the desire for travel remains really strong. 86% of Indian travelers want to spend the same or more on flights, and 80% of Indian travelers want to spend the same or more on hotels, which shows there is a big interest in travel for next year. We've also seen some travel trends that have come out through some number crunching that we've done, through a survey that we've done. And then we've highlighted 7 travel trends, one of them being sport mode, which is essentially traveling to see your favorite athlete or to support your favorite team. We've also looked at art venture, where there is a big focus on Indian travelers wanting to go and experience immersive art. Reset jetters, which is another one, which is all about wellness-based traveling, taking some time off to disconnect. That continues from 2024 into 2025. And then there are a few more which talk about astro adventures, which is wanting to go and see the Aurora Borealis, the Northern Lights. Tromsø in Norway has come out as one of the trending destinations where you can go and see them. And then there are a few like gamey vacation. We've seen a lot of interest from Indian travelers wanting to go to location that they've either played on a game, or it also kind of reflects on some e-sport events that they want to go for. And the last couple being horticulture, which is wanting to experience the cherry blossoms, and last, the cowboy core, which is just having an experience of a farmhouse stay. So that's the various travel trends we've seen going into 2025. And if we talk just about 2024, for December itself, we've seen the top searches for people, Indian travelers wanting to travel, have been Goa, Bagdogra, Kochi, Dubai, and Almaty. These are the destinations for December.
My God, I'm already getting major FOMO, Mohit, because of all the trends that you described, from the cherry blossoms to the northern lights and so on and so forth to the wellness retreats. We want to do them all, right? Actually, not one. We want to do as many as possible in every given year. But then budgets are finite, so we have to work with what we have. I'll come back on some of the individual trends in just a bit. But Priya, you tell us now, clearly all this is happening. But what about when you see it through a financial lens, has it meant better business for you as well when it comes to the travel insurance segment?
Absolutely. And, quite frankly, I'm quite fascinated to hear what Mohit said. And, you have an example in me who's traveled to Japan just for the cherry blossoms.
Wow.
It's amazing to see what's happening across the globe and how the travel trends and tourism is coming back. We have around 15 million Indian nationals who have traveled in the first half of 2024. And we expect, total 80, million traveling throughout the year of 2024. So the travel trend is back. We did see some slowdown during the COVID season. Post-COVID, it has come back with great, amazing progress. And alongside the travel season and people going for experiential, travel destinations and all the, fancy names that Mohit mentioned, even the insurance sector, the financial insurance sector has moved that along the side in the curve of how people have chosen destinations and travel, planning. And it's really fascinating to see how the growth has happened. There's a CAGR of around 14% that we've observed. And by 2040, we're seeing explosive growth of almost 50% of the total travel tourism insurance that's going to come our way.
So the travel insurance industry seems to be growing at these big numbers, 40-50%.
Yeah.
Because of the boom in travel.
It's a reflection of how people are choosing to travel internationally as well as domestically.
So Priya, I mean, just a question on the trends from this year. Now, travel insurance tends to be a very minuscule percentage of the overall trip cost, right? Probably 0.001%. Yeah. So in terms of the premium trends in 24, what have we seen so far? Are premiums going up, going down? What should we expect?
Well, when you talk about a travel product, while it's a minuscule of the cost of the total travel planning that a consumer would do, it will all depend on the, country, the duration of stay, what kind of, stay plan that you have and, features of, are you going for a adventure sport kind of an activity? So it will all depend on that. But with the growing volume of business and the way the penetration is increasing and more people are being aware because of two reasons. One, the treatment cost in locations or, destinations that people are traveling, as well as, the peace of mind. Typically, 50,000 USD sum insured for an aged customer of around 50 years would, the premium would range around 10,000 odd rupees for a gold plan. And a more comprehensive and very, very, all-inclusive program would cost around 15,000 odd. So that's quite the range in which you would see the travel insurance products being...
Fair enough. So they're not sort of shooting through the roof, not expecting a very huge surge in travel premiums, right? That's good to hear. I'll come back on it in just a bit. But Mohit, again, to talk about the trends and the costing part, now people are traveling irrespective of the cost, but the fact is that costs are going up, right? You look at flights to Europe throughout 2024, I remember, pre-COVID, I took a flight to one of my dream destinations in Europe for some 50K for a return ticket. And now that number is going to 75,000, 80,000. So in terms of just costs for this sort of international travel, what are we in for in 2025?
Yeah, it's a really good point. Cost of living is still top of mind for Indian travelers. Like Indian travelers prioritize the cost of flights, cost of hotels, even the cost of food of the destination that they are going for. But having said that, the rising middle class and the increase in travel spend that individuals have now, and also visa access becoming slightly easier in many of the locations, continues to drive the interest among Indian travelers. An interesting fact we also found out was 66% of Indian travelers are planning to travel more in 2025. So that shows that although cost is top of mind, they want to continue to travel into the new year. And having said that, what we are seeing is airlines increasing their networks. There's a lot of domestic, there's a lot of low value, low cost airlines having competition. And because of this additional networks to different destinations, what we'll see in 2025 is the prices stabilizing further. And to meet the demand of Indian travelers, we expect more routes to start beginning, which will also stabilize the prices further.
That sounds really good. Actually, you know what, Mohit, we're playing a graphic right now from your report that highlights some of the maybe most wallet-friendly or budget-friendly destinations for 2025. Yeah, we've got them on the screen now. Oslo, London, Doha, there's Seoul, there's Baku, where there's a slight drop, and there's Kazakhstan, where there's a big drop, actually, 44% drop in airfares. Can you tell us a little more about it? This is what, average of how many months, and can we project this into the new year? We all want to believe that, yes, airfares are not going to go through the roof. So what are the destinations to look at?
Yeah, those numbers are very exciting for us as well. That is why we wanted to highlight them to our Indian travelers. Like seeing Almaty in Kazakhstan having that 44% reduction in price year on year over 12 months is really exciting because it shows that Indian travelers want to go and experience the culture, which takes back to the point I mentioned about cultural exploration. It's also about going to destinations which are more pocket friendly, and stronger rupee plays quite important in this. And we also see the visa access, which is becoming easier for Indians to traveling to these destinations. And because of that, the airlines are having more networks to these routes. And because of that, we see the average fare prices dropping significantly. And you see Almaty in Kazakhstan known for its culture and really good landscapes. We also saw Jakarta in Indonesia, which is a wellness retreat. We see some really stunning beaches there as well. Same with Singapore. It's getting popular every year because of what it offers to the Indian travelers.
Very, very interesting. So Mohit, before we let you go, give us more hope. You guys have done a top destinations list as well, I think. And I was very proud to see, I think Shillong features on that list of top destinations of 2025, right? So tell us how you compiled that list and, any hacks, any tips for better planning, more sort of budget-friendly planning. How can we have happier holidays in 2025?
Yeah, I was really excited to see Shillong as the #1 destination for Indian travelers in terms of searches. So what we saw in terms of the data crunching we did was which destination has seen an increase in searches compared to the previous year. And Shillong saw a tremendous increase of over 800% for Indian travelers. Shillong, also known as the Scotland of the East, pristine lakes, beautiful landscapes, easy access, obviously no visa issues for us Indian travelers. So I wasn't surprised to finally have an Indian city on that list. Baku continues to be really strong in the top 10 at #2, which gives you an affordable European experience, easy to get to as well, and easy visa access. Tromsø in Norway also makes the top 10 of the list, which is known for seeing Northern Lights and Aurora Borealis. And then you can see Tashkent in Uzbekistan, also known for its culture and beauty that's drawing Indian travelers. So these are the different destinations we've seen based on what Indian travelers have been searching on the Skyscanner website and app.
So how many of them have you covered, Mohit? And which ones are you heading to in the new year?
Definitely Tashkent in Uzbekistan is on my go-to list for sure. Unfortunately, I haven't been to Shillong as well. So Shillong should be there in my #1 list as well. So can't wait to cover both Shillong and Tashkent very soon.
Fantastic. Well, we wish you good luck with that plan. And thank you very much for joining in. This gives us plenty of food for thought and, plenty to think and plan about and get excited about in the new year. Travel always top of mind. Thank you very much for giving us the Skyscanner perspective.
Thank you so much.
All right. Well, with that, we have to take a very quick break. We'll come back on the other side. And now that we know which are the hottest destinations to get to, the question is you need to pay a lot of focus and attention to the travel insurance part. It's more than just a quick checklist before you're heading to the airport. We'll tell you why. Priya will give us more details on this in just a bit.
Let's talk money.
From the year 2007. And that was my first time on stage with him in Kolkata back in the day when I used to live there. And I was just in the wings and facing the usual jitters. I mean, I kind of telling myself that, in a few minutes I will be on stage with this larger than life, this person who we have looked up to and idolized so much. And he comes quietly from behind, gives my kurta sleeve a little tug, pulls me aside, whispers into my ear, says, "Look, my kurtas are a little more expensive and a little better ironed, but at the end of the day, I'm just a tabla player." And, just little moments like this, there's humor in it, but there is also, I have seen him as such a spiritual guide and of course, the great artist that he is. I don't think I'm even qualified to talk about that in the presence of all these great masters of music, but just how deep he was. And he was one of those people, look, there are great artists and then there are leaders. There are people who believe in things. There are people who can carry you forward into the next century or the next millennium or whatever. And I feel Zakir Bhai was one of them. So for me personally, and I think for a lot of us, it's a deep sense of personal loss, like losing a father or a spiritual guru. It's somebody who gave you a sense of tethering, a sense of belonging, a sense of belief, a sense of faith even. I mean, he told me, I remember one of the instances which were a little deep, and it took me a little while to comprehend what he was saying, is he just asked me once, just off the cuff, he said, "Why do you think Ustad Vilayat Khan Sahab or Pandit Ravi Shankar ji or Ustad Ali Akbar Khan Sahab or Pandit Nikhil Banerjee are what they are? Why do you think?" And of course, I knew better, than to give a reply, kept quiet. And I let him answer, and he said, "It's not because of what they play. It's not because of how they play. It's just because of how much conviction they have in whatever statement they're trying to make." And that takes me to what Shankarji said, is that, this one thing that Zakir Bhai taught the world of music, it was to be in the moment. It was to live the moment, in the words of Steve Jobs, as if it were your last. And when then he could move on to the next moment and live that moment as if, that was a complete separate, entity unto itself. There's so many little things. There was humor. I have not seen a more well-rounded individual in my life. I can safely say that. And there is, it is incredible how many of us feel like he was a guru or a mentor. You may be a musician. You may even not be a musician. You may be from some other walk of life, but he was still a guru for you.
He was. Shankarji, if you could tell us a little about how Zakir Bhai prepared, because you've spent so much time with him, could you give us a sense into the brain of that genius? Because we know, what was on stage, but before that, how his preparation was and what his thoughts were then. If you could take us through that journey.
Okay, now, here is a man who has been playing for years and years and years. And, he need not prepare actually, because it's all there. But before every concert, so that he doesn't disturb the other artists, he used to put a piece of cloth on his baya and chati. And he used to be, we are all doing our sound checks and we're creating a rakas over there on stage. This wire is not working, that in here. He used to be just sitting there and he used to be doing his riyaz, continuously. Now you asked me about his brain.
Let's talk money.
Welcome back. Here with us on Let's Talk Money. And this week, it's all about travel, how to plan better, plan smarter, and how to ensure that you have the right kind of travel insurance as you're rushing out towards the airport. Priya Deshmukh is with us in the studios. She's from ICICI Lombard, and she's helping us understand all the nitty-gritties of a travel policy. Typically, I admit this is the last thing people sort of look into, which is why we're here to ask the questions, Priya. So what all does a travel policy cover? I should know beforehand, right? Rather than landing up in a problem outside and then figuring out, okay, does my policy have this or not?
Absolutely. One of the surveys by Global Travel Trends report, 50% of people travel, book their tickets 14 days in advance, and almost similar numbers buy insurance in the last 2 days of the travel that's planned for. So it's very much of a last minute kind of a affair.
Yeah.
But it's very critical for people to understand that the country that they're visiting, what is the kind of healthcare system, how are things, and in order to really avoid the last minute, hassle or any issue that is caused because of any medical emergency or non-medical, situations of loss of baggage or mugging or any kind of other mishaps, it's important to really buy insurance and know what all your insurance plans really covers.
So does the insurance plan cover something like mugging as well?
Yes. I mean, almost, 30% of Indians that take trips, there is a situation where they have had issue with mugging, any fraudulent payment, other challenges. I mean, those are common issues that travelers really experience. There are, instances where people get tricked. So all of these elements are covered as part of non-medical coverage in the travel insurance plan.
Okay.
So you have the basic critical, vanilla offering of medical insurance, any kind of emergency, any hospitalization for that matter, any kind of personal accident. But at the same time, you have loss of baggage, loss of passport, all those kind of issues also covered as part of the offering.
So are these plans fairly standardized across the industry, or do you have to be very careful and go through all the conditions? Because maybe ICICI Lombard is offering, maybe someone else is not. The reason I'm asking is that, we don't typically pay so much attention to what all is covered.
See, in the zest of travel, and most of the travel is either for leisure or study or maybe work-related travel, people tend to really miss out and pay as much attention that one would need for a travel insurance plan. And the travel insurance plan would essentially depend on the destination, as I said, what kind of long stay or a short stay, what is the family combination that is traveling, and what is the infrastructure in the city, what are the local, situations or scenarios that are going to impact either health or, non-health kind of situations that the traveler may face. And hence, it's extremely important to go through the details of what your policy covers, what are the critical exclusion lists, and also be familiarized as to if at all there is a claim to be made, what are the processes to really go through, if one has to go through that, scenario or a situation.
No, absolutely. So which is why I was asking that all the things that you kind of listed out, which is a medical emergency, which is a non-medical emergency, which could be loss of baggage, which could be things like, mugging or theft or, loss of documents. Do most insurers in the average travel insurance policy, do most insurers cover this?
So there's something called as basic cover, and now new age products cover multiple other features. So there is a bare minimum medical emergency and loss of baggage kind of feature. However, there are a lot of novelty kind of features that have been added by new age insurance companies like ourselves. So you have adventure sport, you have visa service. So you apply for a visa, your visa gets rejected. So your insurance covers the entire processing fee. So that's something new. Adventure sports was always excluded, but now it's all about experiential, traveling, and it's important for you to really have that assurance and that, security. So there are plans which are very, very customizable. They can be personalized depending on the need for your travel, the stay, the number of days that you're staying in a particular country, the requirement that's there. So the newer plans, the new age plans do have customization options available, and it would have impact on your coverages as well as the cost of travel insurance premium that you would.
So got that, Priya. Now to go back to the example that you gave earlier about a 50-year-old traveling to any international destination, right? You said the cover there would be around 10,700, but that's for a 180 days of foreign stay, correct?
Correct. That's right. I mean, that's a long stay. You could have programs where you're going for a leisure trip.
Like 2 weeks or,
2 weeks or all. So you have a different kind of premium, which is much, smaller compared to what I mentioned. And depending on the country that you're going, it would again differ. And the premiums are really, really very economic.
Even for something like adventure sports and all the funky
stuff? There's a little bit of layer of, risk out there, and you load up, as an insurer, you would load up the premium, but still it would be much, much cheaper.
So ballpark estimates, say a 2-3 week trip, the basic cover, which includes your medical emergency, loss of baggage, and throw in that adventure cover. So how much would it cost?
6,000 to 7,000 range is the premium that you would have for a 2-week, travel. And some of these add-ons that are, I mentioned just now, would be the ballpark number.
Okay, Priya, so that's really helpful. Finally, now sum it all up for us. What are the things that we should check, read, ask before buying travel insurance?
As we discussed throughout, travel insurance is one of the most important and core, requirement when somebody is traveling either for leisure or business or any kind of tour. And the last thing you want is to be stuck by any kind of a situation and get caught in the middle of a problem. Having said that, in travel insurance is to give you assurance, peace of mind. One must check what are the exclusions and inclusions depending on the, what kind of coverage do you have, what country you're traveling. If you're traveling to a country like US or Europe or any other country, having high amount of, medical expenses when it comes to medical emergencies, you've got to really make sure that you have adequate sum insured. Check the start date and end date of your travel insurance policy depending on the travel dates that you're traveling. Also the geographical scope in terms of coverages, restrictions and exclusions, and familiarize yourself with the claim process. And depending on your requirement and need, certain add-on new age covers that are there, whether it is sports and adventure, car rentals. We've seen almost 20% of people who travel abroad now prefer to have, rental cars. So to cover that bit of any kind of damage or any mishap, you have insurance cover add-on. So such kind of add-on covers align to your itinerary on your leisure and the trip that you're planning. You have to really make sure that all of that is kind of concerted and kind of aligned with your plan.
Priya, that's a really important point. And before we go, we must ask you, in the event of a mishap, something gets lost, you lose your phone, you lose your documents, God forbid a medical emergency, what's the process? What do? You call back to India? How does the claim happen? Explain the process.
So in case of a non-medical emergency, like a flight gets cancelled or there is a baggage loss, so we have an auto tracking mechanism and auto claim reimbursement or kind of payoff to the consumer, so it's completely hassle-free. The last thing we want our travelers or insured members to really worry about, how do you claim in case of travel being cancelled because of trip cancellation, which is very well available as information, and we have integration to really get that info transmitted. Similarly, talking about medical emergency, we have our partners across the globe. There are plans worldwide cover. There are certain geographical specific plans that you buy. We have a clearly mentioned phone line number. Our application. Yeah, we have an application wherein the consumer can go in and just dial that toll-free number, connect with a partner, and the whole end-to-end hand-holding of the whole process will be taken care by a partner. So this is a 24/7 facility that is available in case of emergency, any kind of transmission from, or rather any kind of transit that has to be arranged from one location to another. If there is an accident, a person has to be moved from that particular location of an accident to the nearest facility. All of that, ambulance services and any kind of support to offer, all of that is being managed by our partners.
And how quick is this whole
It is
process?
emergency response, and in case of emergency, it would range anywhere between 30 minutes to 2 hours, depending on the criticality of the situation. So we have partnerships across the globe. Whether it is a hospital partnership or any other network partnership, those are in place for us to support our customers.
Very, very reassuring to hear. But hopefully we don't need those services when we travel, but always good to be secured. Know that you're covered in case of any eventuality. Priya, very, very helpful conversation. Thank you very much.
It was a pleasure. Thank you very much.
Wish you a fabulous 2025. More travel, more joy, and more secure trips ahead.
Thank you.
All right, with that, it's a wrap on this week's edition of Let's Talk Money. Thank you for watching. We'll see you again with the final countdown, the final episode of 2024 coming up next week.
Let's Talk Money.
You know what differentiates a Zakir Hussain from any tabla player in the world? I'll tell you what it is. I've analyzed this. See, there's a lot of learning that you do. Talim, as you say, every tabla player, every instrumentalist, he learns a lot, and there's a lot of information in one's database. Okay, so Gyani, bahut log hain. You got a lot of information, a lot of education as far as your core instrument is concerned. The difference between other players and Ustad Ji was, at that spur of the moment, from that database, which is that information that he needs to draw and present it. And it happens in a split second. So that was his mastery. The spur of the moment, that improvisation, that analysis of what you're singing and removing that information from his database and putting it out there, that nobody can do. That's why I'm saying tabla will never sound the same again on this planet.
For our audience, would you be able to give us a more relatable example out here? Like, you were doing a certain thing in the concert and this is exactly what Zakir Bhai did, and that floored you on the stage itself.
No, I mean, you tend to take some, complicated variation in your rhythmic improvisation. He catches on to it after the first beat. He knows and he's in sync with you. And you always wonder, how is this man reading you like this? It's almost like mind reading.
Well,
I'm sure that when Rahul also plays, some of the times while he's playing and suddenly he pauses, you see that Guruji has also paused in the same place as if they've been rehearsing for 10 years. I'm so sure, Purban, you agree with me. And you just wonder, how is he read you like this? So he had a different kind of brain and interpretation of what he's playing. And one thing that I've learned from him is that moment, he's there with you 100%. 1 hour concert, 2 hour concert, he's there with me, or he's there with Salim, or with Rahul or Purban or Aditya, he is there 100%. After that concert is over, maybe he is completely erases it and goes forward to the next one. But that minute, he is with you, whether he's conversing with you, whether he's playing with you, or whether he's just eating with you or just being with you, he's there 100% with you.
100% present for his co-artists and more importantly for his audience as well. I remember there would be a lot of technical difficulties when a concert is happening, say the mic falls or anything. He would just make a joke of it and continue because he was there with the audience. A lot of time feedback sounds would come, etc. He would just converse with 10,000 people in the audience with all of them feeling like he's speaking only to them. There is a circle of life. Zakir ji's first, major concert was with Pandit Shiv Kumar Sharma, and as fate would have it, his last concert tour was with you in the US as well. That circle of life, what you saw.
Hello and welcome to a very special edition of our Market Town Hall. 2024 is wrapping up and it is stock taking time. While the Nifty is up only 11% this year, the mid-cap and small-cap indices are up an impressive 27% each this year. And while we take stock in terms of winners and losers, this is also the time to think ahead into 2025 and maybe even beyond. I'm Prashant, and that's what we intend to do here. With me is my colleague, Nigel D'Souza. Nigel, hi.
Well, thanks a lot for that, Prashant. Well, we have three very, very special guests joining us on the show to help us out with exactly that. The bets, the ideas you need to track, which will make you money in 2025. Let's welcome to the show. We have Niket Shah of Motilal Oswal, Tahir Badshah of Invesco, and Rohit Shimpi of SBI Mutual Fund. Well, welcome, gentlemen, and thanks a lot for joining in.
Thank you.
Just want to also add that all the three gentlemen have managed what has turned out to be some of the best performing funds in 2024. So good on you all, congratulations. And 2025, well, you'll have your work cut out.
Well, it's a full-on starcast here.
Indeed.
And we intend to use it to your advantage. So, what we intend to do here is pretty simple. Keep it tight, simple. We'll go one round with all of them to understand their sort of mental makeup as we head into 2025. Just a top-down view about whether the market's going to be easy, adversarial, or not. And then, of course, we intend to dive straight into the ideas which, of course, are going to be important, and the themes where they want to put money behind and which you should pay attention to as well. I also want to mention we've got a full audience here, and some of the brightest minds from some of the top colleges here in Mumbai, and we intend to open the floor up for questions to the three market masters with us. So once again, welcome to the program. Thank you very much, all of you.
Thank you.
So as I said, Nikhil, let me start with you. Top down. It's never easy, so I don't want to say, well, 2024 was easy and maybe 2025 won't be. It's never easy. But how is the setup looking as we head into 2025? As I said, mid and small cap indices have done 27%, which means stocks have done far better. Go on.
Yeah, so I think if you look at in the beginning of 24, it looked like a year where there were still some opportunities available today. But as we start 2025, if you look at micro and macro both, so if you look at micro, earnings growth is kind of weakening out. From almost 35-36% earnings growth in mid-cap that we have seen in the last 4 years, we are now down to about 4 to 5%. We don't expect this to meaningfully move up, at least for 25 as such. On the macro side, I think clearly there are challenges as far as US is concerned. US has clearly articulated that there's going to be a $2 trillion cut on spending. And one really needs to see how that really shapes up as well, because that can have a meaningful impact on global markets. So if you look at the macro and micro, it looks like 2025 will be much more tougher year, probably in the last 5 years. It'll be a year where the market will be quite narrow. You need to really be very, very sharp in terms of your stock picking. You will not see a broader market that you have seen in 2020 to 2024. There'll be few stocks doing very well, few sectors doing very well. And hence, I think one really has to do a lot of cherry picking to really do very well in 2025.
Okay, interesting. Well, Tahir, what about you? What's on your wish list for 2025? Consumption clearly was a little bit slow towards the end of this year, that's 2024. Private spend as well was a little bit lower. So what's on your wish list for 2025?
Yeah, pretty much what has not happened in 2024 is what we should expect to happen in 2025. And, there are a few things which probably did not pan out the way we would have expected. For example, interest rates, in India, despite the fact that we've had interest rate cuts in the US, we've not been able to follow through. It's been about 4 to 5 months since then. And it's been a very long pause in any case. So I think that is something which probably we will look forward to happening in the course of the next year. Hopefully at the start of the year when we get some data around inflation as well as food inflation in particular, maybe the outcome on the summer as well as the winter crops. I think that should probably indicate whether we are headed for a phase where we can open up the doors for interest rate cuts eventually to happen in India. So I think that's one that we would probably kind of anticipate. The other thing is that we've also seen that very distinct deviation between in the whole consumption segment, where we've seen the upper end of the consumption segment do exceedingly well, whereas value consumption actually has trailed. And I think that is something which probably deserves a catch-up. Once again, it will be a function of what happens to interest rates, what happens to inflation, what happens to rural incomes. I think there are certain reasons which make us believe that probably that will get stronger, especially given that states and the government are now focused on rural upliftment and probably also supporting some of the stressed sections of society. So I think that is another hope that probably comes about. It will give a more balanced look to the economy as a whole. And the last but not the least is probably private capex. That's also something which has been on the cards for a long period of time, especially at the time when we are probably confronted with a slower trajectory of government capex. We don't want it to slip significantly either, but private capex could probably come to the rescue. We've seen some initial signs. If you go by probably the a bottom-up assessment of the BSE 500, then the first half probably indicates that the capex for BSE 500 is actually up 15% year on year. And BSE 500 typically still comprises of a lot of the private sector companies, right? And within which, again, the government side is actually slowed. So actually what it implies is that the private part has actually grown even higher.
This is for what period?
This is the first half of FY25 compared to FY24.
Okay. Okay.
So I think...
But tying all of this together, as Niket said, would you agree this is going to be a far challenging year? I mean, as things are, I mean, if something comes to the rescue, so be it. But as they are right now?
So there are some of these things which are imponderables, and therefore we need to see as to how they manifest. I would like to think that the first few months of the year is going to be a bit of a weak start to calendar year 25. It'll also probably be a bit driven by global circumstances. So we have the US markets actually, or the developed markets in general, doing a little better than India. We have a upward revision trend out there in the US, whereas we have probably a downward earnings revision trend out here in India. So I think that will play its role in the first few months of the year. Probably in the second half of the year, I would expect that some of the local factors play out. And by which time actually Trump assumes office and some of the rubber hits the road with regard to some of the policies that will come about. So, I hope so too. And that probably brings about a rotation.
So we'll come back to some of these points, and I think that's well explained. Rohit, come in. First thoughts. Sure. I mean, adversarial, not easy. So let's keep that aside. But what's your sense?
So on markets, I think the way SBIMF in our equity strategy framework, we look really at three parameters, which is valuations, earnings, and sentiment, right? So when you start off with valuations, now clearly when you just look at the trailing PE ratios, even if you adjust for earnings cyclicality, those are at elevated levels, right? I think it's only when you adjust for the level of interest rates that those ratios are more in middle or median kind of territory. So that's okay as a starting point. It's not the best where you would want to be, but it's not too bad either, considering where interest rates are. So that gives you your asset allocation type perspective as well. When you look at valuation, when you look at earnings, actually, that has been a super bright spot in the last few years post-COVID, and we're currently actually going through some probably mid-upcycle pangs, to say the least, considering how the last couple of quarters have been for the overall market. And even excluding those one-off type stocks or one-off type sectors, we know them, the OMCs, the metal stocks, etc. Even considering that, taking that out, earnings have not been very great over last couple of quarters. We do think that is kind of pulled down by two factors. One is the monsoon issues, some of the election-related slowdown that we've seen. We are actually hopeful that that comes back over the next few quarters. typically a capex upcycle or an earnings upcycle does not fizzle out as soon as we're probably seeing market experts predict at this point. So I think that's a little more durable theme that we're hopeful on. And the third one is sentiment, right? And you can't exactly predict markets, but you can tell the temperature of the room you're sitting in. And clearly for the last few years, last few quarters, markets have been kind of hot, right? If you look at retail investor sentiment or, subscriptions in IPOs, etc., that gives us some sense. So, sentiment is off peaks right now, considering the fall we did see in markets back in, if I just look at October, November, for example. But on balance, I think, with valuations being middling relative to interest rates, with earnings seeing some pause, maybe they pick up, over a few quarters, and sentiment still being a bit elevated, probably the market outlook over the next few, next few quarters, next few years is going to have to track how the earnings trajectory behaves. And there we're not as negative. We think that over a few quarters, over a few years, that will tend to pick up in line with the overall, capex cycle kind of coming back.
I just want to ask one local and one global question. So, and maybe a yes or a no, but maybe not yes or no, maybe two lines, but quick ones. How critical is the government spending and interest rates, both to work for markets to do well in 2025? And from a market perspective, are we at that point that we need those to move in the right direction, more government spending and lower interest rates? Nikit?
So I think, yes, we do need that. Government spending was down almost 28% for the first half of the year. We expect that to pick up in the second half, but it's still going to be missing targets for the year.
Okay.
So definitely government spend would be quite important if you want to ensure that the animal spirits of the economy continues to remain alive.
Sure.
On interest rate, I don't think inflation is coming down anytime soon. You look at the amount of freebies that has been given in the election in different states. It's been about close to 2 lakh crores. A lot of people don't realize it's 2.5 times Manrega outflow, right? And that is ensuring that the inflation on the food side continues to remain fairly high. You look at the last number that RBI reported, about 9% food inflation. When you have a 9-10% food inflation, core inflation continues to remain quite sticky yet. I don't think we are going to see an interest.
So rates will remain high, government spending must come back. Tahir?
I would tend to agree. So basically, we need government capex definitely to continue, and I think that is the core of the Indian economy, at least.
You mentioned private sector has to pick up the slack, but we've been hearing that for a while. It's not. I mean, maybe it'll happen. Hopefully,
some signs. So
the government has to.
Which is corroborating. So I think government has to, and it in up cycles of investment cycle, rising investment cycles, government has always played a very important role. They occupy nearly about 70% of the capex that has to be done. So obviously, you can't have a situation where they are absent from the market. All I'm trying to say is that probably if you are seeing a little bit of slowdown on one side, if there is a pickup on the other, then we probably are balanced out. So that's what we're looking forward to. There are some telltale signs, there are some hard numbers which are actually visible. We also probably look at project awards, etc. And when we meet many of these companies, so for example, all of us actually interact with a lot of corporates, and I would say 8 out of 10 companies in our interactions, anecdotally or even otherwise, and you can look at the fundraise, etc. Part of it is probably for debt repayment, I agree. But most of them are in a capex mode. I mean, whether they are doing brownfield, greenfield, acquisitions, etc. So all of them are indicating at a situation where they want to increase capacity, because for the last few years they've not done so. Last many years probably they've not done so.
So you're satisfied with what you're seeing on ground as of now?
So the trends are good.
Trends are good.
It should probably, interest rates is not something which we need to have. It's not a must have, but if we get that, then that's something which will add on.
What about you, Roth?
Yeah. I think that actually, you are seeing capex happening in the private sector. It may not be to the extent that which we kind of say that it's taking up the entire slack from, some slowdown in the government space that's being seen. But there are interesting areas where it's happening. So whether that's power is well known, right? That's one where everyone's investing in renewables, etc. You're seeing a lot of ESG type capex happening on the sustainability side. And finally, the manufacturing opportunity of India. That's a big deal. I think we've started seeing some small strides out there. Maybe the export story out there within manufacturing can pick up with, let's say, the global economy, including, say, the US markets or the US economy improving over the next few, quarters and years. And that, I think, that will take, that will get the private sector involved really on the capex side. When it comes to rates, really, like, the others said, we're not necessarily in the camp which is calling for sharp interest rate cuts, but probably some of the, action you're seeing on liquidity. So the CRR cut, for instance. I think that is starting to help out. And, we didn't talk about it earlier, but I think financials is, the elephant in the room, right? Large cap banks have done really nothing over the last few years.
Yeah.
And I think that gives an interesting catalyst out there too.
Absolutely. Just one round on global. Economists think Trump will do what he will do. India will not get hurt. It'll probably benefit. Agree? Disagree?
So I think, Trump this time around has a much better planned cabinet, unlike his first term, right? He obviously has Mr. Musk along with him. So I would definitely agree that what is going to happen with, say, Mexico, Canada and China would definitely benefit India to a larger extent. And there are multiple themes.
At the margin, benefit. And we'll talk about those themes in a bit, Tahir.
Longer term benefit, but I think in the short run, we will probably also be impacted.
Rohit?
Yeah, I think there's going to be a lot of noise, and you're not sure whether some of it is posturing to kind of ensure that you get a better deal out of each trading partner.
Okay.
But I think there are opportunities and there are some risks as well.
So noisy 2025. So let's take a quick commercial break at this point, and then we'll come back and we'll dive into the real stuff, right? What are the themes to back? And that's what I think our viewers are going to be interested in as well. So let's take that break, get into that quick commercial break. We are right back with the three market masters, and of course, this very interesting chat.
While he played with your father, to the time when you played with him, and till the last concert that you played with him. If you could give us that experience, what you learned from him, and just celebrate the life of the maestro.
Apart from, of course, having my own father as my guru, there are so many other great artists one learns from. And, Zakir Bhai was one of them. And each performance, I think, playing on stage with him was something you'd take back. You'd wonder how this person who is so talented, who has seen everything in life, has seen all the success, would be so attentive when he is accompanying an artist on stage. It's not about him. It's about the artist. And the little detail, he may have done it millions of times accompanying various different musicians, but he was so attentive. He was not all over the hall. His mind was not anywhere else, although he has a million things on his mind. But each, if you're playing a particular tal, what we are playing, he's listening to the alap when the tabla is not being played. These were qualities which were completely, of a different level altogether. And his observation level, anything and everything was observed so well. In fact, I remember in concerts, after concerts, there was no talk about music. It was just about everything else under the sun except music. An amazing conversationalist and amazing person to just sit and imbibe from, So many memories, right, from my childhood when he used to come to my house. He used to host some amazing home parties on my father's birthday, which was 13 January. So I remember Nusrat Fateh Ali Khan Sahab, and so many other great artists coming, and Zakir Bhai would host the entire evening. From that time, when I was about 7 or 8, to this time now, having seen my father on stage with him, and recently, just a month ago, performing with him, it's just a cycle, which is kind of, I have no words. It's pretty amazing to see this, an artist of his qualities. It's very hard to come by.
Purbayanji, if you could give us a musical tribute of a rag that you could just give some notes of.
Well, I would like to mention that I was incredibly lucky, and even now, Shankarji is also one of my mentors and gurus, and I was incredibly lucky to be able to do this one song during the times of the pandemic, which was called Shiva Shankara. And I remember I had, asked Shankarji, and of course, he very kindly agreed, and he said, yes, I will, do this. And then we were kind of talking about, who else we could have on it. And just on a whim, I thought, I would, talk to Zakir Bhai and ask him if he would. So I texted him and he called me back. And I said, Zakir Bhai, here's this song that Shankarji very kindly agreed to do with me. So can we have you do something on it? And in his characteristic fashion. He asked me, what is the something that you would like me to do? And I think I kind of bumbled and I said, well, play some tabla on it. And it's a song that we did, and it's been a very, very much cherished memory. I still have some of the video rushes of when we shot his video or on Zoom, actually, when he was in his studio in California. And it's a little composition which if I may, I'll just hum the first line, but it's sung by Shankarji, who the man himself is here. So it goes back.
Welcome back. Well, we heard about what our fund managers expect for 2025, but let's zero it down a little bit more and let's get the top bets from there. Nikhit, you go first. Tell us, what is that top bet for 2025?
So I think we do believe manufacturing will really play an important role as we get into 2025. So if you just look at the broader numbers, US has about 5.5% of the world's population, contributes to 25% of world GDP.
Okay.
Europe has about 4.5% of world population, contributes to 18% of world GDP. China has 17% of world population, contributes to 17% of GDP. India has 17.5% of world population, contributes only 3% of world GDP.
So that's what the opportunity.
So there has to be a significant movement, from mean reversion, right? And how do you do that? The only way you do that is manufacturing, and within manufacturing, you have to do more exports, right? That's how you get incremental GDP from 3% to 5 or 7% over a period of time. If you look at manufacturing theme per se, if you look at China and India, both of them started in 1970s at the same level. And China really took off from 2005 all the way to 2015 in a meaningful fashion. That's where globalization was being talked about. For India, this is probably the best time to happen because of anti-China sentiment that we are seeing right now. This is probably the best window to really accelerate on the manufacturing side. Also, if you look at India, is generally known for IT services, right? So if you look at globally, 20% is IT services or services export that we call, and 80% is merchandise export. So merchandise is far larger category than services. In India, it's 60-40, 60 being services and 40 being merchandise. So I think the real move that the government has done in terms of PLI on the manufacturing, say mobile PLI, component PLI, which is likely to come announced shortly, all of them is actually moving in direction of ramping up the merchandise export from India. If you look at someone like, say, Apple this year is likely to do about $10 billion of sourcing from India. This used to be zero. If you look at India, in 2014, 78% of mobile phones was imported. Today, it's negative 25%, which means we export 25% to other countries, right? Thanks to PLI, obviously. So I do believe a lot of countries like China, if you look at Vietnam export is this year is about $120 billion. In 2013, Vietnam and India were at the same level. So we really need to do a lot of catch-up. And some of these PLI initiatives announced by the government are going to be quite handy as we go forward.
Just to get the number, you said 10% of the sourcing Apple does is from India.
No, $10 billion.
$10 billion. $10
billion
right now. And
so if you look at
exports annually out of which is made, which Apple sort of exports, merchandise exports is now, they've said that they want to get to about 25% of the overall sales, right?
That's correct. That's over a period of 5 years.
Right.
So which is again a very large size.
When we speak to most of these EMS companies, they all kind of are still with the Android ecosystem.
Correct.
Very few work with the Apple, actually.
Right.
So will that change, you think?
It will, right, with per capita. If you look at US per capita is $81,000. China is at $13,000. India is at $2,500. It's 2.5. If it moves to 5,000, there's a large population willing to buy Apple phones in India itself. Right. So India will become de facto the second largest market for Apple in the next 5 years.
So for example, a Dixon, right, works with phones are still the biggest segment. They work with all 5 Android clients.
Right.
So what next? I mean, they're getting into other components, etc. But within phones, Apple is a very high value segment.
So if you look at mobile phone industry, is about 4 lakh crore. From a manufacturing standpoint, it's about 3 lakh crore worth of sales that they do. Right? Of that 3 lakh crore, about 50% is semiconductor, which is 1.5 lakh crore. India virtually has no role to play, at least till FY28. Hopefully, the first foundry of Tata's will come and we'll have some semiconductor from there. The balance 1.5 lakh crore is where the opportunity size lies within the component manufacturing. Till now, if you look at prior to COVID, India was doing large amount of trading. 2020 to 24 was more of assembly. The first time we are now getting into manufacturing in a meaningful fashion because our value addition was only about 14-15%. Now we are really going to 50% because balance 50 is semiconductor, which you can't do it. So effectively, the first signs of manufacturing will be visible now with PLI of electronic component manufacturing going live. And you will also see that in other categories. You are seeing in compressors, right? There are companies who are now doing tie-up for compressors in India, with 51% owned by an Indian guy and a 49% owned by an international guy. So I think all these moves will really play a big role to really change the unit economics of the way manufacturing changes in India.
Valuations, Niket?
It's quite punchy, but I think, in India, you have to pay, if you look at Midcap itself, more than 65% of Midcap are trading at more than 40 times 1 year forward earnings. So anything which is high quality and high growth is not going to come at, 10p or 15p, right? It's going to be expensive in India.
Motilal on the private equity side, I think, is the only investor in Dixon. They put in $40 million back in the day, and that's the only money which I think Dixon has raised, right?
That's correct.
Ever in their life.
Yep. And apart from the IPO.
So apart from the IPO, do you need to do something? I mean, you have to find something very small. Is it possible, or you think it's
quite possible? I think if you identify some of these themes early in the cycle and play through the cycle, I think there is reasonable amount of money to be made. But you have to be ahead of the curve when you think about some of these newer themes. You have to identify which are those companies which have those capabilities. Like, for example, if you look at mobile phone, the real essence is display, camera modules, and to some extent plastic component manufacturing, which is quite relevant.
So just name one or two which you already own with full disclosure. I mean,
no, I think we own Shelly Engineering, which is a public domain information.
And I think they work with Apple.
I don't know, but I think if you look at, they are very, very large on the plastic eco component system.
Yes.
So if you look at mobile phone, there is a large amount of plastic component involved there.
Sure.
So we'll see how that plans.
And this is one of your recent entrants in 2024, I think.
Yes, it's been about 5 months already.
All right.
Tahir, do you want to talk about CDMO, which is a big sort of area of focus for you? What's the thesis?
I think this is obviously about companies in India essentially benefiting from the China plus one story, especially with regard to this whole space in small molecules as far as pharma is concerned, and even things like peptides, etc., which are coming into play. Especially there are a good number of companies which are involved in small molecules. Many of them have actually even started on the peptide molecule space, especially with regard to GLP-1. So small batches right now, but can probably pick up over a period of time. So I think that's one space that we clearly like. The other one that we are probably very excited about is on the domestic context is the power utilities in the power segment, but more particularly within the power value chain, the transmission portion of the power economy. And that's because we, as we all know, are in the midst of this massive change where we're looking forward to having at least 50% of our installed capacity being in renewables. This calls for a significant overhaul, upgradation, change in the transmission system, because you're now actually going to have a mix of different types of power, right? We're largely dependent on the transmission system was largely driven by coal-based power up until now, and now you're going to have a mixture of wind as well as solar and coal.
So transformers, companies which
transformers, all kinds of equipment which are related to actually upgrading the whole transmission system.
The grid, basically.
The grid, because you are going to have instabilities induced because of this intervention of different kinds of power sources. So, and we've not done anything to the power transmission system in a very long period of time.
What kind of names? I mean, just to kind of
talking about companies like Hitachi, GE Vernova, these are kind of guys who are going to, maybe even to some extent, even the likes of Siemens and ABB. Many of the multinationals probably will dominate here. There will also be the ancillaries, which are, as you mentioned, the transformer-related companies, where you have a fair number of Indian players as well. So I think that is the ecosystem that we like. We believe that that's something which is probably going to be a lot more durable. And this process is long enough, because you're talking about, even otherwise, you're talking about power capex being what in the vicinity of some $400 billion over the next 5 years in order to do everything. Generation as well as transmission. So I think that's a huge number, and we are crunched for time. We are talking about the next 5-6 years, because we have to accommodate that 500 gigawatt which comes out of wind and solar. So I think it's not a very long, duration theme, and at the same time, it is probably concentrated among a few players. So I think there'll be a few of them which will be really, really large beneficiaries.
No, that's interesting, particularly on Hitachi. I had visited the company around 15-16 months ago, and they were talking about HVDC orders. Normally used to come once in 4-5 years.
Right.
Now they're expecting it once in every year. So it tells you the kind of,
We saw a couple of those actually come about.
Indeed. Indeed. Yeah. And, that's...
I think that's just the start, and we are probably going to see
many more
Indeed.
as they come about.
All right, Rohit, what about you? Tell us, what's the top bet for 2025?
So mine is the most boring in the room, which is just the mean reversion factor of lower end consumption. And I think we've seen this, happen in a big way post-COVID, that the recovery has been extremely K-shaped, right? So you've seen the lower end, particularly, rural has been impacted quite significantly.
It's a good day to talk about lower end consumption. Vishal Megamart had the Vishal listing. Go on, please. Sorry.
That's right. So, so to that extent, we've also, if you go back, even something like two-wheelers, been doing badly from 2019 onwards, right? So it's even before COVID that space was probably struggling.
Yeah.
Now that it's been a while, there's been some change at the margin in terms of government policy, at least from the states coming out with some income transfers, etc. I think that is something which probably is driving a bit of growth out there, and just the fact that it's been poor for so many years, right? So just that catch up, the sticker shock in terms of two-wheelers kind of finally consumers are getting used to that. So I think that's one where there are probably
specifically any sectors there.
I would say two-wheelers is an interesting one. Even within passenger vehicles, we've actually seen the small car segment has done nothing, right? It's all been SUVs, right? So potentially spaces like that, there's more tier 2 towns value retail. I mean, you did speak about it.
So you will be playing more OEMs, or will it be auto ancillaries when you're talking about this theme of two-wheelers as well as?
So the good part is that in any of these themes, right, they're big enough to play both. You can do OEMs, you can do ANCs, and that's the great part, where it's not always so obvious. You'll find even potentially industrial names which are levered to those segments, and it's kind of hidden out there. You've got to do a bit more work to pick them, but that's something which can work out, right?
That's interesting. Mean reversion, lower end picking up, and premium maybe just sort of slacking off for a while. It's done very well. It's been a good sugar rush over the last couple of years. Right. So we've got 3 ideas, but we've got more to go. 3 more, 4 more, 5 more. We'll do all of that. Let's take another quick commercial break here. Stay tuned. We are in conversation with the 3 market masters here. Themes for 2025 and ideas to bet on. Stay with us.
Shankara Mahadeva, Shiva Shankara Mahadeva, Parameshwara Amrita Rupa Karunakara Dhyana Priya Shiva Shankara Mahadeva. It was something that we did during the pandemic.
Our collective prayer will give him a lot of peace.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC-TV18, Mumbai. Hello, I'm Surabhi Upadhyay and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
Welcome back. You're with us here on this special market town hall, and we are ideating about what to put your money into in 2025 and beyond. And we've got three young star fund managers with us, and we're sort of bouncing around ideas. We got one round done earlier. Let's get to the next one. Nikit, GLP-1 is a theme that you want to back, and there's a very specific opportunity.
Yeah.
Probably after, I think, Lipitor, perhaps the largest drug category in the world, eventually, right?
Yeah.
Talk to us about that and how to play it here.
So I think, obviously we've seen some large molecules like Revlimid in recent times, and GLP-1 obviously is probably the largest in mankind. We're now touching broadly about $50 billion worth of sale. There are still countries like Europe, India, some part of China, which still doesn't have, a GLP being launched at scale. So a lot of states within Europe and China don't have GLP-1s. And I think that clearly means that this particular molecule will continue to grow at very rapid pace, at least for the next 3 to 4 years. Now, within GLP, there are two major ones. There are three, in fact, but two more relevant, which is liraglutide and semaglutide. Liraglutide is already off patent, but I think there's an exclusivity to one pharma guy till December 31st, which means from 1st Jan 2025, it gets off patent. And then there will be a lot of companies who will, try to tap on liraglutide. Sema gets into off-patent next year in Canada and Brazil. Canada is second largest market after US for semaglutide. And so is Brazil's probably the top 5 markets, which incrementally means that, again, there is significant size of opportunity for a large Indian pharma player, generic guys, to do first to file or, tap into that market. Now, there are multiple ways to play. One is obviously you play the API player. If there's an API player who will supply the API to the generic guys, that's still a very significant size of opportunity. The second is the generic guy itself, who decides to launch a generic version for Lira or Sema as and when, because the Sema gets into off-patent in 2032 in US, but other markets are still quite large, which incrementally means that there is a generic opportunity for the generic pharmaceutical players. Third is device manufacturers. Most of the GLP-1s are actually consumed through an auto-injector, which means that, and it's plastic in nature. So there is a significant amount of opportunity for device manufacturers because it cuts across all the players. Every player will need a device manufacturer. And there are a few Indian guys who have the capability to do. So I think these are the three ways you can really play this theme.
And you did mention Shelly does.
Yes.
Shelly's into that space, which
Yes.
you already have already backed, right?
Right.
And between API and sort of actual generic companies, is it a big if, or you think?
I would really go with the device manufacturer because it's quite critical and it cuts.
Whoever makes it, the devices too.
Yeah, because everyone has to go to the device manufacturer effectively.
Okay. You, Tahir, briefly mentioned CDMO, and I think I also heard GLP-1 earlier before you started talking about power transmission. Anything you want to add to what Nikit said?
No, so I think there are a few companies which are also in the CDMO space, which are operating, trying to be end-to-end players in the spectrum. So Nikit mentioned about certain companies which are in the specific buckets, but then there are some of them which are actually trying to do things end-to-end, and they're probably even enhancing their capabilities out there. We've seen a couple of new listings also which happened recently, which are in that area, and some of the existing companies as well. So I think that's the other part of the CDMO story which probably we
what
think
kind
will
of names? Just purely from an
we're
educational
looking at, let's say, we have a probably reasonably large position in a company called Suvain. Suvain Pharma is essentially one of them. So I think that's one. And then there are a few others also which we have smaller positions in. But Suvain is the largest that we have, and it's one of our larger bets even in the focus fund. It's there in the public domain, so I don't have a problem in mentioning it.
Okay, all right, Rohit. What about you? I believe you're quite bullish on some of these real estate completion themes. Real estate ancillary, so to call it.
Yeah.
Run us through that. I mean, what are the data points you're factoring in?
So we all know real estate, residential real estate has been in a good cycle, and it's been coming out of 21. That's been one space which is doing really well.
Yes.
Housing inventories have been low, so new launches have also been picking up over time. Really speaking, the new launches have picked up in a very big way in calendar year 22, 23, 24, and that's actually forecast to increase at a quick pace going forward as well. Now, if you go back to the previous real estate upcycle, right, I'm talking about the period between, loosely speaking, between 2004 and 2011, let's say.
Yeah.
You will recall that actually the peak kind of launches and peak purchases came somewhere in 2010 to 12, right? But then, if you recall, the peak of the completion plays, when you think of companies like tiles, ceramics, even consumer durables, etc., that actually came somewhere in 2015 to 17. Right, so I think that's a nice kind of space that one has. So those companies right now, the initial plays, like for example, housing pipes have done well because that's what's used in the initial phase of construction. The later cycle, when you're kind of getting your home, when you're finally doing the finishing in terms of tiles, ceramics, and finally filling it up with whether durables or even other products like furniture, mattresses. I think there are interesting kind of plays out there. Which today they're not doing as well because clearly the homes are not completed yet, so you can't spend on them just yet.
The builders have put the checks in, but the homes, the keys have to be delivered.
Yeah.
So that is a space that you're looking at. Right?
Just talking about that theme, what about paints? What's the view out there? Because that's been a sector.
So paints, we've been a bit selective out there. We've not kind of been across the board. It's not that we've kind of had huge holdings out there. We've been looking at it a little on a stock-specific basis, but clearly that space, like a lot of the consumer space, has had very high valuations in the previous decade, which unfortunately has led to new competition coming in. Right, when somebody sees that kind of market cap created by some of these top companies, that is an invitation for competition, and clearly large groups have been getting into that. So one wants to be a bit careful. Having said that, do you never want to get into that space? Probably not, because these are high quality companies, great, great barriers to entry, great track records, good managements. You want to look at when you want to get in, and frankly, we've been a bit selective, but it's not been a whole hog kind of jump into that space just yet.
Niket, consumer discretionary is something you mentioned, and I think Rohit was also talking about that. What kind of sort of ideas here within the discretionary
I would say
space?
jewelry is one space which is just holding up, right? Every category has gone through ups and downs this year. Jewelry continues to go at 25-30%. So that's a very good hiding space in the current market. And I think few of the value retailers, who have done quite well, Lights of Trend, who have done extremely well in this year. And we do expect a lot of newer businesses to get added to that existing, Zudio or West Side for as such.
Value seems to be like a common theme. Value retail and so the lower end of the segment, right?
Yeah.
I think Tahir, you also like that space, and Rohit, you also mentioned that. So that space should do well. Okay, what we'll do is we have a couple of our own sectors that we want to ask, which I didn't hear quick commerce at all. That's been the big winner. I mean, Motilal Oswal, of course, is a big backer across all three companies, right? So we'll talk about that. But let's take another quick commercial break. What we'll do is we'll come back and open it up on the floor as well. So, the audience, the live audience which is here, will have an opportunity to take questions to all three guests here. So stay with us. We're right back.
Markets are betting big on affordable housing. You look at the kind of stocks that have risen. We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
GDP growth rate was lower than 5.4% in 2 quarters. Quarter 4 of 21-22 and Quarter 3 of 22-23.
Welcome back. Well, we got all the top themes that we are looking at in 2025, but as promised, we're going to open up the discussion to the audience as well. They have got some queries, and my colleague Yash is in there. He's going to be pulling up a couple of them. Yash, over to you.
Well, thank you, Nigel. Thank you, Prashant. And of course, the Market Starcast for that quality discussion. And to make it more interesting, we've got very curious finance minds from colleges across the city. Let's open the floor to those questions. Sir, if you could start, of course, introduce yourself and then go ahead with the question.
Okay, so good evening all. I'm assistant professor in Narsimunji College, myself Gopal Krishna Chodnekar.
Welcome.
Okay, my question is that now the young people from India, they are investing a lot in equity market, but at the same time it is creating issue for the deposits in the bank. So how do you see this issue, okay, specifically for the banking sector and investment in banking sector both? So that is my question.
I'll take that. You want to take it? So actually there's a bit of a myth that the money which goes to equity markets moves out of the banking system. It doesn't move out of the banking system. Okay. Simple example, if I buy a share, you sell it, if you get capital because of you sold the share, that money goes to your bank account. And it debits from my account, goes to your account. So whenever equity market tends to blossom, that doesn't mean that deposits are going to get impacted because the money only remains in the banking system, right? Money doesn't move. The only time the money moves out of the banking system in case if the FIS sells out and moves out, that's the only time. Otherwise, yeah, the color might change. Instead of CASA or term deposit, that can change. But largely, the money doesn't move out of the banking system.
And what is?
And also, just to add that what actually drives deposit creation is actually credit creation. So if you're going to have a weak credit cycle, then that's also going to be an additional headache as far as deposit creation is going to be concerned. Because once you start developing credit, then it actually starts accumulating as deposits in the system in one account or the other. So I think partly, yes, you are right that maybe some transfers do happen from one account to another, but by and large, I think to ensure that if you have a good deposit growth, you need to probably ensure that the credit cycle is maintained. We've seen a little bit of slippage as far as the credit cycle in India is concerned, and but we've also at the same time starting to see that now deposit growth and credit growth are actually moving in tandem. Earlier, they were deposit growth was significantly lagging credit growth. So I think that's a good sign in a way, and hopefully it will probably start to develop a little more strongly in the course of 2025.
And I would just add actually that regulation has been quite proactive in that sense, seeing some of the issues that the US banking system, for example, saw in early 2023 with deposits leaving some of these online banks, right? I think so RBI had been quite, specific with banks in terms of asking them to look at loan to deposit ratios, because that's certainly important from a overall financial stability perspective.
Okay, let's take a few more questions. Yash?
Yes, we'll take another question from the front row itself. Ma'am, you had a question. Please go ahead.
Hi, I'm Nabanita. I am analyst working at Anurati Wealth. My question is, this has been the year of value. And do we expect a mean reversion? Do we expect growth to come in play in the coming year?
So I would like to think so probably that you will probably see a improvement in the growth part of the market as well during the course of 2025. Will it come at the cost of value? I'm not too sure, because you are probably going to see. So there are some parts of the industrial economy, and we talked a little bit about that in the last in the last hour. Those are also looking reasonably strong. And if we probably were to see the combination of government capex and private capex continuing, I think value will also find support. But along the way, I think the one important trigger, which once again I go back, probably will drive value to make a comeback, is probably the direction of interest rates. We're not necessarily looking forward to a very deep cut in interest rates, but even if we get a shallow cut, a shallow cycle downwards, I think that'll help the cause. Rohit talked about the recovery as far as the consumption space is concerned, especially as far as value consumption is concerned. I think many of those companies are actually growth oriented. So if they make a comeback, probably the growth portion of the market starts looking better.
Right.
So there is that anticipation that some part of it should unfold in 2025.
Yash?
You want to probably add something?
Can I just add?
Yeah. Yes, please.
So on this value versus quality versus growth debate, right? So we at SBI Mutual Fund run a quant model, right, which runs different factor indices. And when any of those hits an extreme, either on the upside or the downside, that's when we go back and rebalance. So earlier this year, somewhere around April, our model was actually showing that quality had hit the bottom in terms of our lower band threshold. So that's when what we do is we rebalance all the factors that we're looking at, quality, growth, value, momentum. We rebalance them all to an equal 25%. And that actually happened earlier this year. So, to that extent, we are kind of, while we don't try to predict which style is going to do the best, whether it's going to be quality, growth or whatever, but we do think that, it's a good time to have rebalanced, away from value to an equal right now.
Okay, we have another question from the gentleman at the back. If you could just introduce.
So hi, my name is Sami and I'm a student at this moment. So I have a question regarding the US markets, to be specific. So after the US Donald Trump's victory, it has been a euphoric moment for the markets, and specifically if we look at the FANG and the Nasdaq, it has given a phenomenal return. So and even after the news of the SoftBank putting in around more $100 billion, it is about to give more returns. So do you see any near-time corrections, and has the decoupling effect really happened with the Indian markets, because we do not see the such run-up in the IT sector here even after the bolstering of the dollar?
Okay.
Yeah, so I think if you look at tech itself, I think the reason why tech did very well the day Donald Trump was announced the winner, the next day in Indian markets, the largest gainer was a tech, because I think he's already articulated the tax cut that he plans to do. Whenever there's a tax cut in US enterprises, there's significant amount of free cash flow which is left in their hand, which typically tends to go towards IT services spend. For US companies, IT services spend is like a capex. For Indian, it's like OPEX. We don't spend like billions of dollars on IT services. But these guys, because they have global operations, they do spend billions of dollars on IT. And hence, I think with tax cuts happening, tech should do quite well in US for next year. And it can be the sector for the year.
Okay. Maybe take one more, Yash? I mean, if you can. Just a very short one, please.
If anyone who has a question can raise their hands, please.
Good evening, everyone.
I'm Dilsha Chodasama and I'm preparing for my CFA level 1. So my question to Niket sir is about the QGLP approach and how does it ensure that the investment process remains consistent and the returns are on par with the benchmark even during the high periods of market volatility?
Yeah, so I think QGLP simply stands for quality, which is not only quality of earnings, but quality of management, right? And there are a lot of filters on it. One is return ratios, capital allocation that the company does, cash flow analysis of that businesses. So quality of business and quality of management is quite important. G stands for growth. Fundamentally, we like to buy businesses with at least 25% plus growth. And hence, we fundamentally believe that whatever is the earnings growth, assuming multiple remaining the same, should be the return of the stock price over the next 1 year. So if a business is growing at 25%, the stock price should give you a 25% return, assuming P multiples remaining same. L stands for longevity of the growth, which essentially means that you buy businesses which are a little more structural in nature, say food delivery business or multiple other businesses. So we don't like to buy businesses which are cyclical in nature, like the metal business. It's quite difficult to predict next year what steel prices are going to be, right? So L stands for longevity of that growth, and P stands for price, which is buying them at the right valuation, which in current environment is quite difficult.
And that's where the magic happens, right?
Yeah, that's where the magic.
All of them.
So you have to buy it early. Yeah. You have to predict earnings early. And if your prediction of earnings is sharper, then you get stocks at a lower multiple.
Well, that gets us to a nice close on this very, very wonderful discussion. Niket, Tahir and Rohit, great to have all of you here. I want to thank the audience as well for being a wonderful listener and asking all those intelligent questions. Yash, thank you very much wherever you are. That's it on this Market Town Hall special from all of us here. Goodbye. Thank you very much. Happy holidays, and we'll see you in the new year.
So it's important to understand that this drop happened just 2 quarters in the last 12 quarters that we're talking about. So let us not sort of pick on that one and predict future. This has been a steady growth and a steady sustained growth. So I'd like to place that perspective with the numbers before me. The regular union budget was passed by the newly constituted Lok Sabha post-parliamentary elections in middle of August 2024. Effectively, the implementation of new announcements of this government commenced after the Appropriation Act was passed by the Parliament in August 2024. Effectively, it is from August that we are starting to give emphasis to many of the things, inclusive of capital expenditure, and therefore we are now talking within 4 months after the full regular budget was presented in August. So the situation is no different from one seen in earlier years when parliament elections were conducted. So that's a very important consideration which I would like the honourable members to take on board. When annual Lok Sabha elections happen, those years do have a certain flow of resources, do have a certain ground-related expenditure happening, and when it picks up, the growth rate also picks up. But the blip is got to be understood in the broader context. Headline inflation was controlled at 3.9% between 1999 and 2004. Between 2004 and 2009, inflation surged to 5.6%. And again, you can compare it with the previous 99 to 2004, which I'm talking about. But when you came to 2009 to 14, it spiraled to 10.2%, representing a catastrophic failure to control rising prices. Come again to 2014 to 24, inflation was brought back to 5.1%. The pattern that is emerging, if you look at it for the last 25 years nearly, is NDA period times, inflation is well under control, whereas non-NDA, particularly UPA, it touches double digit. So let us not forget this pattern when we want to criticize one another about inflation and inflation control. Number of taxpayers disclosing, this is a very interesting information, sir. Number of taxpayers disclosing foreign assets were 60,467 in the year 21-22. Now it is 2 lakh taxpayers in 24-25. The Black Money Act is actually having a deterrent effect on a lot of taxpayers that today they come forward on their own to disclose their foreign assets. Sir, very important data is 82 cases till 30 June have been referred to the ED under the PMLA Act. 82 cases. Sir, specific numbers were asked. Total tax collected under the BMA, Black Money Act, in crores of rupees is 2,655 crores as of June 2024. Total money raised under the Black Money Act. Number of cases in which assessments have been passed are 697. Demand raised 17,520 crores. Number of cases in which penalty has been levied, 341 cases. Penalty levied in crores, 9,971.47 crores. Prosecution launched, 163. Number of cases where assessment is pending, 531. Number of cases where penalty initiated and pending, 532. So these are the actual figures to show that the PMLA and the Black Money Act are actually giving their due returns of the taxpayer money, which is got to be obtained for the sake of the country.
Welcome to this Look Ahead 2025 Market Town Hall. While we've been talking to public market investors all the time, what we're doing now is speaking to two top private market investors. This is a space which has really exploded over the last couple of years, both in terms of new deals and big exits as well. I'm Prashant. With me, my colleague Mangalam. Mangalam, hi.
Hi, what an incredible lineup that we have today. We're joined by Norwest partners Niren Shah and Gaja Capital's Gopal Jain. Between them, these firms manage nearly $16 billion in assets under management. While Niren is focused on late-stage venture to early private equity space, Gopal is growth-focused and operates in the mid-market segment. So between the two of them, we have the entire supply chain or the entire chain of VC and PE.
Oh, absolutely. And I think they've been at it a long time, and they've got some really big winners under their belt. So, gentlemen, thank you very much, both of you, for joining us. I want to start with a slightly top-downish kind of approach because you guys can afford to do that, right? You're not tied to the benchmark and sort of, have to answer to investors, but not every month or every quarter. Niren, in your sort of career, and I'll come to you, Gopal, as well, we're in a bit of a slow, soft growth patch, right? The growth is in the 5% handle. It's made no difference to public markets, at least. Does it make a difference? Has it made a difference? Because we've encountered these slow patches earlier as well. Just what's your sense, and what's the outlook looking like for India and investing?
So I think that no, it does not make a difference, these slow growth patches. We're really looking at sort of 8-10 year horizon. And if you look at the global sort of macro, I think India is in a sweet spot. I often say this, that if you were to be in India and to be in business and investing, this is the best 20 years you're going to get, going back 100 years and going forward 100 years. Wow. So as Norwest, we're very bullish about the sort of country where we are and the kind of growth we're going to witness. I think you will have, for every 3 steps forward, you may have half a step back. And that's part of the parcel. But I think if you just stay focused on the next 15 years, I think India has a great story coming.
What about you?
So from the time I started investing 1991, India was a $300 billion economy. And despite the 3 steps forward and 1 step back, it's grown from $3 300 billion to 3.5 trillion. And we can talk about whether it's going to take 5 years or 7 years or 10 years, but we are going to become a $10 trillion economy, say in 10 years. So in the next 10 years, this economy will create more value than what has been created in the last thousands of years.
Right.
What a phenomenal opportunity. Right? Look at the Sensex. The Sensex was what? At its peak 2,000, 30 years ago. It's gone to 80,000. Compounding is the eighth wonder of the world. Investors cannot constantly trade in and trade out. You have to lock into secular trends and ride them. And one of the best secular trends in the world currently and for the past many years has been India.
Okay. Naren, let's dive. I think our audience, we've got a great audience set of students here from across colleges in Mumbai.
Hi guys.
And of course, our audience who's watching us on TV also wants to know themes, right? Which, as they say, fish where the fish are. So we're going to ask you where the fish are. Naren, quick commerce is what I want to start with, and I think you should have expected that question. Yeah. For those of you who don't know, Naren and Norvis were one of the early investors in Swiggy, and I think they invested at a $30-35 million valuation. Swiggy, of course, is now a $16 billion company, so it's been a huge winner for you. So let's start with that space. You're still bullish on the space.
Very bullish on the overall space, and of course, a big thanks to the Swiggy management for innovating on this space. So I think for us, according to me, I mean, it's very rare that you see in a country of India's size that a particular market is compounding at 100%. So one of our predictions for the next year in 2025 is that the quick commerce space in general will grow at about more than 100%. And I think that's completely driven by the fact that Indian consumers, if you just look at your own spending patterns, you want some of the deliveries now. You're noticing more and more that you need it much faster. And it is taking a little bit of share away from e-commerce. So to that extent, we think that will be one of the top themes of something growing at 100% plus in the next year.
I think the joined at the hip question is, are valuations too expensive? I think Mangalam does that in terms of FMCG valuation, consumer valuations all the time. I mean, just your thoughts.
So I think that when something is growing at 100% and looks like it might compound at 100% for a few years, I don't think
pay up.
The valuations are actually quite cheap then.
So valuations is one part. The other part is that while this is a big growth opportunity, there are a lot of people who are entering this space as well. I just want to understand, 3-4 years down the line, what does the industry look like? Do you have two large players and some strong regional players, or what happens to quick commerce is the same thing that happened to food delivery, where only two people remain? How does it work?
So we've gone through this many times over, especially in network effect businesses like e-com, quick com, some of these things. I think that the big will get bigger. And I think that multiple people will try. But at the end of the day, I think once you've got a certain size and moat, I think it's hard to disrupt that.
The reason why I ask you that is because you're invested in Swiggy, in the quick commerce scheme of things, they may not necessarily be the biggest, right? So you have Blinkit, you have Zepto, which is raising a fair amount of funds, etc. So in light of that, how do you look at maybe something like a Swiggy?
So, I mean, look, honestly, I would say Swiggy offers both food delivery and Instamart on the platform. So if you look at one platform, they are the largest. And in some ways, if you look at the sort of growth, etc., you see the last few quarters, I think that's growing really well. So I think that, the market is just growing at a very large pace. So my 2 cents is going to be eventually more about, 3-4 years later, what is the size of the profit pool, right? And who's going to be able to capture that?
By the way, when you invested, did you think we'd want things in 10 minutes? I mean, actually, that came much later. Right?
Much later.
The 10 minutes. It was not the business model.
Well, when we invested, we thought that, we were like hoping and praying that this would become like $1 billion company. That was like our outcome. And that was our best case.
Wow.
And of course, the rest is history.
Gopal, you want to add to that, or should we talk about what you like? And what you like is enterprise software, businesses using software across enterprise functions. And when we first spoke about it and you told me that, I said, well, most companies use software, right? Who doesn't use software? And you think that's a mega trend. Just explain that.
Yeah, businesses in India are increasingly using software for enterprise functions. In fact, businesses in India are behind consumers when it comes to using software. You'll see some very large companies still running their payroll on Excel. So, you must have heard software is going to eat the world. Yeah. Well, software is starting to eat the business world in India.
Got it.
New age companies, in fact, lead software adoption to run their enterprise functions. But older companies are catching up. So as B2B consumption of software rises, and as SaaS is just a model for software consumption, you're going to see homegrown product companies.
Got it.
That provide enterprise software to large businesses, mid-sized businesses. The trend's going to become more and more powerful. So we believe in backing homegrown product companies get their first $10 million of revenue in India. And some of them have a real shot at becoming large, valuable. We've seen this over and over again. I remember when we were investing in IT services 25 years ago, very few people believed that the world's largest IT services companies would be Indian.
Right.
Today they are, right? So over the next 10 years, you will see some very successful software product companies from India.
So that
successful
itself,
on a global stage.
For our viewers, I think what you're talking about, to give a name, because they something like a,
for example, is
or maybe in the listed space, Zaggle, something similar.
Something similar,
okay,
right? Which is recently there was a SaaS company called Unicommerce that went public. These are companies that are small today. I can't comment on their individual prospects, but these are examples of product companies now starting to go. So far, IT services in India has been services. It will remain services, but the product story will also get added.
So in that itself, if you could tell us, what are the specific white spaces in the products as well, where these companies have a real shot? I mean, what is the biggest opportunity here?
See, the big enterprise class software companies exist, but they're often not suited for the Indian context.
Got it.
Right? Because where affordability is an issue, there's a higher need for customization, there is a lower tolerance for implementation time. So take the simplest of functions: finance, accounting, payroll, HR, CRM. These are some spaces that are seeing rapid adoption of software by businesses in India.
Can I add to that?
Please, please.
So I think I would totally agree on the same theme. I think we have three very interesting companies. One is the largest player in the B2B commerce space. It's called Off Business. It does about 800 crores of EBITDA. In the next 2-3 years, at some point of time, it will list on the market. Again, growing very rapidly. So I think a lot of new age companies in this sort of software space, in the whole B2B space, right, they are actually going to do really well. I think B2C, we're already seeing that sort of surge. Now you're going to see that in B2B. We have another very interesting company called Amagi. So Amagi basically has taken broadcast from, just very simply put, from the boxes to the cloud. It's one of the largest companies globally in the sort of SaaS space. And from India, it's doing about $120 million of ARR. We came in quite early. Again, it's become a very large company. And if you look at someone like an Amagi, it's a market leader globally. So I think 80-90% of the business is international. All the top, 500 media companies are all streaming on Amagi now. But very proud that it's from India to the world. So I mean, this is again a very deep tech company because you're streaming sort of millions and millions of streams every moment. You can't go down. And third one is another one we have in the construction SaaS space called Expedion. It's an earlier company, but believe it or not, they're getting $1 million orders in the UK and Saudi, and to just run construction platforms. Large construction companies are running their entire sort of business, accounting, finance, and everything else on some of this. So I think this is a big theme. I think India's time has come, and basically products going outside will be really, really important, not just in India, but also overseas.
And the India for the world is a big theme, even in the D2C space, where a lot of the other companies that are coming out with world-class products now looking to sell in the global time as well. Speaking about themes itself, just a very simple question. Themes, identifying them, how do you do that? That's point number one. And secondly, a lot of your companies are now listing as well. A lot of the people who are looking at listed companies, which are coming from the new businesses or PE-backed companies, etc., how do you, research upon them, and how do you identify whether the metrics are right or not? Because a lot of them are EBITDA loss-making, a lot of them are net profit loss-making, a lot of them don't understand these metrics, but they create a fair amount of wealth. So if you could give us a few hacks, to use a Gen Z term.
Okay, I'll go first. So basically, it's very thesis-driven. You're reading a lot, you're assimilating a lot, and trying to figure out what's coming next. So the idea for us, at least at Norwest, is we're a little contrarian, a little ahead of the curve. If a herd is reached there, we will try not to do that. So we're trying to be a little ahead. In addition to that, I think a lot of it is meeting founders, looking at the data, looking at thesis, meeting a bunch of companies in that space, and being able to determine whether this makes sense. And finally, backing that up to your last question with due diligence, to make sure that what was mentioned to us or spoken to us, or these are the numbers, actually gets validated by accounting firms to make sure that the governance, the numbers, the structure, the risk compliance, etc., is sort of properly checked.
That's when you guys are speaking to them. But when one is reading the red herring prospectus. They don't have the access to the management the way you guys have, right?
But coming back to your earlier question, we use a framework called EIBC. I think there are many students here, economy, industry, business, company. You have to start with a trend, a consumption trend. For example, you could say, well, Indian households are starting to improve their kitchens. That's an economic trend. And then you can drill down further to say, how are these kitchens being improved? There are 300 million households, 350 million households. Let's say 150 million of them are starting to improve their kitchens. Simple trend. And you can drill this down using the EIBC framework to come down to businesses, and within businesses, companies. And how do you go about them? You know, research and relationships, right? So you got to do your research. You can't just rely on secondary research, so you have to do your primary research and relationships. So research and relationships combined with EIBC can help you come up with companies. Valuations, what's the hack? Well, the best hack over the long term is to stick to fundamentals, right? I mean, it always scares me when I see companies and markets trading on vanity metrics. Let's go back to fundamental. There is no justification for companies to trade on vanity metrics.
What do you mean by that, vanity metrics?
A stock price is purely a function of earnings per share and EPS growth. And the number of years you can see that. The world's largest market, the US market, trades largely on fundamentals.
Yeah.
Right? In fact, what's happened in private markets over the last 3 or 4 years is that fundamentals have come back to fore. Now, when people say markets are driven by technicals, it means markets can't be justified on the basis of fundamentals.
Absolutely.
Right? So your vanity metrics come in, your revenues come in, right? When people fail to make a distinction between are these operating profits or treasury profits. And remember what the great Buffett said, the tide does run out, and then, I mean, it ran out in September 21, when technology companies lost so much of their valuation. And which companies lost their valuations? The companies that were trading on vanity metrics. So the way you should do this is look at your portfolio. You may decide to allocate some of your capital to companies trading on vanity metrics because they have phenomenal potential. And at some point of time, they'll develop the right fundamentals. But you have to carefully control that number. You have to carefully monitor that number, because riding vanity metrics is like riding a tiger.
Absolutely. Yeah. And time does run out on those, right? I mean, eventually. That's a solid advice from both of you. Let's get back to themes. By the way, the 3 companies you mentioned, all listing soon? All coming to the market soon?
Yeah, all will come to the market in the next 2 years, 2.5 years.
You have 7 of them likely in the next 2 to 3 years, right?
Yeah, we have actually about, I think if we were predicting, I would say about 10 companies should be filing to go public in the next 2 to 2.5 years.
What would they be, if you may?
There are a bunch of them. So there's a company called, SK, which is already filed. It's the largest unlisted sort of CV, and it's a financial services company, very strong sort of management. We've got another one called Veritas, which is an MSME finance company. We've got one called Mintify, which is one of the largest supply chain fintechs in India. I mentioned off business, so I won't repeat that. We've got another housing finance company. We've got healthcare RCM company. So we've got like a hospital. So I think a bunch of
lot of sales are coming. Theme, one more theme, Naren. What is the big from here? I mean, because
So I really think that it's time for industrials, right? So I think that in India, sort of India to the world, and manufacturing with this government sort of push, industrials, aerospace, autocom, those things it's time to shine. I'm actually less bullish on the commodity spaces, but much more bullish on some of these where there is an engineering component. I think that with China sort of waning a bit, India is getting to the size and scale. And I think that for the next 15, 20 years, we have that engineering talent where we could actually be, exporting this and doing much better. And I think we're taking more and more share from places like Mexico. So we are continuing to look at, autocom, aerospace, those kind of deals and those kind of sort of investments right now, which we think is sort of going to be the next big thing coming out of India.
Anything that you own in your portfolio?
Right now, no. We're actually looking at a couple of companies, so hopefully we'll have something to show for that in the next few quarters. But definitely a theme which we think can be very large.
I mean, in the public markets, huge amount of interest in some of these spaces. Gopal, you did talk about that kitchen theme, improving spending on kitchen. That is emergence of
you could take a step back and say the economy level trend is the emergence of discretionary spending.
Yes.
And, you know, youngsters have seen discretionary spending for, and Viren is a few years younger than I am, but I've seen India when there was largely non-discretionary spending. And at $2,000 per capita, that's the point. Inflection is a much misused word, but let's use that word. $2,000 per capita is the point of inflection where a disproportionate amount of spending goes towards discretionary items, right? You have a kitchen, you want to make it better. Make it better is discretionary spending, right? You can go to an Indian university or you can go abroad. That's discretionary spending. Well, there are government schools that don't charge any fee, but you choose to go to send your ward to a private fee charging school. That's discretionary spending. So we are seeing now discretionary spending, and as India goes from 3 trillion to 10 trillion, there's going to be a disproportionate amount of discretionary spending, and this discretionary spending will create a tremendous amount of value. Which breed of companies.
Narrow it down a little bit, Gopal.
So we can talk about education, for example, financialization. These are two direct manifestations of discretionary spending. Take education. We've invested in a business which is an online marketplace for accommodation, student accommodation. Okay. So India now, along with China, sends a very large number of students abroad. This is a typical trend that you see as developing countries grow. They realize that they don't have enough higher education capacity, not enough IITs enough. So on the back of that, there's a business that's created that actually caters to over 50 countries, students from 50 countries, and offers housing. It's a virtual business out of Pune. And that's an example of a business, 100% dollar revenue business, that's being built on the back of discretionary spending.
You're also an investor in, I mean, that's one segment. You said financialization. I think you've been in a long-time investor in RBL Bank, and I think straightforward lending. So
RBL Bank, if you remember, we were anchor investors in 2010. Then we again played anchor investor in 2020. It's an example of financialization, savings. And I would say that's sort of non-discretionary. Yeah. But discretionary is an example of that is asset management and wealth management businesses. So something like Avendus, which has grown on the back of wealth management, right? So there is growing wealth, and wealth management as a service is part of discretionary. So that's an example of how discretionary spending plays its role.
Speak about the
growth of mutual funds. And sorry,
you speak about the education sector, lending, etc. And he also said, you have to know when to get off the tiger. He's been pretty good at getting off the tiger without getting bitten. But let's circle back to the discretionary part of it itself. We started speaking about quick commerce. We spoke about Swiggy. Were you tempted to look at any of these spaces when it comes to discretionary spending? Because kitchen is one part. Now, increasingly, people are thinking that maybe we're in a just-in-time kitchen sort of thing.
As an investor that's invested for 30 years on the back of fundamentals, we've played e-commerce through the ancillary space. So both Naren and I have an investment in a company called ExpressBees. Okay. Right there, the business was closer to fundamentals. So yes, we weren't as smart as Naren. We weren't able to get over the line.
By the way,
when it came to some of these e-commerce businesses and quick commerce businesses. And that's going to be our style. Our style as a growth stage investor, because we come in later, we look for a certain unit economics, a certain path to profitability. The great Buffett has made less than 100 investments in a 60-year career. And that is the Gaja capital. That's the model we are looking to emulate. We've made in 25 years as many investments as many VCs make in a single year. So we carefully choose our shots.
No, absolutely. And you're being humble, and you can't get them all. So I think that's the way I would look at it. But are valuations expensive? I mean, that's a question we ask in public markets all the time. And by the way, you guys are competing with public market investors now. Yeah. We're all turning VC because they're going back and back, pre-IPO, pre-IPO, because by the time it gets to the market, it's all juiced out.
Everyone just wants to go to before the starting line as well. Everyone just wants to...
So let me rephrase that. They're competing with us. Okay. They're doing what we were doing.
They're
competing with us. So So I actually think that market valuations are quite high. Yeah. And I think that's driven by the public markets. So you have to space out your investments and stick very close to fundamentals, as Gopal mentioned. Because I think that, when you sort of focus on non-fundamental driven or, very poor unit economics or things like that, eventually, in a lot of I would say, late-stage venture side, you find that the unit economics are just not working out. So I've at least felt that like we've focused a lot on places where your break-even are profitable. Out of our 30 companies, about 26 would now be profitable. Once we come in, we sort of make sure the company gets profitable very quickly. Then we spend a couple of years preparing them for an IPO. Because in India, let's face it, exit has to be IPO. Right? There's not that much of M&A. And then we make them, help them get to a margin because you can't just go public at break even. So you want to get to a margin. And then, you know, believe it or not, it takes you 3 years to exit. You're not going to be able to sell on day one and you should not want to because that would really hurt the stock price. So in most of these cases, a lot of private equity investors like us will just say that, look, let's wait over time and exit. So if you add up that journey, that's already 7 years, right? And so I think that it's really important to come in at the right point and to make sure that the risk-reward trade-off makes sense. Valuations are definitely very high. So we are struggling in terms of paying the very lofty valuations, which is coming a little bit, you know, the wind is blowing from the public markets onto the private markets. And you know, obviously you have to be very careful.
It's a gust of wind, strong gust of wind.
Very, very strong gust.
Tornado. I don't know. Gopal, very quickly.
Public markets in India haven't been cheap after 2006, 2007, and may I say they are unlikely to ever become cheap again, right? So what you have since 2006, 2007, you have short temporary periods of correction, 2008, 2013, 2020, in which technicals catch up with fundamentals. But the markets have consistently stayed a year to 2 years ahead of fundamentals. Currently, markets are looking a little more expensive than they did because the trajectory of earnings has shifted. If we were all expecting sort of an 18% trajectory to earnings, and currently it's looking like 14, 15%. Hopefully this gets ironed out. But, you know, given the long-term prospects in India, it's easy to see why Indians are so optimistic about the future, why they are here to 2
I hope
years.
all Indians are optimistic, not just investors. Because I think that will make all the difference.
Well, you know, the number of depository accounts has gone from 6 crores to 17 crores in the last 5 years.
Absolutely.
So an increasing number of Indians have their savings invested in equities, either directly through shares or mutual funds.
Gopal and Naren, thank you very much for coming in. We'll close the conversation here, but very interesting insights. And I hope for our audience here in the studios and, of course, those who are watching, you know, light bulbs and neurons all connect and, you know, they're able to figure out ideas. And, you know, you've laid out the big themes and you've got to look within those themes to find bets.
And as they say in PA, you know, this is the first conversation. This is a promise of many more conversations, a lot deeper conversations that we have on our channel.
Absolutely. Well,
having us.
Thank
you
so
very much once again. Well, it's a wrap from all of us here on this special market town hall. It's a VCP special. And as Mangalam said, many more in the future. Thanks for watching.
and welcome to Startup Street. I'm Arundhati Ramnin, and with me in the studio is Shruti Mishra. These are the top headlines from the startup world. Fintech major MobiKwik makes a stellar debut on Dalal Street. Shares opened 58.6% higher than their issue price in the initial public offering and gained as much as 88%. The IPO saw overall subscription of close to 120 times the total shares on offer.
Singapore sovereign fund GIC will invest an additional $150 million in Asia Healthcare Holdings ahead of a potential IPO. TPG will transition to a minority stakeholder in the healthcare platform, and GIC will hold the majority stake. Pavestone leads $12 million Series B round in Bizome, a retail intelligence platform, while Pavestone contributed $7.5 million. IndiaMart, an existing investor, and other family offices pitched in the rest. This funding will be directed towards scaling Bizome's product innovation. BP Ventures invests $9 million in electric intercity bus platform Zing Bus in its Series A funding round. The startup will use the funds to scale operations and grow its team. Zing Bus counts Venture Catalyst, InfoEdge Ventures, and Titan Capital, among others, on its cap table. Zomato CEO Dipinder Goyal has been crowned India's second biggest self-made entrepreneur, with a valuation exceeding 2.5 lakh crore rupees and experiencing a 190% increase as per Hurun list. The founders of Swiggy, Sriharsha Majeti and Nandan Reddy, secured the third spot. Elon Musk says Starlink satellite internet is inactive in India. This after authorities seized two of the company's devices, one in an armed conflict zone and another in a drug smuggling bust. Starlink is seeking approval in India to provide satellite broadband services and is trying to address any potential security concerns. The lead European Union data privacy regulator for Meta fines the social media giant €251 million. This following two inquiries into personal data breach. The breach 6 years ago impacted around 29 million Facebook accounts globally, of which about 3 million were based in the EU. Well, those were the top headlines from the startup world. To the top story this evening, Pure Foods, a leading house of F&B brands in India, has raised $40 million, that is approximately 330 crore rupees, in its Series D funding round, comprising a mix of primary and secondary investments. Sources exclusive to CNBC-TV18 confirmed that existing investors Iron Pillar, Chirate Ventures and Three State Ventures have reaffirmed their support. The round also welcomed new investors, Shinhan Group and Landmark Group, marking their first investment in the company. Sources tell us that the fresh funding will bolster Pure Foods' position as a leading house of brands in the F&B space, and the fresh infusion of capital will enable new offline expansion and its UAE launch. Pure Foods was founded by Ankit Nagori in 2020 and houses brands like Eat Fit, Cake Zone, Nomad Pizza, Sharif Bhai Biryani and Frozen Bottle, among many others. It has over 500 cloud kitchens and offline stores that cater to over 10 cuisines across 40 cities in India. Also moving on, Confluence, a company pioneering photonics-based quantum and quantum-inspired solutions, has raised $2 million in a seed funding round led by Pi Ventures. The round also saw participation from Golden Sparrow, Reena Dayal, who is the founder and CEO of the Quantum Ecosystems and Technology Council of India, and others. To talk to us about the future roadmap at Confluence, joining me now is its co-founder and CEO, Sujoy Chakravarti. Sujoy, welcome to Startup Street. Now, data-driven decision-making involves processing vast amounts of data to determine the best possible outcomes. And this, of course, needs exceptional computational power. So tell us how Confluence delivers scalability and energy efficiency without the drawbacks of conventional approaches, and what is the big pain point that Confluence solves?
Hi, ma'am. Thanks for having me here. I think there's a confusion. I'm the founder of Dental Card, so there might be a change. I'm Dr. Vikas Agarwal from Dental Card.
Hi, Dr. Vikas. I think we've connected the wrong guest. Is Confluence's Sujoy Chakravarti also there? We're just asking our producers that.
Yes. No issues.
Yeah. We seem to not have the line there with Sujoy. So let's move on then. Dental Cart, an online marketplace for dental shopping, has raised 85 crore rupees in its recent funding round. The round was led by foreign institutional investors, Malabar Investment and White Oak. Malabar Investment has invested 65 crore rupees and White Oak put in 20 crore rupees. The company will use the freshly raised funds for operational scalability and to add more subsidiaries. Joining us now to discuss this further is Dr. Vikas Agarwal, the founder and CEO of Dental Cart. Dr. Vikas, thank you so much for taking time out and being here with us on Startup Street. You know, a Dental Cart is a dental essential focused marketplace, right? So if you could sort of take us through the kind of products that you have on offer and the gap that you're trying to bridge in this area.
So, hi, ma'am. Thank you again for having me here. Dental Cart is a B2B platform for dentists where everything you see inside a dental clinic is made available online and offline through an ecosystem which is being built by Dental Cart overall. So we supply over 20,000 different products to all the dentists across the country, across 20,000 pin codes of India. And we have been there in the market for last 8 years. More than 2 lakh dentists have bought products from us till now. And we are growing rapidly.
So growing rapidly is what you're saying. You know, you've raised the 85 crore rupees, right? If you could sort of take us through how you plan on spending these funds. Obviously, operational scalability is on top of the agenda.
Yes, this is more of a growth capital where we'll be utilizing the funds for ramping up the current tech stack of the company, having a better inventory management so that more orders can be allocated on time. We'll be using this fund to fund our subsidiary Smileworks to ramp up the production facilities as well as the infrastructure of the company. And we are also looking for some inorganic opportunities in the market. So some fund is kept in the form of warrants, which can be utilized as and when needed.
Will be utilized as and when needed for the other things as well. But, you know, what's the kind of demand that you're seeing on your online platform? And where are you seeing the most demand coming from? You know, if you could take us through the kind of customers, clients that you have and how many you've catered to so far. And more than anything, how affordable are you?
So we are around 4 to 5% cheaper than the traditional network we had in our country for over last 70, 80 years. And we have been supplying to all over the country. So our primary customers are private dental practitioners. Apart from that, dental colleges, dental laboratories, army are our major customers.
All right. So if you could also then take us through the kind of revenues you're making, what are the targets that you've set for yourself for 2025? And, you know, what about profitability?
Yeah, so last year we did a revenue of 173 crores and PAT of around 15 crores. As we are a listed company, I'm not allowed to give future number projections, but we are eyeing for good numbers in future. And everything is currently being, scaled up. And since now we have foreign institutional investors with us, along with their fund, we have their expertise, which is helping us in growing multifaceted.
So it's helping you grow, but if you could give us any sort of numbers, like by how much do you hope to grow? If you could give us, you know, any sort of inclination towards that?
So we are growing at around 40% growth CAGR for next few years. And this is an assumption. The real numbers will be shown to public once we release the results.
All right. And, you know, you have a lot of competition in the field that you are in, right? So how are you taking on competition at this point? What makes you stand apart? And what about expansion?
Yeah, so we are a scalable model, and the current tech stack which we have can be scaled to 20x, 30x without any much efforts. And about the competition, so where we stand out is the the loyalty of customers which we already have, and the data patterns, the behavior of the customer over the last 8 years, what product is required, where, what all features are required, what price points are required. So this is the data which we are continuously analyzing and making moves according to that. One more thing here, that 50% of the products we sell are our own brand products. So we have a long list of own exclusive products in Dental Cart, which are required by day-to-day practices.
All right, so 50% of what you're selling is your own product at this point. If you could sort of take us through for the others, you know, the kind of partnerships you have and the kind of, targets that you're setting for yourself for next year.
So next year, we definitely want to scale higher, and we are a team of 500 people. We are hiring rapidly in different departments. Getting right talent is one of the priorities, and building a better tech stack, having better customer experience is one of the priorities. Average revenue per user is increasing, and the number of products which we are making available on the platform are also increasing. Recently, we have increased people in our offline sales channel so that we are also able to provide the high value equipments to the doctors. We are partnering with various NBFCs for providing EMI schemes and buy now pay later kind of schemes so that better value can be provided to the customer.
So lots of exciting plans that are coming up for you in 2025. But Dr. Vikas, thank you so much for joining us on the show, and we wish you all the best on this journey going forward.
Thanks a lot, ma'am. Thanks for having me here.
All right, moving on. Also on what's brewing, Confluence, a company pioneering photonics-based quantum and quantum-inspired solutions, has raised $2 million in a seed funding round led by Pi Ventures. The round also saw participation from Golden Sparrow, Reena Dayal, who's the founder and CEO of the Quantum Ecosystems and Technology Council of India, and others. To talk to us about the future roadmap at Confluence, joining me now is its co-founder and CEO, Sujoy Chakravarti. Sujoy, welcome to Startup Street. Now, data-driven decision-making involves processing vast amounts of data to determine the best possible outcomes. And this, of course, needs exceptional computational power. So first, tell us how Confluence delivers scalability and energy efficiency without the drawbacks of conventional approaches. What is the big pain point that you're solving?
Yes. So I think every business out there wants to optimize something, right? It gives you a lot of business value if you do that. So assume that you have 10, 15, 20, or maybe even 1,000 such possibilities. You can just run a brute force compute, get an answer. But as businesses get complicated, what we have seen is that the number of such combinations increases, right? It becomes millions. It can even go up to billions, okay? And that is when conventional machines break down. There's an exponential increase. Too much processing power is required, and they can't provide the answer. So that's where we have a hardware box, which does this all in parallel. So what our box does is it runs all these solutions in parallel and returns you the optimal answer. So that is the USP here. And that is what causes us to solve these problems in a far more efficient manner.
Sure. All right. You know, your current system, Sujoy, is capable of handling close to 10,000 permutations, which you've piloted with select customers for small-scale problems. You're now testing a more advanced version capable of processing, I believe, 10 to 25 million permutations. Tell us, when do you plan to release it, and what kind of complex real-world optimization challenges will it solve? If you could give us some use cases as well.
Absolutely. So the machine which you mentioned, right, the 10 to 25 million, it's ready. It's sitting in my lab. We are doing some final tests on it. So I think by Jan, we should take it to market. And we are also working on another machine which can go up to 10 billion, right? And that machine is probably mid of next year launch. Let me give you an example of a problem that something like this can solve, right? And let's take an example which is valid across industries instead of just picking on one. And that example would be workforce optimization. Everyone needs it, right? And some industries more than others. So take, for example, a hospital, a very large hospital has nurses, doctors, operations. Everything needs to be scheduled very efficiently so that you can save the maximum number of lives. Plus, there are regulatory requirements, right? How much a person can work, etc. And these things change on the fly. Someone might not be available. Someone may suddenly go on leave, fall ill. So very complicated problem to solve, hard to do with traditional software. We can go and solve a problem like that. Similar case is the airline crew management. Same problem, different avatar. Lots of regulatory requirements, things you can do, you cannot do. This machine will go there, take a very large problem like this and keep solving it. So every time a parameter changes, you run it. Within seconds, it gives you the answer. You can go re-optimize and have a better solution than what you could with conventional software. So that's kind of the use cases that we are talking of.
Sure. Sujoy, you're also on a mission to develop a general-purpose quantum computer entirely from India within the next 5 to 6 years. Are you on track? And what kind of an impact will this flagship quantum computer have on the sector?
Yeah, that actually is the holy grail. That's what we are really excited about. It'll take some time, and I would say that we are on track. We've already built out parts of this machine, right? I mean, there are parts of the machine which are available. They are in our lab, and they have uses in other places where we also ship some to people who want them, right? Like, for example, the Department of Telecom or such other entities. We are working on several other parts of the machine, which will happen over the next 2, 3, 4 years. But when this machine comes out, it will solve that that quantum problem which we talk about, right? The use cases which we think about, which is not tenable with normal compute. All of those use cases will become open. Anybody who writes the quantum algorithm can run it on our machine. So that's the idea.
Okay.
I think we are on track. Of course, very complicated physics and science going on there. A couple of years, 1 year here and there, maybe happen, but I think we are on track for that.
Okay, let's quickly talk about the fundraise now. You plan to use a $2 million raise to scale near-term products and bring them to market. What are these offerings and what are their applications? You mentioned that early next year, some of them will be in the market.
Yes, so what we offer is this machine which can solve these problems, these NP-hard problems in real quick time. So we'll have various variants of this machine, right? You'll have ones which solve small problems. You don't throw a big box at it. You'll have some ones which solve bigger problems. You would also have boxes which customers can deploy on their premise, right? If you're really security conscious, you can deploy it on the premise. And, you know, there is also probably a product which will come out, which will be on the edge. There's like real-time decision-making when a drone is flying or something like that. So we have this entire range of variants around this which we plan, and that's what we'll use the money to go and develop and scale.
Okay. All right. On that note, it's time for me to wrap up the conversation. But many thanks, Ajoy, for joining us today on Startup Street, and wish you the very best. And I hope you meet all your growth targets. Thank you very much.
Thank you so much. Thank you for having us on the show. Thanks.
On that note, it is time for us to head into a short break. But coming up next, we bring you a special segment, the Startup Rapid Fire. Today's startup is bringing the power of AI to water management. How are they doing this and what are the pain points they solve for? We tell you right after this short break. Stay tuned.
Le conseil est très clair, l'île est totalement désastée, vraiment dévastée. L'habitat qui est un habitat précaire, les bangas, pour ceux qui ne connaissent pas, les bidonvilles, il n'y a plus rien, c'est très clair.
Shankarji, you know, I know you've been watching Zakir Bhai as a child, and thereafter you idolized Shakti and all the concerts that you went for, from that period to the time when you actually met him, played with him, was a part of Shakti, all of this over a period of almost 3 decades. What was the one everlasting, overarching quality of Zakir Hussain? We know of him as a great musician, but very few know of him as the kind of person that he was. If you could throw some light on that.
Well, we've been playing and touring for the last 25 years. And if you ask me, one quality that he had is every night he never failed to serve.
Welcome back to Startup Street. In today's rapid fire segment, we bring you a startup that is using the power of AI in water management. Jude Sanat joins us now to tell us more about this startup. Take a look.
What is the name of your startup?
FlexGen Sustainable Technologies.
Okay, and in one sentence, describe what is it that you do?
We make data of water transparent and clear.
And what is the problem that you are solving really?
We may help industries digitize their water infrastructure. Currently, most of the industries rely upon manual methods to monitor their water consumption and other parameters.
Okay. And what is the solution to this problem?
So we have a AI-powered digital water management system which gives them real-time insights where they are going wrong. If there is any excess consumptions happening, the factory managers get immediately the alert and they are able to take corrective actions. And we are able to save up to 20 to 30% of water consumption.
All right. What is the revenue that you will do this year?
We are targeting a revenue of 30 crore and we are almost near to that.
Okay. And what is the projected revenue growth outlook like?
It's up to 40 to 50 crore. So we are targeting to get that in another 1 year.
Okay.
And right now we are this financial year we are targeting for 30 CR.
Okay, absolutely. And what is the funding that you've received thus far?
So we have raised 1 million rupees from the Accelo Venture and Arali Ventures, which is powered by Accelo Venture is powered by Chris Gopalakrishnan and Shibilal.
Okay.
So they have invested in us.
Okay. And next question: what is the one key differentiator that sets you apart from the competition?
So it's basically the domain expertise and the artificial intelligence which we bring, the data analytics and the precise insight which a factory manager can get.
Okay. And what is the one wow moment that you've experienced in your startup journey so far?
So I'm very glad to announce this because we recently won the KPMG Global Impact Innovator Award. We represented India and we were the second runner-up. And also one more I would like to say, this is one of the best moments we had. Prime Minister Narendra Modi mentioned us in the Man Ki Baat 101 episode.
All right. So where do you see your startup in 5 years from now?
So we want to be the one-stop solution provider for anything and everything in water globally.
And with that, it is a wrap on this edition of Startup Street. From Shruti and me, goodbye and many thanks for watching. Stay tuned to CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour.
What an absolute pleasure it is to be back here at the CII Tourism Summit. I've done a few of these, so it's great to be amongst you here. You know, as we were just talking about where the tourism sector stands in India today, and I was just discussing that with Mr. Kant. I mean, who better to talk about tourism than Mr. Kant, the incredible India man himself? And we've had this conversation about how tourism in India continues to be the low-hanging fruit, but it's within the low-hanging fruit that's ripe for the picking for many, many years now. And while things have changed for the better, there is immense potential. There is immense headroom for further growth, and that is what we are hoping to discuss and debate here today. So without further ado, Mr. Kant, let me get things started with you. As I said, you're the incredible India man, sir. What do we do to make India a magnet for foreign tourism, for foreign tourists to come into India? I set the context by giving some numbers there in terms of where we stand when we talk about foreign tourists versus where some of our peers stand within the region. Why the gap? How do we bridge it?
So, Shireen, 3 points. First and foremost, I think we need to, the industry needs to focus not on growth or dollars. It needs to highlight the job potential of the tourism sector. The multiplier impact of tourism is enormous on job creation. India needs jobs. There's no better sector than tourism which can create jobs, and that is something which the industry must go and tell every single chief minister. My view is that instead of holding the CII conference in Taj Mahal Hotel, they should go out to the states and hold it in all the states where there's huge tourism potential, so that much like what Rajasthan and Kerala have benefited from job creation, other states, and they should go and tell the chief ministers that they will not win the next election without focusing on tourism, which will create jobs for them. India must become the center of meetings, incentives, conventions, and exhibitions. The MICE market is huge. It's big. We haven't tapped into the MICE market. And this market is possible now with Yashobhumi and with Bharat Mandapam. We should ensure, much like Germany did with its bosses, that we are able to attract the biggest meetings from around the world, because Yashobhumi has been designed to be the biggest in the world today. It's better than any convention center or exhibition center as compared to China. So you should be able to attract the biggest MICE events from across the world into India.
Let me start by getting industry into the conversation, and Puneet Chhatwal, I'll ask you, to Mr. Kant's point that industry needs to tell chief ministers that this is going to be your biggest job creating sector. Where I would imagine that those conversations are ongoing, that those conversations have happened. What are you hearing back from governments that you deal with today? Is this a priority even?
The answer is yes, it's positive, it's a priority. The discussions have started, but where I disagree with Mr. Kant is actually the center is lagging behind. My personal opinion is even the CII chapter is called Tourism and Hospitality. The Tourism and Hospitality Association's apex body is called Faith. But I think the time has come that we should bring the three together. tourism, hospitality, and civil aviation. Because the problem is when we talk tourism, we just get lost in domestic and foreign tourism or inbound travel. But there is far more. The jobs are also created. Maximum multiplicator is hospitality. And if civil aviation doesn't work, which he alluded to, with Air India, Indigo, etc., together with this sector, we will not make the kind of progress. So it's not this or that. It is center and state. Center has to give infrastructure status, which has been, limited for whatever reason were right 12, 14 years ago. If you're spending so much money as a strategic initiative of the government on building roads and trains and airports, you need hospitality next to it. So you have to incentivize it. You cannot be now living in as a number 5 economy, becoming number 4, and maybe number 3 by 2027. Also that this is a luxury sector, they should be taxed the highest. These days are gone, or have to go, otherwise jobs will not get created.
Well, they're clearly not gone.
They are not gone, but they have to go.
Let me bring Mr. Anand into the conversation as well. Just to take up where Puneet left the conversation, Mr. Anand, he's basically saying that we need to have a holistic approach, break down these silos of tourism operating separately, aviation operating separately, because they are all interconnected and the linkages are very deep. And we need to, in fact, ensure that it becomes seamless. Now, as the man running Faith at this point in time, do you believe that there is a move towards this kind of integration, this kind of seamlessness? What should the next steps be in order for us to make that happen?
So, Srini, you're familiar with, and this is really talking about the past, that there was this man walking down the street and he seemed a little lost. So there was this lovely bystander person, great character like Puneet, who felt sorry for him and asked him, he said, "Sir, what are you looking for? Where are you going?" So he said, I really don't know. So Puneet tells him, well, if you don't know, then any road will take you there. But I think that's what tourism was for a very long time, till I think CII, everybody got together and gave tourism a vision. I think there's a great step forward. Today we have a vision, right? But any vision has to be long-term. Let me take the example of Incredible India. We should have built up on Incredible India and continue to build there. A great example is the Red Sea project. Right, in Saudi Arabia. They've taken it to 2030. They've taken the Saudi Games, the FIFA, for 2034. They've got a target of 80 million there. Anyway, that having been said, the question here is, can it be a game changer for India?
Yeah.
I think Faith had put together a document, which the minister himself quoted today, was that tourism can be a $3 trillion economy by 2047. Very quickly, without getting into numbers, we are today at 211 million. We are talking of 3 billion by 2047. Business as usual will take us to 140, 1.4, right? That leaves a delta of 1.6. That 1.6 can come from 3 sources. Increase the length of stay, increase the number of visitors. Mr. Kant likely said, look at America, etc., and increase the spend from each one of them. This is really... Now, what are the 4 levers that we have? I fully agree with Mr. Kant. While domestic tourism is important, we only have 1% of millionaires in India of the world. We need to get in the foreigners into India, right, in the focus countries. There are 4 big levers that we have. The biggest one that we have, a Disneyland, can be replicated. It was replicated in Tokyo, everywhere or the other. Las Vegas can be replicated by Macau, but cultural heritage can never be replicated. Our purple cow, our biggest strength, is the 7,000 years of civilization. And I've been saying this in the past, and I say this today, in our past lies our future. This is what India really needs to push, and this is what Mr. Kant also said. The second lever is wellness. Right? The pandemic changed the word lifespan to health span. Right? Everybody's talking of health span. Yoga, Ayurveda, what is that all related to? Wellness, again part of our culture, goes back 7,000 years, irrepeatable. MICE, great segment, we have only 1% of it. We could have complained 5 years back that we didn't have airports and we didn't have convention centers. Today, we have the best of them everywhere. Last but not the least, experiences, again referred to by Mr. Kant, etc., and by Puneet. We talk of what is called live tourism, right? Bionomics, right? The Taylor Swift show, $5 billion it added to the economy. Sports, a $555 trillion business, right? The Qatar in the FIFA got 5.8 billion alone, etc. So to this, if we add the experiences to our culture, etc., and combine the two together, we have a great winning story, and this can be the game changer for India. Where do we look? We look at two different areas. We look at US and UK, which is a must. You can't ignore them. But then there is something called backyard travel, post the pandemic, where people are looking at your neighborhood. Our neighborhood, South Asia, has $400 billion of travel and tourism, right? India is the least exposed out of these countries. 10% of that could add $40 billion.
Janmejay Sinha, what would you put down as the next big 5 steps?
The first thing I want to tell you, Shireen, is that Amita and Puneet wanted to show me out. They hear me talking in these economic forums and financial forums, so they put me on a forum next to Amitabh, you know, who is this God's own country guy who has fallen down to incredible India. And now I'm being asked, you know, but anyway, so now that I'm being asked with Puneet and Deep and Mr. Anand there, I'm not going to talk about the industry. I'm going to say 3 things that I believe India should think of. First, we should forget about India. Because, you know, whatever the vision, one of the things that I'm a consultant, so whenever I talk to a company, I say, how do you think about the vision, right? And I would say we should have 28 countries in India. Each state should have its target for tourism. Bihar should have a 15 million target, right? And then it should work about its 15 million target, which should be around Buddhism, around Jainism, around stuff like that. And Rajasthan should have a different target with a different vision. Whenever we say India, we try and combine religious sites, wellness, leisure, tourism, and so the focus gets a bit diluted. So let's get the states to articulate, like you had done, you know, God's own country for Kerala, and look where it took Kerala. So let's do that with the other 28 states. That's really a big deal. The second big deal is there should be a few places where the MEA does not look at reciprocity, but looks at opportunity and says, if you're getting a lot of tourists from a particular country, let's give them visa ease. I mean, very unlikely that Americans are planning to settle in India, right? I mean, it's some time will take. So give that there, I mean, and say, okay, for these particular reasons, we can give you tourism. And the third idea that I have, you know, I was at a summit some time ago in Goa, where, you know, the former Google CEO, Eric Schmidt, said, how do you value intelligence? Let's say intelligence is a commodity. What would you do? Because he said intelligence is language, connections, and memory. Now, if language is a commodity, let's make it so.